Hey, my name's Ryan. I just turned 24 last week, and I just taught a day trading class at UCLA on basically how to quit your job and make millions of dollars. And no, I'm not using my professional webcam for this introduction. I'm not at a cool and aesthetic background because I want you to remember one thing. The only thing that's going to matter throughout this whole lecture, this next 36 hours, which is going to be the hardest journey you ever embark on, is going to be the value of my words, what I'm saying. Not how good my face cam looks, not how good the background looks. You can go to any day trading YouTuber's video and they probably have a pretty professional setup, which I do normally, but that's not the aesthetic or that's not the focus of this video. The focus of this video is I want the best of the best, the most locked in, the most focused people I've ever seen in the entire world who generally want to change their lives. So I don't want to distract you. Anyways, what you're about to watch is the most craziest journey you're ever going to go on in your life, and you're not going to understand that until probably a couple years down the road. But essentially, it's going to teach you how to make a lot of money, how the market moves, why the books are wrong, okay, and why trading books suck, besides the two I recommend eventually later in the lecture. Now, there's going to be a lot of parts where I'm going to be going around to the students, talking to them. So you might not see me. Maybe you can skip those parts, but I'm going to help them with their individual work. There's some parts where sometimes I rustle with my mic a little bit, okay, which might be annoying, but is it really that annoying if the information is going to be valuable? You tell me, okay? There might be some other parts where there might be awkward silences. Just skip through it. It's okay. Anyways, this isn't perfect, but basically I promised that I'd upload a full lecture of this class I taught at UCLA, which shout out to Peter Tuchman from the New York Stock Exchange for letting me do. Super grateful for him. And yeah, it's going to be long, it's going to be boring, but is it going to be boring if you're going to be obsessed with this? No, this was never boring to me. I love learning about this. I love being able to learn how to print money out of thin air. It was the best feeling in the entire world, and it was just fun. So for this next 36 hours, I want you to lock in. I want you to, really just take it all in, okay? I'm going to leave a link for the quizzes that I give these students in the description. There's 5 quizzes, okay? And then I'm also going to leave a link to the presentation I did in the description. That's going to be the first 2 links. I'm not going to leave any other link in the description. I'm not going to promote anything. I will say the first couple lectures are me recording on OBS, so you can see my screen of the slides and then the rest is just going to be me on a very high quality camera talking to the camera and then the students. So it's a little different format throughout the video, but like I said, it doesn't matter how I upload this. I'm uploading each and every single piece of content I did for this whole thing. And yeah, I'm gonna do a little run up in the beginning about a couple of things I missed because I did not record like the first 40 minutes of the stuff I talked about, which is the basics of the basics. But man, I wish you the best of luck. This is not an easy journey, and yeah, you're gonna know me very well by the end of this, and hopefully I change a lot of your lives. So good luck. All right, we're gonna be starting with slide 1, which the link is in the description. The first 9 slides I forgot to record UCL, but everything else I recorded. Okay, so we're just gonna start off with this. And yeah, just get into the roadmap and everything I'm gonna talk about, right? So there's mindset and motivation. Okay, why most traders quit and how to avoid it. You need to have a purpose. If you guys don't have a purpose, you are not going to do very well. Okay, and the reason I say that is because every single time that you are thinking about giving up, you need something to to push you back, if that makes sense. Okay, you need something to push you back, and if you don't have anything to push you back, that can be a very, very bad issue. Because again, like, let's say I lose $300 in the day and I don't have a motivation, I'm probably going to stop, right? But if I still have that motivation and maybe it's for my family, making my family free, I'm going to still want to do it. All right. So if that doesn't sound like you and you think that if you lost $300, you just stop and you want to care, then this is probably not for you. Okay. You need like a why. We're going to talk about market basics, candlesticks, order types, the science behind orders, and then all this other stuff, which you'll see later. Okay. So, like I said before, this is the trader dropout curve. Okay, most traders quit because confusion, impatience, wrong mindset, no screen time. Screen time basically means like how much you watch something. If you've ever heard this, it takes about 10,000 hours to master something. And I don't believe you can ever truly master trading. I think mastering trading is crazy because if you master trading, technically, if you master trading, like you could technically be a billionaire and make unlimited money. So there's no such thing as doing that. But this is like the trader dropout curve. If there's about 100 people who start, all right, this is the average people drop out. Or the other thing is like scam/bad info. Some of you watching this are lucky, okay? Sorry about that. Some of you guys are lucky. Some of you guys, like, you see me, and this is the first trader you see, and you're going to get very lucky because you're going to make a lot of money with me, especially if you follow my stuff. Not financial advice, by the way. But some of you get stuck in these traps of these fake people online, and you don't know they're the scammer. And one of the things I told, these students after I was done with this whole lecture is, you guys are going to go out in your own world and you won't have me anymore. And you might see a trader online or in your feed that you might be recommended. And like, you don't know if they're a scam or not, but I know because I've been doing this for so long. And that's like another reason traders quit. So if you do find a scammer or someone with bad info and you lose money with them, you can't just quit because there's a lot of other people out there. Okay. But these are like the biggest things and why I see people, just quit. Okay. So if you're not here because you want a better life for you and your loved ones, I would probably stop watching this video. Okay. Why would you want to trade if it wasn't for freedom or to have a better life or to help your family? I mean, maybe you just want to trade because you're bored, but if you're bored, you might not be motivated, especially if you start failing. Because you will fail, like 100%. You will fail, okay, at first. But, we're doing this for financial freedom. We don't want to work a job. The time, we want to be free, trade from anywhere, trade from Bali. We want to build our wealth. And even like if you are only interested in investing, everything I'm about to talk about is actually applies to investing a lot, okay? So if you're like, oh, this is day trading, I'm not going to watch this. This is for, I don't want to invest. If you can learn the concepts I'm teaching you in this next 3 parts in these 36 hours, you can make a lot of money investing too. It's funny because a lot of people get scared with investing when we drop a lot, but that's when you want to buy. You want to buy the worst looking knife candles you've ever seen in your entire life when you don't want to buy. You want to buy at the time where you don't want to buy, if that makes sense. And like that's something I'll teach you how to do by just watching the chart, okay? So just to start off with market basics and the candlesticks, okay? What is an actual candlestick? The one thing I'm going to teach you is this. Please be a smart thinker. And by that, I mean, if I'm saying something and you don't know what it means, you type in candlestick trading on Google. And there's going to be a million different candlestick trading videos or just what a candlestick is in general, okay? I use ChatGPT all the time. I think it's a great resource. And I don't want you to be confused when I say a term you don't know just because you don't know how to Google it. The smartest thinkers at the end of the day will be the ones who hear me say a term and they're going to Google it, okay? So if I say candlestick, you might want to Google what a candlestick is, okay? So this is the anatomy of a candlestick. Very straightforward, okay? Green goes up, red goes down. Draw this out. If you're taking notes, I'll draw this out, okay? So a bullish candle always opens at said price, so it could open at $300 an Apple. It could open at 250, 250.35, 271.29. It could open at any of these prices. And within that time period, so if it's like a 5-minute time frame, whatever that candle does in the next 5 minutes is how the candle forms. So the high we put in during that 5-minute period from like 950 to 955, and whatever happens, maybe it goes down, and this is what creates a candlestick. So let's say this is like we're on a 5-minute time frame. This is a 5-minute candle, and we open at 950. The price will always be here. It will never change. Okay, it will never change. The opening price will never change. But the wick, this and this are called the wicks. Label that wick in your notes. Can change. Okay, And then you don't know the close until the candle closes. But the wicks from the high to low in that 5-minute time period can change. Let's say this is an hourly candle, and let's say this opening price is like $300, okay, on Apple, right? If it's $300 in Apple during that time period, all right, the candle can do whatever it wants. So if I just go on a chart real quick, and by the way, this is TradingView, which I'll talk about in a second. I forgot I have to talk about TradingView because I haven't really gone over that. I actually might go over that in one of my lectures, so maybe I won't talk about that. But this is called TradingView.com. I'm going to bring this up, but if you just go TradingView.com, you make an account, and you download the software, I swear it's not a scam. This is how you can get all these charts. And then there's a whole bunch of settings like up here in the top right where you can change your canvas, your background, and then even like your candlestick color. So that's how I got it to look like this. But this is essentially how you're going to find like every ticker in every chart, which you're going to type in the top left corner, and you can go to stocks, funds, right, and basically see anything. Okay. But if I have a candlestick and it's a red candlestick, let's say this is red, all right, like this. It's a red candlestick, and let's say this is like a 300 price in Apple, okay. Let's say this is $300. We're not on Apple right now, all right, but let's pretend we are. So let's say this is $300, and this is the hourly time frame. The hourly time frames only open at 9 o'clock, 10 o'clock, 11, 12, every hour, okay. So that's what time frame we're on. The candlestick during this next hour could theoretically flip back green and go above 300. So now it'd be green. And then it could flip back red in the same candle, creating a wick because that's the highest we went in the time period. So like right here. And then it would have to go back red again. Okay, if we're below opening price, so write this in your notes. Below opening price of a candle equals red, above opening price equals green. Okay, so wherever we go inside the candlestick, it's creating the high of the candlestick, the low of the candlestick, and then it always opens at the same price. Okay, and then the next candlestick opens at 10 o'clock. Okay, maybe this is red as well. All right, then the next candlestick might open. Maybe it opens up here. Okay, actually that wouldn't make sense. It's got to close probably closer to the open, right? If the candle closes here, it's probably going to open right near that close, like right here. Okay. Sometimes there's like these little discrepancies where we'll gap up or down, but don't worry about that for now. But let's say it closed there. Technically, right, this is what a potential open of a green candle might look like. Okay, right here. So that is basically how a candlestick works. Pretty simple. You got all these terms: OHLC, which is open, high, low, close, the 4 price points. I don't ever say the word shadow, but apparently a wick is a shadow. We don't say that though. We just say wick. And yeah, like a large green body. So like a large, we always remember this. Write this down. A large body, which is basically like this green period here. Okay. A large body like this is, if this is a body, and then these are the wicks. Any body that like outweighs the wicks by a lot, and I mean by a lot, that means it's a strong candle. Okay, it's a strong candle. Now, can we have a strong red candle? Of course, and I call these more death candles. But if we have a big red candle body like this is a strong candle, right? It barely has any wicks. It's showing us the direction, and it's just so easy just to say, okay, we're probably gonna go down after the candle like this because there's so much selling. Okay. But that's what a candlestick is. A weak candlestick would be more like, this would be a weak candlestick. Let's say it's like a green candlestick, and let's say it's just like really wicky. Like let's say this just means that like buyers and sellers don't know where price wants. Like they don't really have. No one's winning the battle basically. Okay, so that's what a wicky candle is. This is more of like a weak candle. All right. So that's a weak candle. This is a strong candle. Note that down. All right. Now, this is where we're going to get into order types, and I think I'm going to be done with this because I do start talking about this from actual class that I'm in. But there's 3 order types: market order, limit order, and stop order. Okay. I'm gonna talk about this a lot in the next 5 minutes when this little short clip is done, because this is the part I missed when I was teaching the UCLA kids. But a market order, basically, you're just getting in immediately wherever price is. A limit order just will execute at a specific level you want. So let's say on like Apple, you're trying to get in at like, let's say you're trying to get in at like 300. So let's say 300 price levels down here, okay? And you only want to buy Apple at 300 bucks. Okay, you want to buy it there. You'd have to place a limit order and place it at this 300 level, like that. And you'd only get in at the 300 level. A market order, you'd literally get in here, wherever price is. Maybe this is like 315, okay? So you'd get in at this blue circle. But a limit order, you can essentially just place a limit here. Then if we go down, hit 300, that is where you get in. Whereas the market order, you're going to get in where price is at the time. So if we look at live price action right now, if I market order right now, I'm going to get in at 28,892, okay, right here. And we don't say $28,893. There's really no unit to this. This is just 28,892 in NQ. That's what we say. All right. But basically right now, you know, you can see price is at this level. Now, if I place a limit order, I can place a limit order down here. Okay, I'll just go to paper trading and show you. But if I want to get in at 28,860, I do limit here, but it doesn't mean I'm actually in the position, right? It's just if we hit here, then I'll be in the position. Then I'll be, you know, in an actual trade, and I can make or lose money in like seconds, okay? Now, can I drag the limit up here to way above, and will it fill me wherever that is? Yeah, so if I'm dragging like a buy limit order to way above where price is, it'll fill me as close as possible to what price is now. You know, what we're trading futures, so we're going to be trading MNQ and NQ. You won't have to worry about, I'll just market order because it will get you in at a pretty good price. But sometimes if you trade these stocks with like not a lot of participants, it can get you in at a lot of random prices, which is not that great. Okay. So yeah. Now a stop loss, please write stop loss or stop order. A stop loss in giant letters in your notes, a giant star, 50 million stars around stop loss. Whatever you have to do, this is the most important thing for the whole lecture, understanding stop losses, how they work, where people place them. And this is why I make so much money, because I understand the psychology of where people place stop losses. Again, you're not going to understand this now if you're a beginner, but think about this. Let's say your friend just got into day trading and they say they bought at a specific level and they're like, this is going to be the low of day, when Apple's not going to go back below 300 all day. Their stop loss is basically a market order designed to where if we do hit a level, you'll get out because you'll be wrong, so you'll lose money. But it's like a capped risk, right? If I'm longing on a chart and I long based off of something, maybe I'm just longing here, right? But I think if price goes here, it'll probably go way lower. I'm going to put my stop loss here to try and like save myself from losing more money, okay? So I just put my stop loss there. If we just look at this chart really quick, let's say I want to take a buy position like off of this 300 level. So let's say I'm trying to buy where this red circle is. And I think Apple's at 300, and let's say I think I'm going to buy and I think Apple's going to 315. If I don't place a stop loss here, and Apple does not hold this 300 level, it could just keep going down and down and down and down and down. But if I put a stop loss at this 290 level and it breaks my 300 level, we're likely to probably go lower. And that's the point of a stop loss, okay? Like, it will just cap your risk and you won't lose as much money because it's going to get you out of the market, okay? So if you went to the market, you're free to get out at any time, and you ideally want a stop loss every single trade. If you don't, all right, that's probably not a good idea. It's like if you go to the casino, who's going to make more money? You or your friend, right? Let's say your friend comes in with 200 bucks, doesn't care if he loses it all and it goes to zero. But let's say you come in with 200 bucks, but you say, okay, I'm at the casino, I'm going to leave if I lose $100 or more. Okay, or I'm going to leave if I lose 100 bucks. So your stop loss is 100 bucks. So if you lose 100 bucks, you're going to save 100 and you're going to leave. But your friend, you can go to zero very easily. So who's going to make more money long term? Probably the friend that just stops the second they go down 100. Okay, and that's basically what a stop loss is. All right. So For the following rest of the next 36 hours presentation, it's not going to be edited. I'm not editing anything. It's going to be all raw. Remember, you can skip some parts where I'm not talking or whatever. But yeah, the majority of the format is me showing a presentation on to the students. Okay, the next couple hours is me talking on a screen like this, but it's going to change. This is not how it's going to be the whole time. And you won't be able to read all the words on the presentation when I'm talking to students when I have my camera recording me and then the projector. So what I want you to do is just follow along with the link in the bio. I'm going to give you guys a whole presentation and you can follow on that way. Okay, so let's keep going here.
Okay, so ready, look. So let's say this is, priced at 210 and we're in the position. Right, so let's say our position's here. We're going to label it green. If price goes down here, okay, and we're in a buy, and we think price is going to go to, I don't know, like 240, okay. If we earn a buy at 210 on Apple, and we think it's going to go to 240 bucks, and all of a sudden, the candle starts dropping and dropping and dropping, and all of a sudden we're like 195. Do you think you're right or wrong about Apple going up to 240? Yeah, you're just dead wrong. It is not going up. You're getting wrecked. You're down a lot of money. And this is the most important part of trading. If you do not accept defeat, you will lose trading. Okay? One of the best books I ever read, and I don't read books. I hate books. One of the best books I ever read was The Best Loser Wins by Tom Hogarth. You don't have to write it down now, but this is definitely a book you guys want to read in the future. Dude, what the hell? It's basically called The Best Loser Wins, and it's about, if I can get this up here. It basically talks about how the best person at losing or accepting losers is going to be the most successful trader, okay? And here's why. If you go to the casino with $200 every single night for a whole week, okay, and you go to the casino with your friends, if you had a stop loss of $100 every night, where if you lost $100 and just stopped, okay, do you think over the long period of time you're going to be more or less successful than your friends going to the casino with you who just go all or nothing? Yeah, you're going to be more successful because you're going to lose less money. And this is kind of what he talks about. The people who accept losses quick in the market are going to be the most successful. And when it comes to the market, you think about winning, you think about making money, but the most important thing is to be able to take a loss. If you cannot take a loss, you are going to be absolutely devastated and cook your whole account. And then you're gonna have to go work at McDonald's and put the fries in the bag. All right. So we need stop losses. Okay. Now, let's say price is going to maybe it's at 205. It's starting to go down, maybe a little bit. Do you think you're wrong or right or unsure? Honestly, at that point, kind of unsure. If we're at 210 and we start going to 205, we could maybe still bounce because maybe there's a good level, right? But if we just start going below that, a 200 level, that's bad, okay? And that's where you put your stop loss or your stop order, okay? And essentially when this stop order triggers, what happens? Yeah, it sells. It gets you out of your position. Now, what happens if you don't have a stop order here? Yeah, you could keep losing way more money. One of the first mistakes I see traders make is on a stop order, they'll put a stop order and they'll have it here. And I'll actually put one for you guys right now. Look, we'll just do a stop. Okay, so this is a buy stop, but they'll have a stop order here. And what happens and how people cook themselves in trading is this. We'll start going down. They'll have their stop order. We'll start going down more. And they'll be like, maybe we'll keep going down. Maybe we'll bounce here. Maybe we'll bounce at 200. Oh, nope, we're going down. Oh, no, maybe we'll bounce at 180. What am I doing here? I'm basically just risking a lot more money when I should have just got out of the position earlier, knowing I was definitely wrong. Raise your hand if that makes sense. Hopefully everyone. Okay, does this not make sense to anyone? Am I doing a good job of explaining this? Hopefully. Okay. Oopsies. Just exited out. So if I go to the chart here, all right, and let's say I'm on paper trading right now, okay, and I think we're gonna go up. Okay, look, I'm gonna buy here, right? I'm gonna buy, and I'm gonna put the stop loss at this low. Okay, why do you think I might have a stop loss at a low? Well, if we hit that low, we'll probably just keep going down because I want to see that low be used to bring the market up. So on TradingView on the paper position, what does SL stand for? Stop loss. Okay, so you drag your stop loss, you put it here. So I'm essentially risking $785. Now this is where it gets into a big psychological battle with yourself. Okay, if I know I'm willing to risk 785, I'm gonna actually go to micros because this is probably unrealistic to you guys right now. Okay, let's get into micro here. So same position. This is like the same thing. It's just a smaller amount. Okay, so now my stop loss is $78. If you know you can lose $78 versus if you don't know how much you're gonna lose, what are you gonna like better? Do you want to know how much you're gonna lose, or do you not want to know how much you're gonna lose? Yeah, you kind of want to know how much you're going to lose. It's just like going to the casino. If I know I'm going to lose $100, like I don't feel as emotionally like I'm not emotional because I'm accepting it. Okay, I'm accepting the loss. If I don't have a stop loss here, do I really know how much I could lose in this trade? No. And that's where people start becoming emotional because if I don't know how much I can lose, I essentially have unlimited risk, right? That's where you could lose everything, right? And if you know anything about Trump and his dumb tweets about whatever the hell is going on, Strait of Hormuz, all that stuff, he can tweet about something and then all of a sudden, big red candle, and all of a sudden it's down here and you're down $400 out of nowhere. When in reality, you could have had a stop loss here and it just would have stopped you out for $78 or $80, whatever it is. And you would have felt happier, right? Because you're just like, okay, I know I'm wrong. I'm going to accept the loss. And that's just, that's just the way the trading works, okay? So you really want to know how much you're going to risk. If I draw this right here, does everyone understand? Is there anyone that might be confused on what this means? What I just drew. Raise your hand if you don't know what this means. Okay. Basically, it just means this holds on to my stop loss for the red, so I put my stop loss at the bottom. This is the entry point in between the green and red, and then this is how much money I'm trying to make. So I'll try to get out there. That's where I put my take profit or my TP. Okay, write TP in your notes. TP equals take profit. SL equals stop loss. Two very important things to write. And this is called an RR tool. If I went to the casino and I brought $100 with me and I was willing to risk 50 and stop, if I went down to $50, I'd stop. Or if I went to $200, I'd stop. What is your risk to reward? I'm going to give you options. Is your risk to reward 1, 2, or 3? If I go to the casino with $100, I'm willing to risk $50 and stop if I hit 50, or I'll stop if I hit 200 first. Whatever comes first, minus 50 or up 200. What's my risk to reward? 1, 2, or 3? 2 said 2. Yeah, it's 2, right? Because if I double my money, if I turn 100 into 200, I'm leaving the casino. Or if my money cuts in half and I go from 150, I'm also leaving the casino. Whatever happens first, I don't care. I'm leaving the casino after both scenarios. That is what we call risk management. Okay, that is risk management, and this is essentially what this. I keep saying essentially a lot. Why am I saying that so much? That is what this is telling you. Okay, this box. Now, if I wanted to, okay, this is gonna be not make sense to you guys right now, but did you know I can actually make money if the market's going down? Yes, exactly. That's what happened in 2008. So if I sell here and I sell, you can also make money going down. Okay. So let's say in a position here, I'm gonna put my stop loss above this high, and I'm gonna do my TP at this low. Okay. Same thing. Now, without even looking at this, do you think the risk reward here would be 1, 2, or 3? 1, yeah, because it's 50-50. Okay, what about this? Do you think the risk reward here is going to be 1, 2, or 3? Yeah, 3, because there's 3 of these red boxes that can fit in the zone. Okay. So that's that. So that's basically what this is one of the most important tools you ever lose: long position, short position, whatever you decide to do. Raise your hand if you don't understand the concept of shorting, because I can probably teach this real quick. Okay, let me see if I can think of something. Okay. So let's say you buy apples from the store and you don't plan on eating them. You literally just buy apples for $2 an apple. Okay. So I go to the store, I buy apples for $2. Okay. And what I do is, oh no, that's not even, okay, wait, I'm going to ask ChatGPT actually here. I just want a really good example so you guys can understand. This is what I'm talking about with being a free thinker and like being a smart thinker, right? If I go to ChatGPT, I'm going to literally just tell it to explain me short. Okay. Explain shorting the stock market using apples like I'm 5. All right. So if you buy apples from the store for $2 and you sell them back to the store because you didn't eat them for $3, you're making $1 per apple. Okay. Shorting or betting the price going down is this. Let's say I don't own the apple. Okay. Does everyone know? Okay. Everyone knows Erewhon. Hopefully. Yeah, I go there every day, dude. I love that place. Smoothies are gas. So let's say I go to Erewhon and I borrow their apples. Okay. I borrow their apples. I don't actually own their apples. And let's say their apples are worth $100 because it's overpriced as hell there. Okay. Their apples are $100. And then I come back the next day and I basically give them back the apple for $110 instead of $100. Wait, no. I give them back the apple for $90 instead of $100 because it went down $10. Does that make sense? Because I don't own the apple. So I'm borrowing the apple for $100, okay? But I don't own it, so I didn't pay anything. And then I give it back to them the next day for $90. And because I didn't own it, I'm making $10 because it went down. That is basically that is what shorting means, okay? It's okay, that's kind of still complicated to understand. I'm trying to think of what? Yeah, I guess hopefully this is the best explanation. It took me probably a month to understand what shorting meant. It's hard to explain in 5 minutes. But again, the next day, the apples are worth $5. I buy an apple for $5. Now I give the apple back to my friend, sold it for 10, bought it back for 5. Okay. So it's like you can buy back something for less is what basically shorting is. Okay. Right. So if you're borrowing an apple for $100 and all of a sudden it goes to $90, I'm paying $90 now instead of $100. So I'm basically making $10. If you don't understand it, that's okay. I feel like shorting is just one of those things where I guess you don't really have to understand the science behind it. As long as you know you can make money going down, like how the position I'm in right now, and then stop loss of it here, make money going down. That's all I really need to know. It's just like 2 + 2 = 4. You just kind of know what it is. How did I do the one where I predicted where the candles would go? Yeah. Oh, that's in replay mode. So on TradingView, I don't know if you might have to have a certain plan to use this. I think this is pay plan. But this is where you can practice and backtest. Backtesting basically means looking back at the history of what the market's already done and trying to find a strategy that works. So maybe you're backtesting the market going up at a certain level, right? You want to see how many times it tests a level, and every time it comes down there, you buy. So in replay mode, I already know the market's going to go down here. So if I click sell, it's going to give me a fake position. And then if I just do this, it tells me how much I'm making, right? Is that what you meant?
Yeah.
Yeah, so that's called replay mode. This is where you can kind of backtest and study your own and like kind of figure out your own strategy. But I would learn a strategy on YouTube before. I mean, we're going to get to my strategy. I think I have one of the best day trading strategies in the entire world. And I made it myself, and a lot of people use it, which is kind of why I'm famous for it now. But again, I don't want to give you guys my Instagram yet. So hopefully no one finds it. But yeah. Yeah, so that's just what backtesting is. But yeah, as long as you understand you can make money if the market goes up or down, doesn't matter. Okay? It's the same thing both ways. Okay? What is the next thing? We got 10 minutes, right? Okay, perfect. My thing says 1:48 because I'm in Eastern. Okay, 10:48, cool. So where's this? My screens are almost up. Oh, there we go. Okay, little more complicated. This is like actual orders. Do I actually use this to make money? Not really, but it's good to know if you know what this is. Okay, I would write this. I would note this, like price size, like just this whole diagram. I think this is good to draw down. Okay. Should probably like. Is there any way we can like maybe make this more? Because I feel like it's hard for you guys to see. Can we like make it more straight? I don't know why it's like that. Yeah, I don't want to mess it up. No. If it breaks, it's your fault. All right, that's perfect. I'm gonna move this over here. So yeah, I'll draw that diagram down. Basically, what this is saying is, let's pretend this is Apple stock. What do you think the mid price means? What do you think mid price means? Anyone? Okay, so the mid price is like what it's actually trading at. Like if you go on Apple on your TradingView chart and it says 103.50, $103.50, that's what it's actually at. Okay, now, what makes price that level though? What makes price that level is the amount of people trying to get in here versus up here, right? These are sellers, these are buyers. Okay, buyers are below the price, sellers are above. Okay. And what this means is like, if I'm in a short position in Apple and I want to sell it to someone at 105, but Apple's at 103, I'm trying to basically get price to go up. So I'm putting a limit up here to try to add to the size. And then the more people add to this, the more the mid price goes up. Does that make sense? The more orders up here, the more this is going to go up. And the more orders down here, the more this is going to go down. And if it's evened out, that's what creates the actual price. So if there's 5 people trying to sell at 105 and there's 10 people trying to sell or buy at $100, price is going to be a little closer to the $100. It's probably going to be like 101. if there's 5 people trying to buy at $100 and 5 people trying to sell at $105, what's price going to be? 102.50 in between that, right? 100 and 105, the middle of that is 102.5. Is that confusing for anyone? A little bit? Okay. So let me think of another example. Let me go on my chart real quick. Hold on. If I go on my chart and I draw my own, so let's say we have Apple equals $50, okay? Let's say for the seller side, let's say the sellers and buyers here. And let's say Apple's $50. If there are 20 people trying to buy at 45 bucks, right? 20 people have their limit order. Remember I said what the limit order was? Okay, I can't place the limit order now, but they had their limit order there. And then there's 20 sellers that have their limit order at $51. Is Apple actually at $50? No. No, let's say they had theirs at 55. Would Apple actually be at $50? Yes, exactly. Do you see how this can get really complicated? Because there could be like 10 sellers at 55. All of a sudden, one seller at 56 point whatever the hell you want to think of. Then all of a sudden, there's like 3 sellers here at like 57. And then it just becomes it's just a whole algorithm at that point. And basically, it's just the median of how many sellers versus buyers are, and then that makes up the price in between. Does that make a little more sense? Okay. So yeah. Okay. So again, price rises when buy orders basically exceed sell orders at a level, okay, forcing buyers to go higher. And price falls when there's more sell orders, right? If there's 1,000 sell orders at 105 in Apple and only 10 buy orders at like $100 in Apple, it's gonna go down. Like there's way more sellers. Why would it not go down, right? Now, this is a little more. This is kind of gonna be what you're gonna want to think in terms of. Hopefully you understand this, but listen to this. I just taught you guys about stop losses. All right. I taught you if you buy here, all right, if I'm on paper trading and buy here, I put a stop loss here, correct? You guys all understand that? Buy here, I'm willing to risk $50. I'm going to put my stop loss there. Okay. How many other people in the world do you think you're learning the same thing? Buy and put a stop loss at like a low. Every single person that learns day trading is learning this exact same thing. You buy at a level, you put your stop at a low. You buy at a low, put your stop at a low. Is this low more obvious or is this low more obvious? First one, yeah. So that's actually more obvious. So I'm actually going to do my stop loss there. Okay. So let's say we're getting in a position here. Stop loss at that low. It's just way more obvious. Then we'll do our take profit up here. Okay. Every single person in the world learns to put stop losses at lows or highs. I guarantee you, if I go on YouTube right now, I guess we'll risk my search history here. Whatever. I don't think I have anything bad, but no, we have Juice World. Okay. If I go to this right now and I just type in, how do stop losses work? And this is what I mean by being a free thinker. There's TJR. Let's see if I can find something. Okay. So let's go here. And we'll skip through the video. Right, see how he's showing the risk reward tool here. This is the problem is my whole feed is like actual good trading. I'm trying to go to the trading that's going to come up for you guys because my search history is different. Let me see here. Okay. Let's see where he puts a stop loss. Dude, okay, I'm trying to find a video where he puts a stop loss in a bad spot. See, my feed is like all really good trading. Basically, what's going to happen for you guys is you're going to go on YouTube and you're going to be like, how to day trade, right? You know, how to trade support and resistance. And what's going to happen is there's billions of people here teaching you to put your stops to these highs and lows. Look at this. See how he's like see how this is a high and he kind of has it marked out, right? Same thing with down here. See how he's marking out all these highs? See how there's like a cluster of like, see how there's a high here, 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 and they all kind of line up. Right, so he's basically going to teach you like put your stop loss there, okay? Now, when you think about that, okay, what might be the bad thing about 100 million people or every single person who learns day trading to put their stop loss at a lower high like this? What? Not quite. Okay, if I'm in a buy position here and I have my stop loss at a low like this, but so do 1,000 million other people, what do you think the market's going to do to try and wreck the most people possible? Yeah, it's going to go down and hit the stop loss. Because the market needs stop losses to fuel the move. This is what I'm going into next. And this is where it gets a little more complicated. Like, if we don't have orders, can the market go up? No, it can't just go up if we don't have orders. Is a stop loss an order in the market? Yes, a stop loss is another order. When you put a buy limit or when you buy a market order, is that an order going into the order book? Yes. What kind of order is a stop loss? A long or a short order? It's a short order. Now, what type of order, if I short here instead, maybe I short and I put my stop loss up there. What type of order is this stop loss if it hits? It's a long, it's a buy. I'm buying back. I have to buy back to get out of my borrowed position. Now, I'm explaining this to you because that fuels the market, okay? You know, when Peter Tuchman or Wall Street of Einstein, when he says, "Oh, the market's down 3%," that's a good thing. If the market crashes, raise your hand if you know about the market crashes, like the Great Depression, the 2008 crash. Okay, why do we crash and we go back up every time? Because every single time the market crashes, we're wrecking so many people. So many people are panic selling. All right. Now let me ask you this. if people weren't panic selling, would all these $1 million institutions be able to buy into the market? No, because there'd be no orders to get them in. Is it all coming together maybe? Hopefully. Like, you need people to be getting wrecked, or you need people to be getting stopped out in order for you to buy the other position. So if I thought the market here was going to go down, a downtrend, and hit this low, and then go up, us stopping out people here are short orders triggering. Because if I'm going to buy and my stop loss is here, I'm selling the position. So if we go back to the order book, I know I'm probably going to lose some of you on this a little bit, but it's all right. If you go back to the order book, my sell position is now going to be up here, okay? Which makes no sense, but my sell position is going to be up there. So my stop loss is on the order book. Now, what do we need? What do buyers need to get into the market? Who are we buying from? Yeah, we're buying from the sellers. So we need people to be getting wrecked in order for the market to reverse, is where I'm trying to explain. So if I go to the weekly chart, look at this. Where's the crash in 2008? Or where's the COVID? Let me go to SPY. Okay. This was the COVID crash right here. Okay. Who remembers this? Remember everything during COVID? You guys were young. I was young too. I was so young, dude. I wish I had money to buy that. But when we drop all that way, okay, do you guys think that this is an obvious point on the chart where people might have had stop losses if they were buying? Yes. That is exactly why COVID goes down, hits everyone's stop losses, where YouTube and everything's everyone's going to teach you to put your stop loss at this low. And that's why we go back up. Because all of those like sell orders or all of stop losses from this low here are just completely getting bought back up, because all these $1 million, institutions trying to, put billions of dollars back in the market, they don't have enough like people getting wrecked up here. So they can't. But there's so many people getting wrecked that have stop loss orders here. And there's also the panic seller. So, my dad or my mom, if we're all the way down there, my mom or my grandma might get scared and be like, oh, I'm selling my position. I'm going to get out of the market. They're also selling down here. And that just leaves so much orders for all the buyers to get back in, because now all the buyers are buying back all of their positions who are panicking and being like, oh, the market's going to crash. And that's why the market moves the way it does. Okay. So I'm teaching you the right way. If you go on YouTube and you look up any strategy, they're going to teach you to put your stop loss there. But we essentially wait for that to be kind of hit. And then we look to get in position after everyone's been wrecked, or after all the stop loss have been wrecked. So it's essentially a way to fuel the market, okay? So if I were to look at this in live time, go to replay mode, right? And let's say we're in COVID right now. Let's say this is what it looks like. I'm thinking, I kind of want to buy. I'm a $1 million institution. I'm a $1 million bank. I want to put $1 billion into the market, but I don't see enough sellers yet, and I can't buy a $1 billion position because there's not enough sellers, or there's not enough people getting wrecked, or there's not enough orders in the order book to let me get in, right? If I go back to this order book, right, maybe there's only 5 sellers and 1,000 buyers. If there's 1,000 buyers at a level but only 5 sellers, how many of those buyers are going to get filled? Only 5. Now there's 995 other buyers who literally can't get in because there's no other sellers willing to sell at that price. That's why we need panic. That's why the market needs a crash, because we need that panic. We need that fear. We need people to basically get scared and get wrecked. And that's, what I'm trying to show you. Okay. And that is why it's very important to understand an order book. I don't really need to I don't use this to make money. I'm not looking at an actual live time order book. You can. It's called order flow, but I don't do that. I just read the candlesticks. If you master reading the candlesticks, you can pretty much master anything. Now, I know only half of you probably understood that, but I'll keep explaining that as we go. That's like probably the most complicated thing I talked about so far. Okay. Does anyone have any questions about, this at all? Anything? Okay. Basically we call like just the places of highs and lows liquidity. I'm going to use that term a lot, in the next week or two. I would write liquidity equals clusters in your notebook. It's not going to make too much sense now, but basically areas with many orders are called liquidity. All right. So let's say I change this 103 number to 10,000 orders instead of 300. Okay. Or instead of 500. If I change that order, okay, to 10,000 orders, do you think there's more clusters of stop losses at the 10,000 orders or the like 600 orders? Where is there going to be more clusters of movement? The 10,000 or the 600? Not a trick question. Yeah, the 10,000. There's just a lot more going on where the 10,000 orders might be. Okay, so that's basically called liquidity, which I'll explain, but trading is not random. The market does not randomly do things. When the market dumped during COVID, that was all planned. That was free money. I wish I had enough money to buy when that happened. When your parents are scared, of the market crashing and they're like, oh, we're going to lose all their money. That is when you want to buy, because that is where you get all the people selling, and that's when all the institutions and all these big funds start buying. Okay, that is the most important thing to ever know, especially for long-term investing. Even if some of you don't make it day trading, just know market crashes equals good for buying. When people are scared, when you go on social media and when you go on Twitter, when you go on Instagram and everyone's freaking out because the market's crashing, I promise you, this is not financial advice, but you buy. Okay. And I know it sounds like opposite, but that's why I'm so successful at what I do, because I think opposite of everyone. Okay. So that's just called liquidity. Okay. All right. Any questions right now about just orders in general? I feel like if you didn't understand that the most out of everything I've already explained, that's not a bad thing. Like, you don't fully need to know how the order book works because we're going to be reading candlesticks. It's just good to like kind of know, I guess. But any questions about that? What are some thoughts so far? Easy, hard, interesting? Hopefully you'll be able to like predict where do one of you have like any uncles or parents that talk about like investing? Raise your hand. Okay. Hopefully by the end of this like little thing, the 2-week thing, you'll be able to like tell your parents, don't buy here or buy here. Okay. And they're going to be like, how do you know that? Okay. And they're going to like be very surprised you know that. Okay. I don't want to make this too boring. How about this? 1, 2, 3, 4, 5, 6, 7, 8. How about you guys get into groups of 3 and make sure one of you has TradingView and see if you can just start. Let's do your homework now, actually. See if you can find just examples of weak candles, strong candles, and then just candles you're unsure about. And we'll just do that now, honestly, because I don't want to be too boring and just do a presentation all the time. So find a group of 3, make sure you have TradingView, and then see if you can find just examples of both, and then I'll go around and check, all right? All right. Are we ready? We got 5 more minutes. Of this session. I'm going to be going over the ones that people are all unsure about. and it was a candle that pretty much looked like this, where we had like a small wick here, but like the body. See how the body here is like kind of the same size as let me see if I make this better. This looks horrible. See how the body and the dude, why does this look so bad? Okay. See how the body of this candle is kind of the same size as the wick? That's where you start getting into the psychology of candlesticks, okay? What is happening? This is what I'm going to have you guys do for your assignment, actually, okay? What is actually happening during this candle before it closes? Yeah, it's going all the way down, then something or someone is pushing it back up. Do you think that's a sign of bullishness or bearishness? Bullish. Because they're trying, like, people are trying to push the price down, but then last second it closes back to the upside. That is very strong. That means sellers are losing. That means buyers are winning. The bulls are winning. Okay? So that's more of like a bullish candle. It's not a strong or weak candle, though. Okay? It's more of a bullish candle. I wouldn't measure that you saying strong or weak. Okay? It's more of a bullish candle. Now, same thing to the opposite side. Right? If there's a red candle and it's going all the way up here, right? But then we close down here. Is that a sign of bearishness or bullishness? Yeah, because there's so many people trying to buy it, but before it closes, it goes all the way back down again. Okay? Now, for your assignment now, I want you to find 5 types of candles and write them in your notes. Okay? And you're going to use Google this. Type in types of candlesticks in trading or something along the lines of that in trading. Go to images. And I want you guys to find me 5 patterns of candlesticks, okay? I'm going to give you one example, okay? This right here, this is called a hammer, a bullish hammer, okay? This is just an example, okay? It's a bullish hammer because it looked like price wanted to go down, and then last second, boom, goes all the way back up. Okay? Does that make sense, everyone? So that's what a bullish hammer candle is. Okay? There's a bearish hammer candle. There's a bullish one. There's a shooting star. Basically, shooting star is the opposite. So shooting star would be this. Okay, it would be like this. Now, these silly names, they don't really matter. The psychology behind the candlestick matters a lot more. Okay, so while you learn these names, it's not going to make you money, right? This is going to be shooting star. This is going to be bullish hammer. You just have to understand the psychology of how the candles are being formed. So like a bullish hammer is just the candle goes down, tries to go down, and then boom, buyers bring it up last second. That is extremely bullish. That is a sign of a reversal. That is a sign of a bottoming market, right? If that candle appeared at the bottom of a COVID crash or the bottom of the 2008 crash, I would have put my whole house and bought. Okay, I would have put my house on buying. All right. So that's going to be it for this session for now. So 5 examples of candlesticks. Go on Google. You'll see a bunch of them. And yeah. And then 1 o'clock?
1 o'clock, yeah. We'll be in the same room as this again. So you come back here at 1.
Also, you guys have to understand, we are going to be talking about futures. Futures is basically like you trade contracts, but it's not a contract you're signing. It's just like the unit, okay? It's like when you trade shares, you know what a share is, but we're trading contracts. They're essentially like fake. Like you just have to understand we're buying and selling from someone. But we trade NQ1, okay, which NQ1 equals, it's basically QQQ. So QQQ is an ETF in the stock market we can buy shares of, and usually people invest into it, which is tech stocks. So this is tech stocks. So this is like, it's made up of off of like Nvidia, Tesla, all the big techs like Microsoft, Meta, everything. All right, and then there's ES. Okay, ES equals SPY, which equals S&P. Okay, so that's S&P 500. So there's 500 stocks that make up SPY, or the S&P, which is basically SPY, which is basically ES. Okay, but this is just their futures version, if that makes sense. Okay. But yeah, just understand QQQ equals an ETF. And we do not trade that. We trade the futures version of this ETF. Okay, most people like long-term invest in QQQ and SPY, and it usually it goes up, right? If I go to the QQQ chart here, it's gonna look the same as how NQ looks right now, but this is just like the long-term investing version. So same exact thing, but we just trade the futures, which is contracts.
So what I trade is not stocks, I trade futures. So this is the stock version of what I trade, and then I trade NQ. Okay, and you're going to want to type this down, write down NQ1 is a ticker I will mainly be teaching on, like this. So if you type that in the search bar trading view, this is how you're going to find the chart I'm on. So it's NQ1, exclamation point. Okay. Now, ES is the other one. That's just ES1. What is ES, guys? What is ES? It's what? Yes, futures, but what is ES in the stock version? It's the S&P. NQ is the NASDAQ. ES is the S&P. I trade this one. I sometimes look at this though, and I'll explain why later. But NQ1 is futures, okay, of NASDAQ. All right. Now, this is gonna be so boring. This is where the math comes into play, and this is how you determine your risk and everything. This is the mini contract, so write this down. NQ1 equals minis. ES1 equals minis. Okay? And then MNQ1 equals micros. And then MES1 equals micros. Make sure to have these four written down. Okay? Now, what do you think the difference between minis and micros is? Someone raise your hand. Yeah. Yeah, how big they are. So, do you think if I bought one mini, do you think that'd be more or less than if I bought one micro? What? What do you say? No. Micro. Micro is the smallest. Mini's the big. Mini's obviously still. It sounds small, but it's not. Okay. A micro is smaller than a mini in this scenario. So when I buy one mini, it's gonna be 10x what the micro is. All right. Let me show you what I mean. What? There's nothing higher than the mini. Good question, though. Yeah, the mini is the highest. So we are going to read this chart in terms of points. Is there any way you can move the projector over a little bit? So if you can see the y-axis over here. A little, no, the other way. Yeah, right there. Oh, right there. Yep. Perfect. So I'm going to draw some price points, okay? What price point is this? Someone raise their hand. What does this say? Yeah. Yes. It's not really cents. It's not really dollars. We're just going to read it as we're at 29,136.25, and we're not going to attach a unit to that. Does that make sense? There's no unit for that. Just say 29,136.25. That's all we say. Okay. Now, I'm going to label a price here. This is 29,000 or 29,100.25. Okay. What is the difference between this and this? About 36 points. So the difference between these two price levels are 36 points. That's the unit. We call these points. Okay, the difference between one price level and another price level. So do you guys see why it's 36 points? Okay, I'm going to quiz you in 2 seconds. Ready? All right, someone tell me what the difference in points these price levels are. Raise your hand. Yep. Nope. Yep, 41. You got it. You get why it's 41? Yeah, you just subtract it, right? When price moves from 29,095.25 to 29,136.25, it is going up 41 points or $41. That's what the yield is, but we call it points. Okay. So that is that. Now, this is where it gets a little more nerdy and mathy, okay? One mini, write this down, equals $20 per point. All right, $20 per point is one mini. One micro equals what? I told you guys the answer for this already. 2? Do you guys agree or disagree? You agree? What do you say? It's $2. Yeah. Remember I said 10x? The micro is divided by 10, and the mini is 10x the micros. Okay, so it's going to be $2 per point. Now, one mini on yes equals, does anyone have any guesses? You wouldn't even know this. What? 200? You're close. It is higher than 20. 40? Oh, you're very close. You're close. Nope. Higher. 50, yep. $50 per point is ES. Okay, 1 mini equals $50 per point. Okay. 1 micro equals what? 5. It's 10x, yep. Now, as young individuals, for you guys just getting into this, what do you think would make the most sense to be trading? Okay, why? You're just a beginner. You're just learning how this works. Why micros? Yeah, exactly. You're not risking as much money, and you got to start with baby steps. Okay, got to start with baby steps. Now, let's see if someone can do the math here. Earlier in the replay mode, remember when I made $1,000? Okay, and I took 1 mini in that trade. Can someone tell me how I would know how many points that trade was? Think about it for a second. So I took 1 mini in the trade earlier to make $1,000. What? Yep. Exactly. So what is that? Yep. So that was about a 50-point trade that I took earlier. So right now, at this time, price is at 29,100.75. So if I take 1 mini here, what level would I need to target to make $1,000? Yeah. What do you say? 160? 170? Okay, we're shorting. Yeah, we're shorting. Yeah, we're going down. What price level would I need to make $1,000? Come on, this is simple math. About 80. Or wait, no. 70. You do 29,117.75 minus what? Minus 50. Right? 67, yep. Perfect. All right. Now, let's watch this in action. If I drag my TP to, you said 67.75, right? Yep, 29,067.75. Boom. Exactly $1,000. See how the math works? Now, let me ask you some other questions. If this was 1 micro, how much money would this be? What? If it was 1 micro?
1 micro?
Yeah. $100. So if I traded 1 micro here, that's $100. What if I traded 2 micros? Okay, what if I traded 2 minis? What if I traded 10 minis? 10,000. Yeah. Okay. What if I traded 3 micros? 300. Okay. What if I want to go for, this is where we're going to have to get your calculator out. Okay. What if I wanted to trade 3 micros and target 72 points? How much would that be? 3 micros and I'm targeting 72 points. Let's say I'm in 3 micros and I want to target 73 points. So, by the way, if you hold down Control on TradingView or hold down Shift, wait, I can see what 73 points is. See right there? See how it tells me the points? So let's say I want to target 74 points, which is going to be right here. Okay. And I took 3 micros on the setup. How much money would 74 points give me with 3 micros? I'll give you some time. The equation to find this is we're going to do X equals number of micros. Watch. Okay. So it's going to be number of micros. So it's going to be X times, I can't do a dot here. We'll just do that. X times $2 per point times number of points. That's the equation. 74 points. This is the equation you want to write down and figure this out. What? Yeah, precisely. Okay. Precisely. All right, now let me ask you another question. If I wanted to target 60 points and I took 2 minis, how much would that be? 60 points and 2 minis. What do you mean? I want to take 2 minis and target 60 points. How much money would I make? So what I instantly think of is $20 per point. 2. Again, the equation is the number of minis times what? Times $20 per point times 60 points. 2 minis. 2,400. All right. this is gonna become secondhand nature to you guys, hopefully. And you can, if you draw an RR tool like this, and you right click it, and you do create limit order, it's going to tell you if I want to risk. Why can't I type anything? Okay, if I want to risk like $1,000 here, it's gonna tell me I can only take one mini. If I want to risk $10,000, it's gonna tell me I can take 11 minis. But it's really good to know this for these because you're gonna be in some fast plays eventually after I teach you. Okay, let's do one more example. Okay, so this is the equation. It's going to be, what I do is this. Anytime I'm asking you mini or micro, I always multiply it by the 20 or 2 first. So if I ask you a question, how many points would I make if I was trading a mini? I always do the number of minis I say times 20. That's the conversion because it's $20 per point. So if I say 3 minis, automatically think $60 per point. Does that make sense? And then times the number of points, boom, there's your answer. So, ready? Let's do this. We're in 6 minis and we're targeting 20 points. 120 times what? What's the equation though to get there? 120 times what? 20. Yeah, exactly. Right? Because 6 minis is $20 per point. So 6 times 20, that's $120 per point.
That's 2,400.
Yeah, times 20 is 2,400. Did you say 48,000? Oh. So, yeah. Let's do one more example. All right. Let's say I'm on the micro chart now. All right. And I went along right here. All right. $2 per point. Remember, ready? I want a long right here, and I want to have my stop loss here. All right, look, ready? First of all, we need to figure out how many points is a stop loss. A shortcut is just doing this. The old-fashioned way is doing this, like if you're like a grandpa or something. Okay. Wait, why isn't this duplicating? Okay, whatever. All right. First of all, about how many points is this? Yeah, about 95 points. So I'm willing to have 95 points on my stop loss, right? Ish. All right. Now, if I wanted to take, if I only wanted to risk $200 per trade and nothing more, how many micros could I take on a trade with 95 points? If I only was willing to risk $200 and I didn't want to risk any more, what's the max amount of micros I can take on this trade? Okay, do you think 2 micros? What do you think? Yeah, 1. Exactly. Why? Because 1 micro times $2 per point equals 2, right? Times 95 points. That would be $190. If I want 1 more micro, how much risk would that be? 380. Exactly. But if I lose 380, my life's over. I can't do that. All right. I'm emotional. I'm freaking out. I'm punched a hole in the wall. So I can only go 1 micro on this and be comfortable with losing that amount of money. It sounds complicated, but dude, it's so easy once you get it. All right. We're probably going to end with that. And what I'm going to do is I'm going to give you homework. I'm going to give you like 10 scenarios real quick. All right. Write these down and do these for tomorrow. What?
Can we take a picture?
Yeah. Take a picture of this so you have the equation. Wait, I need to go back. Okay. So remember, minis equals $20 per point. Dude, wait till I get into my strategy. You guys are gonna once you understand everything, it's like you'll see.
When the students can.
You guys will become the master. Some of you.
But you said
Well, you can, but
finance.
my favorite what?
Finance.
Finance what? Finance movie? Oh, Wolf of Wall Street. Of course. Wait, don't take a picture of this. $55. Now.
Number of points times 2.
It depends on what you're on. Well, mini would be what? 20 times 20 times what?
Whatever number of
Yeah, whatever. Yeah.
the number of
Times number of. By the way, I just want to clarify something. Are these shares or are these contracts? They're contracts. Yeah. Are stock shares or contracts? Shares. Yeah, that's probably something else you should probably note down. Yeah, futures, whenever I'm referring to futures, I'm talking, this is just contracts. Do you need to, is it like a contract you sign? No, it's just the unit, right? Just like miles per hour is a unit, right? You just know futures is a unit, like it's just contract. So this is the equation for minis. Now, who can help me out with the equation for micros?
It would be the same thing, but times 2.
Same thing times 2. You guys agree with that? Okay. Now, ready? Write all these down. I got 5 minutes, right? 5 minutes? All right. Write all these down. Ready? Yeah, you can take a picture of this. All right, 1. Oh, wait. How many?
My favorite class was calculus.
Wait, I gotta think of how I'm gonna word this.
Yeah, I did actually. On the that one I got a 3, but it's good. I got 4. What was your favorite concept in physics? None of them? Oh, my favorite was MCAT is equal to like what? Or oh no, the time dilation one.
All right, ready? Take profit equals 50 points.
Square root. Oh my god. Oh, you know what? You take constant. No, the word. Or no, yeah, sorry. Oh, we just covered the or like on a slope, you know, like the one on the slope, like a box. Yeah. On AP Calc, I got a better score.
Yo, what are you getting your AP Calc exam?
4.
I got a 5.
Oh.
Get mogged.
I got a 5
No.
on AP Government though.
Pretty good. I got a 3 on AP English, so.
Did you say AP? Oh, wait, AP English
I took-
or AP Lang?
AP English. I never took AP Lang.
I took 101 and 101B.
Yeah, I was never an English person though.
I am.
I mean, I'm a good writer, but I just never was in high school.
87.25.
Yeah. All right, are you guys ready, guys? All right, one more, and then you guys are good to go.
No,
It's gonna be 5 different ones.
1, 2, 5. Oh, and we just plug in the equation.
Yeah.
And we're only doing NQ1.
I'm saying micros and minis.
Yeah, but this is just in like NQ1. Right?
NQ and MNQ.
Okay.
All right, so these 5, all right? So we're going to do, if I'm taking profit at 87.7 for minis, how much money am I going to make? Okay, so that's a question. How much money will I make for each 5? Yep. Don't do it now. We'll check. I'll give you guys the answer tomorrow. Okay. So that's going to be it. And then we're going to do one more question. If I wanted to risk $500 on a trade and the stop loss is what? Yeah, this is extra credit for $1. If I wanted to risk $500 on a trade and the stop loss is 50 points, can I take 1 mini? Why or why not? All right, this is your guys' assignment.
Are we still doing the one that we forgot to do today?
Yeah, fine. So your assignment is this, okay? And then your also assignment is to write down 5 different candlestick patterns you find off Google.
Okay.
And I'm only going to go over a few of them, but it's just going to make you think about like, oh, okay. Everyone got a picture? And then once you have this, you're done. You can pack up.
Alright, everyone, we got student orientation, so at 3:30, meet in the courtyard. Like, yeah.
When an order fills, it means you're in the market. It means,
Like you just start playing.
yeah, look, ready? Watch.
Is it actual money you're using?
No. This is paper. Watch, ready? If I buy, I'm now in a position. I'm filled.
Yeah. But like, what do you mean you can be filled between like, let's say like a $50 gap, right, or a 50-point gap?
Because
What
if
does that mean?
you market order,
Like,
if you market order, and you're on a like some really low volume, like let me see. See, look how bad this is.
Yeah.
If I try to market order right now,
It would place you at the highest.
dude, it would,
side,
dude,
right?
on something like this, it could
don't you want to be at the highest ask?
No, you wanna
You want to
You
be
wanna-
the lowest at.
Why?
on something like
Oh,
Because you want to buy it as
Yeah.
cheap
Yeah,
as
yeah,
possible.
sorry.
Yeah.
Exactly.
like something like this. If I market order, it could fill me up here or right here, just randomly. Whereas NQ, it's gonna fill you here every time.
Oh.
Wait, how do you know it's gonna be good?
Because
Because
the-
NQ,
Because the
Oh, because you're queued in the same spot.
yeah, exactly.
yeah, they're tight, bro.
But that means like it wouldn't put you here or here technically. It'd just be random.
Yeah, exactly. It would be
Just-
really
Okay.
random on a stuff. Like, cause see how many gaps there are here? Exactly.
Oh,
That's the way you'd say
There
it.
you go.
Yeah.
I get it, now, bro.
Wait, so since we shouldn't be placing stop losses where everyone else places stop losses, where should we? place
You'll
them?
I'll teach you that. Look at this. Look how bad this is, dude.
Oh.
Yeah, there's like.
Like
no
if I
movement.
market order here, it's gonna fill me like at a random price.
Well,
So you would
Isn't
wait,
it the
market
mine's
order
not the same?
or what's the other one? Market order and what?
Market order and limit order. If
So
I place a
wow.
limit order here, right here, it's only gonna fill me around this area.
Why? Because it's
Exactly.
well, if the buy and the sell is the
because I
same,
thought
then
market was
why is
tight.
it? Why would it not be?
No, if the stock is tight, market orders will fill you at that price.
Yeah.
But there's a bunch of gaps.
If there's a bunch of gaps in your market order, you'll get filled wherever.
Does it mean like gaps? Like
Even,
there's gaps.
even though.
Yeah,
the-
even
see how
though
there's all
they're-
these
yeah, the
spaces
exact same.
between these?
Yeah.
It just means there's like no volume, which just means there's probably bids down here and asks up here. So I'll just get filled at a random price here. But on NQ, it's not like that. NQ is like,
Same thing with SpaceX. There was like 56 million volume.
yeah, there's so much fun. NQ, there's no spaces. I'm gonna get filled right there,
It's a market.
guaranteed.
So no gaps.
Yeah,
Oh,
exactly.
if there's okay, so the gaps mean that you can be placed there.
Yeah, the gaps mean I can literally be placed anywhere.
Oh.
Where if
I
there's
get
like no gaps and we're moving and there's a lot of volume, I'll be filled right into this
you.
candle.
Oh.
Yeah, if I'm
Uh,
not-
Should we buy
Okay.
SpaceX?
Thank you.
I would soon. Yeah,
Yeah, I'm gonna.
Alright.
if it like I have limit orders at 100. So I have a limit on SpaceX at $100 right now.
Uh huh.
So I'm not even looking. I have like 10 shares ready to buy there. I have 10 shares at 90. And if it goes down there, I'm gonna be
Minis
in.
or micros?
It's shares.
It's just,
Oh.
Yeah.
okay, so why are we talking about it in shares when it comes to, oh, because that's
Because
Contracts
yeah,
is
so this-
futures, shares is stocks. We're
Yeah.
not talking about stocks.
this is yeah.
So futures don't count as actual money, right?
Yeah, they do.
Or they do?
You can make a lot more money in futures than stocks. Stocks is more for long-term investing. It's hard to day trade stocks. So
Oh.
Okay, Ben.
unless you're doing options, but that's a whole nother story.
Yes, I
So-
thought you mean. Yeah, you're awesome. All right.
All right, what else?
Thanks.
Yeah, no
Thank you,
problem.
bro.
Thank you.
Are we going straight to Westwood after?
Any other questions?
Yeah, I'm like confused on how to solve it. Like,
Okay.
figuring out the
Did you take a picture of the equation?
Yeah.
All right, let me see your picture.
Sure. I'll pull it up.
Do you have the equation though?
I don't know.
Oh, okay.
Well, I know it's like the number, the mini is like 20
Okay, look
times-
right here. Take a picture of this. Yeah, that will help you. Number of points times 20 for minis. If it's micros, it's times what? Not 20, it's times 2, exactly. And that's how you're going to figure out all that.
Okay, thanks.
All right, yeah.
Yeah.
You good?
Alright, thank you.
Earlier, like the first class, you were talking about shortings, like how you can make money even the market plays down.
Yeah.
I kind of got confused on that.
You're confused on that? Yeah, so basically, okay, look. If I'm an Apple and I'm in a short, right? Look at this. So I want to sell on paper trading. Let me go in replay mode. Ready, look. So all of a sudden I'm short an Apple. I don't own this share. I am borrowing this. Okay? If Apple goes lower, okay, I'm done borrowing Apple. I'm going to buy you back. Oh, I'm buying you back for less. So I just made money because I bought it back for less after borrowing it for $328. So I'm basically borrowing a share at $328. I don't own it. I'm just borrowing it to short, and then I'm buying back their company at a lower price. So I'm making money when we go down because I just borrowed it. Does that make sense?
Yeah.
It's like if I borrow an apple for you and it's $10, but I don't actually own the apple, and then I give you the apple back, and all of a sudden the apples drop $5. I just made $5.
Okay.
So I would look up videos on YouTube how does shorting work. I've had to watch like 10 before I understood. So if you go YouTube how does shorting work in the stock market, I guarantee you one of the videos will click. But it's basically I'm just borrowing a share, I'm buying it back at a lower price. So yeah.
Okay. Thank you.
Yeah.
Also, I like your computer. It's
Thank you.
really nice.
Yeah, I got this it's a gaming computer. So yeah, how's it going?
I have a question, like kind of similar to his, but
Okay.
it's about like the buy stop.
Yeah.
Like, so that's for when you're shorting, right?
Yes.
Okay, so is
'Cause-
that like the limit that you would buy it at?
The buy stop is when, so see how I'm going to short right here?
Yeah.
The buy stop would be like here, right? This would be a buy stop. If price goes back up to this level, I'm buying back my position because I'm wrong and I need to get back. I need to get out of the position.
Okay.
And if I'm in a short, how do you get out of a short?
Is it,
You have to buy it.
yeah,
If I'm in a long, how do I get out of my position?
you sell it?
You sell it.
Okay.
Exactly. Does that make sense?
Yeah. And the opposite, the sell stop is if it's long. So if
Yep,
you want it
sell-
to go up, right?
If I want it to go up and I'm in a long right here, say I'm in a long, right, the sell stop is going to be at the lows. So I'm in a buy, and in order to get out of my position, I have to sell the one contract I just bought, and that's my stop out.
Okay.
So boom, I just stopped out. Right?
Okay.
Yep.
Thank you.
I'm just a little confused on how the minis and micros like apply. Like, what do you do? What does that mean? I'm a little lost.
It's what we trade. It's what I trade. So you just have to understand that, like, you know how I said, like, at a casino we could walk in and we can walk in with like $200, and I want to risk $100 for that day. Basically, when we're trading on the micros, and let's say we want to start a strategy and start making money, we need to know like how much money we're going to be risking. And if I don't know the amount of points, you know, and if I don't know the math on how many or how this moves, and I just get in a random buy position right there, how in the world am I going to know where the stop loss is going to be and how much money I'm risking? obviously right now it's nice because when I drag the stop loss, see how it tells me how much I'm risking?
Yeah.
That's nice. But I think you should still know the math behind it because this will not always be like this. Okay.
So that's just like.
It's just what we trade, and we have to know what we're trading and how much. Like, if we want to know how much we're going to risk, we have to know the math behind it.
Okay. I
So,
wrote it down. I'll just look at it.
no, you're good.
I was just confused with if that was a stock you're trading.
Yeah, this is what we're trading. We're going to be trading futures. It's not a stock, it's futures. We're going to be trading MNQ. And in order to make money, we need to know the amount of points. Like, if we risk 50 points versus. Because I'm going to start teaching you guys, like, where to put stop losses. So if I tell you guys to put a stop loss here based off of maybe there's a low there or something, you're going to want to know how much money or how many points it is, because if I want to risk $200 and the stop loss, basically the stop loss for my strategy has to be at a certain point.
Yeah.
That is a given. When I start teaching my strategy, I will explain where the stop loss is being why. Sometimes it's 20 points, sometimes it's 50 points, sometimes it's 60 points. And then wherever that stop loss is, that's how much I can risk. And that's why I need to know how this moves. So,
Got it. Okay.
yeah,
When you started like taking it seriously, how long did it take you to make a profit?
like 3 years. But what I'm teaching you is going to be a shortcut because I learned a lot of bullshit like my first 3 years.
Okay.
This is it. Like, if you can learn what I'm doing now, like I'm telling you, if I had myself,
Is it faster?
yeah, if I had myself, I would have been better. So
Okay.
quick. So, yeah,
Thank you.
yeah, no problem.
Thank you.
Funded, I don't know if you'll explain this later this week. Like, say
Yeah.
I get top step,
Yeah.
you have to pass. It's like 5 days, right? And
Yep.
then you move on to like the next one, right?
You have to. You can pass within 2 days, but I want to do that. You just need to, basically on Top Step, if you buy a $50,000 account, you just need to make $3,000.
Yeah.
So you need to get the $53,000 before you hit your end of day drawdown, because the more profit you make, the more the stop loss of the account goes up. So you can't hit, like at first it's like 48,000. You can't go below 48,000. If you do, you blow the account. But if you make 1,000 on Top Step and your balance goes to $51,000 at the end of the day, I think the Top Step goes up to like 48,500.
I thought there's somewhere you have to make like $150 for like 5.
That's on the
consecutive
funded
days.
account.
Mm.
That's
So
how you get
once
paid real money.
Okay.
So if you can have 5 days of $150 or more and your account is in profit, you can request 50% of that. So if I make $5,000 doing that in 5 days or even 10 days, right? Let's say take some losses in there and end the day in a loss. Then yeah, they pay me like $3,000 to my bank account. So I like Apex, but there's more prop firms I'll go over. But Top Step is good. There's a lot, dude.
Yeah, no. I've like looked into it a little bit, but I haven't really changed. Like, I can do trading. I haven't time, I feel like. But I just like looking at the market.
Okay.
Like you were saying, kind of, you just got to get out and look at it. when
Yeah,
you
but you
can.
also need to know what I'm talking about. Like, you need to
Yeah.
know how it moves and stuff before.
Mhm.
So,
Like trends.
yeah.
Do you ever trade crypto? Or no?
No.
Are you trading this week, like the night sessions?
No, I traded this morning. I traded 6 a.m. to 7:30.
Okay.
The time zone here is
Yeah,
cooked.
sure. Oh, that's good.
Yeah.
Alright. Yeah, thank you.
Yeah, no problem. You got something? You good? All right. Good or you don't want to do it? Okay, so yeah, tomorrow we'll just do the candlestick pattern things. Again, there's a lot of different candlestick patterns, but yeah, there's just so much I could talk about. Holy. Okay, let's go over indicators. So this class, when I went to the New York Stock Exchange, basically, Peter Tuckman asked me to do this, and I know they do use indicators, so I'm not going to bash them or hate on them by any means. But in my opinion, I would rather look at a clean price action chart, and I would rather just read the candlesticks like this, okay? Let me show you an example of a chart that does not look pleasing. Create a new chart. I'm going to show you this, and you're like so confused. Okay, ready? Okay. This is a chart, in my opinion, with way too much stuff on it. Okay. Would you guys say this is pretty confusing? Yeah. Yeah, a lot of lines, like, there's a line here, a line here, right? There's lines here, 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 right? And this is what some of these people use to trade. And I don't know, man. This is just terrible in my opinion. I don't like overcomplicating stuff. I'd rather look at a clean chart that looks like this. I predict up or down. You know, I'm not looking at a bunch of lines. And here's my case for why I like to do this, okay? Theoretically, if I go over here and I just start drawing a bunch of horizontal lines, here, 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 I can basically make cases for these lines to work in some way. I'm actually getting the lower time frame. I can make cases for these lines to work no matter where I draw them. So if I just draw lines randomly here, I don't even want to look at the chart. Here, 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 okay? And we go back in time, okay? Look, you could argue that, oh, this line was a good support level, right? We bounced off it, right? So that's where you buy. This line was a good support level, but I didn't even know. I just randomly drew the lines. Or look at this. See how I come up and reject this line? Right? I just drew random lines, and you can make an argument for all these lines somehow mattering or being a case in the market. And when you look at these indicators right here, essentially what you use these lines for, like these, they're called moving averages, you can basically make a case for all of these working at some point or another. And this is why I hate using all these lines, because it's too much stuff, okay? So I prefer just reading candlesticks, reading, you know, the momentum, reading the strength of the candles, rather than using lines in my chart, okay? And I think overall this has just made it easier for me. I don't like to clog my brain. Now, some people, I guarantee you one person in this class will probably want to have a lot of indicators in the chart, but maybe they just see the market differently, right? And that's okay. But you can do so much stuff. I can literally go on my indicators chart. By the way, on Tradeify, this is where you get the indicators. And I can type in solar system, and yes, I swear, like a solar system just comes up. See, look at this. How is this supposed to help me trade? You know, it's just like a solar system on my chart, okay? But there's so many different indicators, and I'm going to go over some of the basic ones just so you know what they are, okay? And here's the thing. I don't use indicators, so you're probably like, why am I teaching indicators? I'm teaching you indicators so you have the background knowledge of why I don't like them and why I think they're not good. Because a lot of the people at the stock exchange do use indicators, but personally, there's better. Okay, you know how like your parents have one way of doing something, and us as being young people, we just have a better way of doing something, but our parents will never understand because they're just so much older. This is how I see this. I think a lot of older traders, especially ones at the stock exchange, you know, they think indicators, like you have to use them, but you know, the younger generation, what I figured out, I think there's a better way to trade them, and that's just my belief. So that's where I'm kind of coming from as I talk about this. Okay. So the problem with indicators is they're lagging. They're basically just, you know, this is a moving average of where the candles are going with the last 20 candles, the last 30 candles. So if one candle is at 300, let's say Apple's at 300, and the next candle is 301, next candle is 303, next candle is 305. It's just going to be a line of the average of how the candles are moving. So it's already telling us what we're going to need to know. So like you can see, we have all these candlesticks up here, and it's trying to find like a median of what price is. So if price here is 300, but price goes up to 400 here, it's just going to, you know, find a median. Now, how will this be helpful to some people? Well, some people use it, you know, to buy off of. So, you know, if we're above the line, they might go long, or if we're below the line, they might go short. Okay, you know, same thing with here, right? Someone might buy here. See how we respect and hold that line, and that's what people use them for. But they're already telling us what price is, you know, basically telling us with the candles. Now, I just explained how I could just draw 3 random lines to the right of the chart without seeing anything, right? Same thing here. This line is just being respected, but it's not being respected over here. See how we're just chopped, like going sideways through it? And then see how we go above it, below, above it, below. So theoretically, I can point out in hindsight any time in the chart where this does work, but I can also point out times it doesn't work. And that's why I don't like it. 'Cause I like things that just mostly work. Okay, I don't like things that just are hindsight and, you know, it just doesn't make sense, okay? But they're basically lagging because as we're getting the candlesticks, it's just an average telling us, you know, what it's going to do. Does anyone not know what I mean by lagging? Okay, watch this. So I'm going to go to replay mode. And I'm just going to put like an EMA in my chart. This is an exponential moving average, or moving average, okay? It's a moving average of however many amount of candlesticks you want to see. So if I turn this to my chart, I go on the left, I click settings, I can do the last 20 candles, the last 9 candles, doesn't matter. Let me just do the last 8 candles. So it's going to be pretty tight. Watch. This line, this blue line, will not go to the right unless I play another candle. See that? See how it dropped after this candle dropped? That's what I mean by lagging, okay? It will not tell you what's going to happen in the future. It's just telling us what already happened. And I don't like that. It's not going to help me make money. I need to be able to predict what's going to happen so I can make money, not what already happened, okay? And that's like a big reason of why I don't love them. Of course they can be used to like determine the trend. Of course they can be used, you know, some people, what I like to do is, you know, if we go to the SPY chart, which is basically the S&P, which is all like the major stocks in the world, pretty much, not tech stocks. And we go turn this on to the 200. People do this for like long-term investing. What they'll do is they'll only buy under this EMA. Okay. So are we above or below it right now? Yeah, we're way above it. So this would not be a good long-term investing buy spot. Okay. This would be horrible. We're really high right now. And for everyone's like, oh, when should I enter the market? When should I enter the market? Here, right when we go below it. See how every single time we went below this line, we always go back above it? That's when you want to buy. Now, some of you are like, oh, well, that seems to work out. It does. Okay, it does work out. But you can tell this without this line, okay? You can kind of just tell we're very, very high up right now. You can tell we're just extremely high right now, and it wouldn't be good to buy unless we drop. And that's just common sense, I feel like. You know, or you could use this as a tool to where maybe if the market drops below this line, you want to buy in this area or zone, okay? And again, it's like a training wheel. It's like you're on a tricycle and you have training wheels. But I like to ride bikes. I don't need this line. You know, maybe it's a good for starting, but I'm gonna just keep showing you why I don't like it. Okay. So there's no, you know, mechanism. An MA crossing another MA costs nothing. It's a mathematical artifact, not a market event. It's something we already do. What some people do is they'll turn on 2 EMAs like this. They'll have like a 2. They'll have like an 18 and like a 9. So they'll do 18 and they'll do like a 9. And there's like strategies. Actually, I'll go back to that. There's strategies. So this is the 200 EMA and the 9 EMA. There's strategies to be like, oh, when the 9 and 18 EMA cross, or when the 9 and 200 EMA cross right there. All right, see right there. When they cross, that's a buy signal. You buy. And again, it's lagging, right? I'm going to be able to tell with how I trade and my strategy, which I'm going to teach you guys eventually, that we're going to go up regardless, right? Even though it's crossing and even though the indicators are telling me that, I can predict that down here before we cross without these lines, okay? And essentially that's what I'm going to teach you, okay? So yeah, there's so many different indicators. MACD is another one. There's something called the MACD. I would probably note this one down. Type in the MACD. Maybe do some more research on this tonight. But there's the MACD. That's one of the other biggest indicators that people use. It's essentially just like, dude, stop saying essentially. Oh my gosh. It's same thing as this cross right here. Okay. Look. I'm gonna see if I can make this bigger. This is already telling us what price is already telling us. Okay. See how price is going up here, and then this is all green? It's just telling us what we already know, right? When price starts to go up, the MACD turns green, right? When price is going down, the MACD is red. I mean, it's just telling you what you already know. So I don't like it. And what people try to do is they try to predict when they're going to cross back over. What do I mean by that? Look at this. Right here. Based off this previous trend, right here, do you think the MACD is going to go green or red? Yeah, red, because it keeps crisscrossing. Boom, 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 boom. Next thing will be red, right? So we are going to take a short here. We'll take a short. If we think it's going to go red, we'll take a short. Stop loss move was hot. So see what happens. And boom, it plays out, right? So that works. That works, all right? That's like a really good spot to use it. But if we just keep playing price, look at this. Now, do we think it's going to go green or red? Green, right? Because we hit a mountain up, mountain down, right? What's the next thing going to do? It's almost like a video game. It's like trying to predict where it's going to go. So here we're going to take a long, right? If we think it's going to go green, we're going to long. Right? It's just red, so it has to go green, right? So we're going to take a long. Oh, nope, stopped out. It goes more red. And again, that is what I do like. It's so hard to predict this. It just tells you what the candle's already telling you. And it's good to know about these because it's a good background to have this retail trading knowledge. I lost money for my first 3 years I tried trading because I used to try to trade this stuff. And I'm not saying it was a strategy. It was definitely like more of a me problem and psychology problem. It's never the strategy. It's always the person. Okay, remember that. It's always the person, never the strategy. You start any business and you fail and you mess up, it's never the business. It's always you. You're doing something wrong. Okay, don't blame other things. But yeah, dude, like, this is just why I don't like indicators. I mean, it's just telling you what you need to know. Another one you might want to note down, which you might hear on YouTube, when you go on YouTube, is the RSI. I'll note this down. It's called the Relative Strength Index, okay? Basically, there's two numbers that are important in the RSI. Okay, write this down. 30 and 70, okay? Now, this is the 70 mark, okay? Right here is 70, right here is 30. What do you notice every single time we, actually let me go look for 5 minutes. What do you notice happens every single time we get above the 70 level? What do you guys notice? Yeah, we usually end up going back down. Okay? Look, we hit the 70 level here. Top goes down. Hit the 70 level here. Do we really go down? Not really. Not really. And this goes down. Makes no sense. So they're already telling us what we already know. This one right here, this one does go down a little bit. This one right here goes down for sure. Just goes down very slowly. I would say out of the best signal here is this one. But you can see one signal. This is really good. This doesn't really work. This is all right. We barely even go down. And this one we just go down really slow. We kind of just like go chop sideways a little bit. Okay. Again, it's just another lagging indicator. It already tells us stuff we can see that's happening in the chart. Okay. But again, RSI is just good to know in general because I guarantee you're going to find people talking about this. I do not use this yellow line. I don't know what this is. It's probably like a simple moving average. But yeah, the RSI is just honestly good to know basically. So the 70-30. Another way you can look at this is overbought and oversold. So again, if we go back to the Apple example, you know, Apple's at $3 might be overpriced. So RSI, the relative strength index, can be really high. And eventually, anything very high in the RSI or anything with a lot of strength always drops. Anything with a lot of weakness always will go back up. And it goes back to the orders thing, right? In order for the market to physically reverse, We need the opposite people buying or selling. So that's why when the market drops a lot, we get a lot of buyers because we have a lot of sellers for those buyers. And then when we go up a ton, we have a lot of sellers, or we have a lot of buyers stopping out, and then all those sellers absorb those orders, then we go down again. That's why the market moves in trends, and that's why we kind of go up and then down and up and down, okay? But yeah, RSI, MACD, moving averages. Those are like the 3 big indicators I would probably know. Will they help you make money in the long run? No. But should you know what they are just to have some background knowledge and know why they're not the greatest? Yeah, okay? Again, on these moving averages, there's just so many random signals. You know, millions of retail traders are using this stuff, guys. I do not want to be part of those millions of people. I want to be part of the 1% that does something else, okay? Because that's, you know, what people don't tell you is actually, that's the stuff that actually works, okay? If you type it on YouTube, something that is, it's a strategy that has 5 million views, it's probably not a good strategy. It's probably something everyone uses, okay? Again, another example, you can see blue line equals the moving average. It's always behind price, and I showed you that on Trading View replay mode, where every single time I play this candle, right, the lines move after the candle form. Watch the lines, ready? Right, after the candle, the line comes. It's always a candle first, and then the line forms second. So that means, that's what I mean by lagging. And takeaway, by the time you know the trend, or by the time the moving average confirms a trend up or down, you're already too late. Okay? Or else it'd be too easy. Then everyone would be making money. And the government's not going to allow that. Okay? The government doesn't want people making money. Okay? I'm telling you right now. You know, the government wants everyone to go out of college, get a job, get a degree, and that's what they want to see. They do not want us making money. I promise you that. Okay? This is why this does not work. Okay? Now, does anyone have any questions on that part? Anything moving average related? Questions? Anyone? Again, like I said, you won't use that to make money, but you will, it's really good background knowledge. I'm trying to think, like, you know, have any of you taken calculus? Okay, when you take calculus, do you really need to know addition, subtraction, and division? No, but like you kind of do, but you kind of don't. It's just good to know. So that's why I'm kind of showing you the indicators, because it's just good to know, even though you're not going to use that, right? In calculus, you know, when you do derivative, you're not using 2 + 2 = 4. You just know the derivative of like 10x squared, right? So, all right. Retail versus smart money. So this is where it's going to start to get interesting. Okay. There's one concept you need to understand. We do not move the markets. Okay. When you enter a trade on whatever account you're trading, we are not causing the candle to go up or down. Okay. Does anyone know what volume means? Volume equals the amount of buyers and sellers. Do you think 100 buyers and sellers is low or high volume? Yeah, pretty low. Do you think 1 million buyers and sellers is high or low volume? Yeah, extremely amount of high volume. Okay. Now, when I go to this chart, that's the other indicator you should probably know, volume. I don't actually have this in my chart, but you should just know volume. Okay. Let me show you something. So let me just turn on volume real quick. So it's just a measurement of how many people are actually participating in the market. And it's like this. Do you think this is high or low volume right here? Very high. Do you think this is high or low volume? Yeah, pretty low. Market tends to be slower during those periods. Okay, which you can see it's pretty slow here, just kind of moves sideways. And then the second we get high volume, look at this. It starts moving up, down, and then it kind of tapers off a little bit. Okay. but it's basically the amount of buyers or buy and sell orders in one candle. So this one right here doesn't actually show me the number. Like usually there's numbers like over here or something, but like this might be 1 million buyers and sellers. This might be 500,000 buyers and sellers, 400,000, 200,000, 100,000, like maybe 80,000 in that really tiny one. Okay. You want the reason I trade what I trade and Q right here, and what I'm going to show you guys, is because there's a lot of volume. There's a lot of transactional orders going through. Remember that one chart I showed you where there's a bunch of gaps? Do you think that was high or low volume?
No.
Yeah, really low. The candles are barely moving. We want volatility. Volatility means how fast or slow the market's moving. The more we're going up and down like this, draw this in your notes, ready? I'll show you. Okay, ready? Draw this, ready? This equals high volatility slash high volume. Okay, draw this. And then this equals low volatility slash low volume. Does that make sense, everyone? Hopefully. See how this is just moving a lot more, and then this is moving like barely anything? You should know. You want to, and then do this too. Do this line, say, want to trade price action that looks like this. Okay. And then maybe like do like maybe an X for this. Do not want that. We want this. So if you can draw that, just remember that. Okay. Price action means the candles. Like when I say I'm looking at price action, it means I'm looking at all this. Okay. I'm like, oh, what's price action doing today? What are the candles doing today? Same thing. But that is definitely a good diagram you should know. Just kind of remember. Okay, hopefully I doesn't have that. Anything else needed to draw it? Good. Okay. So yeah, when it comes to volume, you can understand, like, we're not actually moving the market. We're considered retail traders. Smart money is like banks, institutions. They're running algorithms, basically. And this is what actually moves the market. Okay, when Trump tweets out something about Iran, whatever he may tweet, and it causes a big candlestick in the market, that is a giant institution that has some algorithm hooked up to Trump's Twitter or Trump's Truth Social that instantly sells billions of dollars the second that tweet comes out, and it causes the market to drop. Even if we all collectively put $1 million into one sell position, it would not move the market at all. It would barely do anything. You need billions, maybe trillions, okay? So every transaction we make ourselves in the market does not matter. And this is what people ask me. They go, won't your strategy stop working if we all do the same thing? No, it won't, because we don't make enough money, and we don't trade with enough money. We're not trading with billions of dollars to actually physically move the market, okay? So understand, when we are looking at trades, we're watching these candlesticks formed by these institutions, not by us. Okay? And again, remember I talked about the concept of they need liquidity. They need orders, because these large $1 billion orders, they don't fill at one price. You can't just put a $1 billion order at $300 in Apple, because there's not 1 billion people willing to sell there. Okay, when a hedge fund or a giant institution puts a $1 billion order at like $300, I'm telling you, it's gonna go down lower because they're gonna need lower prices in order to get in. And this is why the fear in the market helps them because the more people selling at that price and the more people scared, the more chance that $1 billion can actually get in the buy position. Does that make sense to you guys? So that's why these large orders and these banks, getting in these, big moves need all that fear and people selling and stuff, okay? Our stop losses are their fuel. So where 99% of us traders place our stop losses at those old highs and lows are their fuel. Like I said, if you go on YouTube and you look up how to trade support and resistance, or you look up any sort of strategy, they always teach people to put stop losses at the highs and lows of trends. I guarantee you if you go on any YouTube video and you just type in anything day trading related, and they're like, oh, here's a giant zone. We're going to reject it. Where does the stop loss go? Above this old high. Okay? That's where the stop loss is going. And this is very, very important to understand because when people put their stop loss there, the algorithm that basically runs this market will gravitate back towards that at some point. And that's where I catch my trades. Sometimes these work, sometimes these will get completely wrecked. This one happens to work, it doesn't hit the stop loss. But that's what people do. Here's another good example. Right here. Does this look like a reversal to you guys? Where we kind of put in a low and it looks like we're going to go back up? Yeah, it looks like we might go back up here. So retail traders, they'll long. Okay, they'll take a long here. Where's their stop loss going? The low of day. Right? They're putting their stop below day. Millions of traders though, not just anyone. Millions of traders. What does the market do? Completely runs their stop loss. That's why we get this giant candle through it. Right? Because all these stop loss orders, or all these sell stop orders, are all basically shorts that just wreck it, and it fills so many orders at the same time. And that's why you get a big candle like this versus we didn't get any big candles like that here. Why do you think we didn't get any big candles like that there?
Because people thought it was going to keep going. And people were.
Yeah, but there's no what? Yeah, there's no stop losses there. All the stop losses are at the highs and lows. So they're here and they're up here. Right? That's where we get the move to. Okay? And this is essentially like how I'm going to teach you how the market moves, which is going to be a lot different than indicators. It's going to be a lot different than me pulling up a EMA in my chart and being like, yeah, dude, this EMA just told me we're going to go down, but like 20 candles too late where we're already going down. You know what I'm saying? So that is that. Again, my personal mentor who taught me this, his name's ICT, Michael. This is kind of how I learned, and I credit him all the time. But understanding this on why price movement lets me align with smart money instead of fighting it has made me so much more money. Okay. And maybe in your journals, write down. Just write everything from now on is going to be. All the technicals from now on, just say this is ICT. And then you can YouTube ICT later and kind of watch more videos regarding that. Okay. So just know these are like called ICT compounds, basically. And remember how earlier I said the names of the candlesticks, like there's gonna be silly names? Again, ICT, there's going to be silly names. There's silly names for everything that don't matter. But as long as you understand the psychology behind why these are named what they're named, it doesn't matter. You can literally call a candlestick your name if you want. This is like a Ryan candlestick. It doesn't matter what you call it as long as you understand if it's strong, weak, So, in ICT, people have their opinions and he names things which I'll be kind of saying, but again, they're just names at the end of the day. As a smart thinker, what do names in our world help our world do? Like, why are names so important?
Familiar runs.
What?
We recognize patterns.
so we recognize patterns. But like, why do I have a name? Why do you have a name? How does that make it easier for us?
It distinguishes you from somebody.
Yeah, distinguishes us, but it makes us communicate. It's why we're able to communicate, right? If none of you had a name, how would I be like, hey, hey, Jack, I can't, because you wouldn't have a name. So just like how these are named things, ICG and all these candlesticks, it's basically just a jargon that we can use to be able to communicate, or else I wouldn't be able to teach this. So, some people don't like these names, some people do. It doesn't matter at the end of the day, it's all the same. Okay. Now, we're going to be talking about more math. This is a little more boring. I'm going to try to make this not boring, but just setting expectations. There's 252 trading days per year. Okay, probably write this down. There's 252 trading days per year. What are the rest of the days? Weekends, holidays. Okay, there's always 252 trading days per year, though. If you can, this is just like an example, but if you put $1,000 on the market or risk $1,000 every day, okay, and you have 189 profitable days out of 252, so that means you're losing money about 60 of those days, okay, and which you have to be like totally accepted of. You have to accept to lose money. And you have about maybe a 75% win rate, maybe you take one trade a day. That's about $189,000 annual income if you can make $1,000 a day. Now, in order to make $1,000 a day, what RR would you need if you were to put $1,000 in a trade? What's the risk reward there? You're risking $1,000 and you want to make $1,000. No. 1. Right? I'm risking 1,000 to make 1,000. If I risk 1,000 to make 2,000, that would be 2,000. That would be 2 RR. So what does that mean? In order to make $1,000 a day, do you have to risk $1,000? No. What if you risk $400? And by the way, I'm going to talk about these things called prop firms eventually. It's basically like this fake money, but then you get paid real money if you do well enough. Those are the types of accounts we're using. We're not going to use our own money. I'm not going to, obviously you can have your own money and risk your own $400, but there's totally better way to do this, which I'll explain later, which is very affordable. Okay. But, let's say, how many of you guys went home and you started looking up more stuff? All right. Yeah, so when I first got into this, I remember, I literally would not stop watching YouTube and stuff after this because I just became so curious. But just remember what I said about. Remember I said yesterday, be careful who you look at stuff from. Make sure they're live trading. Make sure they approve of stuff. So when you're looking up on YouTube, other mentors and other people teaching this stuff, just be careful. But you'll be able to kind of gauge after a while. Let me see if I can. Okay, can someone, yeah, I don't have it. Can someone remind me what the numbers were again? Or can I just see one of your pieces of paper? And I'll do it in 2 seconds. You got them all? Okay. 50 points.
Aaron made it to flash it. Aaron.
That was Camille. That was
Oh, yes. I said A. April. And you don't Jake Clevin? Is it Jake Clevin? Oh, shit. You mean Vince O'Shaughnessy? Yeah. Oh, shit.
Yo, can you do me a favor? If you just see this stop recording, can you just tell me if it like goes off or whatever? Yeah. All right, thanks.
All right, so do these look right? Do you see the right numbers? Okay. All right, so just a refresher from yesterday. You know, once you do this a lot, like it, honestly, when I first told you about the math stuff, it seems daunting. But once you understand that NQ equals $20, MNQ equals $2, it's super easy. Okay. So we're just gonna go over the right answers real quick. All right. I'm gonna get a calculator out for a couple of these. You know, 50 points, 2 micros. What's the answer for that one? How much money would I make? 200. Yeah, 200, right? Because you realistically just need to know 1 micro equals $2, right? If we're taking 2 micros, 2 times $2 is 4 times 50 points, $200, right? So the answer would be I'd be making $200. Okay. Now, what do we have for 87.25 points in 4 minis?
69.80.
69.80. Okay. Let me just check this. 87.25 times 20 times how many minis did I say? 4. Yep. So $6,980. Okay. Third one, all right, it's going to be what? 455. Let's see. So this would be 32.5 number of points times, because it's micros, $2 per point, and then times 7 micros. So yep, $455. All right. What about 65.25 and 3 minis? 2,900 what? 3,900. Okay. So 65.25 times what? Yeah, times 3 minis times how many dollars per point? Yep. So 3,915. Everyone see where I'm getting this from? Minis are $20 per point, but I'm taking 3 minis. So it's always, you need to know how many contracts you're in. Alright, and then last but not least, we have 32.5 points times how many dollars per micro? 2. Yep. Times 3 micros. Right. $195. Alright. Is anyone confused on that? Okay. In the long run, it's good to be able to know this math. Okay. Now for the last question, I said, what was the last question? I said if I wanted to risk what? If I wanted to risk $500, could I take 1 mini? What do you guys, someone raise your hand and tell me what you had for that. Oh, it was 50-point stop, right?
Yeah.
Yeah, it's 50-point stop, I want to risk 1 mini. Could I do that? Raise your hand. Yep.
I said no, you can't, because 1 mini times 50 times 20 would be $1,000, which is more than the risk.
Exactly. So if your stop loss got hit, you'd be losing $1,000, but you only wanted to risk 500. Now, I saw someone's answer, and they go, you have to take half a mini. Okay? That does not exist. What is half a mini in micros? 5. Exactly. Half a mini would be 5 micros.
Oh.
So you have to go 5 micros instead of 1 mini. Okay?
Half a mini.
How many micros equals 1 mini?
10.
That's 10, because it's 10x. Exactly. Okay. So it seems like you guys got that. Now, if I go to take a position, okay, on the chart. Let's say I want to long right now. Okay, let's say I want to buy. I think we're going to go maybe to this high, right? So I think we're going to go up here. I think price right now is trading at what? 29,334. So I think we're going to go to that line, which is about 29,800, which is about, what, 650, 60 points about. So let's say I want to take a long, and I want to long off the hourly. Do you see how slow this candle is actually moving right now?
Yeah.
Right, it's barely moving. So that means we have time to calculate how much I want to risk on this trade. Okay, so I can literally draw this RR tool. If I right click in a trading view and do create limit order, and I'm on paper, okay, it will do the thing, it will do it for me. So if I'm pretty sure if I type in 1,000, they updated this recently. I don't know what it is now, but let's say I want to do risk USD. Okay. I think that's my trade from yesterday. They updated this recently. I don't know what they did, but this looks horrible. Yeah, usually what you can do is you can type in the amount you want to risk. I think maybe units. Maybe okay, there we go. So if I type in 2 minis, it's telling me if I take 2 minis on this trade, it's automatically saying this would be the stop. Okay, based on where the price is now. Okay. Now, if I only wanted to risk, like, if I was on micros, we're going to be talking more about micros, because if you trade minis right off the bat, it's very risky, because you can lose a lot of money. You can also make a lot of money. But if we go on micros, and I do right-click limit, and I want to take 1 contract, okay? 1 micro says I would be losing 416 bucks, okay? Am I doing any sort of math to get there? No, it's telling me. Like if I'm comfortable with risking 500 bucks and I type in 500 here, it's saying one I can only take 1 contract. If I want to risk $200, it's saying 0. Why is it saying 0? Yeah, because 1 micro for this stop loss is 200 points. How much risk is 1 micro for 200 points? 400 bucks, right? Because 2 times 200. So essentially, like, you can do this, and it'll tell you if you're allowed to risk that amount. Okay. If I type in 1,000 bucks here, how many is it going to tell? How many micros are going to tell me I can take? Yeah, 2. Right. So now the stop loss is 800 bucks, but I typed in 1,000, and you're probably wondering, if you want to risk 1,000, why is the risk only 832? Is anyone confused about that? Raise your hand if you don't understand that. If I'm typing 1,000 risk, why is it saying my risk is only 832? You guys all following? It's basically just what the max you can do. So if I type in 1,200, still 2. If I type in 1,300, now it goes to 3 because I can risk 1,240 bucks. Okay. Now, that's not an issue. If you're trading a higher time frame, you can draw the RR tool and it'll tell you like everything. The issue is the way I trade and the way I teach you how to trade and years down the road is I am trading pretty small time frames. There's days where I will take 30-second trades. Okay. And it was very bad price action today. Very, very choppy. Okay, this is what we call chop. You know, see how it's like ping-ponging around like that? That's not good. Okay. But there's these really quick plays that I'll get in on the 1 minute, the 2 minute, the 30-second, where, you know, let's say I want to take this, let's say you see this red candle here. Is this a strong or a weak candle?
Weak. A strong candle.
It's a strong red candle.
Yes.
Yeah, I get what you mean. Right? Would you say this is a heavy or weak rejection? Like a strong or a weak rejection?
Strong.
It's a pretty strong rejection. Based off the candlestick homework you did last night, did anyone find a candlestick that looked like this?
Shooting star.
Yeah, it's a shooting star. It's a what is basically happening during that candle? Someone raise their hand.
They're trying to make the price go up, but people are selling the gain. Okay.
Yeah, there was buyers at one point during this candle, and it was all the way up there, and then last minute it got wrecked. All these buyers got completely destroyed, and all of a sudden it closed down there. So that's a very like strong kind of rejection, and that tells me like it's not, there's no buyers there, and we're just gonna go down. So the second I see a candle like this, and then a candle down, right, that to me is a good short entry. Okay, it's a very, very good signature in price, basically. So let's say I want to take a short here. I see the heavy rejection. Right? I see how buyers failed to push price up during that time period. And I want to take this play. I'm on the 30-second time frame. The next candles move extremely quick. Within a minute and 30 seconds, we move to the price target. What may be the problem with trying to draw an RR tool, clicking create limit, and trying to find out how much you risk here? Yeah, I won't have time. That's why it's good to just know the math. What I do in my head, and you can have sticky notes for this. Like, let's say you're on, you know, I'm not going to talk about this yet, but remember how I was saying there's like those fake $50,000 accounts you can basically buy for like $50? Let's say you're in one of those accounts and you're in a $50,000 account, okay, and you're risking $200 per trade, okay. You need to know, like, okay, I'm risking $200 per trade. What's the max amount of micros I can risk here? What should I basically do first to know how much to risk here? I need to see the size of what? The candle, but the size of, what is this? What's this top right here? If I hit, yeah, the size of the stop loss. I need to see how big this stop loss is going to be here in order for me to know how much to risk. So remember, if you click the shift tool and you see this is about, let's just say 25 points. So stop loss for this would be about 25 points. Okay. If I want to risk $100, how many micros could I take here? 2, right? Because 25 times 2, because micros equals 2, is $50 per micro, times 2 is 100, right? If I want to risk $100, that's 2 micros, okay? Again, the more you think about that, the more it's going to come second nature. If you're not getting the math immediately, you will, okay? So if I want to risk $100 here, I can risk 200 micros. See how I just did that math in my head, and we got to do it kind of quick? Do you really think I have time to do all that? No, right? Already, I'm anticipating here, I'm anticipating some candle, and I'm already kind of seeing the range, right? This is called the range of the points. And I just kind of guess, like, okay, maybe if we get a red candle, it might be a 25-point stop loss, or it might be a 40-point stop loss. And I'm already kind of thinking in my head, okay, it's going to be 40-point stop loss, multiply that by 2. So basically, per micro, that's $80 per micro. If I want to risk $200, 80 plus 80 is 160. Okay, I can only risk $160. That's 2 micros. And the second we get that candle close, I know I'm only entering 2 micros at that point. And that is the benefit of knowing that math in your head. Okay. Again, you don't need to do that for the hourly, but that's the benefit of, you know, being able to do it quick. And it's not that hard. Like, all you have to do is do this, draw out the range, right? 25 points or even 26 points. You always multiply it by whatever you're on. So we're not in Q, so you always multiply it by 2 by default. And that always equals 1 contract. Okay? And then you just multiply it by however many contracts you want to take. Make sense?
This is a bad question, but like, why for some trades is the stop loss like above the on the top?
Why for some trades is the stop loss where?
Like on top, not.
Oh, like up here?
Yeah.
Well, we're going to get to that. I knew someone would ask that. Good question. We're going to get to that. This is more of a discretion. Does everyone who raise your hand if you do not understand the difference between discretion and mechanical? Okay. Mechanical is, oh, I'm going to put my stop loss above this high every single time no matter what, or you know, maybe I'm trying to enter a trade here. I'm going to have my stop loss below this low every single time no matter what. That's like mechanical, right? It's it's a set thing. Discretion is more of an opinion based off of screen time. Remember I talked about screen time? Remember I said the more screen time you get, the more you guys are all going to go and have your own perspective, your own different strategy. Basically, if I see a heavy red candle here, I really don't want to see price go back above that red candle. I already know at that point I'm cooked and we're probably going to go back to the high. And this is one of those scenarios where I would be okay with having a stop loss at the high of this red candle, because if we're really getting this heavy rejection and then this very strong candle downwards, why in the world would we come up there? If we do, I'm probably wrong, okay? And will you know that in the first year of your trading? No, but I've been doing this for 7 years, and that's just something I've seen, and that's just something I've experienced. So that's kind of why. I'll go over stop losses later when I get to my strategy. There is a certain point for my strategy personally where I usually do place a stop loss. It's usually not above these highs. It's usually not here at the high, okay? Some people do, some people don't. I don't love doing that, okay? So, yeah, any questions about anything math or risk management related for now? Anything? Yeah.
If you want to have a chance to make more money, can you just like move your take profit lower or higher?
Yeah, of course. Of course. So that's another thing discretionary wise, right? Let's say you get in short and my TP or my take profit is right here. All right. But let's say all of a sudden I see another giant red candle. I'm like, okay, there's a lot of strength here, there's a lot of weakness in the market here. There's strong candles going downwards. Maybe I want to move it to here instead based off of what I'm seeing, okay? Maybe I want to do that. And you can see you probably would have gotten stopped out in this one, okay? It depends on the market, it depends on your experience, but yes, you could theoretically move your take profit to way down here and make $1,000 instead of right here. What may be the issue if you move your take profit way down here every trade? What?
It's not ever going to reach there.
Yeah, statistically speaking, it's very hard to time. This is what we call timing the market. If you can time the market and hit a trade like this, it's just not. You can't. No one in the world can do that consistently. Okay, the market is. You have to understand the market's random. I don't believe it's random. I believe it's ran by one algorithm, and that's my belief. But I also believe it is random, because if you don't believe it's random, you're going to want to be right every time. You're like, oh, I have to know how the market's moving. But if you understand that this is statistical variance and the market is random technically, even though I don't truly believe that, it stops you from revenge trading. Would you guys agree? Right? Because if you think it's truly random, you don't want to enter another trade after being down $500. Do you think you're more likely to enter another trade after being down $500 if you think you know how the market moves and you think it's perfectly controlled? Do you think you'd want to re-enter? Be like, I have to be right. I know I'm going to be right. Yeah, of course. So, although the strategy I'm going to be teaching you, and although the way I'm teaching you is kind of, an algorithm that does run the market, we still believe the market's random. Okay? Does that make sense? All right. See some head nods. Good. So yeah, theoretically you can go for these like 5R or these 10R plays, but you got to be really lucky to get those to hit. Now, something you can do is this. Would you guys agree this low looks like, the opposite of a mountaintop? Like, does this stand out? Yes or no? Yeah. Okay, listen. The way I find obvious highs and lows for, kind of liquidity levels like this is this. So I'm going to draw two here, okay? I'm going to draw I'm going to draw a red line here, okay? I'm going to draw a red line here. Everyone see the low I'm drawing it from? Right there? Okay. This is going to be actually an orange line, or it doesn't matter. Okay. If I back away from the screen all the way back here, what line am I more likely to, what low am I more likely to see, the orange or the red? Exactly. So I like to use take profit levels and stop loss orders at levels like the red, because if I can back away 10 feet from the screen, and it's obvious to me, those are the ones that I'm using. Okay. The non-obvious lows and highs way down here, would you guys agree this is a little more like just choppy or sideways? Yeah, we don't want to use those. We want to use the ones that are like extremities of the point. Okay. So if I were to draw a mountain here, right, let's say this is Mount Everest, okay? This and this are going to be a little more obvious than maybe this, okay? Or this is going to be a lot more obvious than all these mini highs. All right? Yeah.
When placing orders, why do you want to use like lows and highs that have already been like graphed out instead of just picking like an arbitrary point that fits like a preset risk reward?
Good question. Now we're getting somewhere. Okay, good question. So he basically said, why would you want to pick to target levels like this that, you know, maybe this RR would be about a 1.6. Remember yesterday, what did I say? What win rate do you need to be profitable, like pretty profitable at a 2R? Does anyone remember? 33% to be break even, right? But to be pretty profitable at 2R, what's like a decent win rate?
40.
Yeah, 40 and above, right? 40 to 50% is a decent win rate, okay? Now, his question was, why am I not just going for 2R, right? Like, why would I not just go for a random point in the market here? Why might I not just go for like a 2R trade that is just here and not here? Why might I go for this one instead? Based on what I explained about yesterday. Yeah.
Because we see that the market has gone down there before, it hasn't gone lower than that point.
Yeah, so we see the market's gone down here before, but remember, what did I say about how the market moves? What does the market like to do?
Oh, it likes to like short people or
You're close. It likes to what people?
screw people.
It likes to screw people over. Now, what might be placed at that low? If you're a buyer and you bought from that low, what might be placed there? A stop loss. That's where all the stop losses are. So that's why I prefer targeting actual lows and highs in the market, because I'm trying to target people's stop losses. Makes
So you're
sense?
following like what the bank is doing, like what you think the bank is
Exactly. I'm following what I think the banks and institutions are also doing,
doing. Okay. I
and
see.
that's what I believe runs the market.
And that's what usually happens.
That's what usually happens. Yeah, we'll go to the hot, we'll go to this low, and then you'll usually see some resistance at that low, because there's a ton of stop loss at the low. And remember, the only way for banks to get in is for people's stop losses to be filled, right? So if there's a bunch of sell stops here, are those short or long orders? If there's a bunch of sell stops here, are those sell orders or buy orders? If people have a sell stop here, what type of orders are they?
Oh no, they're selling.
They're sell orders. They have to sell to get out of their long position. Okay. So that's the only way a bank can basically enter. So watch, when we go hit this low, you're gonna see some stalling. See that? See how we hit that low, go under it, right? When we go under the low, that is all the banks and institutions entering their stop losses. Does that make sense? All right, because that's the only way they're gonna, be able to enter millions of dollars of positions.
But since like the candle didn't form where the line is,
Yeah.
is that still like is our stop loss or not our stop loss? Is it still gonna take profit like just in the end right there?
Yeah, the take profit just ends here. It doesn't go here. This is hindsight. We don't know if it's gonna go lower or higher.
Right.
We just want to take profit there, and that's it. Now let me ask you a psychological question. All right. What do you think is better? Following your plan of, okay, I'm gonna enter here, take profit here, or trying to make money, as much money as possible? What's gonna be better? Following the plan that you had before the trade, or just trying to make money?
The plan.
Yeah, following the plan is gonna be 10 times better. So if my plan is to get in there and get out there, I don't care what happens after. If we keep going down, you're like, oh, I should have held. Is that bad or good? bad because that wasn't your plan. Your plan was to get out here, not go down there. If Trump tweets something right now and we drop 1,000 points right now, you shouldn't be mad. Okay, you should be happy that you followed your plan. Okay, so I want you to write in your notes. If I take a trade and the take profit hits, and that was my plan, you know, maybe write something along the lines of equals good. But if I take a trade and I just keep trying to hold and I have no plan, that's bad. Even if you make money. If you make money without a plan, that equals bad. If you make money with a plan, that equals good. If you lose money with a plan, what does that equal? Good or bad?
Oh, no, that's good.
That's good. If you lose money and you follow your plan, that's good. All right, so that should be wired in your brain. So write down something along the lines of, if I follow my plan and make money, equals good. If I follow my plan and lose money, that equals good. Okay, what if I don't follow my plan and I make money? That's bad, okay? Why might that be bad though?
Because you need a plan. You need something that you can go back to.
Exactly, I need something to go back to. Because next time, if I don't follow my plan, what could happen?
You can lose money.
I could lose money, and then that starts me, and then I blow my account. All right? So you should definitely have that somewhere, those 4 lines, right? Follow plan, and I'm green, or I make money. When I say I'm green, that means I made money. Okay? When I say I'm red, that means I lost money. You know, when I follow my plan and make money, that's good. When I don't follow my plan and lose, or when I follow my plan and lose money, that's good. And then when I don't follow my plan and make money, bad. When I don't follow my plan, lose money, bad. Okay. It's all about, you know, the plan you follow and the plan you have. All right. I'll give you a second to write that down. Okay, there is one thing I left out I want to teach you guys. It's another strategy that a lot of people use. And it has to do with why sometimes we bounce after going below the levels. Okay. I don't know how much digging you did on like strategies and trading, but did anyone find anything about a breakout strategy? Okay, there's something called a breakout strategy. Okay. What that means is this. If we come up to a level in the market, let's say this level is 300 bucks. And we've tested this level 1, 2, 3, 4 times, but we still can't break it. What do you think that means? What? We're not going to break it. So you think we're going to go down after? Exactly. You might think we're going to go down. Okay? But that's what everyone thinks. All right? And I think the opposite. Okay? When we have this, and this all being rejected, every single retail trader in the world thinks, okay, we're going to go down. I'm the guy looking for a long back up to completely smash through those highs where there's a lot of what, probably? What do you think's resting above these highs?
Stop losses.
Stop losses of people who say, oh, we're going to go down. Okay? No. We're going to wreck their stop losses and screw them over. And this is where the breakout strategy comes into play. There's a strategy that people actually create on YouTube where people are like, oh, because we broke out of this level, this 300 level, I am going to now buy, and boom, I'm done. You know, I'm going to make so much money. Okay? Now, what's the problem with buying above these stop loss areas? Yeah, that's where all the banks are shorting because all the stop losses are there. And what's going to actually happen most of the time is the market will literally just go back down and you will get completely destroyed because all the banks are loading up there. That's where all the smart money is getting in. The dumb money was shorting here. The smart money is getting in above that the smart money is getting in above the 300 level. The to make it go down again. The dumb money was shorting here. But the dumb money is also trying to long or buy this breakout because they think, oh, we rejected here, here, we finally broke it. That's bullish, right? It's gotta be. So they buy, they put their stop loss back below the 300 level, and then boom, the market, they think the market's gonna go up. What happens is we actually get a heavy candle back down because not only are the banks and institutions getting in short here, but the breakout traders are also, what's happening to the breakout traders here?
There's stop loss.
They're also getting stopped out. And then all of a sudden, you're gonna see a heavy candle back down like that, and all of these breakout traders getting wrecked, and then boom, all of them get stopped too, and now there's two parties of stop losses going on, and then we just go all the way back down again. Okay. So that is a support. That's more of a breakout strategy. Okay. Same thing to the downside, or same thing with the opposite side. Okay.
So
Look
don't
at this.
do that?
Yeah, we don't want to do that. Right? If we have a level being retested 50 times down here, okay, what's most likely going to happen? It's going to go down, break it, okay? Now, if we have a giant red candle in there, what do you think? You know, a lot of people are like, oh, that's bearish. We're going to keep going down. That's what people think. But this is where, again, all the banks start to buy because
everybody's getting stopped.
Everyone's getting stopped out there, right? And that's why I wanted to teach you guys stop losses, right? Like you need to understand how stop losses work in order to understand this, right? Now, another breakout strategy in general is just literally just this, watch. So let's say we just form a low overnight. It's an overnight low. Whatever, boom, boom, boom. And then now, let's say it's 9:30 a.m. Eastern, you know, New York time opens here, this red line, right? And we left an overnight low. Let's say this is a low from overnight. Okay, let's say overnight, the overnight session went to $500, and we put in a low here. Would you guys agree or disagree that you could probably see this low 10 feet away from your screen? Yeah, I would agree, right? It looks pretty obvious. It stands out. It's pretty obvious, right? Another breakout strategy and how traders on YouTube teach is like, oh, if we break the overnight low, short, like that. And then they short, okay? And while this works sometimes, long term, this is not the way you want to be trading. This will get wrecked, okay? What happens, we usually go back up. So how did that relate to the example I just showed you right here? See how it relates? Right? Let's say this is overnight low. We go down here, and then boom. Who's trying to sell here? Yes, stop losses being hit from these buyers here. But then what's the other party doing? Yes, and then there's what's the other party doing? There's technically three parties going on here. So there's the third party is shorting because they think, oh, we just broke the overnight low. We're gonna go down. Right? If I see, look at this candle, ready? It's gonna jump back up, but I think it should be red when I first play it. Ready? Watch this. Okay, never mind. Okay, look at this. Doesn't this look very weak? And doesn't this look like it's gonna keep going down because it broke this big level? Yeah, and that's what people think, and that's where all the liquidity is built up, and that's why we go all the way back up. Okay? So that is why I do not like targeting random areas of the market. Does that answer your question more in depth now? Yeah, that's why targeting here is better, okay? Now, remember how I said you can be a 2-hour trader, a 1-hour trader, a 3-hour trader, whatever you want to do? If you see a trade like this, and you want your stop at the high, and you're a 2-hour trader, and you see there's an obvious low here, it stands out, it looks like a mountain, right? If I just type in a mountain on Google, okay? We want to target highs and lows that look like this, right? We don't want all these little mini highs and lows and these hills inside the mountain. We want to target highs and lows that are at the peak of the peak. We can see, they're obvious, they're so easy to see if we back away from a screen. So if I go back to this, all right, and this is only going to be a 1-hour trade, but I'm a 2-hour trader, do you really think this is a trade I want to take? Probably not, because I'm trying to get 2R, okay? And that's okay. You might see some trades that might, based on what I teach you guys, might work, okay? Right? We might go down. But if the RR is not there, or maybe it's negative, maybe it's negative RR, maybe it looks like this, probably not a good trade to take. Never take a trade below 1R. Why do you think that might be? If you take negative RR trades. Yeah.
Because if it's a 50-50 or losing money.
Yeah, because what win rate do you technically need to be profitable at a negative RR? No. If you're taking negative RR trades below 1R, you're going to need above what? You're going to need above a 50% win rate. In the long term, that's not smart, okay? I think a 50-60% win rate at 2R is like a sweet spot. Now, what's funny is I trade every R. I trade 1R, 2R, 3R, 4R, but I've been doing this for years, and I have my own discretion. Remember, discretion is my opinion based off my experience. I'm not mechanical anymore. You guys will probably start off more mechanical, where you're like, okay, I'm only looking for 2R trades. That's me. But after years of trading, you can start to kind of be a little more discretionary, okay? But yeah, just stay away from these trades. If we go back to that chart, remember the RR chart? Risk to reward trading chart. If we just pull this up, and you're going, oh wait, I don't even think this, okay, look. At a 1R, you're going to need 60% or 51% or higher technically to be profit. Let me go to another chart. It shows everything. Okay, look at this. Negative RR is right. Why is it not? Okay. Technical difficulties. One second. All right, here we go. All right, look at this. All right. If you go for a, dude, what is this chart? This is not the right chart. Okay, there we go. The one from yesterday. Negative RR is right here. This is a negative RR, 1 to 9. So here's a 1 to 1. This is what we want to take. 1R, 2R, 3R. That's what we want to do. If you take a 0.10R, you need to win 90% of the time. Do you think winning 90% of the time in the market is easy or hard? Yeah, pretty damn hard. So stay away from the negative R trades. I know people who do trade 0.7, 0.8R, and they are profitable, but it depends on the account you're trading on, and it's just not good in the long run. Okay. So, any more questions before we continue? All right. So this is, basically what I just explained is the stop hunt. Okay. Right, you need to understand stop losses before you can understand the stop hunt, because you need to understand how stop losses work, why the market's trying to screw people over, and how everyone has their stop loss at a key area of liquidity. Okay. Write this down in your notes, but every high and low equals liquidity. So write every high and low equals liquidity. Okay. So this high is liquidity. This low is liquidity. What's another word for liquidity? What? Clusters, yep. Exactly. Clusters, or starts with this S, I just said it 50 times. Stops. Stop losses. Stop losses are liquidity. That's where the market targets. Liquidity / stop losses. Alright? And this is essentially how we're going to predict what the market's going to do. Now, remember when I talked about that big giant dump during COVID? What was the market really doing here during COVID when everyone was panicking? Or wait, that wasn't COVID. That was Trump tariffs. Okay, here's. Oh wait, no, that's not it either. Okay, right here. Nope, that's April 2025. Okay, right here. What was the market really doing on COVID when everyone was panicking? What? Yeah, and then
People were getting stopped out.
people are getting stopped out, and then we go back up again. So it was just a stop hunt, right? It was stopping out all these people at this low. And what do you think people at this low, when we hit that low, tried doing as well? They started selling because they're getting scared. They're like, oh man, like we're going really low. And all of a sudden they're starting to sell. Who buys all those sell orders?
The big companies.
All the
Smart
big
money.
companies, smart money, banks, they all buy those up. And they're like, yeah, like they're happy people are scared, right? So yeah, that's like the concept of how the market moves. So I'm gonna say garbage tags. All right, so this is the stop hunt. All right. This setup usually starts with the price bouncing off of support multiple times. Remember when I drew that? I would actually draw, this is what I draw probably in the notes. I'm going to show you better. I'd probably draw this. So draw something along the lines of this. Okay. And then label this stop hunt. This is where people get ripped. Alright, I'm telling you, if you go on YouTube and you type in how to day trade, this is how most people are teaching. They're like, oh, buy off this level, and then they get wrecked, and then we buy. So they're thinking that this is going to happen, right? We've held the level 50 times, but it really doesn't, okay? So this is a stop hunt, and then also to the opposite side. Can someone come up here and draw the opposite side real quick? Anyone? Someone's gotta come up here. Yeah, you want to come up here? You draw the other way. And I can tie my shoe real quick. So this is going to be a stop hunt to the short side. Yeah, just a question. All right. Yep, exactly. So this would be the stop hunt, right? We reject, we reject, we reject. Everyone thinks, oh, we're going down. And then boom, we run those stops. Breakout traders long, they buy, they think, oh, we broke out of a 300 level, we're gonna go up. And then boom, right back down again. Okay? So stop hunt, stop hunt. Alright? That's really good to have in your notes. And again, institutions, they'll push levels below support. I didn't really talk too much about support and resistance. We're actually going to do something interesting. We're going to watch our video on support and resistance. And then you guys are going to kind of watch this to... and you guys are going to watch this and kind of like understand what I just said. So wait, let's pull this video up. I might not have volume. Let's see if this works. I don't think I'm going to be able to connect to a speaker, but you might be able to hear it from my laptop. There is a is there any way I can connect to a speaker?
No clue.
Okay. Let's just try this. Let's see if you guys can hear this. Wait. Why is this not working?
Being able to find
Can you guys all hear that? Okay, ready? So this is support and resistance, basically.
support and resistance levels is so important for traders. It is a skill that you have to master if you want to trade successfully. Support and resistance are key levels on our price charts that have played a role in the past and are also likely to hold up in the future. That's why it's so important for traders to know about such levels, because it can help us make better trading decisions around those levels and improve our trading quality. Support and resistance zones can help us find better trade entries, improve our trade exits to maximize profits, and also help us protect our trades for a higher win rate. First step, how do you find support and resistance levels on your charts? A support level is like a floor and marks a level that the price can't break below. A resistance level is a ceiling that the price can break above. Sometimes it can help to switch to a line graph to find the best levels. Support and resistance levels are always horizontal and require at least 2 confirmation points to be valid. It may be okay to cut through a candlestick wick to mark a level, but it's never okay to cut through a candlestick body when drawing levels. Higher time frame support and resistance levels may carry more weight, and every price analysis should start on a higher time frame. Next, how do you use support and resistance levels in your trading? Trade entries. For timing the best trades, you wait for the price to get to a level, then you drop to a lower time frame and see confirmation that the level is holding before getting in. Confirmation, for example, can be a pattern breakout. Trade targets. For better trade exits, you want to make sure that your take profit target is set before a level to avoid giving back profits when the level holds. You want to be out of your profitable trades before the price hits such a key level. Trade exits. For stop placement, you want to protect your stop loss behind the support and resistance level to make it harder for the price to take you out.
Okay. Long term, do you think that's a good idea based on what I just explained? No, because every single YouTube video is showing the same exact thing. Okay? He's literally going back in hindsight and showing an example that works. But I promise you, in my time, this is not working. Okay? And this is what I'm trying to explain. If you go on YouTube and you type in support and resistance, and you remember how he explained it? It's like support is like a floor. It's like a floor price can't break. And resistance is like a ceiling price can't break. This is where everyone's placing their stop losses. Okay? So this is bad. This is why people fail.
Stop loss behind the support and resistance level to make it harder for the price to take you out. Support and resistance can be used universally on all markets and across all time frames.
Okay, no, figure out that. Okay, so now before we continue, I want you guys to get in groups of 3 and then find me 2 support levels and 2 resistance levels you see on TradingView or anywhere in the market. All right.
Two support and 2 support. Support and support are right next to each other. There's probably up there, there's probably a resistance. What is it? Oh.
Yeah, this one goes
Does anyone want me to come around and help them out? Yeah, that's not. Oh, wait, guys. Time frame doesn't matter. Any time frame doesn't matter. It might be easier to find stuff in like 1 minute, but you can go to yeah, exactly. See how reject. This is crazy. Remember how the guy in the YouTube video says to short here and then have a stop as well as this? That's why we do that. Which one goes and runs it?
Yeah.
Which one?
I'll teach you that. That's like my strategy. That'll be.
And then to draw, you just click this one. And then zoom out.
Yeah, exactly.
Oh, I don't know.
Short sell. We call it
I
short
think that's
sell.
probably what you said.
Remember the GME AMC thing? Short squeeze? Basically what happened and why we kept squeezing it up is because people were trying to short it. And they kept doing the buyback, which kept causing it to go up. And they kept getting stopped out. Exactly. Yep, so this was support expand through broken later.
Stop loss, not PR. I'd say so like this
Two examples of support. Okay. You got this. This isn't a. Remember I looked at the obvious modes? That's not true though. But this is this one. See how this is like a really obvious. So what
we should.
Do you know where the bathroom is?
Yeah, so when you leave these doors, yeah, go straight down, go all the way, and then like at the end.
Thank you. Like the class so far with that?
Yeah, man, you enjoying it?
Yeah, it's awesome. Rectangle. Draw more, it's more of a zone. So draw from the bottom of the panel, and then go over a little higher. Yeah, yeah, exactly. And it's it's almost like a trampoline. Like that. And then that's kind of more of a zone. And what do you think the resting on is? What do you think what orders are below that? Exactly, a lot of stop losses. So you know, this is the Tesla monthly kind of thing. Yeah, you're in Tesla right now. Which is fine. This is a monthly, so we're probably not going to go back down here. If we do, then I'm screwed. But yeah, that's essentially what you want to find and view, which is futures. Support and resistance. So I'll give you two examples of support and resistance. Exactly. You're in a daily kind of like I use this today. That's the one. You see how 1, 2, 3, 4 times that'll be very it's funny because support and resistance does support does work on the daily market. Why do you think support works on the daily
But like, I'm not the type of guy to like. I just know he's like.
people buy stuff all do this. So we're very unlikely to go back to that level because you're at a long-term investment.
Along the line, so two examples. This is the stop loss. So that's if our stop loss is here, that goes below the stop loss, we lose that money. But the reason you put a stop loss is because it goes on further and you lose tons of money. And then this is to keep this, and that's why you do it. It goes above that point, as soon as it hits that point, that makes sense. But you could take this off and then just run. But if you do that, you just get guarantees hit instead of to do is just instead of anything.
Well, what he's trying to do is just do the same as what the banks are doing. It's just the banks are more
So it's all about the software and why resistance gets broken off.
Yeah. Oh, this is your card.
So, yeah. I'm gonna keep, you'll get it, dude. I'll keep this as futures. How you doing over here?
So later we'll probably run back through it.
That's a strong.
Like it's not breaking it, but once it does break it, people are like, okay, yeah, they're all stopping out, and then it's just gonna go right back.
Look at everyone. So they all think
so that area is like 2 spots this way, and then what order is
Yeah, and you can't buy unless you buy through JP Morgan or Chase or Robinhood. You can't buy fractions. You have to buy coins. I'm buying 30 grand right now. So it'd be. Will we be buying it?
Someone will.
it's like this is how we go here. People get one time. It's a strive here.
Yeah.
There's like support and just short.
Down, hit that stop.
One very obvious chart.
Are you looking at MMT?
I'm just looking at it.
That's the biggest one. So you do it based on that. Everyone puts their stop loss here because they think it's not going to go because that's the most people. So everyone does this. We do the opposite. So they buy that and their stop loss out there. So what people think is going to it's not slow. So the rise is up and then it hits even further. And then you make the money. Makes sense?
Exactly. And see how price just starts plummeting back towards it.
At this point,
And then
you're set.
look what happens when you start happening.
It'll make more sense.
Yeah. That's where all there's.
Oh, the big
It's fun. We're gonna probably run this.
Well, I think you
So
might.
probably run both. But there's. It depends on what time frame you're trading. I'm not trading for one at a time. I'm always on 5 like this. I'm trading hourly and I'm telling you this.
Well, here I am. Here I am.
That's support, right? We bounce here and here. That's good.
Oh.
The problem is you're in a daily time frame, which I'm gonna talk about in a second.
What about the games today?
This is
About 30 minutes.
This is gonna be better.
Yeah. That should take.
What time is lunch?
Just
a little sandwich.
If it does.
Are you happy?
You're doing it in one
See
time.
how this is resistance, boom, 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 boom.
Trades.
So that's gonna be very key area. Or we
Stop.
target.
So yeah, take my
I guarantee you price will go back up to the blue line and smoke too. Alright, I gotta explain some things real quick. There's 2 things that you guys don't understand yet, okay? One is this. Is the stock market made to go up or down? Up. The stock market always goes up, okay? Some of you were going on the Apple chart and you were saying, hey, we have support or resistance in the Apple chart, okay? This is fine.
What is phi again? Yeah, this is S&P. Okay. This always goes up. Okay, it's gone up every single year. It's gone up. Okay. Do you really think if I draw support down here, I'm like, oh yeah, we're gonna go way back down here? Do you think does that make sense if the stock market's always going up? No, that does not make sense to go way back down here. Okay. If I'm like, oh yeah, there's a giant support level, there's a bunch of stop losses below here. No, that does not make sense. Okay. So we're not looking for daily. We're not looking for support and resistance to get ran on the daily time frame or the weekly time frame or even the 4-hour on these long-term stocks, okay? Because they're always made to go up. Ideally, we're looking at like the 4-hour time frame and below for support and resistance, okay? So see all my time frames up there, right? I'm on these smaller time frames looking for that. That's your first misconception, okay? Stock market's made to go up. The S&P isn't just going to crash to zero because there's some support level at zero. That just doesn't make sense. So you got to think with common sense a little bit. And the other misconception is this. We're going to watch another video real quick. Okay, ready?
This question, what is
So we're gonna watch this. You guys are gonna learn what a swing high and swing low is. This is basically like the mountaintops I was explaining to you, okay? But it gets a little more technical, all right?
Hello everyone and welcome to another episode of Technical Analysis for Beginners. My name is Mr. TakeProfit Trader, and in this episode I'm going to look at what a swing high and swing low are, how you can identify them, and how you can use them to find trends. Before we start this episode, please make sure to subscribe to the channel if you didn't notified when a new video comes. Swing means fluctuations.
I would draw this. This is a good diagram as well. Okay, everyone got this down? Now, do you guys see what I'm saying? Like the mountaintops and like the valley lows? Right, this is a swing point, not this. Right, this isn't a, you'll see in a second. We'll watch.
Swing traders use technical analysis to look for assets with short-term price momentum. Swing low and swing high are one of the most widely used terms among traders. It is used to identify trend directions and trend reversals. The swing point is the leading indicator that forecasts the future trend reversals on the price chart. Advanced traders use the swing point to confirm minor or major trend reversals in the market.
Okay, write that down. Swing points confirm reversals in the market. Or a swing point will tell you when market's going to reverse. That's good to know.
Let's start with the swing high. When middle candlestick is called swing high. So we consider 5 candles to find swing points. Swing high is the highest price in the specific number of candlesticks range. It is used as a key level on the price chart. Many retail traders use the swing high points as resistance or key level because these are psychological levels and retail traders benefit from these price levels. As for the swing low, when 2 consecutive lower lows form on the left side of a candlestick and 2 consecutive higher lows form on the right side of the candlestick, the lowest price of the middle candlestick is called the swing low. Swing low is the lowest price in the specific range of candlesticks on the price chart, and retail traders use it as the support level. Let's talk about the importance of swing high and swing low in trading. The primary benefit of swing highs and lows in price action trading is that it tells us about the beginning of a new trend. Because when a swing low forms, it symbolizes the beginning of a new bullish trend. In comparison, the formation of a swing high shows that it is the start of a new bearish trend. Another important fact of swing points is that it helps to draw the trend line and support and resistance zones. Because the touch points of the trend line are always the swing price points, you should always draw a trend line meeting the swing lows or swing highs. If a price point is not a swing point, you should avoid drawing trend lines from such point.
This goes back to our support and resistance, right? What rests below the support level? What rests below the support level? Stop losses, right? Just be thinking in terms of that.
This will help us to draw a valid trend line. I'll talk about drawing trend lines in more details in another episode. Before I said we should consider 5 candlesticks to find the swing lows or swing highs. Here, the swing low can form by considering the close and either the close or the open of the candles as you.
Okay, so see here how there's no wick? Is that still a swing low?
Yeah.
Yes. It's still the lower price. Whatever the lower price is, it doesn't matter if there's a wick body or not. Alright?
You can see here, or you can consider the shadows. So here you can see different situations that we can have a swing low. And also it's the same for the swing high. Here you can see different situations that the swing high can form. Let's go on different charts and try to find swing highs and swing lows on different time frames. This is the monthly chart of Bitcoin. And as you can see here, we have high here, and then we have 2 candles on the left side, which has the lower highs compared to these highs, and also we have 2 candles on the right side that have lower highs as well. So this is the swing high for us. And as you can see, we selected 5 candles to find the swing points. And also here we have the swing low. And again, if you look at the left side of this middle candle, you can see 2 candles which have the higher lows, and also on the right we have 2 candles with higher lows. So this is a swing low in monthly time frame. With the same concept, I just labeled other swing highs and swing lows on the chart. And also here in this candle, we have another swing high. We can mark it as the swing.
Do you guys see like these swing highs within swing highs, like right there? But is it obvious? No. Is it still a swing high though? Yeah. But these ones, the reason he's pointing out these more than like these little tiny ones is because there's just going to be more stop losses here and more stop losses here. And obviously this guy doesn't know that. Okay, this guy doesn't know that. He's just marking out the most obvious points. But that's what every YouTuber does. That's why there's a majority of stop loss at these obvious points, which is why I essentially only use obvious points.
Swing high. Because the last two candles and the last next day and the next two candles, they have lower highs and lower lows. So this is the monthly chart. Let's go to weekly chart and see what will happen to our swing points. So here we are in weekly chart. Still you can see, we have a swing high here, but you can find another swing points as well. For example, if you look at here in this candle, let me focus on it, zoom in. Here in this point we have another swing high because the last two candles and the next two candles, they have lower highs. And also in this area you have another swing high. Here you have another swing low. And here again you have
so she's just showing you a lot of really like non-obvious swing lows and highs.
The swing low, but this is the swing high, and you can see a swing.
And he's an idiot. He just said this is not a swing low, and it is. Okay, a swing low is when we get a low, lower low, higher low. So he just messed that up. Again, half of these people you watch on YouTube do not know what they're talking about.
High here. So and also if you go to daily time frames, definitely you will find more swing points on your chart. It depends on your trading style, whether you are excuse me, whether you are a weekly time frame trader, like a long.
I'm a small time frame time trader, not the daily, not the weekly. I'm way smaller than that.
Term traders, or you are short-term traders, or even you are a scalper. So based on these rules, you can go on different time frames and find different swing points. For example,
remember what I said? If you hear a term, you have no idea what it is, you look it up. Did anyone just hear a term you just said where you're like, what is that? Replay it.
Or short-term traders, or even you are a scalper. So based on these.
What did you just say? Scalper. Scalping basically means you're trading on like low time frames, like the 1 minute, the 2 minute, the 5 minute. You're in and out of trades within like less than an hour, pretty much. So I would write scalper equals quicker trades, not in a trade that long. Maybe you're in a trade less than an hour. You know, anything less than an hour is like a scalper. Okay. So note that somewhere.
You can go on different time frames and find different swing points. For example, here we have a swing high. This is one swing point, swing lows. This is another swing lows. And yeah, like this, you can go on different time frames and try to find different swing highs and swing lows. This is one topic that we need to understand it for the coming episodes, because I'm going to talk more about the market structure. I already published one video on market structure.
Okay, so a scalper, you know, shorter time frames, less than an hour. Day trader, I mean, day trade is honestly, it's like lose your term, but day trade is like you're in a trade usually 15 minutes to maybe all day. What do you guys think a swing trader means?
Very
No. We just went over scalper, in a trade less than an hour. Day trader, in a trade for like 15 minutes to maybe the whole day until the market closes. And then we have a swing trader. What do you think a swing trader is?
maybe like weeks.
You're in overnight or more. So if you're in the market for 2 or more days, you're considered a swing trader. Okay. I don't do that. I hate doing that. Imagine going to sleep and you know you're in a position, you're up or down $500, you're still in a position. How the hell would I be able to sleep? You wouldn't. Okay. Some people do it. Yeah, there's a lot of people that do it. You know, if you were in a paper trade, you wouldn't care because you wouldn't be emotional. But if you had actual money in the line, I do not like swing trading overnight. I do not like holding trades overnight. You kind of just, okay. So, that is going to be that. Now, there's one more video that I want you guys to watch. Dude, why does that come up every time? You guys need to watch market structure. Let's watch. Wait. This is just good background to know. I don't want a video that's too long here. Market structure is simplified. Okay. Watch this. This is my friend right here. This is one of my best friends, actually. About to hit 500K. I didn't know that. So yeah, this is my best friend. His name's Trevin. Travel him all the time, but this is gonna be a very good explanation. I'm gonna play this video. I do have to go to the bathroom real quick, but I promise you this will be as clear as day. Okay, he does a really good job.
How's it going, everyone? This video is going to be over basic market structure. Now, understanding trend and basic market structure is very important before we get into advanced market structure. Let's hop into the PDF and get started. Now, before we get started, it's important to understand what swing highs and swing lows are and understanding liquidity. If you don't understand what that is, please click the top right or look in the description for a link to that video and watch that prior to this. Now, here we are in the PDF. And if price is going to move higher or trend upwards, we're going to have to make higher highs and higher lows. That is how price moves higher. So for example, here we have a low, we create a high, then relative to this low here, we have a higher low. Relative to this high here, we have a higher high. Relative to this low, we have a higher low, higher high, higher low, higher high. And that is how price trends higher. Now if we're going to trend lower, the same thing has to occur, but just opposite. So we have a high and a low. Relative to this high, we create a lower high, a lower low, lower high, lower low, lower high, lower low. Now, when we get a change in trend, that is when we go from a bearish trend to a bullish trend, or we get our shift in structure, and that's when we create a lower low, lower high, lower low, lower high. So at this point, we're still trending down. We create a lower low. We can't displace lower. Now we get displacement, creating what? A higher high. Now we get our low risk buy or our higher low, and then it confirms the uptrend is starting, and we get a higher high, higher low, and now we move into a bullish trend. So you can see here, we have that market structure shift, and similarly going from a bullish trend to a bearish trend, we have that higher high, our higher low, our higher high. Now we're making a lower low. This is where I'm thinking, okay, are we going to shift trend? When we put in a lower high and then displace and close below this lower low, creating another lower low and then a lower high, we are shifting to bearish trend. So that is where our market structure shift or market structure break would be. Now the important thing to understand here is you have to understand the higher time frame trend when you're looking at the lower time frame. So for example, here in the lower time frame, we have this higher high, higher low, higher high, higher low, make it a higher high, and then we displace down, making a lower low. Now, you might be thinking, okay, we're we've been trending up, we get more displacement out of this range, creating a higher high relative to this high. You can see we have a higher high, even if we have not formed a swing high yet, but let's see what happens. So here we formed that swing high. So here is a higher high. If we're going to continue the trend, what do we want to see? Well, we'd want to see a higher low relative to this low here. So let's see what happens. Okay, there we form a higher low. Now if we're going to continue the trend up, I want to see closure over this high or making a higher high. So there we go. We're making a higher high. Let's see if a swing forms. And so now we have a higher high. So now if we're going to continue this trend up, what do we want to see? A higher low relative to this one. So now we have a swing low. If that's going to be our higher low, we want to see a higher high. Now we make a higher high. Let's see if we get a swing. We do. So now, if we're going to continue this trend up, I want to see a higher low. Now let's see if we form a swing here. We do. So now I want to see a higher high. And now we do. So you can see, this is just basic trend. Higher highs and higher lows form an uptrend. Let's hop into an example of a bearish trend. You can see here, we're getting aggressive displacement lower, so let's see what happens. So here we form a low. Now we want to see if we form a lower high. So we do form a lower high there. Now we're forming a lower low. Form a swing. Let's see if we form a lower high relative to this one. Looks like we may. We form a swing. We do. Now we have a lower low. And we actually have a lower high here. That's in a discount of this range. So now we want to see a lower high relative to this one. Made a lower low. There we get a lower high. Now a lower low. See where it goes. Now I want to see a lower high. There we go. And then creating a lower low. You can see as we're trending down, we're making lower highs and lower lows. We do, you can see, make highs and lows in here, and those get swept out before we go. But you can see relative to this high here, it is still a lower high. Now not all examples are going to be this clean, so let's hop into some price action and just practice. But let's take a look at this price action here and show how using structure, you can see when trends change. You can see here, we are trending up on this higher time frame, so keeping that in mind, we make a high, low, lower high, lower low. So short term here, we are becoming bearish. You can see, and we'll go ahead and move that to there, because that's actually our lower low now. Now, if we're going to form a lower high, we have a fair value gap here. Let's see what happens.
Does everyone get why he moves it from here to here? Because this turns into a swing low. Right, it's a low, lower low, higher low. The three candle formation, that three candle formation is a swing low, by definition. Low, lower low, higher low.
We do, but this trend is going to continue lower here. We're expecting a lower low. Now we don't get a lower low. We actually end up getting a higher low. Now what do we notice? We make a higher high as well, but is there any displacement here? No, it's really just kind of consolidation. We don't know where price is wanting to go. So letting it play out, what happens? Now we get some displacement, a close over this previous high, right? Another little higher low, but mostly focused on the close here, making a higher high. So now, if we're going to continue the shift trend, I want to see a higher low, and then a higher high, and ideally go reach right here. see discount, right? This is when I like to use discount and premium. But we do form a higher low right there, make a higher high. So now you can see we've taken this high here, made a higher high relative to that, and we're kind of just retracing here. So
Why do we sweep this high and just kind of stall out there? Yeah, because the stop loss is right. When we hit this high, people have their stop loss above high of day, and they think, oh, market's gonna jump from high of day. And then we hunt those stop losses again, and price just stalls there. That is why whenever I'm taking trade positions, I'm not targeting way above here. I'm targeting this high. Does that make sense why I'm getting out at that high, not just trying to move my take profit way up there, just in the middle of nowhere? It's because their stop loss is there, right?
see what happens. So you can see no real direction here. We're just sweeping highs and lows. Now we make a higher high. Making a higher high. Now we're making possibly a lower high. We don't sweep, we do sweep, higher high. We don't really have any slow in here that we broke, but this is still bullish, right? Because we never broke this low down here. Let's see what happens. Now we break this low. You can see we don't really have a swing low in here.
So
but once we break this,
what is actually causing trend changes? What causes a trend change to go from bullish to bearish? Not a stop run. It's when we break the last high or low. So let me explain this a little bit. These are just good to know for background information. Watch. If we have all higher highs and higher lows, right here, higher low, higher high, higher low, higher high, higher low, what's going to confirm a trend reversal? A lower low. Right now the highest low is right here. So if we form a lower low right there, that might signify a trend reversal. Okay, does that make sense? And then all of a sudden we'll go down again. Now, this is where it starts getting a little more complex, because some of you are probably like, well, what's the difference between running stop losses here and going back up versus changing the trend? Well, that's going to be, I mean, we're going to get to all that. I have so much to talk about. So that's generally what how to identify a trend change reversal. Let me go back to this video real quick. Where'd it go?
slow. Now I'm thinking, okay, we can possibly shift to bearish. Now if we're going to form a bearish trend, I want to see lower lows and lower highs. So I want to see a lower high put in to continue lower. So here we do have a high, we form a swing.
Is that wait? Is that a swing high yet? Is that a swing high? Why is that not a swing high? Why do you shake your head in the black? Yeah, in the black shirt. You just shook your head. Because there's not a third candle after confirming the lower high, right? So, when will we know if this is going to be a swing high or not? Yeah, if we get a third candle, the next candle forms a lower high, and it closes with a lower high. And then this point right here becomes a actual swing high.
So here we do have a high, we form a swing. So now we have a lower high. So we're going to form a bearish.
Now would it be a swing high? Yes, right? Because we got the next candle that confirmed that that was the highest high, and then we had that 3 candle formation. Okay. The 3 candle formation, all the 3 candle formation is this. Boom. I'm just going to be the wicks only. Boom, boom, boom. Is this a swing high? Is this a swing high?
Yeah.
Is this a swing high? Yes. Does it matter how many candles there are before or after for this to be swing high? Right? If we did blah, 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 and then blah, 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 is this still swing high?
Yeah.
Yes. Because it's a 3 candle formation. It's the lower high, higher high, lower high. Okay, like a triangle. Same thing with the lows. Low, lower low, higher low. Right? This would be the swing low. Okay? Alright, and then after this video, I'm going to have you guys go in groups again. It's almost done.
Bearish trend here can actually shift from bullish to bearish when I see it close below or break up this low. So there we go. Now we make a lower low. And there is our lower low. Now we're going to continue bearish. We want to see what? A lower high. So we do have a lower high here. I'm not as interested in this because of premium and discount, right? I'd like to see a premium array.
Don't worry about that. We'll get to
Does
that.
form the high low, we make a lower low. And we continue lower. So you can see it sometimes does get a little bit messy, but just focusing on swing highs and swing lows.
That's why you focus on the obvious swing highs and lows, not the little tiny ones, because then it gets messy.
Displacement around them, or the lack of displacement around them, can give you clues to where price is heading and where it is shifting. So just leading this here, if we go back to where is our shift in structure, or where is our actual change in trend. Now I'm not really interested in this right here, right?
Does anyone know where the change in trend is here? So you're saying the highest high, this is the change in trend? Okay, yeah, so you're actually kind of correct. What level did we break that caused a change in trend though? Can someone come point to it? Remember I just explained
The higher compliment.
the higher what? Wait, look at this one, ready? Remember I just explained there's a trend change if we do that?
Yeah.
Find, if someone can come up here, point to the low that breaks that causes the trend change. I'm gonna just pick someone. I'll pick you in the green. Yeah. Yep. Point to the higher low that broke that caused the actual trend change. Yeah, that was the trend change, but what level did that break? Exactly. Yep, good job. All right, you can have my seat. So yeah, it broke this because this was the last higher low, and then boom, we break it. That tells me we're going to start going down. Okay.
We do form a higher high, but we don't have a swing we break. So looking at this low, this is where we shift trend, right? Because this is the low that made the new high before price came and broke it, right? So then if we rewind, so right here, this is where I'm thinking we can shift trend. However, we are also in a discount over here. So if we're going to continue the trend higher, and this is just a sweep, we're not going to form a lower high here. We'll make a higher high. So I want to see, do we form a lower high here and then look to get in later, right? So right here, this is the deciding point. Do we reject from here, continue lower, shift the trend, or is this just a sweep to continue higher and continue this uptrend? Now once we displace and close below this low, that is when I'm looking short, right, to old lows.
Why is he looking to short the old lows? Why is he looking to short to here?
Because that's where people have their stop losses.
That's where people have the stop losses. Exactly. Now we're getting it. Now we're getting it. All right. All right. Look at how many times we bounced off here. 1, 2, 3, 4 times. A lot of stop loss in there. The market algorithm and the way the market works, and which I believe it works opposite of everyone else, is it will target these old stop losses. Okay.
You see? But you can see this is the shift in structure. Now let's take a look at this example on oil. You can see we're making higher highs, higher lows, higher highs, higher lows, higher highs. So we're going to form a higher low here. I want to see the trend continue higher. If we're going to break a low, then I want to see if we put in a lower high and continue lower. Let's see what happens. So here, we display.
Is this a trend change? Yes or no?
Yeah.
I don't know. Why? What is okay, what is the actual definition of a trend change? Have this in your notes. A trend change is when, or a bullish to a bearish trend is when the last high or low breaks, and then we form a lower high. So the true definition of a trend change is we're forming higher highs and higher lows, and then the last high or low breaks. Okay, that should be in your notes. And then hopefully we'll put in a lower high at that point. Okay. So it's when the last high or low breaks. So a trend that goes up is up, 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 up. And when that last high or low breaks, that's when we start going back down. Okay, that's the definition of a trend change. Same thing to the upside.
But like at that point, we don't have another high.
Yeah, yeah, at that point we're not going to form another high.
So it's not a
You're right, yeah. Okay, I guess you're right. Yeah,
not yet
so,
though, because we need the green kind.
okay, would this be this, let me rephrase that. Would this be the start of a trend change? Yeah. Yes.
All we need is the
Because
green.
why, though?
Because it
Because the lows are
We broke the last high or low.
Yeah.
Right? Exactly.
And close below this low. So do we shift structure? Well, if we do, I want to see a lower high be put in.
There we go. There it is. So now it is.
And here we put in.
Okay, now is that a full trend change? Why?
Because the last high is broken.
Yeah, because we put in a lower swing high than this one. Okay. Now let's say this candle wasn't here. Would this be a full trend change yet?
Is the green
If this black candle wasn't here, how? Not yet. Why?
I didn't say that.
Not yet, because if we did not have this black candle here, why would we not fully know that this is a full trend change yet? Anyone? It's because we wouldn't know if this is actually truly a swing high yet. Right? Remember, we don't know if the swing high forms until we get that 3 candle formation. Do we have the 3 candle formation of a swing high here yet? No. Now do we?
Yes.
Yeah. Because high, higher high, all right.
That means it's gonna shoot down.
Yeah, that means it's going to shoot down now.
And that means people are going to get shorted up.
And that means people, the buyers are way down here. Everyone who bought here is not going to get wrecked when we go back down.
A lower high. So if we're going to go lower, I want to see closure below this low. Now we just continue higher. Okay.
Now, we go higher here. And this is where trading gets hard. Welcome to losing money. No, just kidding. Again, I have an own entry model. I would not have entered anything here, and you'll see that down the road. But again, the purpose, this is kind of like, playing golf, okay? Who plays golf again? You play golf, you play golf, okay, you play golf. If you're working on a swing mechanic, right, let's just say I'm working on, hitting, a light draw, okay? Do I really care where the ball goes, or do I care more about how I'm swinging on video? What do you think? Yeah, I care more about the swing, like what's wrong with the actual swing. I don't care where the ball goes. So when I'm teaching you guys this, we're just learning basic market structure. We don't really care if we're right, wrong, if we're going to trend or not. You just need to understand what may likely cause a trend change, or what, basic market structure is. Just like how you golf, like, when I'm practicing maybe a new putting technique, right? I don't care if I get the ball in the hole as long as I have the right mechanic, because over time, if I have the right mechanic, my golf swing's naturally going to get better. So don't, even though you went up there, you're still learning what can cause a potential trend change. And when I teach you my full strategy in the future,
And end up taking this person out. Alright, so now why did that happen? Well, here we are on a 5-minute chart. Let's go ahead and zoom out to the hourly chart. Now this is what I talked about at the end of the PDF, where a lower time frame reversal, or this lower time frame shift in structure, is actually just a retracement to a higher time frame PD array, in this case an hourly fair value cut, to continue higher.
Okay, we're not on that yet. We'll get there. Okay. So I'm gonna have you guys break down in groups, and groups of 3, and what you're gonna do is you're gonna find me a bullish trend, a bearish trend, and then a trend reversal, and show me why the trend reversed. Okay? So let's start doing that now. Start walking around, checking it out. And then this is going to be the last thing before we end.
Just one question. So, swing, I know I just listened to it, so let's say it started, that would be the lowest.
Go down a little bit. Turn off volume. Go hover that. Yeah, and then click yes, this would be the low, but this would be the lowest low.
That's the lowest low.
Of that range you have on the chart right now.
Yeah, so that'd be,
But this would still be pretty obvious. That's just a high.
yeah, and then that's the high.
That's not a swing high.
No,
Why?
that's the swing.
That's a swing high, exactly.
Yeah. And then it drops. No, so people stop here, right?
Yeah, below here.
Yeah.
But do you think that's a cluster? Or is that just a
mess?
Yeah, but like the best stop losses are going to be when we have like 2, 3, 4 points down here, like at this level.
Right.
There's kind of only just a single. Yeah,
So-
so it's not great. You know, this might be better.
Yeah.
See how you 2 points? Yeah. So see how you run those stops and then you go up again. If you draw a line right at the low, you hold control. Hold control there, just a little. The trend line. Do the trend line. No, up. Yeah. Yeah, back. Click right here and hold control. Yeah. Okay. Place the trend line normally without holding control. Okay. Just place it there. Now hold shift. It should straighten out, right?
Yeah.
Okay.
Sorry.
Hold shift. Yeah. Now go back to the starting point and hold control. It should go to the exact low.
Is this okay? Wait.
Oh, that's it. Yeah, toggle. No. Toggle that. No. Toggle this first before pin control. Make sure you can move that around. What is it? Yes.
So right now, this is the higher low. Then we go up. Okay, I got higher tires. That's higher.
Put that, toggle that. These bodies are moving around.
Is that what you do?
Control. They'll move around. Control.
Yeah. So are there multiple trend changes?
No, so the trend change happens with all.
Maybe it's command. It's command. It's command. I'm an idiot.
Bear should be when it's
See?
like this. Up, down,
Click got it.
Got it.
green, red,
Right
red.
there. Click. Yeah, exactly. Get it?
Hey.
And then hold shift and then click this and hold shift.
Have you guys found a bullish trend?
Yeah, now it's perfectly straight. And you can kind of see that's a liquidity sweep right
Yeah, so they put their stop loss there.
Exactly.
And sweeps it out.
there. Yeah, exactly. Right, there's no-
Hey, it's making so much more sense.
Yeah.
Okay, red.
All right, I'm just gonna start coming around and just start checking you guys. What do we got?
That's the lowest low.
Bullish trend? Why is it a bullish trend?
Lowest low.
Yeah, what?
Higher.
Definition of a bullish trend. Higher what and higher what?
Lower high. High.
Higher.
That's when you okay, safe.
So point out. Okay, when you guys are doing this, see if you can highlight like at least 3 higher lows and higher highs. Like highlight the points where, like obviously you can show me the market's going up. That's easy. Anyway, like literally a 2-year-old could do that. But actually highlight the higher low and higher high. That's causing you to think that it's going up. Alright?
Is it like this is a higher high, and then this one, and you higher high?
Yep, exactly. And then that's the higher low. Yeah. That's the higher low. Well, that's kind of just a low. Just a low there. See that swing point? Yeah. And then swing point higher.
So it'd be higher.
Exactly.
I'm just a starter.
Yep.
So I'm looking bullish and bearish.
Yeah, starts.
You're in it.
Yeah, that is a bullish.
All we're doing is trim.
Get to this point, yeah.
Bullish and bearish.
And there's
Drops.
Would this also be a trend reversal?
Yeah, so that's at that point. So keep waiting for something else. Because at this time, it's the lowest there.
Oh, when you're
From
you should
chart
get a new higher.
that you got
Low.
lower high.
When you're higher,
Highest
you're
high.
higher.
Higher high. And then high there. That's pretty much, that's the smell there.
Show me where a
This is
higher
the
low.
easy way to
Exactly. Now
you
show me
see
where a
this,
higher
this
low from that would be.
drop their stop loss here.
This would be a higher low.
No, a higher low.
Higher stop.
Yeah, just a higher low.
We've got our stop loss just above that line there, because we know it's not going to go above that. So we put our stop loss there.
It's 11.
And then everyone's done the most.
That technically is,
Stop
yeah.
loss there, got our take and then hit that line, and you can see it literally dinks under it.
Right there, yep, exactly. Right there.
See our friend.
And this happened.
No, it's like range storm.
See how the
Like, they're not
stand out a
gonna
little more than this? And then,
We did it at this exact
and then
point.
show me where we put it in a higher high right
We made go from 293 saves.
now. Swing high.
You can predict, right?
Where's the high? So is this a swing high? Why?
Minus 293.
Exactly, it's not that formation.
We're drawing for that hard music. And, oh no.
Exactly,
So
that's
drift
right,
is one.
that's a swing high. So you have a high, a higher low,
So
and
we
a higher
have
low.
2 minutes more.
But Henry did rodeo as well.
That's exactly what I'm doing.
Rodeo trends, 10 minutes away.
Does that make sense?
I like rodeo. You've never been? My mom does the bag once a year. That's like her. We always go there. Or the Beverly Center. She dailies like a week.
Sorry, I'll be able to.
Oh yeah. We bought it. Wait, do we turn off our shit? Yes, check it out.
That actually makes sense stuff like that. When you just started that actually getting hungry.
Very small. Low, 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 higher, low. Yeah.
So shit went from
That would be the next higher.
4:10:30 a.m.
Don't leave that. Yeah. Ollie. Is it down there?
Toilet.
Down
Leave
there.
this door, turn right straight away, and all the way down at the end, and then go left.
Thank you.
You ready to reverse?
So like,
How come they identify Here it is. So highlight. So this is.
Oh.
See where I'm trying to.
it's a decent gym.
So let's just start the trend. Now identify by the higher low.
Oh yeah. That's something important that happened to us. You guys killed it.
Exactly. Yeah, I was literally about to look
You
higher.
guys killed it. You guys are beasts.
Oh, then hotness and love it.
Yes.
Alright.
Identify me another higher low.
Exactly. So that would be nice. Yeah. Yeah. What time is it?
11:25.
That's a ghost trying to job.
Yeah, what? Class ends in like
So
4 minutes. So.
if
We get to lunch before all you guys turn up. You don't need to leave, you can't leave yet. Well, you can leave. Give it to you. I'll stay for like 2 minutes.
Here, now show me a higher high.
Yeah, there's more makeup.
Show me a higher high.
Too much meat and the sauces.
Yep. Right there. Yep. See how it's a swing high? No. It's a swing high. Widen up. High, higher high, and then lower high. Swing high.
I've been practicing for the
Like the.
Ah, that was bad, man. Hey, what do you get when you cross a fox? That rapid. Is that confusing all of you? I think that's the hardest thing to get. What do you get when you cross a fox and you're rapid? Okay, fine. That's a good one. Oh, okay, bro, don't wait for me, bro.
No, we have to go this way anyway.
You guys good?
Which way? I feel like this way's better though, because it's right there. Is it faster? Yeah.
Now this is a lower look. So what does that mean? Remember I said we're just going up like this.
For 2 hours long. I don't know.
See how we go up, down, up, and then we break that last higher low, and then we change trend. So I'll keep going over it with it.
Yeah, they like, oh, they never.
Alright, come on, your questions come over here. Are you guys good?
Yeah, we wanted like.
Okay, give me, give me. Alright, what's up, guys?
Just got a question. This is the right change in trend.
Okay, we go low, higher low here, and then boom, down here changes trend. Yep. See how we're breaking this last higher low?
Yeah.
I guess this would too, yeah, because we broke this.
because we booked this as a.
Yeah, exactly. Exactly. And see how this was an uptrend and then boom, downtrend. Now I expect bearishness.
Okay.
Yep.
Thank you.
We're gonna ask after.
Okay.
So like, what are like the three big?
The three big parties of like, okay, there's the people buying. Wait. I'll be there in 1 second. So there's the breakout traders. Remember how I explained if, you know, when we break a low like this, people are like, oh, we're gonna go down now, right? And they're trying to short, okay? So there's the breakout traders, that's one party. There's the people who were buying here, okay? What causes price to go up here? People buy, right?
Go up.
Yeah. Yeah, what causes price to go up? People want to buy, to drive price up. Where are people placing those stop losses?
I don't understand why would you want to place your stop loss?
Because because people, that's how they're taught on YouTube.
Oh,
Yeah,
YouTube is the reason. YouTube
Yeah.
is here.
yeah, exactly. So people place their stop losses here. So there's the breakout traders trying to short, then there's the people getting stopped out here, also having to sell their positions, and then there's the banks which buy back up here. And that's what there's the three parties.
Also, same as it goes down.
Yeah, exactly. So you go down, it stops. So, yeah, I'll keep talking about it. You know,
I was gonna ask two different maybe like longer questions.
yeah.
So I don't know if you wanna like.
Let me go.
Yeah.
All right, let me check here.
Okay, so I did the lower lows. So this one and then
Yep.
this one.
Exactly. Yep. So
And
that's a
then-
downtrend. No, where are the lower highs? All right, let's keep talking about boring stuff. All right, so this is called FxReplay. You guys see it's kind of the same thing as TradingView. No, it's just the same interface. It's just a different, company. You do gotta pay for this. It's like $30 a month or something. Don't actually do it though. I'm pretty sure they have a free version too. But this is something I call backtesting. Do you have any guesses on what backtesting might mean?
If you want to make a trade, you're gonna look somewhere similar where something similar is happening, and you're gonna run through it.
Exactly. This is where we run through old trades and old price action where we can skip the candles, right? And it goes back years. So if I want to skip this 5-minute candles, and I just click this replay button, see how I instantly see all the candles? Right now we are in December 2023. Okay. So it's basically a simulation of me backtesting, and I can use this to my advantage to kind of gain, an edge and practice. So it's like a practice. Okay. If you guys all play sports, this is a practice field, right? And then the playing field is when you actually get a real one in the real market. Okay. But I'm gonna call some people up. We're gonna do a couple examples to me first, but I'm gonna try to identify market trend in front of you in live time. Okay. If I fail, well then I suck. But we'll try to do this. So, what is the trend right now? Is it bullish or bearish?
Bullish.
Yeah, pretty bullish. The general direction of this is up. Okay. How do we know this is bullish?
Candles.
Yeah, we have a higher low, higher low, higher high, higher high, higher low, higher low, higher high. Now, do you see how I'm drawing the most obvious points? Boom, but like I'm not looking at all these little tiny levels. I guess you could draw that. I mean, this is where it gets down to discretion and opinion a little bit, where you could draw that, but it doesn't really matter. As long as you understand the general trend being up, okay? Now, can someone come up here and tell me which one of these highlighted circles has to break in order for us to get a potential trend change? I'm gonna pick someone. You. Yeah. What do you think? which one of these circles has to be broken for us to get a potential trend change? Right here? Okay, why this one? Okay, no, not quite. Anyone else want to go? Yeah.
The last high low.
This one right here?
Yeah.
Yes, perfect. Good job. 100%, you can leave now.
I'm good.
Okay, so yes, that is the last higher low in this overall trend. Okay, so for order for this trend to be broken, if that breaks with, you know, some candle, that would probably be a trend change. Now, do you think if this broke with a candle that looked like maybe this, would that be very convincing? Why or why not? Why not?
Because just because it dipped back down doesn't like it's the trend is still it going up.
Yeah, it's still kind of generally going up. Okay, now what if we got a candle that was, I call this a death candle. Okay, this is my own terminology. What if we got a candle that's like that?
Oh, then you would think it'd be going down.
That would that be more? Would you be more confident in us changing trend?
Yeah.
Yeah, way more confident. Okay, so we're just gonna see what happens here. I'm gonna try to predict in live time because I don't know what happens after this. This is why it's called backtesting. I don't know what happens, so I'm gonna see if I can predict in front of you guys. Okay.
Well, what's your prediction?
I don't know. I have to wait. Like you wait. It's like being a tiger. Will a tiger just go for their prey right away, or do they kind of stay patient and wait to pounce? They stay patient, right? They wait until their prey is in the perfect, most lucrative spot in order to get, you know, their food, right? Because if they go for it and it's in a hidden spot and they see the tiger coming, that's no dinner. Okay, you don't get a dinner. All right, I'm trying to feed my family, dude. I'm trying to feed my kids, which I don't have. But we're gonna keep going, all right? So let's see. Okay, so this last higher low broke, but is that a convincing candle?
No.
Not yet.
Not yet. So I wouldn't really be super confident yet. Let's just keep playing price here. Okay. Is it convincing yet?
Not really.
Yeah, not really. It's just kind of whatever. Still nothing. Okay, is it a little more convincing now?
Yeah.
Yeah. So my prediction here is we're gonna start going down a little bit more. So maybe we'll go down to like here. Okay. So I would consider this more of a trend change. I actually think we're probably gonna go maybe to this level down here, which I can't really explain why, but we'll see. Let's see.
Oh.
Okay, so
Nice job.
that's okay. There's a lot of other concepts that I haven't taught you yet that like you won't understand now, but basically there's something called a fair value gap and it will be bounced off my zone. Okay, which is fine.
Did something happen that day that made it go up so much?
Yeah. So does anyone know what FOMC is? Does anyone know who Jerome Powell is?
Jerome, yeah, he's the chair of the Federal Reserve.
Yeah.
It's sometimes like doesn't it affect the stock market
Yeah.
by the way he says good morning?
Yeah. So this is a politician speaking. That's why we just got that candle. Okay. And it's kind of a strange situation. But every 2 months, Jerome Powell, who Trump just fired,
Yeah.
now we have another guy, Warsh. We got Warsh speaking every Wednesday, every 2 months. I think it's a random Wednesday of the month. But every 2 months at 2 p.m., what you can see is 1400. If you don't understand military time, go watch a YouTube video yourself. I'm not going to explain that. Okay, but 1400, 2 p.m., and you can see it marks it out. So, in theory, should you really be trading before the giant federal chairman speaks and can make the market go up 500 points one candle? No. Okay, really bad idea.
Well, you shouldn't be trading, but you should be ready.
You should be ready, but you should honestly, you gotta wait until after 2 p.m. Okay? And I'll talk about news and how that affects the market. Do I really care? So basically they're announcing, you know, there's something called CPI, which announces inflation. Okay? Does anyone know what FOMC announces or what Jerome Powell announces?
Well, he says that the interest rate is going up.
Yeah, interest rates. So he's talking about interest rates. Do I give a crap about what the interest rate is going to be?
No.
Whether he's hiking it 0.25 or whether he's raising it by 1. Do I care about that? No. I only care about what the candlesticks are telling me. Okay? I don't know what he said here to make this candle. All I know is whatever he can say can cause a candle like this. So I really don't want to be participating in the market if we're going to get a candle like that. Okay? Not a good idea. Now that we have, see how we have no more news until the next day? Now this would be an okay time to maybe trade, because if you're trading when you know Trump's about to tweet about Iran, if you're trading when you know we're about to get a huge number in the, in the politician world, you can get cooked, okay, very fast. So you should be aware of that. And I'm going to give you a couple of news sites.
Can you also get lucky?
You can get lucky, yes. I got lucky once. I also lost $70,000 on my live account in about 10 minutes one time.
Wow.
Because basically Trump tweeted and the candle went like this to this in like 2 seconds, and it went right through my stop loss.
Oh.
Yeah, and I had a stop loss set. It's if it happens too quick, that's why what I'm going to tell you guys to trade in prop firms is a lot safer. But live accounts are not easy. Okay. So yeah, I've lost a lot of money doing that. So yeah. All right, now that he spoke, would you guys agree that we can maybe delete this, this, and this,
Yeah.
and then maybe highlight this?
Yeah.
Yeah, so I'd say we're going to delete those, and this is where it tends to get messy. So now this is the last high or low. So would you guys agree that if this broke, that would be a trend change?
Yeah.
Yeah. Now, could we theoretically put in, where the hell is my brush? Okay, could we theoretically put in another high or low and then use that new high or low? Yeah, we could.
Yeah.
Let's just see what happens.
Oh, no,
If we just keep going up, I can't do
It
it.
must have been really good news.
Yeah. Holy.
Wait, what year was this?
This is 2023.
Interest rates probably went down because of how
Yeah.
high they were.
Yeah. So, okay, so now it's kind of the next day. So now the market's closed. I'm just going to go to the next day, and we'll try and find another example. All right. We'll go to New York session, which is 9:30. Okay. All right. We're going to go in the 15 over here. Okay. We're just going to see what happens here.
Everybody's.
Okay, would you guys agree that this could be a potential trend change to the downside?
Yeah. Because
Yeah.
everybody's selling.
Yeah, and look at the last higher low he broke.
Yeah.
Right? See how he put in the last higher low? And then what happened here?
It went.
Shot up.
Okay, but what?
Oh, it's
Higher.
Yeah, we failed to hit the higher high, so we failed to make new highs. So this is called a what? A lower high. Right? So now I would say we're pretty bearish. So let's see what happens.
fair.
Right, it's kind of going down. It went down a little bit, but there we go. Okay, finally. So, right, we determined that we changed trend here, right? Would you guys say we broke this with a pretty good momentum candle? Yeah. And that means, okay, now I'm bearish. And then boom, what happens? We can just keep dropping because we know it's a trend change. Okay. Now, what would have to happen for us to go back up
We'd
to
have
these
break,
highs?
We'd have to.
You have to break the
We'd
lower
have to
high.
break that lower high.
Yeah, we'd have to break the lower high. Can someone come up here and point to me where the lower high is? You come up. Show me where the lower high is to where we'd have to break it to go back up to the highs. Yeah, you can use the mouse. It's fine. The last lower high we just put in before that giant down move is a swing point. Yep, right there. Perfect. Okay, good job. So we have to break this in order for me to be like, okay, we're gonna go higher. Okay, so let's see if we break it. Oh, that's boring. Remember, we'd have to break this. I'm gonna draw a line here actually so it's easier to see.
It's like really slow.
Yeah, because this is overnight. We got into overnight session. Okay,
There we go. No, but
when you guys agree that this looks like a trend change to go back up to the high.
yeah.
Why? What's like what kind of candle is this first of
A
all?
long it's a
Big hammer.
it's a Gila or I have
I don't know if there's like an actual name for that candle.
it says bullish engulfing.
Yeah, it is actually. This is a bullish engulfing candle. See how it. Yeah, good job. You did your homework. Okay. See how we have this small red candle and then this big green candle overtakes this whole thing? Is that a sign of strength or weakness?
Strength.
Yeah, very strong. So now I would say, okay, we changed trend. We're now going to go to the high.
And more news strong.
Yep. So this is less important, a little bit less important than what
Well, yeah,
Jerome Powell was going to say. Now we might be able to enter this, place a stop, maybe below that red candle, and then target this high. Let's see what happens. And bang, TP hit. So
What you doing?
yeah, you just made $500 on that.
Okay.
So we were able to predict the trend change. Okay, we had our stop loss down there. You know, we kind of came down, retested it, but we didn't hit the stop, and then boom, we go to the high. Why do we just stop right at the high after hitting it a little bit?
Because it's gonna go back down.
Yeah, but what's happening up there scientifically?
The people are gonna start selling.
All the people are getting stopped out. And that's where all the big banks and institutions sell their positions.
Yeah.
Okay. And that's why I get out there, right? That's why earlier when you with your hand raised, that's why I'm not trying to target right here. What's your question?
If you have a take profit or stop loss somewhere, and you're on like a 15-minute time frame and candle is still being formed, will like your take profit or stop loss trigger even if the candle doesn't end above or below it?
Yeah, that's
Like if the wick goes above or below?
Okay, wait. Say that again?
He's saying it like with
On a 15-minute time frame, a candle is formed once every 15 minutes. If you place an order, and when that candle is formed, it's not above or below your stop loss or take profit, but the wick is.
Oh yeah. It's like it goes out.
Yeah, if the wick hits your stop loss, price hits your stop loss. Any wick that hits your stop loss, that's out. Even if, and that's where I see a lot of new retail traders mess up. You want to know what happens to them? Look, oh, I can't show you now, but what happens? I'll show you in trading view. What happens is this. And if you've ever traded before, you're probably like, oh yeah, that's happened to me. Watch. What happens is they're like, oh, okay, we're bullish here. I think we're gonna go up. They'll take a long, and they'll place their stop loss at this low. Right? Would you guys agree this is the swing point? Yeah, it's the swing point. Well, wait, no, it isn't actually. I'm done. Well, it's not a swing point yet, basically. But someone. Wait, okay. We're on the hourly time frame. Do you think this is a swing point in the 15-minute time frame? Yes. How many 15-minute candles are in the hourly candle? 4. How many 15-minute candles are in this candle? 4. So that's got to be a swing point in the 15-minute time frame.
Oh, so it hits the stop.
Yeah, exactly.
Oh wait, that's dumb though. Like,
Watch.
Well, why would they set it that low?
Because that's what they do. Look, this is what happens to new traders. They'll enter here. They'll enter here, play stop loss below low, and then watch what happens. Oh, got stopped out, but the candle still closes really green.
Yeah.
See what I mean?
Yeah.
So it's still going to trigger stop loss because price is still going down there.
So you're negative. Even though the candle.
Yeah, you lose money even though you were technically right, but your stop loss got hit. But what's more important, you following the plan, or you losing money? Yeah, you following the plan, right? If you follow the plan and lose money, that's okay. So, yeah. Okay, let's try to do another example. Okay, this looks bearish or bullish?
Oh, bearish.
Yeah, honestly pretty bearish. All right. To me, it looks like we swept this high. All the banks and institutions shorted because all the people with their stop loss above these highs are getting wrecked, right? They're getting stopped out. That's when the banks and institutions enter. Boom, we go down. And look, if I zoom in on like the 5 minute, we have a high, a higher low, a lower high. What is this?
A lower low.
Lower low.
A lower high.
Lower high. And we're just smacking through everything. So I can pretty confidently say, where are we going to go right now? To where in the chart?
Down to.
Where's some stop loss?
The lowest where the previous one.
Yeah. And would you guys identify this as support as we watch the YouTube videos?
Yeah.
Yeah. People, retail traders are like, oh, buy here, it's support. No, don't do that. And then we should cook those lows right now.
Oh.
Just wait, we'll go to them. The problem is when I'm backtesting the 15 minute, there's time involved. So look at this. This is basically when market's closing, and then we have to wait for the next day.
Oh, right.
So we might wait for the next day. See how it's really slow? This is like midnight, and there's something called London, Asia midnight. Like this is overnight. Okay, just watch. Okay, so here's the next session. We're just gonna remember these. Now we got triple equal lows, so we're definitely gonna go hit those at some point. Maybe if we like break this last higher low, right? So if we broke this, I would probably try a short. Right, so if we broke this, I would try a short. But if we don't, then I just don't take a trade. Okay, so we didn't really break it, so I wouldn't really trade. We got a higher low here, so now the trend's bullish, higher high. Just keep watching. We are trading at all-time highs at the time backtesting this, and if you know anything about all-time highs, the market just goes up. That's kind of annoying, but yeah, it's not getting any trend changes. Now it's overnight again. Alright, I'm just going to go to the next session. We'll try to find another example. Okay, here's the next session. I'm going to remember these levels. We're kind of far away from them now. What do you guys say this is generally bullish or bearish here?
Bullish.
Yeah, pretty bullish, honestly. You can see we're forming higher low, higher high, higher lows, right, higher highs. So in order for me to think we're going to go down here, I want to see a giant death candle, but we're not really getting that. See, this is what the market does when it just at all-time highs. Again, would you still say we're bullish or bearish here? Yeah, there's like no trend. You guys see how there's like no trend change here? Right, we're just putting in higher highs and higher lows still. So I would just sit out, or I wouldn't do anything. Again, still just going up. There's no trend change. Okay. All right. That could be one. I'd probably argue that like maybe this is the last higher low. So maybe I'd want to see, a bunch of displacement through that. Okay. So this to me is pretty bearish now. Would you guys agree? Yeah. This is a trend change. Sure. So this is where I maybe look to take a short finally after just waiting. Now, if you remember what I said, is this statistically easy to hit? No, these big trades are very hard, okay? Do I hit them time to time because I'm just good at what I do? Yes. But I don't trade a 15-minute time frame. I'm on a 1-minute time frame in these. So a 1-minute time frame is going to be way smaller scale. But I would argue this is a trend change. All right, we'll see what happens. Now we're just chopping. Okay.
Oh.
And then this is where you get stopped, okay? Now, remember what I said before, okay? What happens if you're like, oh, I'm gonna move my stop loss up and up and up and up and up?
You're gonna lose more and more.
You're gonna keep losing money, okay? You need to stop out if you know you're wrong. Okay? If you are wrong in position, right, just like how I was just wrong, you need to stop out, okay? And in a second, I'm gonna take an actual order, and I'm gonna actually try to take a trade. But you need to stop out, okay? So what's your question?
Does the width of the box matter at all?
The wick of the bot? What do you mean?
Like that, right in between the box. Like, does it matter at all?
Right here?
No,
like,
the width of
yeah,
Oh, the
like,
width.
That's the time.
Oh, no.
No, doesn't it just keep going?
I could do it like, yeah, I could do
It
this.
just keeps going, no, until like.
Yeah, it doesn't matter. No, good question. So, we're just going up again. You know, you guys don't know this yet, but whenever the market's just, yeah.
Still in between.
It's also back to like,
box.
you know how
Scroll.
like at the bottom, so you're trying to go down,
Yeah.
that's how you win.
Yeah.
But how is it going down in the market?
How is going down making money?
No, it just keeps going.
Because you're buying in,
Stop
like-
loss.
Okay, so I kind of explained this before, but
No.
imagine you borrow an apple from the store and you don't buy the apple, okay? So you take an apple from the store, you walk out of the store with the apple, it was $10, okay? But you're just borrowing it, you never paid them for it, okay? And then you bring the apple back the next day, okay? And you give it back, but the apple's now $5 instead of $10 from when you borrowed it. You just made $5 profit selling it back to the store.
So you're like starting at a point where you're not actually getting nothing.
Yeah, you start off, it's called borrowing.
Yeah.
So you borrow contracts, and then when you rebuy the contracts, you're just rebuying them because they dropped at a lower price.
Didn't you sell the apple first and then buy
No, you borrowed the apple, then you just sell it back at a lower price because the apple
I
dropped.
watched
But you
some
sell it for
videos
$5
on where I would-
No, I think you borrow it, then you sell it for $10, then the next day you buy it for $5 and then give it back.
Yeah, isn't that like a better example?
Yeah, but I'm trying to be really simplistic to her so she understands it. You're gonna get it more and more.
Wow.
You're gonna get it more and more. Just wait. Okay. All right. So now we have. Now I'd probably delete these. Right. We're gonna. It's okay if you get stopped out.
But
know,
if you short, like, is the money already there, or is it just gonna buy it whenever you buy it? You know what I mean?
What do you mean?
Like, you put a short order on, like, you pay for the short order,
You borrow.
or you borrow.
Okay. See, now you're thinking that's like you're too in depth. Basically,
So, like,
when
how does
I
it work, though?
when I put on a short order here, I'm basically risking money. Just know that. Okay, I'll show you in a second. Now, if we break this, I'll probably take another short. Let's see though. Again, you guys don't know this yet, but whenever the market, especially the Nasdaq and S&P, is trading really high, it's really hard to short. You ideally just want to long. Okay, boom, right there. Look, see that candle? I played it too fast. But would you guys agree this candle was really strong to let us go down?
Yeah.
Right?
Yeah.
And now we're going to go back to those lows from before where people have their stops at.
Nah.
Almost, but it's okay. This is the cool thing about support and resistance. On a scale of 1 to 10, how obvious does the support look?
Pretty
Super
obvious.
obvious.
Like a 9 out of 10.
Yeah, we left here, 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 now here. The chances that this hit is almost 100% now. We're going to smoke it, okay? So this is where I'd go look for a short eventually. All right, we're going to have to wait for the next session. But we're going to go back to the level 100%, all right? So, no, this is where
you still haven't short
this is
now.
where it gets
Interesting.
yeah.
That's not much.
Remember, that short played out and the market actually closed here. You guys all know what time the market closes, right?
12.
Yeah. Or 4 p.m. Eastern or 12. Or wait, no, it closes at 1 here. What am I saying? Yeah, it closes at 1 here, 4 p.m. Eastern.
7 to 1.
It opens here at 6:30 a.m. Eastern, and it opens in New York at 9:30. When I talk about these times, I will be referring to Eastern time only. 9:30 to 4. Yeah.
When you say the market closing, do you mean like you can't buy more?
You can't buy or sell anymore, yeah. With futures, you can 24/5, but I'll explain. So here, right, the market closes here. If we were truly in this short position, do you agree we probably would have been out if the market's in close? Right? Yeah, we're not going to be in the position anymore. Now it's a new day. Can someone tell me what we have to break now in order for me to short back down to these lows that we left over?
You have to break that new low.
Yeah, right. Where is it? Right here, right?
Yeah, right there.
Yep. So now, if we break this, I'm going to put money in the line and okay, we're going to go down again. Not convincing enough. Why might this not be convincing enough to me?
Because it's a weak candle.
Yeah, it's a very weak candle.
It's like a hammer on.
Yeah, it's like a wick. It just went below. Right? Ideally, the bodies tell the story. Write this in your notes. The bodies tell the story. The wicks do the damage. Just write in your notes. You'll understand later. The bodies tell the story. The wicks do the damage. I'll show you what a convincing candle looks like if we get it. It's so hard because, like, with my strategy, I know if this is going to play out or not, but I can't tell you it's not going to make sense.
So what are you
What? I mean, if you're not going to understand, dude, there's so much more terminology.
It's like one of my questions. I've been probably behind or like forgot something you said. But like the reason I ask is because like in some examples that you showed us, the stop loss is below the green. So like you're winning when the market goes up. So like what's
Yeah, you're winning. You're winning if we hit the end of the green, and you lose if we hit the end of the red.
yeah, but just good examples where the green is like
Oh, the other way.
yeah.
Well, one's a long and one's a short.
Yeah, this is when you buy. This is when you sell.
Okay.
You make money. You can make money doing either.
Mm-hmm.
Just like how you can buy something and make money, you can sell something and buy it back at a lower price and make
So
money.
you're trying to buy it when it's low.
Yeah, we're trying to buy when it's way down here, and then we're trying to sell when we're super high in the range. See how high we are? We just went going up and up and up and up and up and up. We're gonna drop at some point, right? Yeah.
Do you ever say your take profit like either just above a floor or just below the ceiling? And like in case the
Above or below the what?
like just above or just below the ceiling or the floor, in case the like candles never actually hit the floor but get like really close.
That's a good question. One of my students does that, and I don't like doing that. You don't understand now, but eventually those levels will hit. There's basically something called partials, which is I think it's smarter to do. If I'm in 5 micros, then I'm targeting 20 points. How much money will I make if all 5 micros hit?
Wait, what?
200.
If I'm in 5 micros targeting 20 points,
Oh yeah.
right? 5 times $2 per micro is 10.
Times 2 is 2.
Times
Oh, 20.
20 is 200.
So,
Yeah. Okay. I'll make $200. Now, do you need to sell all 5 micros at the same spot?
Why not?
No. You can sell 3 in one place, 1 in another place, 1 in another place, and that's 5. That's what we call partials. It's a partial. You're only selling half your position. Remember how you said you could sell half a mini on your thing? Yeah, you can't sell half a mini. If you're in 2 minis, can you sell 1 mini?
That's 5 micros.
Yeah. What?
Half a mini is
Yeah, you can't just convert minis to micros on the same trade.
No, right.
Yeah.
Because it's 2 different.
Could you sell half a micro?
You can't sell half a micro.
No.
If you're in 2 micros, you can get out of 1 micro and then hold the other. If you're in 10 micros, you can get out of 5 micros and hold the other 5 micros. I'll talk about that in a second. So ideally in this trade, you probably, if you, let's say you took 5 micros right here, right here, you theoretically maybe got out 3 micros here for profit, and then what do you think you can do with your stop loss up here to minimize risk if you're already in profit down here?
just pull it down.
Yeah, you can make if you're way in profit, you can basically essentially you can take all the risk off the table and put your stop loss to something we call break even. So you don't lose money anymore.
But you don't win anymore.
But you don't win any money. But what's better, not losing money or winning money?
As long as you
Not losing money is better, trust me.
Does that count like an infinite RR?
Well,
So
no,
you're not
because
winning and you're not losing.
it's not infinite RR because
It's just like 10.
Well, like if you win,
you're already sizing for you size for. How you're saying you're already sizing for this, so you're not sizing for this. That's 785 R. You need to win one trade out of 700 to be profitable.
Yeah.
But that's never happened. So
Is that right?
yeah. So yeah, ideally you would have been like out a little bit of your position. So let's see if we can find a more convincing trend change in this.
Well, it's still
Boom.
going as of right now,
Look.
right?
Yeah. Would this be more convincing now?
Yeah.
Yeah. Remember, what did I call this candle?
Strong.
Yeah, and I call it a death candle. Like,
Death.
so this is a strong candle, yes. But why do you think I call this a death candle after seeing all of this?
Because it's a strong indicator that it's going down.
Yeah, but what's this right here?
Oh, the weak candle.
Yeah, there's your obvious weak, choppy candles. They suck. They're boring, they're not moving. And all of a sudden, poof, we get a back giant down move. That's like death. So now where are we gonna go?
We're gonna go down
To where?
to the stop loss where everybody else is.
All these stop losses, hopefully. We'll see if I'm right, okay? So we'll take a short. All right.
Put some money on it.
Yeah, we'll put some money on it.
5 billion.
Um,
Oh, like really?
I mean, it's paper trading money, but we'll get in a market order. Okay, we're gonna mark it in, and boom, we're now in the trade. Now, if this trade hits $1,200, or the TP, we get $1,200. If it's a stop loss, we lose 1,000, and we have to go work at McDonald's. All right. So let's go see if we have to work at McDonald's or not.
Let him cook.
All right, so we have to work at McDonald's, which is all right? But that's why we stop losses, right? So I'm gonna keep playing this, all right? Again, it doesn't mean that this is still invalid. Some people think, oh, we're never gonna hit this. We will. Okay, you just gotta give it time.
Why?
For my personal own strategy, again, not a trade I would have taken, but I can't teach you my strategy yet because we're not there yet. What's up?
So we're working at the Arby's.
Yeah, we're working at Arby's and we're gonna work our way up to corporate. I can't there's so much more I can I know that would help, but I just can't. Alright, so we're gonna go to the next New York session. We're gonna try to find one more trade to this. Okay, so we have now we have a higher low here, Do you guys agree? Right, so bullish. And I would say we have a higher low here. So I would need to see another death candle blow all that. But again, remember we're all too high. Yeah, it's not okay. See, this is where my strategy comes into play. I want to take that, but I can't explain why. So I'll tell you when I would. We're just gonna wait.
You have to just watch your video.
Yeah, you're gonna have to watch my videos eventually, but.
What is your YouTube post? Used to. Dodgiest. Dodgiest.
Yeah, you just go dodgy, bro.
Dodgiest.
Alright, I would say this is the last higher low, now this.
It's pretty tough
It's so hard showing you guys all-time highs because all-time highs, it just keeps going up and it's really hard to trade. So it's not the greatest example, but
Why would you not just go long?
Yeah,
I would, but I'm trying to show trend changes. I'm not trying to show the same trend. That's not the point of the lesson right now. Ideally, you do want to long all-time highs. All right. So I'm just going to go to the hourly at this point and see if we get a higher trend change here. I would still say this is the last higher low. This is just going to go up. This is so annoying. All right, now this is the last higher low right here. All right.
monthly? Oh yeah, how long is it? It's been like days, hasn't it? Or is it months?
Yeah, it's been like a couple weeks now. Okay. Now, would this be a trend change? Would this be a trend change?
Yeah, that would be a
Yeah.
trend.
Why?
Because
It
it's
broke
a strong.
below highest numbers.
Yeah, it broke the last higher low. Now, is this a strong or a weak candle?
Strong.
Yeah, pretty strong candle. We're probably gonna go
There's a
down.
little bit of a.
So we're gonna take one more attempt at this. All right.
Put real money on this.
I can't.
Real market something.
We're gonna put some money on this again.
Market's gonna
We have to use PG.
All right. Now, what do you think the smart thing to do is here?
Pull out.
If I don't want to lose money,
Oh, bring down your stop.
now we can move the stop loss down to here while I'm up
Wow.
$1,300 because I know damn well if we go back up here, I'm probably cooked and we're probably getting my stop loss anyways,
Yeah.
right? Because if we do go back up there, what's happening?
People are buying.
People are
Like,
buying.
big businesses.
Yeah, we have a trend change back to the upside.
Smart when you use
Yeah, do I want to be in a short if we're going back up here?
Infinite.
Yeah, yeah.
Can you move your stop loss below break even?
Yeah, you can move your stop loss. We call this trailing. So I can now move my stop loss to where if it gets hit, I make $300.
Oh,
Whoa.
Oh.
there you go.
Yeah.
Oh, are you winning either way there?
Yeah, you win either way. There's no
Why don't you
possibility.
put your stop loss like?
Wait, how is that possible though?
Because you can you can get out. A stop loss is just another order. You can get out. I can technically exit position whenever I want.
Oh,
Guys,
so you could be up like
It's your
$1,300.
No, I just need to say something. Is Aaron here?
Wow, negative.
No, Aaron.
So
Sal.
that's possible.
All right, so what I'm gonna do here is I'm gonna trail my stop break even. Would you guys be pretty confident it's finally gonna go to this low?
Maybe. Probably.
I'm pretty confident. I mean, look at this candle. Is this a strong or weak candle?
It's pretty strong.
That's
all.
pretty strong.
That's all big whip.
Yeah, it's just going
Was
way
that
down.
big wick?
I mean, the wicks, but look at the body of the candle. What's substantially bigger? The body here or the wick?
The bottom.
Yeah, the body's way bigger, so it's
And
still a
that's
strong
the
candle.
body.
And
There
bang.
we go.
Alright?
And we
So we hit TP finally. Now, let's look at the math here.
How much money did we make?
We just made about $2,000. Alright?
won.
Alright, wait, look. So I just lost 2 trades before this, right?
Yeah.
Every time I lose a trade, I lose how much R? 1 R. Every time I lose a trade, I'm losing 1 R. If I'm risking $200 and I lose 200, I'm losing 1 R. If I'm risking $200 and we get down to and I'm down 100, but I don't like the position and then I get out early, I'm losing half R. Now I just lost 2 trades, so how much R did I just lose?
2
I just lost 2 R.
But you're at 1.
How much R is this?
2.2.
2.35. So now I'm green. Now I'm green, even after losing 2 trades. But I'm green because I won 1 trade.
You didn't really win that much.
But I didn't win that much. I'm probably up like $400 now.
Money is money.
Yeah. So do you see how the math plays out and why RR is so important?
Yeah.
Right? Because I just lost 2 trades and now I'm green.
Risk and reward.
Exactly. Now, if we did it his infinite TP method and just did this, let's see what happens.
Oh.
Sometimes it works, sometimes it doesn't.
Hold that there.
What?
Dude, I should have held.
Oh, it's because the.
Now I'm gonna revenge trade. Ah, dude, I should have held. Should I get back in now?
No.
No.
Why?
No. Because we have a plan.
Exactly. My plan was to go for those lows and hit here. My plan was not to go down here. Okay? Is it working technically?
No, our plan.
Yeah.
It's
But-
like muscle memory.
Yeah. Okay, let's see what would happen. So yeah, my plan and bang. So if I try to go for his infinite TP method, we would have gotten stopped anyways.
What if you pulled out like
I mean, you could. There's some people. What people do sometimes is they'll trail their stop. So basically, what that means is, if you were short right here and you're going for like a TP way down here, okay, You see how we're forming lower highs and lower lows right here? Like lower high, lower low, lower high, lower low? What people will do is they'll trail their stop to where what?
Where they move. See if it like.
If we change what? Trend. Exactly. People will trail their stop to where, okay, I'm going to short from way up there. All right. I'm short from way up here. All of a sudden, we broke the last lower high with a what candle?
Strong.
Very strong candle. This is just blasting above this, okay?
That means we're hooked.
Yeah. Some people call this a Drake candle. Okay, I'm not gonna. That's what they call it. All right, not my words, but.
Drake or what is it?
Yeah, it's called. We call this a Drake candle. Some people, okay. Now, when we see this giant candle, all right. When we see this giant candle, this is clearly changing trend. Okay. So we're gonna trail our stop loss, and we're gonna get out there. All right. Now, if I'm getting out here, am I still making money?
Yeah.
Yes, I'm still making money if I'm getting out there, and it's a safety measure because now, like, that's a trend change, so we're probably gonna go back up. Okay. All right. Let's do one more example. Let's go to the 1 minute time frame this time for the New York session. Okay, we're not going like that. We're gonna go back up to the high. Okay.
What's the difference between the sessions? Is it just like the economy of each?
Yeah, basically. There's the Asian market, the Japanese market, there's all different markets. Okay, would you guys say the trend right now is bearish or bullish?
Bullish.
Bearish.
Yeah, bearish.
Yeah.
All right, look. We have a high.
Confidently wrong.
We have a low here. We have kind of a lower high here, lower low. A little higher high, but like, I don't know, it's still kind of downtrending. Higher low, but then lower low. So the general direction of this is down. Okay?
Yeah.
Remember how I talked about indicators?
Yeah. It sucks.
If we had a 20 EMA here, would the EMA be going downwards or upwards here?
Down.
Yeah, it'd be going downwards because the whole trend's going down. So the EMA, if I put an EMA in the chart, it's probably going to have a little down slope. But remember how I said we don't need indicators to tell us that? We can sell that on our own, right? So we can kind of tell that on our own. Now, we're going to see if we can catch a trend change to the upside here maybe. So maybe if we broke like this last higher or lower high maybe. So let's just watch, see what happens. Still kind of bearish.
Oh.
Okay, do we have any sort of trend change here?
It's going down.
No, this is just gonna go down. So now, someone come up here and draw the last lower high that we now need to break.
Well, I don't want to draw.
So you come up here. Yeah.
You go.
I'm just gonna start randomly taking people. Yeah, what last lower high would we need to break for us to really probably change trend? Exactly. Okay, do you guys agree or disagree?
Agree.
Yeah, I would agree. All right. Now let's see. Let's watch price action. Okay, still not really doing much. All right. We're just gonna keep watching. Okay. Let's see how strong we break this. Okay. All right. I would say this is a pretty strong break, right? So now, would this be bullish or bearish?
Pretty bullish.
Yeah, it's probably going to start to change bullish here. So, where do we like to target? Or where do we want to target? Old what?
Old highs.
Old highs. Why old highs?
Because they're probably going to break it.
Why do we go back and break old highs?
So everyone's smart money.
Because everybody's buying it.
Yeah, that's where all the stop losses are. And the market target stop losses. So we're gonna target here, and we're gonna target, let's say here. Okay, so we should go run those now.
No, shorts, stop losses are where people like automatically get into place. It's
Really slow, but
they're still, actually low key.
okay, now it's just sideways, but I'm still thinking these are probably. Okay, so what ends up happening here is we change trend and we stall here. Okay? So this is where it starts to get really complicated and intricate, and you know, this is where my strategy will start to come into play a little bit, which I'll have to teach you guys.
Wait, what do we do when there's so many like weeks of candles?
You just don't trade.
Oh.
What's with the gap?
The market closed it.
I'll tell you. Yeah, the market closed and then reopened there. Yeah. So now, because we couldn't break that last lower high, we're still bearish. But there was no higher high.
When was the last time the stock market closed?
When was what?
When was the last time the stock market closed?
Like halted?
Yeah.
I don't even know. I think something when Trump was tweeting about tariffs. All right, let me see if I can find one more good example. We're going to go to the next question here. Okay. Would you guys say this is bullish or bearish?
Bear.
It's kind of bearish, but what do we maybe have going on right now?
There's a couple strong candles.
Yeah, we got a couple strong candles. It looks like we put in this high, a lower low, a lower high, lower high, lower low, and what does it look like just happened?
That beat the lower high.
Yeah, we just broke that last lower high. All right, so I'd probably expect price to go up again. So let's see.
But does that mean people would have like their stop losses at that like last top higher low?
Yeah, right here. Exactly. Everyone puts their stop losses above those old highs and lows because you got to realize people, when the market goes down there, people are placing their stops there. Right?
Oh.
That's why people place their stops at old highs and old lows. That's why we go target them when we on the way back up. Okay? Now we're going to try this position and see what happens. Okay, stopped out. But because my strategy would not stop out there, I'd still be in this trade. Okay? I can't explain why, but okay, again, that's where like I said, I would not have stopped out with my strategy.
What's your strategy?
I can't tell you that. But
Why do you not say it?
because you're not going to understand.
Just
I create something called fair value gaps, order blocks, IPGs, Judas swing. You know nothing. You guys know nothing yet. Okay. But like, I would not have taken a loss there. I would have taken a win there. Okay. But see how we identified the trend change and we formed the higher high and higher low, and then boom, you reverse and go all the way up.
Yeah.
So yeah. Okay. Is there anyone confused on trends and trend changes and all that? Alright, I know someone's lying to me right now, but it's alright, because I used to do the same thing when I sat in class. So. Alright. That's going to be that for now. Alright, next thing. So, I kind of already talked about this a little bit, but this is what we call, this is what I learned from ICG, okay? We're going to trade after the liquidity grab. After the support's being broken, and then the smart money buys back up. So remember I talked about these giant zones that are ceilings?
Yeah.
Like that? Ideally, we're going to try to wait for these zones to break, and then we're going to look for entries. And I'll keep showing you guys examples. Right, we're not even close to done yet. I'll keep, like, you're going to, this is all part of your screen time. You're going to keep getting screen time, and you're going to start to understand more and more. Okay.
What if it breaks the ceiling if you short?
If it breaks the ceiling, that's going to look for a short. Now, knowing what we know about trend changes, if we break the ceiling to the upside, what might, okay, let's say we have an hourly This is a good example. All right, watch. Let's say we're on the hourly time frame right now. Okay, right here. And we have all this whole zone holding down price. Okay? Remember, we're on the hourly time frame. And then all of a sudden, we go up, we run all those stop losses, right, that people have placed.
We're gonna short.
We're going to short, yes. But what do you think I'd be looking for in order to maybe take a short here?
A trend change.
A trend.
A trend change. Now, if I'm in the hourly chart and this is the hourly low, do you think it really makes sense to look for a trend change way down here after the move has already played out?
No.
No.
Why?
Because it's already so low.
Yeah, we're already so low again. Like, there's possibility we go back to this low and then go back up. So what might be a good idea? How would I look for a trend change up there from the hourly time frame?
Oh, you go down to like 15 minutes.
Yeah, I can go down to the 15-minute or the 5-minute time frame. Remember, how many candles are how many 15-minute candles are in hourly? Okay, how many 5-minute candles are in hourly? 12. 30. Close to 30. Okay, how many 1-minute candles are in hourly?
6.
I don't know.
So if we know there's 60 candles from here to here, do you think it's going to be easier or harder to find a trend change on the 1 minute?
Easier.
Yeah, way easier. So we're in a lot more candles. So this is the hourly. Now I'm going to go. This is going to be a 1 minute chart. And the blue. Do you guys see where I'm getting this?
Yeah.
This red line is the hourly. It's going to be one giant candle. Meanwhile, we're going to have a smaller trend within the higher time frame trend.
Like fractions.
It's like, yeah, so basically time is fractal. Write in your notes, time is fractal. Okay.
Fraction is like, oh, I know.
Yeah.
What's the smallest time frame you can like?
You can go in the 1 second.
But 1 second, you have to have like really good
What?
internet speed.
Can you make money that way?
No.
Yeah.
Yeah.
The internet.
Yeah, use the back.
Time is fractal.
So what I mean by time is fractal is
It's like you go all the way down the hole.
is basically if I go, look,
And it's right here.
here's what I mean by time is fractal. Ready?
How do you make money in 1 second?
You don't make money in 1 second. I don't know why people trade that. All right, look.
What do you
We're gonna learn about time real quick. Look at this. Ready? Trying to find a good example. Okay, look. What time is this high formed? This swing point formed? What time did we form this high?
I couldn't read it now.
11:30.
Dude, you need glasses. 150, 1350. All right, does everyone see that?
Wait, what?
1350, 150
Yeah, what's 150?
is when we form the high. Okay? Now, what I mean by time is fractal is this. Are we downtrending or uptrending after forming this high?
Down. Yeah.
Yeah, we're going down, right? Why are we going down? People are selling, but what about the trend is telling us we're going down?
They're selling.
What's the definition of a downtrend?
Stop break. They're stopping.
No?
Lowest high, highest.
Okay, write this down in your notes. Definition of a downtrend is lower highs and lower lows. That's why we're going down, because we're getting lower highs and lower lows. So when I say, why are we going down? And you're like, oh, we're going down because we're going down, because you can literally see we're going down. We're going down because we're forming lower lows and lower highs. All right?
Same thing with the uptrend.
Yeah, same thing with an uptrend. The definition of an uptrend equals higher highs, higher lows. So write that in your notes as well. Okay? we're gonna start getting to a point where some of you guys are gonna start falling off. And what is the first thing I said to you the first day of class?
You only get as much as you want.
You only get as much as you want, but there's something else I said.
Only like 20%.
Only like 20% of you will make it. This is, yeah, you want it bad, dude. I'm telling you. I'm like so passionate about this. And if you're not, then
What if I have like a 90%?
if you're, I've had a 100% win rate before in a month.
What?
Yeah.
That's stuff, bro.
What about the next
Bro is hacking.
Come on.
I mean, bro, I know what I'm doing, dude. I've been doing this for a long time. But like, I also have a good strategy, and I also have like good screen time and discretion. I'm a good thinker, like.
So you're like hungry?
But I mean, there's been months I have a 60% win rate, but there's been months I have a 100% win rate. It just depends.
What's your lowest month you've ever had?
Probably like
Like
50.
50-ish.
50?
What about when you first start?
So you're still making profit.
Yeah, I'm barely ever losing money.
We used to be like 70K.
Yeah.
Well, I lost out. Yeah,
But if
But
you
you
lose
probably
70K,
made it
but I
like,
can make it back.
Wait,
Yeah.
will you get banned from stock?
No, you cannot get banned. It's not Fortnite. You're not getting banned for hacking.
they need to put stocks.
I was a semi-pro Fortnite player, by the way.
Wait, you should
Wait,
explain
what?
that.
No, you weren't.
No, you were.
There's no way.
I used to be like a
We already have
2 pro.
minis. We need big ones.
What?
You play like
We already have minis. We
Yeah.
need big ones.
I played Cash Cups, Victor Royale, had earnings.
I can prize pick.
You
Is
play
that
any other
also
games?
good?
What?
You play any other games?
No, I just played Fortnite.
You can't wait.
Wait,
And I can't start a game because I get whenever I try getting good at something, I get obsessed,
Yeah.
and I can't. I have to quit.
Somebody needs to
Wait,
ask.
what do you mean semi-pro?
I had earnings, but I wasn't like you know,
It wasn't like.
unknown,
Yeah.
like unknown, the guitar player, like Peter Bot, like they're all T1 pros.
Peter Pan.
You wanna-
That's tough.
you wanna-
I was like a
you wanna-
low.
I used to watch Lachlan.
Yeah, Lachlan. He wasn't a pro.
Who's your bro?
All right, watch.
Oh, he wasn't pro. No.
If this candle's at 150, okay, this is what I mean by times fractal. Listen very carefully. This is 150. Now, if I go to 250 right here, here's 150, here's 250. What does a candle within this range probably look like? Is it red or green?
Red.
What
Now-
was that? Bearish.
I'm going to show you something cool.
I'm going to see red.
I'm going to go to the 1 minute time frame. Remember how I said don't use indicators?
Yeah.
Okay.
Is this an indicator?
There are good indicators, but these are actually good indicators.
Just don't use
What
them.
I mean by don't use indicators is don't use the retail indicators you see on YouTube.
Like
Oh, okay.
There's a secret indicator, it's called Power of 3.
How are you?
I'm going to go to my friends. Um,
Oh, HTF power of 3.
yeah, right there. All right, watch. We're going to do 4 hour. Okay, wait, watch.
It's, what is that?
Look, this is the 1 minute time frame. This is the 4 hour time frame within the same 1 minute.
Oh, so you can compare them as they're.
Yeah, so you get why time is fractal now? Price is still doing the same thing, it's just portrayed differently.
Okay, that's tough.
All right. So while we're here in the 1 minute time frame, this is what the candle looks like. While we're going up, this is what the full candle looks like from here to here. Okay. All right. That's a lot to take now. So, does that answer your question on why time is fractal?
That was my question.
Yeah.
Hopefully. I can think of it. Okay.
What's the indicator?
All right, now
Power of 3.
we're gonna do something interesting here. Yeah. How to trade. All right, guys, look at this.
I bet she's a millionaire.
I know her. She's my really good friend.
Where you know it?
You know a lot.
Dude, I know everyone.
How well do you know?
I was just texting her yesterday.
Okay.
No. This is like the ultimate trend line guru. You're gonna see her.
Who's the girl? Do you know her?
Yo, that's you.
That's you.
That's you.
Wait.
Dodgy
Yeah.
Dr. Chief.
I can't see that.
That was good stuff.
I like your thumbnail.
That was good.
Yeah,
You go
you
back.
just posted that video right now.
Can you go back?
Wait, how did you post the video, dude?
I have like 40 people working for me, bro.
Oh,
Okay. Look at this.
This trendline technique is
Alright,
the
wow.
fastest and easiest
Wait, why
way
don't
I
you
think
just
I've
show us
ever
the-
used to make money while trading. And the framework that I use gets insane results for traders.
Shut up.
Expert.
Okay.
First off, what is a trend line? Put simply, a trend line is a straight line drawn on a price chart that connects two or more price points, typically significant highs or lows, to indicate the general direction of the chart. It helps traders visualize trends and identify potential support and resistance levels. So it's only right that the strategy I'm about to show you revolves around the trend line. You never want to complicate it with indicators or whatever else. I only use support and resistance as secondary confirmation to strengthen my trading decisions. Now I'm going to show you an example of this when going long. So as you can see, the chart touches the line multiple times, at least 3 times. It shows that it's in a downtrend. I like this because if it reveres, it's going to be strong. Look what happens when the price breaks this trend line. This is where I place my order, and as you can see, it's a winning trade. I don't set a fixed take profit. Instead, I ride the trend until the price breaks the trend line, which signals that the trend has ended. This could go on for hours in this case, or minutes, it really just depends. That's why you want to keep your take profit flexible. Let's take a look at another example. As we see again, the price touches the line at least 3 times, 4 in this case, so it's clear the stock is in an uptrend. I wait for the trend to be broken like it was right here. Then place an order and wait to see what the price does. Very simple, straightforward. Now let's flip the script and take a look at a short position. Here, the price touches the trend line at least 5 times. So it's very obvious the chart is in an uptrend. You wait for the price to break this trend, then what do? Exactly. That's when you determine your entry. So, as you can see, if you've been following along so far, your entry short would look something like this.
Okay. He just showed a 10-hour trade in hindsight on YouTube. Is this guy trustworthy?
No. And
No.
there's no.
Why
That
is
is
the
not
line
normal.
not horizontal?
What? So again, this is what I was talking about when you watch videos. If he just keeps showing like 5 to 10-hour trades, that is not consistent. Okay, so I already know this guy's full of it. But what he is saying is accurate. Just he's using this to get views.
And a determined stop loss.
The way I make my videos, I don't do this. Okay, I'm more transparent. Okay.
Loss.
What?
Wait, what about the new one?
This one?
We're not talking about that.
Whatever.
That's right. You don't. In this case, the short went on for about 2 weeks, which was awesome. So this strategy is all about the trend line.
Dude, imagine holding a trade for 2 weeks and you're going to bed every night. Like, imagine you're up like $1,000. You really think you're gonna sleep? Like this guy's.
Which determines both my entries and exits. The aim is to capture most of the price move by
Okay, I'm gonna show you one more thing. So that's one way to use trend lines. All right, watch. Okay, I don't know what it's up for that music, but look. What is he drawing right now? Support levels, which is making what? It's making a trend line. Now, this guy, if he truly thinks that this is support, this is support, this is support, where is he putting all of his stop losses?
At the support.
At the support. So he's putting his
That's what
stops
we should
there,
not do.
there. And that is where I come to play. That is when I wait for the trend line to get wrecked and break and then run all those support levels.
And then you buy up there.
Well, I short up here. And that's
Oh yeah.
You mostly
So you're-
short.
yeah, no, I short and long, but I'm just showing you different examples.
Sean. You're just entering right when they reach the support line.
You'll see. I'll show you. Yeah.
Do you do things the same way in your videos that you do things like right here, right now?
So far, no.
Oh.
I haven't gotten that far yet. So I'm teaching you guys the background. Like, I'm teaching you guys how to walk. Right? Obviously, we don't need to know how to walk. Like, when we're a baby, we learn how to walk. Right now, I don't need to learn how to walk. But this is kind of the walking stage. Like, it's natural knowledge you need to know.
So should we not watch your videos?
I wouldn't watch my videos until like after I'm done with this class, dude. They're not gonna make sense.
Wait, so we're not gonna trade it?
I'm gonna do some live trading, probably end of next week, as long as we get through everything. I just don't know how long it's gonna take. All right, so look. What is this?
Downtrend.
Downtrend and what? We just talked about
Supports.
It's a trend line. Right? See how we had 3 points touch like this? Now,
does that count as an indicator?
no, it's not lagging. It's something we see in the chart. Now, what is causing this downtrend? Where are people placing their stop losses?
At supports.
Not when we're shorting.
What? Oh, see.
Yeah, they're placing with all the ceiling. So they're placing buy stops here, buy stops here, buy stops here. What is being generated here? Oh, now look at this. A double top. Right? Which, that's the other thing I didn't show you guys. Double top and double bottom. That's what they call it. Look.
What does that mean?
This is another big, strategy. Double tops and double bottoms. Let me see. Look, see how when I go to Google, it shows me a picture with support, and it says put your stop loss there.
That's a bad idea.
That's bad. All right, we fade that. All right, we don't do that.
That's where we make our money.
Yeah, but that's called the double top. Does it make sense why double top is called double top and why double bottom is called double bottom?
Yeah.
Right, it's just when you create two highs at a top of a ceiling. Now, what would be a triple top? Okay, what would be a dodecagon top?
Like 12, 15,
12.
10.
Oh, that's good.
Okay. What? Okay. Yeah. So what are we generating right here? There's a couple words for this.
Money.
We're generating what?
Money.
We're generating liquidity.
Oh, money.
Liquidity. Write this down in your notes. Liquidity equals stop losses equals clusters. They're all the same thing.
Like we did that. Yeah.
Yeah. Liquidity is the same as stop losses, which is the same as clusters. All of this is a bunch of clusters of highs are forming, and I know the market's going to go up and break all those highs, and that's where I'm looking to get in my position.
That's where we put like a long.
Yeah, that's where I look for a long. And it all goes back to the basic concept of stop losses. Where are people's stop losses? Yeah.
If there's a ton of stop losses at a certain point, like why does the market go there in the first place? Like I understand why.
Because that's how the algorithm works. Which is what I believe, because I've seen it for so long. Other people believe other things. But I've also been doing this for 7 years, and I've seen it every day.
Like, what would the market get from wrecking people's stop losses? They get some.
It gets liquidity so the banks and institutions can make money. Because they don't want us making money. They want us to lose and work a job, like the government wants to work. The government wants us to work a job. That's what it all comes down to. This is why the algorithm works this way. You just have to know it, okay?
Well, if like too many people know it.
But if too many people know it.
But
What did I say the first day of class?
People don't make it.
Only
Banks
20%
do.
Like what?
No, what did I say first day of class about us being retail traders versus the banks and institutions?
Nothing. We're nothing.
We're nothing. We're less than 1%. We cannot move the market. Okay? Alright.
Save the billionaires.
So, what I want you to do is I want you to, in your journals, draw an example of equal lows and equal highs right now, using some candlesticks. Alright? Draw at least 7 or 8 candlesticks show me some examples of what equal highs and equal lows would look like. I'm going to come around and check. And then, yeah, so do that for now. You have 2 minutes. You have 3 seconds. I'm just kidding. Yeah. All right, I'm gonna start coming around. All right, equal highs? Yep, exactly.
Is that the same as double high, double low, or single high?
Yeah, double high, double high.
So.
Yep, equal lows, equal highs.
When you say liquidity, that's like when you start. Yo, that's when you can.
No, that's for the softball.
That's what I'm
Yeah,
talking about.
and that's where you want us to start.
Make
Start.
like that's where you put in.
Yeah, that's what we want. We wait for the liquidity speed, then we look to take an entry.
How do you know when you go negative?
Because the
Oh,
the odds of getting
we
into
just get to that.
Where's your?
Oh, I supposed to.
That's perfect. No, that's not. That's not. I mean, as long as you know.
Yeah,
So the
like
thing
this.
like this is fine.
Like no.
And then
No,
it's
like
shoot up.
Okay, I'll come back.
I'm taking my time with it.
Yeah.
She's trying to keep it up.
Yeah. She is.
No, like he gave us like
We're guaranteed.
If you draw the line, just so that-
This guy never checks my work. I'll never have to work a day now.
This guy never checks. Only for 20%. How many people are this? Like 31? That's 20% very
Six.
Hello.
It's like way down.
at least
That's very good.
7.
No, it's six.
It's 6. I'll talk about it.
35 by 5.
Oh, 20. Yep.
Okay.
Alright, good job.
Okay, what's it?
Oh, I didn't do different colors.
Yeah, I guess. I would.
I swear I didn't.
I would try to make it more discreet. So what I mean is like, let me see your pen. They should really try to emphasize like 2 rows far away from each other. Like
Oh,
that.
okay, yeah.
Like that looks more obvious to me than I don't know.
Yeah, alright.
Or like you
And then 2 highs.
can't have 2 highs. Just like more discreet.
Okay, thanks.
You don't see it, man? That may be the best.
Should just watch it.
Or should we not watch videos right
Should
now?
we watch it?
Don't watch videos yet. Not until after this lecture.
This lecture or class?
Well, lecture.
What if we did like
Class.
basic terms?
So this the next 2 weeks don't want to.
I would. Unless you want to.
It's just gonna be too.
If you want to, but I'm gonna teach it in here anyways.
Then do we watch it?
I didn't buy it before it goes off.
No.
I thought you said you don't like people that sell. Or you don't like people that
No,
only
that's
sell
not,
clothes.
that's something totally different.
That's what I thought. Oh.
Yeah. It's an account. Remember I was talking about
Oh, I get. Oh, I don't know about what it is.
I'll tell you after.
How do we buy it?
Did I get a free one since I'm your student? That was a quick.
Just hand
Yeah,
it
that's even more.
Dude, it's like you just watch it. Like he can hand out and some
Can you duplicate like 3 or 4 more of those?
All you walked in.
How the tree.
Okay, perfect. Now a double top would be in.
Oh, wow.
What are we gonna do?
Can you draw a line from? Try to draw a wick up here. Hide this candle.
I just thought about that.
Now,
You want to look
double
at
top. Draw a line from here to here. And then the double bottom would just be if you flip around. How are we doing over here? Like I said, you only get as much as you put in. I'm not gonna force you to do anything. Yeah. One less, it's alright. So equal high would be more if we had another candle up here. And then we rejected that again. So it's like if we rejected the top of your page. So do another candle rejecting the top of the page.
Okay, you can.
Okay, and then make it go down.
You're up here. Oh, there was a lot of.
Okay, this is more singular. Singular.
There you are.
I want to draw more candles. Yeah. One more tab. Like it's up to you.
You see it every
Equal O's are like a W, equal highs are like an F. Not equal highs up there.
I'm sorry.
I'm gonna forget all about you.
Oh,
This is the one that's here, right? Oh, but not.
I would you.
Maybe. Just for 2 minutes.
What is your blood like?
I'm on that.
But you're Are you here? Like if you find a good one.
Sorry.
Oh, the bird. Oh, you're. People drink more. I know.
She's fine with it.
Yeah.
She's coming here on Sunday. Maybe. She might.
Yep, perfect. Exactly. Good job.
What is this? I was just doing like a take trade.
No, you're good. All right. Most of you guys got it. All right. Now. So remember, the main point of the algorithm in the market is going to hunt those equal highs and equal lows, and also what else that we just kind of just brought in a new concept. Just as the market wants to hunt equal highs or equal lows, what else is it also hunting? I just started. It was just a video we watched. The trend line.
Yeah, the trend.
Exactly. Let me show you an example of this on the chart. I took this play yesterday. So I took this yesterday in live time. I'm gonna pull it off from my Discord.
Dude, look at your Discord.
All right.
What is Apex?
Okay, look, right here.
Do we look at all your servers?
See all these trend lines? Right, see how we have all the highs? I basically shorted or took a short position here. I should have taken it up there, but I'm just dumb. And I bought back here. So I sold at one price and bought back lower. So I made money. Okay? Now, do you see why I sell at this low? Why do I sell at that low? Yeah, because that's where a bunch of stop losses are, resting liquidity, or it's a cluster of stop losses. Okay? But if I were to go to this in live time, or from yesterday, do you guys see how clean these touches are?
Yeah.
See how it's, you gotta realize, like, NQ is trading at $29,000 technically. But is it really dollars? It's no. It just, well, it's not points. It's points from here to here. But when I say 20,000,
That's no.
it's just, there's no cost, there's no unit.
Oh.
So we're trading at 29,000. Okay? Do you really think a future or a price at 29,000? Do you really think that us tapping the same trend line 50 times perfectly, algorithmically, is random? No, that is not random. This is way too clean. This is exactly what we saw on YouTube. This is exactly what we saw in that short where the guy was like, oh, here's support, here's support, here's support, here's support, here's support. So now we know where all the stop losses are, right? And the targets you naturally wanting to reverse is going to target all of these lows now. And that's why I kind of shorted, because I saw the momentum, or I saw the weakness or the strength of these candles going down, right? Going all the way down, so I knew we'd keep continuing down there. Okay? And do you see the trend change? Who sees the trend change here? I'm going to zoom in. Someone come up and highlight the trend change here. I want to pick someone. Who have I not picked yet? Let's see here. Anyone want to go? Oh, I feel bad. Okay, you come up. I don't think you come up. Highlight where we changed trend, which allowed me to see that we're bearish. What low did we break that broke the trend? You're super close. Yep. Why that low? So draw a line there. So, yep. So why is that the line that we changed trend at?
Because it's a three.
That's the
That's a three
definition.
candle. Because it's red candle, green.
Well, we have a
candle.
swing point up here, which is high, higher high, lower high. That's a sign of a reversal. But remember, go back to your notes. What's the definition of a trend break? I told you guys to write it
It's
down.
because it broke the lowest low. Or the highest low.
It broke the last higher low.
Yeah.
Remember, that's the definition of a trend change. You should have in your notes. You don't. Okay. So we form a low right here. We form a higher high, a higher low. What is this? Higher high. Oh, now what?
Lower.
Now a lower low. Now that signifies that what's going to be ran? All those stop losses.
All those.
Because when we go back to the lower low, now I know all these stop losses right here. Boom, they're done for. Okay, and that's why I kind of took that short position. Okay. So that's that. So just a summary. Just to remind you guys, the spread of orders is basically the gap between how many buyers and sellers there are. We won't have to worry about that too much because why? What does when we're trading NQ, what does NQ have a lot of? It starts with a V. Volume. There's a lot of people trading it. The lower the volume, the worse the spread. The higher the volume, the better the spread. I should probably see pens writing that in your notes. The higher the volume, the better the spread, or the tighter the spread. The lower the volume, the looser or worse the spread is. Okay. And basically the volume is the number amount of transactions occurring during one singular candle. Okay.
Do you hear me?
What'd you say?
Later. Are you going to Santa Monica?
I'm going to Century City.
Yeah.
You go to Century City.
I'm going to
You go shop there.
What?
You go shop there.
I guess.
Do you want to play again when you're back? Play basketball?
If I got time.
What time does
I've got about 30-minute break today. And that was lunch. So I'll see you.
All right, market orders. Can someone remind me what a market order is again? Because I forgot.
Wait.
It's when you can buy like.
Yeah, it's when
in
you're
that
buying.
market. Like it executes that.
Yeah, it executes right away and goes you wherever the first ask is.
So.
All right, can someone remind me what a stop order is? I got amnesia and forgot again.
It's so you don't lose too much money. It's your protection against losing.
Yeah. Damn, this guy is mugging all of you. Answering this, man.
Why so?
All right, what's the depth of market?
It's like the book thing where it's like tells you how
many orders.
place.
Yeah, like the difference between orders.
All right, what's a limit order? You three don't answer. Yeah.
It like puts you in the market at a certain.
Exactly. And how is that different than a market order?
The market order just goes straight.
It just goes straight wherever the first ask is. It'll just tell you whoever's, And then stop hunts and liquidity. You really can't explain it in one sentence, so I'm not going to ask that. But we talked a lot about that. Right? So, key takeaways. This is all going to be a mindset thing. Half of you are not going to make it, which sucks, but it doesn't suck because that's why everyone's not rich. All right. Well, I said half of you guys are not going to make it, and that's why everyone in this world's not rich. But mindset's very important. Mindset is going to be arguably more important than actually knowing the strategy. Okay.
Never be a pro.
The candlesticks are king. I just showed you guys 50 million slides where I could tell where price action was going based off the candlesticks. Did I need any EMA or indicator to tell me that?
No.
No. Yeah, they're bad. Remember how we saw that giant death candle on FxReplay and then we finally hit all those lows? All the EMA would have told us is it's going to go down. But we already knew it's going to go down based off the candle. Does that make sense?
Yeah.
So it's like redundant.
It's redundant, yeah. It's just telling us information we already know.
It's just like slow.
Yeah, it's slow. It forms after we see the candle. Okay. Spread matters, but not for this because we're talking about futures. You're not going to have a loose spread. But if you're trading some like stock that no one knows about, then it might be a big spread, so just be careful. You don't need to know the DOM. You just need to know what it is. Okay. It says use it, but you don't need to use it.
Could you technically like, is the DOM also late or is it like?
No, the DOM's live time.
Live time?
Yeah. Market versus limit orders. Stop losses basically equal safeguards, so you don't lose too much money. Okay. Stop hunts, just like where people place their stop losses. Ideally, when we want to enter a trade is after everyone gets hunted out. That is our time to enter the trade, and that's something I'm going to be going more into detail about.
Just based off the DOM, could you see like a bunch of people are selling and then potentially?
Yeah, that's an extra confirmation. That's called order flow.
But if you only go based off the DOM, isn't it like a little bit like?
Yeah, you probably want more information.
Yeah, like blind.
If you're just looking at the time and sales and everyone's selling, can you see trend changes?
No.
No, all you're going to see is a bunch of sellers, but you don't know if there's a trend change or not.
It's like seeing half.
The trend changes to help you tell you what on a chart, where the what are.
Lower lows and higher lows.
Yeah, and where the stop losses are. Looking at the DOM is not going to tell you that. You want to look at the chart to see where all the clusters of liquidity and stop losses are. Okay. Indicators lag. They describe the past. They do not predict the future. And screen time wins. This will not make you profitable. Okay. After this, maybe after this week, I'll have you guys start watching videos online or whatever. I would not do it yet because I'm going to teach you basically everything, and I don't want you guys to watch some, dumbass on YouTube who just doesn't know what they're doing.
If we watch you.
I'll tell.
Hey, that's sort of dumb.
I almost wouldn't watch me either though because,
Because I'm also.
like I said, everyone has a different perspective. Some of you guys' brains will not click what I'm teaching, but if you watch someone else on YouTube, it will click. So if I'm not clicking, then what's watching my video is going to do for you? Nothing. Okay. And what do you say? And at the end of the day, the smartest people are the ones who understand that my stuff may work, but your brain might not connect with my brain, and you might need to learn it through another means. Okay. So. Oh, okay. This is gonna be some good stuff. Let me see what slide I'm at. I do have a potential quiz here.
Where is that?
I don't. Let me see if we can do it yet.
Can it be like a group quiz? And like real?
Do we have Kahoot?
Oh, Kahoot.
I do have 7 Kahoots, but they're not for you guys. They're for my Discord. But at the end, we can do them.
Okay.
Is the Discord like ahead of us?
Yeah.
Wait, how do we get into the Discord?
It's in my link in my bio.
Oh, but it's free?
Yeah.
Oh,
Use
man.
code Dodge.
Somebody kill this guy. No, I'm not.
Alright.
Do we have to use code Dodge? Is code Dodge the only for like trying to do this or whatever?
Alright, be honest with me. If I gave you a quiz to go home with,
What do we choose?
with 15 questions, would you guys do it? It's all multiple choice. It's like not,
That's like
You have to print it out.
yeah, there's no writing, it's sitting multiple choice. It'll probably take you less than like 15 minutes.
Yeah.
Okay.
Use our notes.
What?
You can just use our notes.
Yeah, you can use your notes.
It's an open book.
But I made it so you have to critically think. Alright, we're gonna move on then. What time is it? How much time do I got?
20 minutes.
Okay, 20 minutes.
And then if I connect it to you.
What if we just stop?
What?
What if we talk?
What if we did the quiz?
Oh yeah.
Is there time for a break?
I want to do the quiz. I want you guys to do the quiz. Alright, here's what we're going to do for the last 20 minutes. Alright? We're going to go in FxReplay again.
And you're gonna quiz us.
I'm probably going to let you guys out 10 minutes early.
Oh!
But for the next 10 minutes, we're just going to look and find clusters of liquidity. Or clusters of trend line.
Bro, that's like the pure trade.
Alright, I already see one.
Yeah.
Yeah, right there, bro.
Can anyone come up and draw where I see a giant cluster of liquidity that hasn't been ran? I'll give you a hint. It's a trend line.
Oh, that's right.
Okay, come up here.
Well, I don't want to be wrong.
Okay. If you don't want to be wrong, then you're gonna know.
I have
You're
to
gonna go
be.
nowhere in life. I'm gonna tell you that.
Oh my god.
Ouch, bro.
You have to.
I was wrong 50 times before I ever made it work.
The best loser wins.
Exactly. The best loser wins.
Well, there's like 2, though.
Draw.
I
Trend
see
line.
2. There's like 1 here.
Yeah. Those are equal highs, and we already ran. Those are your. By the way. Wait. Don't do anything for a second. Would you guys agree these are equal highs? Raise your hand. Okay.
But that's what it is.
Are these relevant anymore after they're already ran?
No.
No, because why?
They're already ran.
Yeah, we already took all the stop losses. Is there any more stop losses here?
No.
No, we already kind of took them. Okay. Now, where's the other trend line? Nope.
No? Oh.
You're kind of close. You have one of the highs.
Oh. Wait. Is it here?
Nope.
No.
There's 4 touches.
Oh my gosh. I feel like
The more you do this, the more you're just going to keep getting.
I don't know.
Okay,
I know.
I'll give you a hint. You see it?
Yeah.
Okay, come up here.
Alright, you can look. Show me. School me.
Yeah.
Oh, okay.
All right. Would you guys agree This is a good trend line.
Hey, thank you for teaching me.
So, what is going to happen based off of the information we know? What is going to happen right here?
It's gonna shoot up
Why?
because there's a bunch of stop losses.
There's a bunch of stop losses from what?
From all the
From the trend line. Because people on YouTube searching how to trade and it's like, oh, trend line strategy. And it says to short the trend line. Right? That's why I told you guys we're going to be looking at stuff in OUs. People are shorting this trend line when we hit it. And where they're placing their stop? Above the old highs. So, what I figure is going to happen here is we're probably going to run to this high. Alright? Raise your hand if you think that's going to happen. Okay, raise your hand if you don't think this can happen. Alright. Raise your hand if you just didn't raise your hand because you just don't care. Alright. Let's see.
Oh. Hold on.
It's just
we cut. Hold on.
Okay. This is a weird one.
Yeah, I can't.
Wait.
it's gonna
Bro, this is where we get to the overnight session again. This sucks.
Wait, would your strategy work?
Okay, so
so
let me show you guys something else real quick. Remember how I talked about the break-even thing? Let me show you something cool. Did we run half of the trend line?
Yeah.
Yeah. So I can't go into replay mode now, but look. If I cover this up, all right. Where's my? Oh, right. Okay, guys, watch. Pay attention. This is gonna be. Okay. So when we thought we were gonna run the trend line was about this candle right here, right? Where are all the highs in the trend line? Every single high in the trend line is here. Do you guys agree or disagree?
Agree.
Okay. Here. Agree or disagree? Disagree. Nope. Okay. Here.
yeah.
Agree or disagree?
Agree.
Yep. Here.
Disagree.
Here.
Agree.
Okay. So those are our 3 points in the trend line. Do we run the first point?
Yes.
Yes. Okay. And this is where it starts getting very advanced. What might be a good idea to do after we run the first point if you think we're going to run the trend line here and you're in a buy position? No? You're in a buy position. What might be a smart thing to do that has to do with a stop loss if you were in this position to the high?
To make it go up.
Let's say you were in here and you thought we were going to run the whole trend line.
Oh, you would make the stop loss really close to.
You start to raise the stop loss. Because theoretically, if we're here, and you guys don't know this yet because you haven't been trading for years, but if you go back test,
Sneak this after sneak this.
if you go back test, almost 90% of the time we will not stop at this high. We will run this whole trend line. And if we stop at the high, that is a horrible sign. So I'd probably get stopped out there for no loss or no gain. Okay, and that's where it starts getting really discretionary. All right, and that's something we'll keep talking about. Okay, but I would have gotten stopped out for break even, knowing that most of the time we will not stop here. We will just run the high. Now, let me see if I can find another example to show you, so I can prove that that actually happens. Okay. We're gonna here. So I'm just gonna look for like trend line build up. By the way, I really prefer trend lines that are kind of like this, not like this.
What do you mean?
Draw this in your notes. Draw a 45-degree angle trend line like this. Draw exactly what I'm drawing. And then this. like that. I like the trend lines that are more like these 45-degree angles. Yes, there are trend lines that do get ran like this, but it's just. This is a runner. This is. I was in way heavier, but remember I was talking about partials and scaling out. I've already scaled out, so I just have one left.
You just made a lot earlier.
Yeah, so I have one left, and the one I've left, I'm up still $200 on.
So you like basically you cashed out, right?
Yeah, basically, yeah.
Okay, so you just take what we're at now, which is 29,300, minus what we started at, 29,217 one way, and then you multiply 2 by 1 micro, so it's 1 way times 2, and it's 260.
Okay. Let's get started here. This projector looks.
I'm just kidding.
Oopsies. Connection sucks. Alright. Alright. Let's get started here. So, this is the trade I'm in right now. Alright. And you can see, is it possible for me to lose money in this trade?
No.
Why or why not?
Because you've already paid for your stuff. Or your
I've already
your
raised
TP.
my what?
Your TP.
Yeah, but what order do I have on the screen that still will never lose me money here?
Limit your recash.
The what?
The portion of long break.
I already took partials, but there's a certain order sitting there, which if it hits, I'm still making money.
Yourself.
Yeah, how am I still making money if I have a stop loss on the screen?
Because it's above your
Yeah, it's above my entry price. So this is basically my order right now, my sell stop. It's where if this hits,
Oh, I see that.
it's getting out of the position. And I'm getting out of position in profit, right? Because if I'm long, we're in profit, anything above this line. Right? So, the trade I took, which I'll show you guys. So now I'm only up 180, but the trade I took was I took about I think 7 micros down here, and I mainly got out at this high. All right. Remember yesterday I said I'd like to get out the highs. Okay. Now this last contract is what we call a runner. Okay. Remember how you were talking about who was talking about the infinite TP thing? That was you, right? Remember you said, why don't you just keep dragging your take profit up and up and up? Didn't you say that to me? It was someone, but basically, okay, what I'm doing now is I keep trying to go for a bigger play with my last contract I have left because I almost have no risk on the table anymore, right? Because I'm so high in profit. So currently, where do you think I might be trying to target right now? If I'm long right now, and this is the hourly time frame, where is a good spot that would make sense in what I'm trying to actually target?
The highest high.
The highest high. Can someone come up and point to where that is? You come up.
It's right here.
Exactly. Okay. Everyone agree? So as of right now, I've already gotten out most of my positions. So I've already made a lot of money in this trade. Right? Made it about $1,000. Okay. But because I still have one contract left, I'm still gonna hold until up here. Now, what type of order do I want to place up here to get out? Not a long, no. What type of order do I want to place at these highs if I want to get out of the trade? A sell limit, a buy limit, or a buy stop limit? Yeah, a sell limit. Because if I'm going to buy, in order for me to get out of position, I need to sell. Okay. So what I'm going to do is I'm going to place a sell limit there, and now, is there any stress in this trade whatsoever? No, because I'm already making money no matter what. Now, I just wait, and I don't do anything, and I start teaching the class, and I'm just gonna have this up in the background, you know. Now, does anyone see the reasoning on why I might have taken this trade? I took it here. Anyone see the reasoning why I might have tried it? Let's go in the back.
Like a few strong candles in a row that were showing up like pretty high.
Yep, exactly. Would you guys agree this is a trend change?
Yes, sir.
Okay, right? But how did I get in before the trend change? Well, that's where it comes down to my strategy. You don't know yet. Okay, now what else? What other contracts do we have here that made me think price is going to go higher? Exactly, trend line. Do you guys see it?
Yeah.
See how all these stop losses are here? So I knew that we'd keep going up because all these stop losses are getting built up. And remember the trend line video I showed you, that one short reel? The guy was like, oh, resistance, resistance, resistance. Put your stop here, 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 here. Right? So I'm logging, and then we're wrecking those people putting their stop loss here. All right? So that was my reason behind that trade this morning. Okay. Now, whatever happens, is it technically random on what happens next?
Yeah.
Yeah, it's random. But what's more important in the market when I'm in a position than, how do I word this? What's the most important thing, even knowing the market's random? What do you need to do? You need to manage your what?
Risk.
Manage your risk. Any other answers? Okay, yes. You have to manage your risk. So I talked about how I truly believe there is an algorithm in the market which allows me to catch these giant trades sometimes, but it's not my full position. It's only one contract, right? I was out my full position at this high, right? Now, let me ask you a question. Remember yesterday I was backtesting and remember I said like 90% of the time we will not stop when we have a little trend line run? Do you guys see what I mean now? Right? See how we just kept going up and up and up and we just didn't stop? Remember the example yesterday where we stopped and we went all the way back down? Right? That didn't happen in this example. So therefore I'm in profit, but we don't really want to see that. So this one just plays out how it usually does. It goes up. Another thing I want you to notice. Remember how I said that usually when we hit a higher low, that's where all the banks and institutions and everyone enters? What do you think might happen? Okay, remember the example I showed you yesterday where we only wicked above? Let me see. Right. Let's see if I find an example of this. Okay, look at this. Would you guys agree that this is, the banks or institutions getting in at this low? Yes, okay. Now, would you say this is more of a liquidity sweep or a trend change? Do you think we're sweeping a low here, or do you think we're changing a trend here?
Liquidity sweep.
Yeah, this is called the liquidity sweep. We're more sweeping the low here. All right, now let me go back to this example of this trade I'm actually in right now, all right? Now, right here, when we hit the high and I got out most of my profit here, do you think this is maybe more of a trend change or a liquidity sweep? Yeah, kind of a trend change. It's not even a trend change, but it's, what market structure is this? Is this bullish or bearish market structure?
Bullish.
Yeah, pretty bullish. And this candle is just a strong or weak candle above this old high?
Strong.
Yeah, pretty strong candle. And that's why I decided to, anyways, that's why I decided to leave one contract, because I saw how, strong this candle was. And I was like, okay, this looks more of like a break of structure to go to the upside, okay? So that's why I kind of cut the contract. Now I essentially have no risk. I can't lose money here. And if this hits, I make an extra 60. I make an extra about $300 at this, okay? Which is basically me doing nothing with no money, with no risk at all. And I'm sitting here clicking my mouse and clicking buttons on the mouse, and I'm just making $300 in like 2 seconds. All right? So pretty cool. All right. So we're just gonna watch this, and I'll update you guys, and we'll see if it hits my final TP or not. Okay. Now we're gonna go over the quiz here. All right. So if you can get out what your answers are for the quiz, I'm gonna give you guys the right answers. All right. What's funny is I don't even know the answers to this quiz. All right. But
You should, right?
I will know the answers, and I'm gonna see. I'm testing myself too to see if I'm right. All right. So let's see here. All right. So the answer for 1. All right. Using support and resistance strategy, you're looking at a resistance level with only a couple of touches. Okay, as a retail, so does anyone know what SNR stands for? It means support and resistance. All right, so you don't really need to know that. That's just kind of stuff like support, S equals support, R equals resistance, or support and resistance. Okay, I do not use that term. I don't even know if I don't think I'd note that down, but if you can remember it, that's helpful. What would I most likely do here? Okay. So I'm a support and resistance trader, and it looks like we're ejecting this level a bunch of different times with only a couple touches. Okay. Am I looking to A, short from the resistance since there's a few touches? Long, the market goes bullish 70% of the time, which is another set I didn't talk about. But if you look back in history, market is bullish 70% of the time, so you do have more of an edge by buying in the market. Okay. Someone asked me the other day, is like, can you make more money shorting? It doesn't matter. The market mainly goes up 70% of the time. Do I still short a lot when I see my opportunity? Yes, but just understand. Short, since it looks like support, okay? Does this look like support? Yes or no? Does this line look like support? No, it's resistance, okay? Support would be a floor, okay? Is this a floor? No, it's a ceiling, okay? Or there's no clear answer. It depends on the news. Right. Now, let me rephrase this so you understand it. This is, you are a support resistance trader. You know nothing about liquidity, nothing about the stop losses I told you. You just simply trade support and resistance, and that's all you know. What would you do in this scenario? Someone raise your hand. A, B, C, or D?
A.
Okay, what do you think?
I would say A as well.
Okay. What do you think? A. Okay. Yes, correct. The answer is A, or at least I think it is. Okay. You check. Other screen. Yeah. Okay. Answer is A. So I got that one right too. So yeah, if you're just a support and resistance trader and you see this, you probably look to short, right? You think, oh, there's a lot of rejections. Okay. Now, knowing what we know and what I told you guys, right? You got to remember there's still a lot of stop losses there. So we're going to keep getting more into that, but if you're just a support and resistance trader, you know nothing else, you'd ideally short there. Okay. Now, what is the actual point of learning retail indicators and chart patterns if you don't plan to use them as entry signals? Okay. Why do you think I told you all this wrong stuff first? Okay. Because you must be a retail trader to first become profitable. You must learn what not to do before you know what to do, because bull flags and MACD always work, and they add conviction to your trades. Raise your hand if you think the answer is C. Okay, raise your hand if you think the answer is B. Okay, raise your hand if you think the answer is A. D. And then if you didn't raise your hand, I don't know what to tell you, but the answer was B, or it should be B. Okay. I'm teaching you guys the retail patterns and the indicators because why? What's so important about understanding those patterns before you actually start trading the way I'm trying to teach? Yeah.
You understand what other people are doing, and you can understand what you should stuff to do.
Exactly. So you're understanding where other people are doing or where they're placing their stop losses, which we know, or which I believe that the market will target. So by you knowing, you know, a trend line, or you knowing like, you know, the MACD indicator, you know, people remember the signal in the MACD indicator was like, okay, if they cross, we're gonna go back up again, right? You just have a better understanding of what people are actually thinking, and then you understand where stop losses are. It's just good background knowledge. If you like keep continuing the day trade years on the road, you're gonna have a new friend enter the market, and you're like, oh, I took this MACD reversal, and you're just gonna laugh at them. Okay, it's not great. Okay. Now, 3, I sent out the answer. I think we'll go over that today. 4, true or false? An algorithm exists in the market by studying how the market treats price. You can become more precise with your trading. True, an algorithm does exist. False, algorithms are made up. There's no way to know. True, but only in weekly charts. So I'm going to raise your hand. Tell me what you think the answer is. I'm going to pick someone. You. A. Yes, correct. A. I believe an algorithm exists. I'm showing you what I believe an algorithm exists. I'll show you live trades that prove an algorithm exists. There's a whole other side, okay? Just like, you know, I'm not going to get into politics here, but, you know, just like there's Republicans and Democrats. This is one side where we do believe an algorithm exists. There's a whole other side that doesn't believe it. And let's just say I'm going to prove to you a lot of time it does exist, and I'll prove to you by showing some trades, and you'll be, okay, yeah, like it's got to exist. And the algorithm is basically what? What is the algorithm doing in the market, right?
Screwing.
It's hunting stop losses. That's what I believe the market will keep doing. Okay. So that's going to be A. Maybe down the road you change your opinion. That's up to you, man. But I'm telling you, I'm going to show you proof, right? Now, a moving average blue line shows constantly cutting above and below the price with no real precision. Okay. Do you guys know what I mean by there's no precision here? Like we're not perfectly touching the line every single time. We're kind of like, see how we go above it and below, boom, boom, boom. It just doesn't help at all. Okay. Now, should this indicator be used and trusted? I'm not even gonna ask you guys for this, but the answer is B. Okay. If you got that wrong, you don't know what you're doing. Okay. It constantly cuts above and below the line, shows no precision. Okay. If I go to a chart here, all right, let's see if we go to a chart. All right, ready? We're going to do this example and then this example. Okay, which one of these is precision? 1 or 2?
1.
Yeah, 1. This is very precise. It's touching the same line in the same way 50 million times. That is what I call precision, okay? And we want precision in our trading. That's why I'm teaching the methods I'm teaching, okay? Now, in a chart where price bounces clearly off the moving average, in the gray shaded box, which I'm going to teach you today, I don't know if you can answer this. Why does the moving indicator appear to work in this specific instance? Yeah, you can't answer this. Did I say not to answer 6? Yeah. Okay. You'll see that. All right, looking at a retrace setup where price is already swept by some liquidity above, which I'm going to go over today, is this a good long to take? Yes, it's a clear FEG bounce to the highs, which we even talked about. Of course, there's liquidity above. No, it's better to wait for the bearish LRLR. What does LRLR mean?
Low risk, low reward.
No, okay, so LRLR stands for low resistance liquidity run, but I'm just saying LRLR in general is a trend line, okay? So when I say LRLR, it equates that to being a trend line, okay? So lower resistance to be taken out first, or no, we already took liquidity above. All right, I'm gonna pick someone. Who am I picking? You in the back left.
This is for Adam?
Yeah.
Should see.
Exactly, okay? No, it's better to wait for the bearish LLR. Do you guys agree?
Yeah.
What do you think? Do you have a different answer?
No, I see.
Okay. Okay. Yeah, so it's better to wait for this to be ran first, all right? Remember, if we know the market hunts stop losses and we see a giant, is this a strong or weak candle? Very strong candle to the downside. This is likely to be, yeah, the Drake candle, but the Drake candle goes up, not down. Okay. So we see a massive trend line, okay, and it's going down towards it. This is likely to be ran. Just kind of like, do you guys see how this is similar to the setup I just showed you a lot of time, but this is the opposite direction, right? Except this is a short, but the example I showed you in my trade today was a long, right?
It's like the opposite.
Yeah, it's just the opposite. Comparing two trend lines or LRLRs on a chart, one with many clean touches and a clear stop loss zone above it, or the other steeper, fewer touches, which is more algorithmically significant? A? You guys all think A? Yeah, definitely A. Lots of touches. This looks perfect. This is too steep. This looks choppy. It doesn't look that great. And the more you watch a chart, the more you're going to kind of figure out the difference between what a good versus bad trend line is. So now I want to show you something about this trade I'm actually in right now. So this is the trade I'm in right now. What do you think is going to happen right now after this candle? What? What type of candle is this? Yeah, very strong candle happening a lot of time right now. This is almost like another long in itself. Stop at the low of that candle. So, and then what else do you notice about what's kind of being built up here? Does anyone see it? What's being engineered or built up here in this trade as we speak? Yeah, trend line, right? See it? How many people, look, remember, what is this? Okay, what chart pattern is this though? Remember I had you guys draw it yesterday? Yeah, it's a triple, triple highs, double top, equal highs, all mean the same thing. You understand that? So there is how many stop losses do you think are in this? Or what else can we call it? Starts with a C. Yeah, it's a cluster. It's a cluster of liquidity. Right? See how many stop losses are probably above these highs? Because people on YouTube, they see, oh, we've rejected here, 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 here. We've rejected 50 times. We're going to go down. And what you're going to notice, hopefully in live time, we're going to watch it, is we will get a giant candle, just like this one, that smacks through all these highs at the same time. Okay? So we're going to see if we can watch it and catch it, but it should happen very soon. But essentially, that's just what's happening. Why did we get a giant candle here at this zone?
To break the stop.
Yeah, to break the stop losses. When we go hit those stop losses, what do the sellers have to do? The sellers have to sell more? The sellers have to what? They have to buy back their position. Right? If they're in a sell, they have to buy back position. So what's going to happen most likely is when we run these highs again, okay, and we get that giant candle, it's basically all these shorts getting stopped out and buying back the position. And not only are they buying, but more people are buying too, okay? So I don't really want to sit here for too long and waste time, but definitely would be cool to watch in live time. Now, remember how I said I can technically move my stop loss wherever I want? I could theoretically exit my position right now if I wanted to. If you saw you were up $200 right now, would you guys exit?
Yeah. Gotta live the plan. Stick to the plan.
Okay. If you were up $200 right now, most of you probably, oh my God, I'm up $200. But why is that bad?
Because you have to stick to the plan.
Yeah, you always stick to the plan. So even though I'm up $200 and I could go buy, an iPod Touch right now or something. I stick to my plan. Just because I'm up a certain money amount does not mean I get out of the trade. My plan is to go up to this high, which is what? What high was this from? It was on what time frame? Because remember we were on the hourly?
Okay.
So it's the hourly high. Okay, so that's my plan. Okay. Now, if I'm already in an entry down here and I have no way of losing money, and I think that this strong candle should bring us up here, there's something called trailing a stop loss. So if I think this play is going to work and I'm already long from down here, where might I want to trail my stop loss? Well, maybe here, right? Because I don't want this to fail. I want this to just rip back above, right? And a lot of times at these trend lines, we will stall, and then all of a sudden we'll break it. So I'm just going to mark this trend line. I just don't know it's going to break. And right now is honestly a terrible time to trade, but maybe we can catch it, okay? So maybe I'll trail my stop loss there. Now, I don't do that, so I'm going to put it back down here. But it might be a possibility for you guys in your near future. You know, maybe that's how you trade, okay? Now, why might a trend line with limited price action shown still be questionable as a liquidity target even with multiple touches? A trend line target needs more price action visibly to confirm its strength and context. Trend lines are never good targets under any conditions. Trend lines only work in the daily chart, or any trend line with 2 touches is automatically valid. Someone raise their hand and tell me what you think. How about you?
A.
You think A? Okay, raise your hand if you agree it's A. Okay, yes, the answer is A. Now, look, this is live timer now. You see how we're starting to get that strong candle? So ideally, I want to see us keep pushing through this, but we need to you'll see it if we get it. Now, if we push through this high, where should you probably move your stop loss? If I was in this trade right now. Yeah, break even. If we get a strong candle, why in the world would I want to move my stop loss to break even?
So you don't lose money.
Yeah, because we don't want to lose money. And 9 times out of 10, if we have a trend line like this, I'm telling you, after watching the chart for years, we will just keep going up, okay? Because there's so much liquidity being built up here where I know price is going to keep shooting up here, okay? So, yeah, we're just going to, I'm trying to catch you some live time to show you guys, but it's not happening. So we'll just be patient and wait, okay? All right, what 2 things do you need to become a profitable trader? Oh wait, so yeah, the answer is A. So yeah, a trend line target needs to be, more visible to fully confirm its strength. Do you think a trend line with 8 touches in the same spot is going to be stronger or weaker than a trend line with 2 touches?
Stronger.
Yeah, it's going to be much stronger. Which a trend line with 8 touches has how many clusters of stop losses? 8. 8 clusters of stop losses is going to be way better than 2 because there's more stop losses. The more the stop losses are, the more likely the market's going to target that area. Okay? And again, this is all a belief. This is all theory. This is not proven. Okay? This is my belief, and this is what I've seen, and this is, so many different ways to trade, but I'm telling you, I will prove to you that this is how the market moves. Okay? Now, what 2 things you need to become profitable according to the boot camp? This could honestly, technically be 2 answers, I guess. Let me see if the right answer for this one is. Okay. Raise your hand if you think it is A. All right. Raise your hand if you think it's B. Okay. Raise your hand if you think it's C. And raise your hand if you think it's D. Okay, if you raise your hand for both A and B, honestly, I would give you credit for both. Okay, so I think both are right. The answer is A, disciplined edge, because obviously that matters the most. But yeah, I guess it just depends. Now, where does the market want to move towards? What does that magnetize itself to? Stop losses? We'll never know. Higher lows, or MACDs and EMAs will tell us. What are you guys saying? A, stop losses, yeah. I'm already knowing that. Right. What is actually within your control when you trade? Price action, risk management in your emotions, liquidity movements, or predicting the exact market direction? B. Anyone have anything different? Okay, yes, B. Okay, risk management emotions. You cannot control the market. The only thing you can control is when you stop out of a trade. Okay? if you're too emotional and you're not stopping out of the trade, that's on you. That's not on the market. Okay. So if you're wrong, you got to stop out of the trade. Using proper risk management at every trade, can you still be profitable if you have only a 60%, or can you still be profitable if you only win 60% of the time? True, as long as your risk reward is 1R. False, even at 1 to 3R, 60% is enough. False, at a 1 to 7R, 60% definitely isn't enough. Or true, if your RR is at least 1 to 3 or better. Let me ask someone here.
Hey, real quick, did Jacob make it to class yet? All right, thank you.
So there's kind of two answers. Raise your hand if you think it's A. Okay. Raise your hand if you think it's B. C. And D. Okay, it's A and D. Alright? If your risk to reward is 1 to 1, what percent or higher of a win rate do you need to be profitable over break even? 51. Right, 50 is break even. So that means, okay, what are, if you're taking 3R trades, what percentage of trades you need to win to be profitable?
25.
33% is for 2R. Yeah, it's about 25. So about 25%, right? So both those answers technically be profitable. Now, if you truly have a statistical edge, which I believe we have because we know how the market moves, should you size up and down on your trades and go all different sizes based on how you feel? Yes, because you have an edge, you should maximize size when confident. No, sizing up and down inconsistently means you can be red or green at any given day purely based on trades, breaking your edge's math. Yes, sizing should always scale conviction. No, there isn't a clear reason why. Raise your hand if you think it's A. Okay, raise your hand if you think it's B. C? And D? Okay. If you said A, later down the road, that could be true. There are trades where I generally do size up on based off confidence, but that's after 7 years. Your first 3 years trading, what's going to be the most important part about your trading that I kind of talked about risk management? It starts with N. It's a 4-letter word. What's very important when you look at all your trades? The M-A, yeah, the math, right? You should go back and journal and see how the math is playing out. You know, if you're taking certain RR, can I still be profitable? You know, that's super important, okay? Maybe years down the road, you know, maybe you start to size up when you start being confident and you start like really understanding the market. But for now, same risk every trade, okay? Write that in your notes. Same risk every trade. So if you're risking $100 per trade, same, don't change it. 200, don't change it. 300, don't change it. All right, look at this. We're finally breaking out here. Bro, why isn't this not loading? All right, we'll look at this chart. See what's happening? So there's another big break. Okay, we should have another one here. We should have another one here for sure. Let's see if we get it. So see how we're starting to really like break and splurge over this trend line? Now we're at this area of what? Yeah, stop losses, or what's another thing we call it? Resistance, equal high. Now we're here. That's the important part, okay? If I draw a line here, look, this is a very key area, okay? This is true support and resistance. This is true support and resistance. This is generally such a heavy sell line where I know if we blast it or got a strong candle through that, we definitely go up and it might take profits. Okay, so we're just gonna be watching this. It looks like we're kind of rejecting right now, so I'm gonna keep watching it. But ideally, we should get a pretty big candle through this eventually. Okay, so it looks like it's gonna stall again here. Now, does it really matter if we stall here, if we don't stall here, if we're in my position I'm in? Now, why?
Because you're already still taking the profit.
Yeah, I'm still in profit. Can I really control what the market does here? No. What's more important about my positions that I'm doing? That's more important than any trade or any strategy. What am I doing? I'm managing my what? Yeah, I'm managing my risk, right? I have a stop loss right on there, so I can literally tell you, yeah, we're gonna pump 5,000 points here. Be wrong. It won't matter, right? I'm managing my risk at the end of the day. I don't care what happens here, to be honest. Now, I'm trying to teach you what the algorithm should do here. It should pump through this, and you know, sometimes it can be wrong, but I don't think I'm wrong. I'm usually not wrong, so we'll see. But it's stalling a little bit here, and then eventually we should get like a giant pop here. Okay. So let's just have this play on the side, and then we'll have the quiz questions up here again. All right. Last question. A candlestick closes below its opening price. Okay. What does this tell you about that session? Buyers control the session. Sellers control the session. It's a bearish candle. Price was unchanged. It's neutral. Or volume was unusually high. Raise your hand if you think it's A. Raise your hand if you think it's B. Yep. Good job. So it's definitely B. If a candle is below its opening price, it's bearish. If a candle is above its opening price, it's a green candle. Right? So. All right. Raise your hand if you got 10 or more correct. Okay. Raise your hand if you got 11 more correct. Raise your hand if you got 14 or more correct. Okay, you just lied.
No, we did do 14.
Yeah,
That's why I put my hand
I tricked you. All right. So yeah, any questions about any of that? Anything? Okay. I think what we're gonna do next is I'm gonna start talking about something we call fair value gaps. This is gonna be what I actually use. All right. So we're gonna start talking about like what I actually use. I really want to watch this play out though. This would be legendary if we could watch this play out.
Is this live? Is this live?
Yeah, I get spammed.
Yeah.
Now, what do you like? Are these strong or weak candles now? Yeah, pretty weak candles. Not really telling us much anymore. All right. I think what's important to know here is, see how we have this strong candle here, but then it's all like kind of just small candles? Is this still bullish? Why or why not?
Because the overall trend is still going up.
What do we think? Overall trend still going up. Is this still bullish? Yes or no? Yeah, it's still generally bullish. And I would say it's still bullish because we're still kind of holding this giant candle here, right? We're still above it. So that's a good sign. Okay. Now, do you think that little Timmy who watched YouTube on equal hot or double tops, do you think he probably took a short here? Yeah, probably, right? And that's okay. The short might work for a little bit, but the reality is you're going to have a much higher win rate finding the setups that target these highs later. If you shorted this line because you're like, oh, we rejected here 50 times, this is about a 40% win rate. If you wait for the long back to the highs like this that completely run through it, you'll have probably 65, 70% win rate. So yeah, so funny. I was gonna say 60 or 70.
6-7.
Oh yeah, that's my meetup. My little fan meetup.
Are we allowed to pull?
If you pay for a ticket, yeah.
Oh.
We can't get it for free.
I'll pass again.
Maybe. I mean, if you're here, maybe I'll let you, but we'll see.
Is it here?
I mean, you're not. By then, you should actually understand my strategy. So maybe actually.
It's the one on Friday.
Yeah, it's next Friday.
Oh,
Yeah.
we leave Friday.
Alright, that's what I figured. So yeah, this is not. What would I call this? Good or bad price action? Yeah, kind of bad. It's not really doing what I want. But again, like I said, it doesn't matter because I'm still in profit by so much where I could care less what it does way up here. Now, eventually, if I know this line's going to get ran, oh, 100%. This will definitely get ran.
Is this a paper trade or is this like an actual?
No, this is a live trade. This is real money.
It's what takes this.
So yeah, all right. Let's start with the good stuff. This is going to start where I start to actually like talking about this stuff. I mean, I liked it before, but it's all like the basic stuff and what you need to know now to use. Okay. So I trade something we call liquidity, which I kind of showed you guys. What's liquidity?
Stop loss.
Yeah, stop losses, where all the stop losses are placed. And fair value gaps. Fair value gaps and using fair value gaps are my whole strategy, and everything I do revolves around fair value gaps. Okay? Which I'll teach you what that is. And then why the retail tools fail. Right? The science behind stop loss hunting, the real reason indicators work, and why patterns and trend lines will mislead you eventually. Okay? So you have to realize your stop loss is someone else's entry. When you get stopped out in a trade, right? Let's say you're in a buy, and you get stopped out in a trade. Okay? You all know someone has to buy that order back, right? Like you're not just selling to the middle of the abyss, right? You're selling that stop order to someone buying it back up. Raise your hand if you understand that concept. Right? I can't sell an apple to no one. You know, if I'm going to sell an apple to someone, it's going to be to someone, right? I can't just go in the street and be like, talk to an invisible guy and go, here's an apple for $5, right? I'm not going to get paid. There's no one there. Okay, so when you sell a actual order in the market or buy an order, you are buying from something, from someone on the other side of the screen. You're buying from someone, right? Maybe you're buying from a guy named Tim living in his mom's basement. He's 4 years old trying to make day trading. Okay, I don't know. It could be anyone. Okay, so retail, you long, you buy $100, price drops to your stop at 95. Now that becomes a sell order. So you're losing $5 per contract, and this will appear on the DOM. The DOM is just basically where it shows all the orders. Do we need that? No. Can I predict price without using the DOM? For the most part, yes. Okay. Now, the smart money, which we want to be a part of, okay? We don't want to be part of the retail trader. We are technically retail traders, but the smart money sees your stop loss sitting at $95. And let me be very, very, very clear in this. Smart money does not actually see your stop losses. The market makers do not actually see your stop losses. We just believe that the algorithm that controls the market runs levels where the stops are likely to be. So there's not actually like smart money, like a bank sees your stop. Do you think a bank cares about your little tiny 1 micro stop loss? No, it doesn't. Okay. What the algorithm cares about is the cluster of stop losses that millions of retail traders may have their stops at. Okay, so that's what I mean. Okay, it's not just a single guy seeing your stop. No one sees your stop loss. Okay, it's just BS. All right. So smart money waits for you to get stopped, and it's basically buying your sell order where you get stopped, and that's how they're getting in. Remember how I explained in the COVID crash, all the institutions and bank got in when everyone was panic selling? Because they were panic selling their orders to all these smart money people getting in. Okay. And that's where you tell them, that's where they tell us, thanks for the liquidity. And then you start to revenge trade, then you blow your account. Okay. If you're ever going to be trading with your friend or anyone, and they get stopped out and you don't, if you want to trigger them to say thanks for the liquidity, you'll get what I mean eventually, probably by next week, but it's just a funny statement to say, okay? It's like they got wrecked and lost money, but you made money, okay? So they were your liquidity, they were your stop loss. So it's essentially like, imagine your friend is in a trade to the upside, all right? And they're long, and you're short, okay? And let's say your short trade wins, and their long loses, okay? When they get stopped out of their long, you're the one taking their stop loss because you're short. Does that make sense? And that's why you thank them. You know, it's just funny, okay? You'll see, you know, it's a little nerdy now, but you'll just see what I'm talking about. All right. Now, why you still need a stop loss? Why can you not just do this market without a stop loss? Would you rather lose $100 when you hit your stop, or lose $1,000 if you keep moving your stop? Yeah, I'd rather lose $100. Why in the world would you want to lose $1,000? That is the purpose of a stop loss. We need a stop loss because we don't want to lose that much money, guys. All right? Trust. You don't want to lose that. Okay? If you have no stop loss and you don't touch the market the rest of the day, will your position ever close out? No, you're always going to be in a position, no matter what. All right? If you, with a stop loss, let's say you short at a resistance level, you rejected it twice, you're like, okay, you think we're going to go down, and you have a stop place above the high, and price breaks above the resistance, the stop now triggers, and your position is closed automatically. All right, I lost $100. Okay, cool. But if you don't have a stop loss, you're going to lose much more, because what's going to happen is we're going to break above the line, and you're like, maybe we go down here. And then you move your stop loss up, and then you start losing more and more. You can't get into that spiral. Okay, very bad. Support and resistance is the same thing as clusters, liquidity pools, stop losses. They're all interchangeable. All right, write that down in your notes. Say support and resistance equals stop losses, equals liquidity, equals clusters. I don't use the word clusters a lot. By next week, I probably won't use that word anymore. But it's just a different way to look at it. Right? Support and resistance are not price levels. They're liquidity. They're concentration of where a bunch of orders are being, set. Right? So, what? Yeah. Yeah. So, right. Support and resistance equals liquidity equals clusters equals stop losses. All three mean the same thing. Now, the reason why this is liquidity is because, again, there's a lot of, do you think if we're in the DOM, or we're looking at order flow, which is basically the time and price of everything, okay? Do you think there's going to be all your orders here or here? Do you think there's going to be more orders at 1 or 2? Why 1? Yeah, there's a resistance buildup, but there's also just more of a giant pool of buying and selling going on here. Here is just like, kind of pull back and then down. Like, it's not, price is not concentrated here for too long. It's here way longer, meaning there's probably more what here? It starts with V.
Volume.
A lot more volume here than there is there. Okay? So that's that. So quick check. If price rejects the same level, the same resistance level 4 times, and it looks obvious from across the room, what should I expect to happen? It will keep rejecting, so short it. Okay. Price will likely run above it first, grab stop loss liquidity, then may reverse. Nothing. Resistance holds and will be tested 4 more times. The relationship with the market is non-existent. It does not have any relationship to the level. B. You think B? All right. Anyone else have a different answer? Okay, yes, the answer is B. And we actually have a live time scenario right now, as I showed you, right here. Basically what that question is asking is, do you guys see how this is literally what that question is asking?
Yeah.
We have a resistance level here, you rejected it 15 million times, and it's basically asking, should I take a short here? Hell no. You're going to get smoked at some point, okay? And you're going to see a candle eventually. Again, I don't know when, but if you short here, because you saw a video on YouTube of, big guy, 33, and he's like 40 years old telling you you're short here, that dude's an idiot, all right? Do not do that, all right? So, now, this is going to be something you're going to want to note down. This is the most important slide. This is going to be the most important part of this whole 2 weeks. A fair value gap. This is truly how I see the market and how the market moves. Okay? Now, the difference between a fair value gap and an indicator is this is not lagging. This is real-time price action, guys. Like, this is Enigma. This is the method. Okay, this is, we're going to start going into how to actually make money with fair value gaps. All right, so look. So draw this down. Okay, this is a fair value gap, or FEG for short. This is the good stuff. It's basically a 3-candle formation where the first wick of this candle does not overlap this candle. What types of candles do you think fair value gaps most likely happen on?
Strong.
Very strong candles. Because there's an influx of orders or buy orders here that get left. And this is why this is so important, because when we can tap back into the zone, we use this to bounce back up. And this is happening a lot of time. So now I have a lifetime indication of, okay, we have a bunch of orders here. If we come back in here, I'm going to buy in a lot of time. I don't even care what the EMA is telling me. I just know this is a live time leftover order, leftover orders. Okay, so that's what a fair value gap is. So draw that. This is going to be called a bullish fair value gap. All right. Called a bullish fair value gap. And it's another word type in fair value gap is just means the same thing as imbalance. Imbalance and fair value gap are the same thing. Let me know when you raise your hand if you need more time to draw the fair value gap. This is like actual sauce right here. Okay, this is the secret sauce. This is how you start making money. Way better than indicators, in my opinion. Way better than anything. Okay, raise your hand if you need more time to draw this. Okay, good. All right. Now, a fair value gap versus a random indication line. Which is more precise? The random line, the random moving average, or the little box we're going to draw, where price perfectly wicks into it, respects it, and then dumps. Well, the fair value gap is going to be a lot more precise over time. I'll tell you that. Okay, way more precise. If price, in two fair value gaps, price will wick into it precisely, will respect it, and will use your reverse. It's defined. It's a specific zone. There's no discrepancy when I draw a fair value gap. A fair value gap is like an actual factual thing, right? It's when the first wick of a candle doesn't overlap the third wick. Okay. If I were to draw an EMA on any chart, would it be different on every time? Yeah, EMA, MACD, they'll all be different every time based on what the candles are already telling us. Okay, and it feels intentional, right? I found the narrative, I found the bias. Okay, bias just basically means, are you long or short for the day? Do you have a bullish bias? Do you think the market's going to go up for that day based on the market trend, based on what we're seeing, or do you think the market's going to go down? If I wake up in the morning and I see a bunch of bullish candles in market structure, what do you think my bias for the day is going to be? Yeah, bullish, right? I'm not going to short a bullish uptrend, with a bunch of strong candles. All right? A moving average, the candle cuts through constantly. Above, below, above. It works 1 out of 5 times. We finally bounce out of it 1 out of 5 times. It's just an average of how the candle is already closing, right? It's forming after the candles are closing. We don't need it, okay? And reacting to an EMA, it almost feels like an accident. If you want to trade off an EMA, it just doesn't feel right. You're going to take a trade off a fair value gap and be like, okay, I know why I won. Right? I like to know the why behind things. I hate just random outcomes. I just hate it. Okay, I need to know why something worked, or why I'm successful, or why I'm making money. I don't want to make money randomly and get lucky. Same thing with following your plan. I hate making money but not following a plan. I like making money when I follow a plan because it feels like I'm doing it with intention. It feels like I'm doing it with purpose. Okay. Now, why do the EMAs sometimes work? What do you think might, if we go up above an EMA like this, and then we come back down, we tap it, and we bounce, why do you think sometimes they do work? Based on what I just told you. What else do you think might be there? Yeah, there's a fair value gap there. And that's what's really causing price to go up. Right? Now, let's go back to the quiz. We go back to the quiz quick, which is I have no idea where. Okay, right here. There's the one question about the EMA. Right here. So now you should be able to answer this question. In a chart where price bounces cleanly off a moving average at the gray shaded box right here, why does the moving indicator appear to work in this instance? Raise your hand. Okay, because moving indicators work 8 out of 10 times. Raise your hand if you think that's the answer. Okay? Because we don't really understand how it works in this picture. Raise your hand. Okay. It never works. This image doesn't actually show it working. Raise your hand if you think it's C. Okay, now raise your hand if you think it's D. Because we are bouncing off a fair value gap and the market has algorithmically left untapped. Exactly. That's the answer. So that's why in that specific instance, you see it work. Right? See this strong displacement channel and it forms a fair value gap here? Alright? And don't worry. Make sure, if you did not draw what a fair value gap is in your notes, you have to, because you're going to have to keep going back to it. Because you might be like, oh, what's the fair value gap? Now, why do you think we might have cut through the EMA here, but not here? Someone raise your hand. Why do you think we just completely destroyed through the EMA here, but not here? It's because here there's a fair value gap. What's not here? Yeah, there's no fair value gap here. So there's no algorithmically untouched left orders that are going to cause price to go up there. That's why the EMA fails here, but not there. And that's why EMAs suck, because I don't need EMAs to tell me where price is going. I use fair value gaps to tell me where price is going. Okay? So that's that. So the only two things that this market is going to go towards, what's the first thing? Stop losses. What's another word for stop losses? Liquidity. So stop losses, liquidity. Okay. And the other thing is now going to be fair value gaps. So there's two things the market will always go hit. Fair value gaps and liquidity. Okay. Buy stops, sell stops. All right, all those stop losses. Okay. And the rest of the lecture, the rest of the class is going to be based on this ideology that the market has an algorithm, and the market's algorithm is to go to the old highs and old lows, or liquidity, and run all these stop losses out, and then also go to fair value gaps. Okay. So. I'm going to pull up a video now, and we're going to watch a video using on Google more just about fair value gaps. Maybe, okay. We'll watch T-Trades again. All right, watch.
video is going to be over fair value gaps. What is a fair value gap? What is a BISI? What is a city? What is consequent encroachment? As well as inversion. We will also touch on the difference between a fair value gap, a volume imbalance, and a gap. The first thing we are going to go over is what is a fair value gap. A fair value gap is a...
This might be a little too complicated. It's not another stuff too. Where does it? What is a fair value gap? This is TGR. You'll probably see him at some point.
Those look like your thumbnails.
Yeah, they're all the same, bro. It's all the Alright, we're gonna watch this. This is my boy.
Fair value gaps.
This is my friend Jacob. He got a he's made over like 7 or 8 million in trading.
Are a big reason I made 7 figures from trading. Before I learned them, I was a broke and struggling trader for nearly a decade, blowing account after account because I didn't trust any trading setup. I've now been a full-time trader for the past 3 years and have withdrawn over $1 million across 200 plus payouts. And recently, I've had multiple $50,000 days using mainly fair value gaps. In this video, I'm going to show you exactly how they work and why they're one of the most powerful concepts. So grab your notebooks and let's get right into it. Okay, let's dive into one of my favorite concepts, fair value gaps. Now let's go through a simple definition of them. Essentially, they are the empty space that's created when the price makes a sudden move. So it leaves an imbalance in price. And why is this so important?
Make sure you have it written down. Fair value gap equals imbalance. Same thing.
Well, when we break down markets and how we find opportunity in the markets to make money, price needs to be out of balance. If the markets are in balance, essentially what you get is just a trading range. And it's not until...
Is that good or bad, the trading range? Yeah, we want to see trend. We want to see displacement. We want to see strong candles, right? If we're seeing strong candles, we're going to make more money. Okay.
The market moves to
I'll be right back.
levels that are out of balance, that we get opportunities. So when the market is trading at lows, right, it's out of balance from equilibrium. So just imagine that this is equilibrium, so we have 50% of a specific range. Then we have discount and premium. Okay, so the only way that the markets provide opportunity for us as traders to make money is when they're out of balance. And that's basically why fair value gaps are so powerful, because it's showing you an imbalance between buyers and sellers. So I know there's a lot of conflicting information out there as far as how markets operate. Is it run by an algorithm? Is it not? And my question to you is, does that really matter? Does it really matter how the markets operate on the back end?
Remember I said, even though we believe in an algorithm, we still have to believe it's random at the end of the day so we don't revenge trade? Do you guys understand why? So even though I'm teaching you an algorithm how the market actually moves, at the end of the day, it doesn't matter, okay, what's right, what's wrong, whether there's an algorithm, whether there's not, because you have to understand there's still randomness. And Trump could tweet at any time, and it ruins every strategy, and you're all of a sudden you blow your account, okay? So he says the same thing, which I completely agree with, all right?
Because even if you did know, it's still not going to have an effect on the trade that you're placing right now. So the probability is all in your hands.
What's the most important part when you place a trade? Setting a plan and managing your what? Exactly. That's all that matters. Whatever plays out, you can't control. That's what matters.
Okay, how are you managing that specific position? And when I try to visualize the markets, and this is just how I've been able to, break things down in a digestible fashion where I can understand it and it makes sense to me, is a fair value gap really just shows me an imbalance between buyers and sellers. All right? And that's really what we need to make money. So when we talk about fair value gaps, what is a fair value gap? A fair value gap is 3 candle pattern, right, where you have 1 candle, 2 candles, and 3 candles. But as you guys can see, this 3rd candle does not fill in the body of this candle. Okay, so as part of that simple definition, right, it makes a sudden move, leaving it in balance. So this is creating what? A buy-side imbalance. And the way that I view these is that buyers are in control of these markets. But that's all you need to know. I don't really care if there's an algorithm driving or not. Pay attention to these patterns enough and watch them pan out, and they will help your trade. They will aid in your trading. They will help you determine, which direction is order flow really going. Is it going higher or is it going lower? And when these levels get inverted, right, now we have possible opportunities to go the other direction. Right? Because now all of a sudden this buy side imbalance is being violated to the downside. That's really all we need to know. What side is the market imbalanced towards? Are there more buyers or are there more sellers? So when the markets get rebalanced, right, think about this. All it's really doing is offering price at these levels where we created an imbalance. So I've read numerous amounts of books and I've read a bunch of articles on this, and from what I've gathered at least, right, this is my experience, my knowledge of the markets. These large funds and these large institutions, when they place orders, they're not being able to get filled at that same price. Let's say if they have, a very massive order. Let's say that they want to buy $100 million of something, or maybe even more, maybe $250 million of something. They can't get the same fill price because these markets move without them. So if they get filled on, say, 100 million of it, and the other 150 million needs to get filled, well, what happens is when that order goes through for 100 million, it causes prices to, it causes these prices to jump. And when it retraces, now they're able to fill the second part of the order, right? Okay, this is how I, internalized it. This is basically how I visualize the markets or try and interpret the context of the markets, right? Because there's elephants in the room that are trying to buy up a specific asset, and they're not going to be able to get filled at the correct prices. So let's say that this is, $1. So this price right here is $1, okay? So they get filled on their $1, but now all of a sudden it jumps to here. So instead of it being $1, now it's $1.25. But they still want to get the rest of their order filled at $1. But when it returns to $1, now they can fill the other 100 million or the other 150 million, okay? And vice versa, right? If they're trying to sell an asset, offload an asset, you have this sell side imbalance. As the price rebalances at that level, they're allowed to sell more of it at the price that they want to sell it at, okay? This is our typical reaction that we're expecting from a fair value gap fill. Now, it's not going to be picture perfect like this every single time. Like, you're not going to get this old high, and then you're not going to get this low that pretty much lines up with that. Sometimes it's, perfect. Other times it's not so perfect. And that's just part of markets. There's a little bit of randomness to this. Okay, so now that we understand what a fair value gap is, let me walk you through 3 essential tips to actually trading them profitably. But first, fair value gaps are just one of the many trading setups in my arsenal. And while they're great on their own, when I can combine it with 2 to 3 other concepts, it really takes my trading to a whole nother level. So if you want to learn all of the trade setups I use in depth with examples of entries, stop loss placements, etc., make sure you download my ultimate guide to trading executions, and I'll leave that link in the description. Okay, so essential tips. Tip number 1, when bullish, fair value gaps presented in discount are much higher probability, and vice versa. So let's go through a couple examples of what I mean. When we're looking for fair value gaps, this is really where you have to implement another concept, and it's basic trading ranges. So when we're trying to determine trading ranges, all you're trying to do is find a specific range that has a swing low and swing high, and use a Fibonacci tool. Okay, so when we're drawing that out, right, as I mentioned, we need markets to be out of balance. And when they're in balance, we're not really getting the opportunity that we want. So when we're hunting fair value gap when we're bullish, the fair value gap that resides in discount is much more powerful than the ones that reside in premium. So as you guys can see here, in this example, we had a much larger fair value gap that's resting in discount based on this specific swing. So we have the swing low, swing high. These bullish fair value gaps in here are low probability. Okay, so if we have an overall bullish bias on a specific market, the fair value gaps that rest in discount are much more important. And yeah, you probably say, oh, well, there's a swing low here and there's a swing high here, so isn't this technically resting in a discount? Yeah, but this is not really an obvious swing point. Okay, so when I zoom out of this market, okay, what I'm looking for is, visible swing points. This here is basically just a straight line higher. Okay, this is not really a pullback. This is not a pullback that's visible. Okay, so when I'm looking for swing points, I need something that's visible that, if I turn my candlestick chart to a line chart, it needs to show me market structure. And if you turn this candlestick chart to a line chart, you probably wouldn't get the same detail. It'd be like this. It would look like this, and then like this. Okay, so this is not a real swing point to me, guys. When you're looking for impulse legs and swing points, it's got to be very, very obvious. So I'm looking at the most obvious swing point, the swing low and swing high.
Again, you recognize this is already stuff I've already kind of told you guys, obviousness,
This is how
By the way, we learned from the same guy.
violate these fair value gaps. And this is where traders think that fair value gaps don't work, but they're getting the context wrong. These fair value gaps are resting at such a premium that they fail because it's going to target.
Remember what I said on the first day? When he says the word premium and you don't know what that means, is anyone kind of like, okay, I gotta research what this means?
Yeah.
Right? Premium just basically means we're very high in range. That's what premium means. What do you think discount means? You. Lower. We're very low, right? If you go to the store and the apples are at 15 bucks, but you remember the apples being at $10 another day, you're not going to buy them when they're 15 bucks. They're a premium, okay? When price is very high, we almost always go back down to discount. When price is very low, we will always go back to premium. So that's basically what he means. And then in between the range or the high and low that he's drawing out is the 50%, or in other words, equilibrium. Okay? Right? 50% equals equilibrium in your notes.
Fair value gap. Then when prices are rebalanced, right, and more out of balance for sellers, right, this market down here is in a discount now. So once it's in a discount, it's offering you an opportunity to make money because this market is now out of balance based on this specific swing. And it's out of balance and it's oversold, quote unquote.
Who remembers what the oversold thing was on? What indicator? Remember oversold and overbought? 70 and 30? It starts with an R. No, it was the RSI. Remember I showed you guys the RSI? So we can tell if the market's oversold or overbought without looking at the RSI. Okay? The RSI is just the indicator, it's lagging.
Now, maybe the ICT fanatics are going to come after me, but it's basically just how I'm processing things. So this really was just one example, but you guys can see here that there's another example here. Okay. Now, I don't know if I don't see any bullish fair value gaps in here, but if you saw one on the lower time frame, you would just completely ignore it because this is the fair value gap that's resting in a discount that they're going to target before it goes higher. Okay, so we need markets that are out of balance. Right? That's the whole point of using this. You have a buy side of balance, it needs to get rebalanced. And
do you guys see why this is a fair value gap? Is anyone so confused on that? It's just because this 1, 2, 3, right? The high of this candle does not overlap the low of this candle. If this low of this candle came all the way down here, would that be a fair value gap? No, right? But because it leaves this space in between, it's a fair value gap. Again, this is the most important thing you want to understand when you look at the market. You can use this in the monthly time frame. You can use this to tell your parents when to buy long-term stocks. You can use this for anything.
That price needs to be offered again, right, based on that range to be able to go higher. It needs to be in a discount. Another example, you have a buy side, a fair value gap here, this buy side imbalance is resting in discounts. Now there's definitely risk in it possibly trading lower because there's another fair value gap all the way down here. And that's part of trading that we're just not going to understand. There's multiple.
Do you guys see how there's two fair value gaps here? There's one here, but then there's one here. So remember I said it's only 3 candle formation? There could technically be 10 fair value gaps in a row. Which I'll show you guys more examples of this. But again, first candle high does not overlap the third candle low. Is that a fair value gap? Raise your hand if you think it's a fair value gap. Yes. Same thing with here. High does not overlap the slope. So this and this are both a fair value gap, right? So we know that zone is going to be very strong for us to bounce out of or reverse off of.
Multiple fair value gaps that appear, right? There could be multiple other concepts that you're seeing that appear. And it's just part of trading. Part of trading is finding a high probability trade. That doesn't mean a trade that's going to work out 100%. Sometimes the best A+ setups fail, okay? And if you're trying to trade from a short-term perspective, you can use these failed fair value gaps as inversion levels to just get a short, quick counter-trend trade to fill in an imbalance that you're seeing.
What you just said, using them as inversions is my whole strategy. And that's why I've said the high win rate. But again, we'll get to that later.
You can see it came down, hit that 50% of this range, and then shot off again. Okay, so this fair value gap is resting in discounts. This one is not. Now, when it comes to premium, it's the same thing. We have fair value gaps that are in discount, right? So we have 3 candle pattern. There's a gap there. This is really the high probability fair value. This one, not so much, right? Because it's resting in a discount based on this current swing. Swing high, swing low. A very visible swing. If I zoomed all the way out, you guys easily see that swing point, okay? It's very visible.
What does he mean by that? Why can we see this very easily, if you're, especially for someone sitting in the back, versus like this? What? Why can we see this so much more obvious than like this?
Stronger.
Yeah, it's just way stronger candles. They just pop out more, they're more obvious. So when I'm looking to identify, where the market's going, I'm going to use impulse flags like this. It's called impulse flag. Okay.
I'm not sure if I reviewed this same example here, but you guys can see here, we have another bearish fair value gap. I don't believe this might be 50% of this swing. I didn't measure it out. But let's say if there was a fair value gap that appeared lower down here, just for example, let's say if a bearish fair value gap appeared down here, that's not the high probability one. The high probability one is going to rest higher up in that range. Here, same thing. We have this fair value gap resting in discount. And this is why it's so interesting, and maybe the markets are run by an algorithm, or maybe they're not. Maybe it's all mathematical. These markets really are engineered. So when you're finding the proper swing points, you will find...
What does engineered mean? Remember I was talking about engineered? It's one what?
It's like not mechanical.
No, that's discretionary. What's engineered mean in the market? What's being built up when we're engineering? Liquidity. What's another word for liquidity?
Stop losses.
Stop losses. So when he says engineered, he means stop losses.
Fair value gaps appear at these premium and discount levels. Okay? Coincidence? I don't know. That's not for me to answer. I just know when it provides these opportunities, I'm going to short the market. All right?
Broken edited out. Why do you have to cough in there?
Okay, essential tip number 2. Size matters. The larger the fair value gap shows larger imbalances in price. And I usually avoid tiny and less obvious fair value gaps. Just like I mentioned with the swing points, it's got to be obvious to me. So a larger fair value gap depicts what? A larger imbalance between buyers and sellers, right? Those are your high probability setups, okay? The tiny ones and the less obvious ones, there's not that much of an imbalance between buyers and sellers, so obviously it's going to be a lower probability trade. in this example, you guys can see here.
What's more obvious? This one, or two? What's the most obvious for like that? Yeah, two. This just stands out more. Now, theoretically, could you combine these zones? What do you think? Yes or no? Yeah, you can. That's where it starts getting more discretionary. You can honestly combine these zones, okay, to make it one giant zone. All right, if you want to be a little more precise, maybe use this one because it's more obvious. But the market truly is random. Every single time we come into a fair value gap like this, we don't always bounce here. We don't always bounce to the bottom. We sometimes bounce in the middle. You just don't know. Where do you think would be a smart stop loss if we were taking a long off the fair value gap? Where do you think a good stop loss would be?
At the bottom.
Yeah, probably below the fair value gap. Because if we know this is smart money, and they're buying when we tap back into this fair value gap, and it goes down here, you know you're cooked. All right?
But we have a very small fair value gap, and we have a larger one. You guys can see that, yes, we did respect the this fair value gap based on the bodies of the candles, but how many times are you going to end up getting stopped out in here, trying to go long, without realizing that there's a larger fair value gap below you, right? So, part of trading fair value gap properly is your stop loss placement, which we'll get into in a little bit, but your stop loss placement is going to play a vital role in you being able to profit from these trades or not, and how confident you are in trusting these trades. Okay, because if you get stopped out a couple times, that third trade might pay for all the losers, right? But if you're thinking that it's going to go lower.
Remember I lost the other day twice in a row, and FxReplay, then I finally won a trade, and I was green? Same thing. Like, if you stop out and then you finally win a trade, it could be bigger than all your losers.
And we haven't violated this fair value gap, well, you're not really going to be a happy camper, okay? Because you tried longing twice. The third time, it didn't work out. All right, so the first two times didn't work out, so you decide to go short the third time, and then all of a sudden, what happens? That's when the real move happens, all right? So be less quick to change your bias based on certain specific price actions. Here, another good example. This is just a very small fair value gap. This is obvious, okay? The fact that we haven't retested into that level, what happens? This is really where they're trying to reach to. They're trying to reach into this level to rebalance it and then trade lower. This is a large fair value gap that needs to be rebalanced at some point, okay? So it would not make sense to me if the market traded in this fair value gap and then dumped, right? Because I see this happen all the time. They're waiting to run these fair value gaps into higher levels, you know, bigger imbalances, and then they're going to take it lower. So another example here, you have a very small fair value gap here, but really this is the better fill price. So when you're thinking about trying to go long in here, well, yes, it did work. Like, where is your stop loss? Okay, like where's your stop loss in here? This fair value gap, you know, if you used the low of this candle, you would have been totally fine. And you're getting.
See how he's saying the stop loss at the low of that candle? Why does it make sense to do a stop loss maybe at the low of that candle if we went for value gap here? Yeah, but what's creating this candle? Remember I said retail traders? Yeah, retail traders not making this candle. I'm telling you, okay? Smart money is making this type of candle. Okay? If we go back to the low of that candle, do you think smart money is getting wrecked, or do you think they're winning their position?
They're winning their position.
So you're saying if smart money buys this candle, and all of a sudden we start going down and we hit the bottom of this candle, you're saying they're winning their position? Yeah, they're getting wrecked. That is when you want to stop out because you know they're wrong. You're wrong. Okay?
A better risk reward out of this specific trade. Okay, so instead of buying it up here, right, maybe you're buying it down here. And just keep in mind, guys, that this is not going to be picture perfect. Like I mentioned in the examples, sometimes you get markets that trade at fair value gaps never, they never go sideways like this, and other times where it hits that fair value gap and then just dumps straight away. All right, that's just part of the game. It's part of the uncertainty of all of this, right? Now, finally, tip number 3, fair value gaps may require 1, 2, 3 or more attempts before the trade idea works out. So your trade idea is often not invalidated until you actually start seeing.
Yeah, so. Well, it's time?
No.
Wait, it's 11:30, right?
No, I was going to show you something.
Okay.
Some major reasons for trades to turn around. Okay, so look at this fair value gap, for example. If you were trying to go long on this fair value gap, maybe you went long as soon as it traded down into here. All right, maybe you took a loss. All right, you put your stop there, you took a loss here. Maybe you went long again here, and it got a little bit of a run, but maybe you moved your stop to break even. Okay, so
what does stop to break even mean?
So you don't lose money.
So you don't lose money.
like, let's say you enter here.
After this, I'm going to split you into groups, and you're going to go find me 5 examples of fair value gaps. So get ready.
And then you ran up here, and then all of a sudden you move your stop to break even. To, well, let me go back. Let's say you enter here, right? It rallied a little bit, then you move your stop to break even. Here you're getting stopped out at break even. So now all of a sudden you're 1 and 1. Alright?
What does 1 and 1 mean?
50, 101.
What is your 1 and 1 on the day? What does that mean? You took 1 loss and 1 win. That means I'm 1 and 1 for that.
Are you going to be able to have the confidence to take the trade again? And that's where stop loss placement is so important. And it's just part of learning how to trade properly and understanding that sometimes you have to give your trade a little bit more leeway, right? And where is the proper stop loss placement? That's all things that for you guys to figure out. And a lot of times I'll err on the side of maybe leaving you at 50% of the fair value gap. So if you left at 50% of the fair value gap, it's only touching down at that level 1 time here. Or you use a low of the fair value gap because it's a large fair value gap. Because typically when you get a very, very large fair value gap like this, you don't want to see a trade to the other end of that. Look at this one, for example. This is a very large fair value gap. If I was to short this level, I would not want to see it go all the way to the high. Right? The fact that it ran to the high, that's giving me indication that maybe I'm wrong and the market is going to go the other way. Look what happens. Goes good.
Do you guys see this bearish fair value gap right here? See how this low does not overlap this low or this high? That's a bearish fair value gap. What do you think is going to happen if we completely wreck and we have a giant candle do that bearish fair value gap? Yeah, we're going to reverse. Now, is this a reversal in terms of lower high, lower low? Is this a reversal in terms of an actual trend change for market structure? No. But that's why I can get in before the trend change and get in at a better price and wait for the trend change, which you guys will learn more of.
No way. This is another great example, right? Just because this fair value gap is getting retested so many times does not make the trade invalid. It just makes you impatient. Because let's say if you're abandoning this idea, the fact that we have this very large fair value gap, this is a here, the time, or a couple of keeps. If you guys get the proper chin with side, don't see. But these examples occur all the time. Right? Same thing here.
Right. This is real support and resistance, guys. Like these fair value gaps, like they're real support and resistance. That's why you see them hold a bunch of times. Okay. Like these are just really good zones. So please just know what a fair value gap is. All right, everyone get into groups of 3 again, and I want you to find 5 examples of fair value gaps. All right. Now, if you need to look up what a bearish fair value gap is, I'll show you.
Can we do either or?
Yeah. This is a bullish one and then a bearish one right here. All right, find 5 examples of these.
Which direction? Like You're not gonna always reverse off the one, right? Or we need more time.
Yeah, you need more time.
So we're not supposed to understand.
Yeah.
Because I was like confused because there's like some of the words.
By the way, when you draw the fair value gap, please do not make a giant circle. This time we're gonna make a zone. Draw the exact zone from the high to the low, the first and third candles.
How do we do this?
Do you want us to draw that?
Yeah, how do we do this?
Yeah. Okay, to do the zone in TradeIfy, you're gonna do this. Go to the paintbrush tool, and then go to rectangle. Alright? And then you can make a rectangle wherever the fair value gap is. So I'll show you guys one. So for example, this is the fair value gap. See it? The high of this candle does not overlap the low of this candle. So that's a fair value gap right there. This is also a fair value gap.
They don't have to be huge, do they?
No, they can be tiny, they can be big.
Hold up. Alright, I'm ready.
I know that just put it in
Yeah, wait, so what do you?
the fair value. I know
Yeah, it's basically when a fair value gap is basically when we get a giant smart money candle, basically. It's when it's called an imbalance. So it's when we move really fast in one direction, and what happens is we leave a bunch of leftover orders that don't get filled. Alright, like let's say someone's trying to place a limit order of 300 in Apple, and all of a sudden Apple just shoots right through 300 and never comes back. There's going to be a lot of leftover orders at that 300 level that people are going to try to get in at. So then when we come back down, we bounce again at the 300 level, which is a fair value gap. That's like the science behind it.
Wait, you're supposed to?
Wait, I'm going to come over.
No, but that's all we did.
Perfect. Yes. This is wrong. It's not precise. It's that high, that low. Yeah. Yeah, I mean, it's a little off. There. There. See how it's this low, that high? Yeah.
I'm ready. I'm ready to get you.
It's because the weight doesn't go above that.
I'm up $180. There you go. I was down 20. Who's trying to go to Westwood? Loki went in and out. I'm gonna let him drink that. I'll get, because in and out's fast. I'll get my in and out and then I'll do the next session. Yeah, they're right there. But it's on the way. You know? Like, I'll get my. Bro, it's 103 today. It's like inland empires, the Central Islands. The inland empires like Riverside, Ontario. Which one are you guys? Yes. Oh, I'm on. And then Ewing. Yes. Yes. Yeah, yes. No, that's futures. Let's take a different view. It's futures and contracts. Yeah, or no. No, contracts is what you put in. It's futures and what's up? Futures is stocks. Just stocks. Right.
Alright, I'm gonna start coming around. Alright.
They weren't terrible. She's like, yes, all caps. I feel so bad.
Alright, what do we got? Yeah, if you can draw those out. You go to the shits.
This is gonna be like
And just drop it. No. Go back.
Or back in. Like.
Yeah, draw. Right here. Yep.
Yeah, we've done anything crazy. We know we're
Yep.
So it's not bad. But it gets bad.
Now, let me ask you a question for that. Is this
Yeah, like she's gonna fix this. So then she's like, oh, I'm gonna click this out.
Yep. Wait, now drag this over.
Some other friend. Yep. No. Two. No, here and here. No, I said yes. This was like 2 days ago. Then it all came here. And it was like just trying to make fun, right? No. Like it's actually, that's right. Easy.
See how this low?
Your friends are coming. She doesn't know it's a girl. I was like, oh yeah, my friends Andrew and Dave are coming. And she's like, oh great, I can meet them.
Yep, exactly.
I said yes.
Thank you.
Bro, and then you put yourself, like you were like fine, but then you just, with 2 words, you put yourself in the worst situation. Yeah.
Wait, I thought that was
No, just to me. I have no idea. Because it's Sunday, I'm free the whole day. It's over. Right. At least you're going to professors.
Yeah, so we actually. So right now, on the live market, we actually have a fair value right now. I'll show you this.
Are you going to make a trade?
No, so I just exited that last trade for about $50 profit. So I made about $1,000 on the day after. But if we look right now, look at this. When I saw this bearish fair value gap form, is this also a trend change? Why?
Because it broke the...
Yeah, we broke the last higher low there. So I actually exited my position and I got out. I'll show you.
No.
Right? I got out there. So. Okay. Let me come back around.
She's telling everybody everything. Wait, you can't. Bro, we're bros.
It's here.
So it's like, because you know she's that's what I did here. I was like, yeah. I knew instantly. We were just
Wait, are you on the desktop version?
I 2 days ago. That's just like that's insane. Oh, she said, bro.
Oh,
She said.
Try to go back to the station. It's because you don't have Wi-Fi.
Oh, that's.
Were you good?
Do you know what it is?
Yeah, it's just like web something.
Okay. Got it.
Let's check out the other fair value.
I should have said that. I was thinking.
See how it's the low?
I mean, it is. Well, I won't both. I won't actually both of you. No, it's extreme. We're talking to
Yep.
So, do you want to do a prize pick, son? Do you want to pick that? We'll do a couchy bet right now.
I can just like have it.
Yeah. You understand?
You know what? That's insider trade. Yeah, it is because you know the person.
What do you got over here?
Good shot. And I'm the one that's
These your numbers?
No. This is a good shot. That's delicious. It's going on your face. Let's just skip lunch. Well, I don't think I have either, but just but she's also never been this. She's exactly whatever.
Alright, bro, we got
All five. Oh, bad. She told her hair.
You guys got it?
I thought that was crazy though. Like you guys saw that. I thought that was jam. And she's like, oh, I saw my parents, my cousin, and my friends at home. George P. Bro, George's parents are gonna like pick her up. Oh no, never mind. She's 3 weeks. Oh yeah.
You're chill.
I'm not chilling on Sunday.
That's a good point.
No, that is gonna be bad. I don't even know what I would do in that situation.
I think I might just get Lucid.
I would end it with
See how this high?
it's gonna be Sunday's actually gonna be like, wait, let's have like a game, like a big game, bro. Because Solo was like, you have to commit to one of them. I wonder what Ollie would say. I told Solo everything. Ollie.
Ollie. We have a question.
We have a question. Come over here though, guy. Yeah.
Or wait, what if we go to him? So let's just be.
Oh, we can get it. We can get it.
We'll go to you.
He's already.
No, it's fine. I'm.
Should I tell him like, I'm in a situation. I have a bad situation.
So you know,
So Kieran, like really minor. So I just went on Sunday. This girl and I've been talking for like a week. Yeah, like just for like a week. Like you know what talking about this is. And then she like, so now she's doing something like not weird stuff, like hanging out with your friend. Yeah, I didn't know the girl at home. The girl at home. I don't know what she likes, but now she texted me. She's visiting on Sunday. The girl at home, and then here, oh, let me meet your friends. So what do?
I think you got yourself in a bad.
Yeah, you have no idea.
And the worst part is that when she was like, let me meet your friends, he was like, yeah, okay.
Just make it worse.
I don't know what to say.
Just play it.
Say no.
Like how?
Just use your words. You're not. You're gut.
I don't know what to
You don't talk to either of them on Sunday and just go to the Getty.
Go on ChatGPT and type it. That's what. That's my.
It's like give you like the most normal response to say.
tell the girl you're sick on Sunday.
Like they have names come here. Like
Tell the girl you're sick.
no matter what they're coming. Like save to tour the campus no matter what they're coming.
Okay, let's get a load up.
They want to.
Say you were sharing.
Huh?
Say you were sharing.
You that's
So the girl from home can come to my room.
Right, she's not allowed in the building. If she comes to campus, you can pretty much just chill out.
Just walk around.
Yeah.
Which is what I want to do anyway. I want to like look at everything.
Why she comes?
Because they want to tour the campus.
Are you from?
No, I'm from like Orange County. You know Orange County? It's the closest county south.
It's
It's like 30.
It's like 45 minutes.
Yeah, it's like
Oh, that's nothing.
from my house it's an hour drive.
Oh, that's cool.
So that's why they're coming here.
Just do it at different points in the day.
They like split up.
Yeah.
Because I'm doing a cooking
Oh,
class
that's interesting.
You're doing that
with Aiden.
what, today?
No. It's
Next time.
It's tomorrow.
What is the next one?
That I run it.
Oh, you do?
Yeah.
I don't know how to cook it.
What is the first one?
That's fine. Easy stuff.
You're an asked me to do it and Aiden said
When's the
We're
first
gonna do
one?
grilled cheese.
oh, it's
Wait, no smash burgers?
I'm a bird man.
Smash burgers is this one.
Yeah, wait. When is the first one?
Today.
Today.
Wait.
Oh shit.
At 3:30. I'm doing it today.
Oh, I want to go to
Next week as
Oh.
well.
Well, good thing I canceled the probation.
You do?
Yeah, I'm making smash
So you
burgers.
came in?
Yeah. So I'll go
We're doing smash burgers today. So
Yeah.
I don't think I've ever cooked eggs. So I'm gonna do it.
Eggs are easy.
I do breakfast sandwiches one. So you get brioche, bacon, egg, sausage.
Do you make it here?
Yeah. You make
Where
it.
is it?
You'll be doing it yourself. You learn. I'll teach you how to cook an
Sunday?
egg, scramble an egg. Whenever the next class, I don't know. They just tell me when.
Wait, how do you make your scrambled egg?
You gotta add milk.
I don't really make scrambled eggs. I don't like scrambled eggs.
Get out in front.
Well, back at my old restaurant, I used to put it in like a measuring jar, milk, whisk it, put it in a microwave for 30 seconds, ground it. Or I put it in a pan, break it up.
Done for the D8, or done for the... Did you understand this?
What, that value?
I didn't understand like what direction you go.
Well, I was looking at this
So you made money?
prediction like that.
Oh, did you already make a trade?
How much did you make?
I made 600 on the trade yesterday.
Are you up now or still down?
Oh, I'm down.
3,000 right now. Wait, Aiden, you want to go back to the dorm real quick?
That was pretty good.
Yeah, this is so hard. But I feel like you would try. It's easier. I can find it walking. And you don't see that. And we drive. I love this thing. I want to do this. I'm gonna show you guys a setup.
See how it's that gap between the low and the high? So drop. Good. Exactly. Beautiful. You're good.
Because I went for going to look. And like I just went
Good. Yeah,
mine. Which is mine. Mine was like first because we thought that.
You guys?
Because I love my
No, they don't. It's like one's. Yeah, one's like this could still be further out of that. That's a fair value. Okay. Because that high does not overlap that low. So another example would be right here. You read this. Yep. That's how we use. Now I'm going to show you guys an indicator that's going to show these for you, but eventually you're not going to need to use them.
Just one. So the fair value gap for
They show you where real market orders are, where smart money is placing the orders, and we want to go along with what the fair value guys are telling us.
Okay.
I'll explain more.
Thank you.
Yeah, no problem.
All right, so we're gonna be looking at the market real quick. I'll show you guys something. All right, this is today on the. This is today. Oh nope, we don't want that. Okay. This is today on the 1 minute time frame, right?
Still on the screen.
What? Oh. Sorry about that. What do you notice we left here? What looks good here to maybe target? Trend line. Can someone draw up? Can someone draw where we should go? Someone come up here and draw where you think we should go and why. You come up. He's just looking at me smiling. All right. Draw with this trend line, which I have selected, where you think we should probably go and why.
What do I draw?
It's on the trend line. Just like a line of where you think we're going to go and why. Again, make sure to use this full chart. Like, look at all this, right?
Like here?
Okay, why there?
It's like going up.
Yep. Now, why do you think we're going to keep going up, though? What do you see to the left over here that was being built up? What's all this?
Like, it's changing direction a lot, reversals.
It's called the trend what?
Line.
Yeah, trend line. So we have a trend line here. If we draw that from here to here, oops. If we draw this from here to here, has this been ran yet?
No.
No. Okay. So right now, all right, you're good. You can stop. So right now we have all this trend line we built up, right? All these stop losses where people place their stop orders. Are we in an uptrend or downtrend? Okay. Why? It's consistently going up, but what's the definition of a trend going up? Like, what's the definition of a bullish trend? Yeah, so higher highs, higher lows. Remember, if you even have that noted down, okay, which I said a million times, higher highs and higher lows equals bullish trend. Now, where was the trend change? Is it here? Is it here? Or is it here? 1, 2, or 3? 2? Okay, you guys all agree? Yeah, so the trend change was here, right? Because if I go to a line chart and I just use my highlighter, okay, lower high, lower low, lower high, lower low, lower high, you know, a bunch of lower lows and lower highs here, okay, lower low, lower high, higher low, and then the trend change is called what? That's occurring here. An MSS. So this is a market structure shift. All right. This is a market structure shift. So you can see when we make that last lower high, do you think this is kind of breaking with good momentum or weak momentum? It's pretty decent. So I'm going to teach you that a little more today, but we're going above this high with pretty good displacement. Right? Remember what I talked about a liquidity sweep is? Does this look like a liquidity sweep here? If you have it in your notes on what a liquidity sweep is, but why does this not look like a liquidity sweep? Anyone know?
Because it didn't shoot super duper low.
Yeah, it didn't hit it and then shoot back down, right? So if we remember the definition of a liquidity sweep, which is basically just this. All right, this is very, very important for you to understand. Liquidity sweep right here. All right. If we understand that definition,
does this right here look anything like this? No. Now, if it was like this, do you think that would be a market structure shift or a liquidity sweep?
Liquidity sweep.
Yeah, that would be more of a sweep because we're breaking the last lower high, yes, which is considered a trend change by the YouTube videos you watched, but there's more to just changing trend than what the YouTube videos told us. When we look for a trend change, we want to see a big momentum candle displace above this range, okay? Now, this is going to be a little more complicated, but something that I like to measure out with my own eyes, I don't really actually measure it ever on the screen, okay, is this, all right? If I draw a box from, so if we go back to a line chart, right, would you guys agree that this low to this high is a very obvious range? Yeah, it's very obvious, sticks out. So I'm going to measure that range with a rectangle, draw it to the right. So this is the size of this range, okay? What I like to do to determine if there's like, if it's a market structure shift and a trend change versus maybe just a liquidity sweep is I like to see, it's gonna be complicated. Is the break of structure, is the market structure shift here that we're shooting out of, is it like the same size, like is it the same size as the range we just put in? This isn't gonna make no sense, right? Like, I don't know how else to explain this. So I just kind of make sure that like the length of this leg, which is about 85 points on NQ, I just make sure that the displacement out of that range is like another, 50, 60, 70 points, okay? If it's like 10 points, do you really think that's going to be a solid confirmation to go back up? Yeah, if it's like this and then we go down and it's only like breaking out like 10 points out of this high, right? It's just not good. Okay, so let me show you a difference of this. So I would draw this, ready? So draw this. This is an uptrend, okay? And draw the diagram exactly how high I have it, all right? We have a high here, higher low, higher high. And shade do something like where you're shading, like this, or wait, this, all right, like, let me see if I can do this, equals same size, something along the lines of this, all right? Do it in maybe different colors, same size, and then we're gonna do another one so you see the difference. And then do this one, and this one is showing you different sizes, right? See how we're barely breaking that last lower high? That is a red flag. Okay, that is bad price action. All right. That is bad price action, and you really want to stay away from that. So these are like, different sizes or smaller breaks. So smaller breaks, and then bigger breaks. Bigger, better breaks. Right? So have something so you can kind of tell the difference, right? If I'm looking for a trend upwards, I want to see this. I don't want to see this where we're going up, going down. What is this called right here when we break this last lower high based on that video you watched yesterday? What? It's on the indicator. Yeah, this is a break of structure. Rate this break of structure on a scale of 1 through 10. Everyone put your hands up. 1 through 10. 2, 1. Okay, very low, yes. Now, put your hands up. Rate these break of structures on a scale of 1 through 10. Yeah, more like a 9 or 10. They're all really they're going way higher than the previous high, telling me that is more confident for the market to keep trending up. But if we get these little tiny breaks of structure here, I'm not convinced the market's going to keep going much higher. So make sure you have those drawn, all right? Raise your hand if you need more time. All right, good. Now let me just show you like a live example of this super quick. If we go to FxReplay here. Oopsies. I'm going to show you the difference of both. Alrighty, look. So right now, all right, we're gonna just go to the 1 minute time frame. Now, do you think that these are good breakup structures or bad breakup structures? What do we think? See how we're making lower high or higher high, and every time we break the higher high, we go higher. Are these like the first picture or the second picture? Yeah, it's like the first, right? We're displacing out of this pretty well, right? We're going much higher than this last, high. So that gives me confidence that market's going to keep probably trending up. All right. Now, if we look at something like this, look at these highs. You go above it, go above it, go above it. Now rate these breakup structures on a scale of 1 to 10. Put your hands up. 3, 2, 2, 4. Yeah, they're not very good. Okay, remember what I said. Do you guys agree from this high to this low is kind of the range of this impulse? Yeah, okay. I like to measure this or eye it out and see, can we create another leg above this high that's like the same size as this? Is this the same size as this? No. All right, obviously, I don't even have to ask a question. This from here to here looks like it's like 572 down here. This is like 10 points, okay? This is like 3 points. So the break from this 10-point range is only 3 points. You really want a 10-point break from that range for me to be like, okay, we're gonna keep going up. And what do you notice is happening here in the market is we keep kind of stalling at every single high. What ends up happening? Yeah, we end up going down, all right? Why do you think we go down if we don't have good breakup structures?
People aren't confident and they're going up.
Yeah, exactly. Like there's just not enough buyers. Like buyers are not aggressively pushing price above these old highs, and eventually they're going to get absorbed and all the sellers are going to come in every single time we sweep these highs, right? And eventually you just fall, okay? So when we're looking at price action, we want to see some really good breaks of structure, right? We want to look for structure that looks like this, not this, okay? That's bad. All right. What do you say? No, this is just a backtesting platform. Yeah. All right. Now we're gonna start with some risk management stuff. All right. What's more important, risk management or the strategy I'm teaching you guys? No. No. Risk management is way more important. Remember what I said, can any strategy technically be profitable?
Yes.
Yes, it's the person, it's never the strategy. Am I teaching you a strategy that has higher win rate than most strategies? Yes. But remember, what was the speech I gave about how we should still believe the market's random? Well, why did I say that even though I think there's an algorithm, we still have to believe the market is random? What does that help us do better? Yeah, manage our risk, okay? It's all about managing our risk. Remember what I said, if we believe that there is truly an algorithm in the market, we're gonna wanna be right more, and that's gonna cause us to be emotional and revenge trade, and then we're gonna get cooked, okay? So, all right. So, risk reward and position sizing, all right? 1R versus 2R. Some of you might like to go for 2R trades. Others of you might like to go for 1R trades, okay? And this is where you're gonna have to make up your mind. I can't tell you guys what to do. I mean, some of you are gonna like the holding longer, some of you won't. It's just, this is where you're gonna start to learn about yourself and like your brain and your personality. And it's just different for everyone. That's why like I still pull up other videos on YouTube from other traders, because some of your guys' brains are just gonna connect with other people. You know, if it's not connecting with mine, it might connect with another person, you know, you never know. So a break-even win rate at a 1-to-1 R is 50%. So do you guys understand that? In order for you to be break-even at 50% win rate, all right, 1 R, that'd be, you need a 50% win rate, okay? So if you lose 100, if you risk $100 on a trade and you lose 100, you're down 1 R, or you win 100, okay? Everyone see where that comes from? 1 R, if I'm risking $100 on a trade, I can make 100 or lose 100. Okay, where 2 R is if I risk 100, I could lose 100 or I could win 200. Remember the casino thing I talked about? If you go into the casino with 200 bucks and you say, okay, I'm only going to stop if I'm either down 100 bucks or up 200 bucks. What RR is that?
2R.
Yeah, that's a 2R, right? So you either double your money or half your money, okay? What's the RR if you say, I'm just gonna gamble until I lose everything or until I double my money? 1-to-1, right? Because you either double your money or lose everything. That'd be a 1-to-1. Right, if you win exactly half the time, you're break even. Okay, if you wanna be profitable, you're gonna need to win more than half the time at a 1R if you wanna be profitable. 60% is, you know, your equity curve is gonna be like, so 60% of your equity curve is probably gonna be like this. 70% of your equity is going to be like this. What do you think 90% win rate would be? Do you think it's going to be like this or like that? Yeah, way higher, okay? So the higher your win rate at a 1R, essentially the more profitable you can become, right? And 50%, you know, a 1R type of setup is better, honestly, when you're newer. This is what I'd start going for. I'd just start with 1R trades and just doing the math and be like, okay, how many times can I win a trade out of 10? All right, if any of you in, you know, high school are taking classes, you know, science classes, you always like kind of, you know, whenever you're doing the, I forgot all this stuff now, but, you know, the scientific method and all those, you know, you're doing like the studies or whatever. You always got to see like, okay, if this happened this percent of the time, you know, you just do the math to see what chance, you know, an experiment, a study and an experiment is likely to happen, basically. Okay. Now here, you can be wrong more than 50% of the time, which is kind of cool because you can still be wrong, but still be green and your equity curve can still go up. All right. And this is what I like about 2R trades. Basically, you can lose 66% of your trades, which is majority, and still be profitable, okay? And once you have like a real edge in the market, you can easily attain like a higher than a 50% win rate. This is gonna be probably the sweet spot. Now, let me ask you a question. What can you do with your stop losses after your weigh in profit?
You can move them down to where you're still winning.
Yeah, you can move them and profit, so what? If you're in profit, can you lose money?
No, so you don't break even.
Yeah, break even. So you can't lose money. So what a strategy might be is, let's say I'm going for 2R trades and I want to keep my money. If I'm up 1R, is that my plan to sell?
No.
No, because I'm going for 2R. But what could I do?
You could put your stop loss at break even.
I could put my stop loss at break even. So I just take risk off the table and then I just won't lose money. And this is how I maintain such a high win rate, because I do that all the time, all right? So a 50% win rate at 2R is profitable. Okay, you could literally flip a coin and be profitable. You could flip a coin, enter the market, and if you hit 2R more than 50% of the time, you'll be profitable because of how risk to reward works, okay? So let's say trade 1 is a loss. Okay, you risk 100 bucks, all right? If I'm risking $100 and I'm losing 100, how much R am I losing? 1. Let me ask you a question. How would you lose more than 1R? Yeah, if you size for one place, if you size for one low, and then we get close to that low and you keep moving your stop loss down. And then all of a sudden you're gonna, what is that called being in trading? What are you doing? You're being what? You're being dumb or you're being emotional. You're acting based off emotion. All right, and we have to pretend like we're robots. All right, you can't, a lot of you are gonna act off emotion and it's like, you know, inevitable, but that's just, just human nature. So, yeah. So remember remember on FxReplay when I took the 2 losses and then I took the win, that was 2R. You know, I was profitable by a little bit. That's why I love 2R, because, you know, I could lose 2 trades and then win 1 trade, then all of a sudden I'm green, right? I made money. Okay. So if I take a loss and I lose $100 and it's a 1R trade, and then I take a win and I risk $100 and it's a 2R trade, how much money am I up? Or how much R am I up? Yeah, I'm up 1R, okay? So the net result would be I'm up $100 of profit, all right? Now, does this seem like a video game? Does this seem like a video game, or does the strategy I teach seem like a video game? What feels more like a video game, or what feels more fun? This or the other stuff I talk about on the charts? Yeah, the other stuff. It's a lot more fun, right? This is boring. And the boring stuff, like this, is going to make you profitable. Like I get that, you know, looking at a chart and drawing for value gaps and looking for trend changes, like that, I get that's going to be fun and it's definitely appealing, and it's like you're trying to be right, and it's like a video game. Like you're trying to beat the game, you're trying to be right. But I promise you, risk to reward is 10 times more important than any strategy I will ever teach you. So just don't forget that, right? So let's say I'm at a personal live account, all right, and it has $50,000 in it. What you're gonna see online in a lot of YouTube videos, if you ever watch stuff about this, is everyone says risk 1% of your account, okay? Which is basically you're risking $500 per trade. That's subjective. I think for a $50,000 prop firm account, which I'll teach you what a prop firm is, you should be risking $200 per trade. That's max. All right, that's just my opinion. That's about 0.5% risk. But a prop firm, which I haven't talked about yet, which I will, which some of you won't be able to buy unless you buy it with your parents' stuff because you're not 18, is going to be much more affordable for you guys. But if let's say you're on a $50,000, you know, paper account. When you go on paper trading on TradingView right now, and you're drawing out the RR tool, ideally you should be looking for trades, and whatever trade you may see, whether it be based off a fair value gap, if I'm longing a bullish fair value gap, where ideally should I put the stop loss? If I'm longing a bullish fair value gap. Remember yesterday we were talking about the fair value gap bounces? If I'm looking for a fair value gap to bounce, where is a good place to put the stop loss?
The last low is the first one.
Yeah, it's like the last low before the fair value gap was formed, okay? So let's say I'm in the market and I'm just trying to place a quick stop loss below fair value gap. So let's say I see, okay, look, right here. So we have a little fair value gap here, all right? And we also, is this a fair value gap or is this not a fair value gap? It is. So if I want to enter long here, and I want to enter when you tap in, does it make sense to put my stop loss here or below both fair value gaps? Why? Yeah, remember my Asian friend, Jade Cap, right? We were watching him. What did he say about those big fair value gap zones? Yeah, sometimes we can go deeper than people expect in the fair value gaps. Like we don't truly know if we're gonna go here and bounce or here bounce, right? But that doesn't matter because what matters is risk management. So if we have a stop loss below both fair value gaps, right, that's gonna be a lot better because if we break both fair value gaps, what does that probably mean? Yeah, you're cooked, you're getting wrecked, okay? If you're taking a long position out of these two fair value gaps and you put a limit here or you market buy there and we go all the way back down there, you're probably gonna get wrecked, okay? What else might occur if we break these two fair value gaps? We have a higher low, higher high, higher low, higher high, higher low. What else might change, or what else might trigger if we break those fair value gaps? Yeah.
I was wondering, like, what fair value gaps represent in the first place. Like,
Oh, fair value gaps just they're just an imbalance in the market. It's just when we get an influx of buy or sell orders, like really big orders. And what happens is, if I'm trying to get in $1 million position, and there's only $500,000 worth of sellers trying to sell to me, is my whole position going to get filled? No, only $500,000 of my position is going to get filled. What happens to those other $500,000 worth of orders? They're just going to be sitting there, right? What do you think is going to happen if we come back down to my $500,000 buy orders? It's going to bounce again, because all my leftover orders are going to get filled. Now, that's not me, that's the institution, okay? It's institutions. So a fair value gap just represents, like, there's a lot of orders here. There's a lot of smart money people that did not get filled here. When we tap back in, these are the leftover orders filling. That's why fair value gaps are really good on the strong candles, because on the strong candles, right, are retail traders or us, can we make these candles? No, we're too small. We're very small fish in the sea, okay? These types of strong candles are basically institutional candles. So they just have a lot of leftover orders like sitting inside them basically. But what else might occur if we break through both these fair value gaps based on the trend? What do you say? Change of character, or what else is another word? MSS. Or MSS. Okay, so if we broke those fair value gaps, do you think that you can predict the trend change possibly before the actual trend changed? Yeah. All right, you can predict that, okay, we broke these two fair value gaps, we're probably going to start going down if those did break. All right, so is there a better way to trade than market structure as I'm showing you? Yes. Using what? Using fair value gaps. Okay, fair value gaps are going to tell you the story. These are going to be the backbone of your trading for the rest of your time. All right, because, you know, while trend is important, while you should understand the general direction of a trend, you know, the fair value gaps are going to be way more important. Okay. So back to the boring stuff, right? If you're on a $50,000 account, which I'm going to show you guys by the end of maybe tomorrow how to buy them if you want, but again, I wouldn't do anything to the last until I'm done with this. I would risk about 250 bucks. I would probably write this down. Write down $50,000 account, max risk $250. Which means what? If my stop loss is, so write down max risk on a $50,000 account, or recommended max risk is about $250. So anything there or less is the best. Make sure to write that down. That's going to be important for you. All right.
Did Willa make it to class yet?
She's not coming today.
Okay, thank you.
Now, if this was a real live account, a $50,000 account, and you got stopped out of the whole account when we went to zero, do you guys see that you could literally lose 50 trades in a row until you actually hit zero? Do you think you're ever going to lose 50 trades in a row?
Yeah. Unless you're really bad.
Dude, statistically that is so hard. Like, you could literally flip a coin and not lose 50 trades. You're never going to lose 50 trades in a row. Okay? So never forget that, all right? On a prop firm, unfortunately, there's rules, and you can't go below like 47,500 bucks, and that's just their rule. So you could lose 250 times, so you could lose about 4, 8. You could lose about 12 trades, and then you blow the prop firm account, okay, which is, you know, it's a $50 account. So you're actually blowing $50,000, or you're actually blowing $2,000. Now you're blowing the $50 you bought the account with, okay? Is it still likely to lose 12 trades in a row based on probability and statistics? Hell no. You're almost never going to lose 12 trades in a row. You got to be really bad, or just really, you just got to be an idiot, okay? That's not going to happen, right? Now, do you remember the question you asked me in the first day? You're like, why don't I just target 2R every time? Yeah. All right. There's a reason, right? 95% of my targets are always highs and lows, guys. All right. They're always highs or lows. It's not just 2R. So when I say, oh, we're only going for 2R trades, could that mean that there's a high at 2.2R and we go for 2.2R? Because it's pretty close. Yes or no? Like if I'm targeting 2R, but there's a high a little bit above the 2R mark, would I rather target 2R or probably the high? Yeah, I'd rather target the high, because what's resting at those old highs? Stop losses, which is how the market moves, okay? So when the trade reaches 1.8R and it's equal highs, do you think I'm going to get out at the equal highs, or do you think I'm going to be like, oh, I'm a 2R trader, I'm going to wait for the 2R?
Get out.
Yeah, get out. All right. Why do you want to get out at equal highs instead of waiting for it to go higher?
Because statistically it'll move.
Yeah, statistically, what's being filled up there? Stop orders. Who is entering to reverse the market there?
Smart money.
Smart money, right? The big banks, the big institutions, okay? So what happens sometimes is if we have the 2R and I wait for it and there's equal highs, and price stalls and reverses, it now is going to come back and stop me out stop everyone out who held just for 2R, which is an arbitrary number. Do you think the market sees your little risk reward position tool on the screen?
No.
No, it doesn't. Do you think it sees the highs and lows on the candlesticks? Yes. Those are going to matter way more importantly, okay? So what you just did is you now give back a winning trade chasing a number with no market logic. There's no connection to you placing an RR tool on the thing and, oh yeah, the market knows where that is. So it just doesn't, okay? Now, what do you think you would feel emotionally if you took a trade, you risked about $200 on it, you were up $390. What R is that? Yeah, like 1.95, exactly. All right. And you don't sell because like, oh, I want 2R. Okay, but we hit a high. And we go all the way back to you getting stopped at break even. And you were just up $395. How do you think that's going to make you feel? Yeah, you're going to be like, oh, I was just up $395. I could have just, paid for a whole week of food, right? You're going to be pissed. And this is where you guys are going to start getting emotional. And you're not going to get emotional. I can't tell you don't get emotional and then you can't. It's just human nature. So that's just going to be normal. All right. And that's what sucks. And that's what's going to be hard psychologically about trading. If you're up, there was one trade one time. I was up like $30,000 and I tried targeting higher than a high basically. And what's bad about trying to target higher than a good mountaintop high? Yeah, I'm trying to target somewhere where there could be a possible liquidity sweep. I'm trying to go above that. And I don't know that we're going to go above that yet, okay? And it came all the way back to my break even. I was up like $35,000 and I just came all the way back. And I'm like, damn, like it makes you feel like crap, okay? It just sucks, all right? So you got to understand that, and there's just no way around that. That's part of the journey, and you're going to feel that emotion. It sucks, but yeah. So the target is a meaningful target. We want to target highs or lows where the market is naturally attracted to, all right? Which is all means liquidity. We want to target liquidity. Yes?
What's like the biggest trade you've ever made?
The biggest trade I've ever made?
Yeah.
Probably like 60,000 or something. Yeah. But like it's not, it depends on the month. Like some months I size down, some months I size up. If we look at price action today, do you guys think this price action is good? Why not? Yeah, it's all choppy. It's not even doing anything. It's just going. Remember how I said stay away from price action that barely has any break of structure? See how we're barely breaking this last low? Right? We're coming down, barely breaking it. Coming down, barely breaking this. Right? What do you say? This break of structure here is better or these break of structures? Yeah, right here, way better because we displaced way, further below the low. Okay. So today was kind of bad price action, but today, what R do you think I targeted today in the choppy bad price action? Yeah, I targeted 1R. Okay, that was my trade for the day, and I got out. Okay, who wants to see my trade today? All right, I'll show you guys. If you follow me on Instagram, you might have already seen it, but.
3-minute workday.
What?
3-minute workday.
Yeah, 3-minute workday. I literally was done in 3 minutes today, and I made my money and I was done. Okay. So today, they were not following out that video. If it was all guys in here, maybe, but it's not. So. All right, so the trade I took today was right here. Am I logged in? I gotta go to the broker I'm logged in on. Remember what I said the first day? If I can't show you arrows and the execution arrows, don't trust me, all right? I'm trying to find my executions. These are all the brokers. Remember TradingView is a charting platform. These are all the brokers you put your actual money in and then you trade. A prop firm on Tradeify, this one right here, which I'll teach you guys about. All right. Dude, where is this? I'm trying to, basically TradingView, it only lets you log into one thing and I can't find where I'm logged into. Let me exit out and then do this again. All right, there you go. Okay, ready? Here's a trade I took today. Right there, okay. Do you see how the arrows on the screen are right here? Now, can someone come up here and draw this RR tool for my position? If you want to see exactly where I entered, you can see the blue arrow. That's where what did I do here?
You put in your order.
I put in my order, but did I buy or sell? All right, I bought and then I sold here. So someone come up here and draw the RR tool for my order, my position today. You want to come up?
Oh, what the?
Just full screen it, yeah. Yep. So look where the arrow is exactly.
Yeah.
Because it shows exactly where my fill was. No. If you go highlight over the arrows, yeah, that blue arrow is where I entered.
The other little one isn't here.
Yep, exactly. It's just on that candle. All right. Okay. All right. Stop loss to the low. Okay, now go to where I targeted.
Like right there.
Click the right. Go in the right arrow. Hover over it. Yeah, right there is where I got out. Right there. Okay. What did he do wrong technically? Was this actually my stop loss way down there?
Oh no, because you were already up, so you would have like.
I was going for 1R. Remember?
So 1R would be. What the heck?
That's 4R. That's 5R. That's 6R. That's 27R.
Wait, what?
The line, the wick.
Huh?
That's 2R.
The long one.
The long one. Oh, right here.
Down more. That's 1.6R. That's 1.2R. A little more down. Yeah, about there. Okay.
That was about my stop loss. Okay. Now, it looks worse, so you're good. Perfect. It definitely looks worse now because you're like, oh, this big wick down here. Did this big wick have anything to do with my position? Why? I was after I already got out. Look. That was my play. We basically, the second I answered, we basically just went straight up, okay? And my TP hit in 3 minutes. Well, it hit actually in 1 minute and 30 seconds. And then I was done for the day. I made about $600 and I stopped, okay? Now, why do you think I got in where I did?
Because it was such a strong green candle.
It's such a strong green candle, but that's not how I trade. There must have been another reason, right? Yeah. Okay. Can you come draw the fair value gap? The rectangle is in the brush section. Yep. And then rectangle. All right, draw the fair value gap. Yep. Okay. So that is a bullish fair value gap. Yes. That is not the reason I entered though. You're very close.
Is it like up to?
That, I mean, your fair value gap drawing is right, but that's not the reason I entered. Does anyone else have any ideas?
Is the market reversal?
Yeah. Yeah. He's so close. It's a strong candle, right? After a bunch of, what are these candles? Weak or strong?
Like kind of.
Very, they're just weak candles. We're sideways, choppy, bad price action, right? All right, let's see what he draws. The rectangle, right there. Yep, click it. So what? Okay. Let's see. Okay, what is he drawing right now?
Bearish.
A bearish fair value gap. All right. So good. You're good. So what do you think? Why do you think I got in?
Well, because the next candle closed above it.
Yeah, and what happens when these bearish fair value gaps get completely destroyed?
Stop loss.
Yeah, everyone's reversing their position and getting wrecked, and that's the side I want to be on. So this is my strategy. Okay, this is how I trade, and it's a lot more complicated than this and more in depth, but this is like the baseline. If I basically enter when these bearish fair value gaps get completely destroyed. And what do you notice about the closure of this candle? Did we close above it, or did we wick above it? Yeah, the body closed above it. And remember what I said? The bodies tell the story, the wicks do the damage. Was there any wicks doing any damage there? No, that was a full body closure above, super good momentum. It just closed above it, okay? So that's why I got in, all right? And that was my trade, right? And you can see I only target 1R because the overnight price action was, what do you think, this is a big or small range?
Large.
Yeah, this is a very big downtrend, guys. Do you see that? So sometimes when the overnight move has a big down or up movement, whenever we open for New York session, we tend to be choppy. So I want you to write in your notes, big overnight move equals choppy or sideways New York AM session. That is very important to understand. Choppy or sideways, they mean the same thing. I'm going to refer to choppy. I'm going to say choppy from now on, but it's sideways price action. All right. Yeah.
What did you say after overnight?
So big overnight move equals, yeah. Now you can put an arrow from the word big and say maybe like 300-ish plus points. So you're probably wondering, like, what's a big overnight move? Is it 50 points? Is it 2 points? Is it 400 points? I would say anything above like 300 points is pretty substantial, okay? What do we have less of overnight, do you think?
Volume.
Any other answers?
What do we have less of overnight? Do you know? What? Less buyers, which means less what? What? It starts with a V. Yeah, volume. I want other people to answer, you know. Less volume. Why do you think we have less volume overnight?
Because everybody's
Everyone's sleeping, right? Overnight is all the other sessions, like the Tokyo market and the Japan market. And you guys have to understand, America is the biggest economy in the world, okay? We're bigger than any other economy.
and then California.
The US, okay? Japanese is smaller than us, or the Japan market is smaller. The London markets are smaller than us. It's always less volume. People literally, like the time zone matters so much, 9:30 to 4, because people around the world are literally waiting for this time zone to do most of their work. That's why people in India stay up so late, because we literally run this whole world. Like our economy runs the world, okay? So like a lot of, people in India stay up and they work across the country with us during our time zone. So it just shows you how important New York is over these other overnight markets. Yeah.
So the S&P 500 and NASDAQ, they are made up of companies from all over the world, or is it just like?
No, just America. I mean, yeah, like it's just basically American company. Like, well, Nvidia is all over the world, but it's like,
Based in
yeah, it's based here, right? Same with Tesla, Nvidia, Microsoft, Apple, Google, right? So if we know there's less volume overnight, right, because there's not that many buyers and sellers overnight, and we get a giant move, do you think that's normal or not normal? Remember when I told you guys to draw the little chart of the volatility? Remember you drew like the equals high volatility or high volume and then low volume? Can you find that in your notes? I forgot what I had you guys do. It's somewhere in your notes. It was like this is high volatility and high volume. Might have been before that. If someone can find it, let me know.
Wait, what is it?
It was when I told you guys to draw like the high volatility and the low volatility. Yeah. You found it? Oh wait, you found it? Okay. So yeah, you want the trade and then low volatility. So when I told you to write those notes, what is the same? What it usually happens during low volatility? What do we have also low of?
low volume.
Yeah, low volume. Is that what you got too?
Yeah.
Right? Low volatility equals low volume. So if we're getting this giant move on very low volume, is this high or low volatility?
Low.
Okay, so I want you to compare this with what you wrote low volatility was in your notes.
No, that's high volatility.
Yeah, it's high volatility, okay? Because we're doing a lot of movement. Do you think that's normal or not normal?
Wait, it's overnight?
Yeah.
Oh, not normal.
Yeah, not normal. These big overnight moves cook the New York session all the time. It's annoying, but that's just, you have to be patient or you don't trade that day. If we're getting a 300 point, very volatile session overnight, it's just not normal, okay? Because we're moving a lot more on low volume. So it just basically means, and that's why I told you to write in your notes, like big overnight move equals sideways or choppy AM session, okay? And that's just something down the line you should remember. You're gonna experience it though, and when you experience it, that's when you're actually gonna remember it. All these things I'm telling you to write in your notes right now, you're not gonna remember, okay? Maybe some you will, some you won't, but what is the best teacher in life? Experience is the best teacher in life, not me just coming up here and showing you everything, okay? Never forget that. You gotta go through it to actually like learn it, okay? So that's that. How much time do I got?
An hour and 3.
Okay. You guys good so far? Any questions?
Should I buy a
remember, if you don't understand any of this stuff after the boot camp, if you can literally go back, or after this, you can go on my videos, which I'm not going to tell you guys my YouTube. I know some of you already know it, but yeah, like this is all going to be on videos. I'm going way more in depth here though, so, and I might upload this eventually in YouTube, but we'll see. Yeah, this is like a complete private session. Dude, like this is like, I could charge for the session you guys are sitting in right now. I could probably charge about 10K per person for what I'm teaching right now.
Yeah, actually, it's almost 10K to come here.
Really? Yeah, I could probably charge 10K and get like 50 people to sit here and watch. All right. Like y'all don't understand how much value this is. Why do you think I can charge that much?
Because you're the GOAT.
What? Because if they truly like benefit from what I'm teaching them, they'll make 10K in like a month.
Do we get a free ticket to next Friday?
What?
Do we get a free ticket to next Friday?
If you're here, hit me up, and if I have spots left, you can come in. All right.
Yeah, we leave.
Yeah, most of you are leaving, but if you're somehow here. All right.
Does it get high?
Does it what?
Does it get high?
Hype? Not really. I mean, sometimes, because we sometimes do like backtesting battles to see who can make more money in FxReplay. And then like some people, every single time they lose, it's just like funny. And then if they win, everyone gets hype. Like,
But does it get like Wall Street?
I mean, it depends. You know, I'll play music, and I don't know. It just depends, I guess. Depends on the group. London was pretty nice. Like, I did a meetup with London. A lot of my fans in London. There was like 90 people. It was super fun. They had a really good energy. But I did a meetup in New York City. Much more diverse, a little boring, you know. But it just depends.
How much is a ticket usually?
This one is $100.
It's not bad.
But I'm not like teaching all this from scratch. Like, it's kind of like I'm expecting them to know some stuff. Right? I couldn't just tell you what a fair value gap is your first day. You'd be like, what the hell is a candlestick first? You don't even know what a candlestick is. If you don't know what a candlestick is, can you know what a fair value gap is?
No.
No, because you need to know, you need the candlesticks to know what a fair value gap is, all right? So, never size up or down after a loss. If you guys lose $200 in a trade on a 50K account, okay, write this in your notes. Never size up or down after a loss. That's very important, okay? Bold that. If you guys lose $200 on a funded account, okay, which is a prop firm account, which I'll teach you about, okay, do you think you're going to try to size up next trade and be like, oh, I'm going to size up $400 now and try to get it back? Yeah, if you're a gambler. And we're not gamblers here. This is not a casino, okay? We are what? What's another word for traders?
Smart money brings.
Risk what?
We're risk managers.
We're risk managers, right? So if you ever go on a date with a girl and the girl's like, what do you do for a living? Be like, oh, I manage my risk for a multi-trillion-dollar market. All right, it sounds cooler. Okay.
Just say
I'm a road runner and risk taker.
Yeah, exactly. I manage my risk for $1 trillion market. So be like, oh, that's cool, all right? You'll get an instant second date. Works every time. So if you risk $250 and you lose, you're minus $250, which is your minus what R?
36 bucks.
About 1 R. If you're willing to risk $250, you're down 1 R. Okay. Now, if you take another trade because now you're scared. Now you're like, oh, I just lost $250. Do you see how you could be scared if you just lost money for the next trade? You'd be like, maybe I only want to risk 150. Okay. But then you win at a 1.75 R and you make $214. What's the issue here?
You're not making your money back.
Yeah, you just lost 1 R, and here you just gained 1.57 R. So should you be up 0.57 R?
we should sign up.
No.
No, you know what?
Should you theoretically be in profit?
Theoretically.
Yeah, but why are you not in profit?
Because you went there.
Yeah, you got scared and you took and you risked less money, and you're just like, yeah.
Like on a prop firm, is the money real money or is it?
No, it's fake money. But if you hit, like on a prop firm, if you have a $50,000 account and you make 3K, you can request a payout and they pay it to your bank account.
Oh,
yeah.
But they would pay you the 3K or what would they?
it depends. Some do 50% split, so you'd only get $1,500, but you'd still have the $1,500 in your account to trade with. So it's not they're not taking your money, but it's all different for different prop firms. So it's basically what it is. It's just a way if you're like broke to trade, you know, because you can't put $50,000 in an account. Okay. So now you're now to minus $36 because you risked two different amounts. Okay, that's where the math starts to just mess up. All right. So despite winning the second trade at a better than 1 hour ratio, sizing down made it overall a loss. Now, if you risk $250 and you lose $250, should you be scared if you have a good strategy that you've back tested?
No.
Why? Because you know you can like make it back.
Yeah. What did I remember? I said it was like the second day I showed you guys the equity curve, and remember I showed you all like the down movements in the equity curve, and I was like, I showed you the equity curve of money going up, and some days it went down, but I said to trust the process because it would go up long term. Does every equity curve you see in economics, finance, anything in life, does it just go straight up with no pullbacks? No. A healthy equity curve is up, down, but we're making new higher what?
Higher highs.
Higher highs and higher lows. That's a healthy equity curve, right? So if we know we have a backtested strategy that just goes up and we know it's going to work, which you ideally don't need to put the work in because I did for like thousands of hours myself, and this is what I'm teaching you. Then you need to just trust that if I lose $250, I'm going to still not be scared. I'm going to trust the statistics. I'm going to trust the data that I have and know like, okay, my strategy is profitable. I'm going to same size in the next trade. Now I went a 1.57R. I took a loss for the day, took a win for the day, and now I'm up $124 for the day. Okay. So the same trades, the same edge, and consistent sizing will make you more profitable than if you size differently. Okay. Again, is this more important or is the strategy I'm teaching you more important? This is going to be more important because this is all going to be the math. It's the boring stuff, but like, yeah, you'll get it. All right. So quick check. Let's say we risk $250 on trade 1 and we lose out of frustration because all humans have emotion and we'd probably be pissed if we lost $250. You only risk $100 on trade 2 and win at 2R. Okay. What's your net result and what should you have done differently? Okay, raise your hand for A. All right, raise your hand for C. Raise your hand for M.
Oh.
Raise your hand for D. Raise your hand for B. All right, good job. So the answer is B, right? $250, you have different risk and you lost more in one, right? You're not going to make the money back. Okay. Notice how you just noticed that though. You didn't notice that before. All right, so we're not going to do this right now. We already kind of did this. Actually, yeah, let's do this again. Why not?
Oh, and take a trade.
Okay,
But we can't go like.
I know you have to do this on TradingView again. All right, so now what we're going to do is we're going to get in groups of 3 and we're going to do some more practice with fair value gaps and just taking a trade and managing your risk. Okay. Now I'm going to add something to this. So last time we didn't do anything about the risk. Go in MNQ, okay, on TradingView, and find somewhere where you can risk $250 or $200, 200 to 250 doesn't matter. Nothing above 250, and tell me how many micros you could take on a specific trade with a stop loss in NQ or MNQ.
How do I find MNQ?
Just type in MNQ in the top left. So if some of you guys are in Apple, some of you guys are in different tickers, in the top left, if you go to that bar and type in MNQ,
Okay.
and then draw the risk reward tool for a trade in a fair value gap, okay, to a higher low, and tell me how many contracts you can take in that trade, you know, if it were to play out, and how much you would have risked, okay? Yeah. Testing. MNQ1. Yo. So find a trade, that tapped into a fair value gap. I gotta answer this question first, and then tell me how much money, like risk 200 to 250 bucks, nothing more, and tell me how many micro contracts you could have taken for that trade with a specific stop loss, maybe below or above the fair value gap.
How do you find the risk reward tool?
The risk reward tool is right there. It's above the paintbrush. It's right there.
This one?
Yeah, long position. So the risk reward tool is above the paintbrush. Yeah. Oops, sorry. Yep.
So where do I gotta go?
So long position right here.
This one?
Yep. Long position. And you're going to find an example with a fair value gap. Keep in mind, the indicator will probably help you identify a fair value gap, which you can probably use.
It could be any day on February.
Yeah, it could be any day. It doesn't matter.
Oh.
Any day.
Wait, we can't go back in time on trade.
What?
We can't go back in time on trade.
No, replay mode, it costs money. Just go back in time normally and just, it's going to be hindsight, but. Yo, where's LeBron going to go?
The Bucks.
He's not going to the Bucks. Absolute delusion.
He's coming to the Bucks.
He's coming to the Bucks.
Told me the
Okay. Anyone need help?
No, you're fine.
All right.
Low-key, I know that. I'm gonna go back to this for I think this is gonna go down though. Like,
What's up?
Right here.
What do we do now?
Draw out the RR tool from anywhere based off a fair value gap tap. Yeah, short or long, doesn't matter. And then tell me how much money, tell me how many contracts you could have risked in that trade.
Contract? Fair value.
Yeah, on MNQ. Remember, MNQ is $2 per point. Yep. Yeah.
Never mind. You'd have to come back. Cause I don't know. Where did right here? Oh, wait. What are you doing? Am I not doing
How do I
it
fund
right? Because it's supposed to be.
So your entries this is hindsight. Your entry should be a tap into the fair value gap. So here.
Well, wait. We didn't get a chance because we were looking for.
Right there. See how the wick comes into that fair value gap and taps into it? Put your entry like at the bottom of that fair value gap. Because that's when you're going to get filled, right? Exactly. And then maybe stop above the high, yep. And then TP wherever you want. And then tell me how many contracts of MNQ, you're in NQ right now, but it doesn't matter.
Well, we tried MNQ, but it didn't work. There is none.
You typed in MNQ up here?
Yeah, look. Watch it.
MNQ.
MN?
Yep.
Oh.
Yeah, right there. Boom. Yeah.
Bruh.
And then tell me how many contracts you could have risked there to make 200, or just that would not be over 250 bucks. What?
How do I find the contract?
I can't make a contract on here.
You don't find the contracts. You just got to know from the math I taught you.
I don't know.
$2 for micro. $2 per point. So see how many points a stop loss is, right? And see if you took one contract or one micro contract, which is $2 per point, how many that would be, right? So if my stop loss is, that's like a 30-point stop, okay, and I'm in one micro, that'd be 60 bucks per one micro. So if I took one micro, I'd be losing 60 bucks.
How's it 30?
What?
How's it 30 point?
You do the black number at the top minus the black number down there to see the point, the range. Right, that's the range.
What am I supposed to do from here?
The risk reward tool. Find an example of a fair value gap getting tapped into. Well, it'd probably go more left. Yeah, so maybe right there, right? You enter on this tap into that fair value gap and enter a short position.
Right here. Oh, I can't do it.
When we tap into the zone.
I did it.
Let me see. 160. So how many points is stop loss?
80.
About 80, yep. So 80 times 2 is $160. That's for one contract, right? So if I take one micro on this trade, I'm gonna lose 162. Tell me how many contracts you could take if you wanted to risk 250 per trade.
2.
So 2 would be what?
Like 1 point.
2 contracts would be how much am I risking if one contract is 162?
There we go. Okay.
No.
Yeah.
320.
Wait, did I do
So
this?
could I take that? Could I take 2 contracts if I'm only wanting to risk 250 per trade max?
Yeah, and then
No, so I can only take one.
We're on NASDAQ.
Got it?
Oh wait.
Yep.
Well, is this like the right way
I
to
kind
do
of got it.
it?
I kind of got
What?
it. Okay.
Like my risk reward is 2. Like.
Yep.
So this would be like the right way to do that.
Yeah, exactly. But did we tap into the fair value? We never tapped into the fair value gap. You're just saying, oh, I'm just long in here with no tap in the fair
So I
value
have
gap.
to do it down here, huh?
Find a tap into an old fair value gap using the indicator. All right. Yeah.
Kind of got it. Kind of got it.
Is this not the fair value?
So here's all the fair value gaps. So maybe you want to short from this fair value gap. Right. So draw a short position tool. You're on the long one right now.
Okay, hold on.
The short one. Maybe from that. See how we tap into the fair value gap and reject? So maybe that's something you want to take. Now draw the entry tool when we tap into that fair value gap. Right there. Yep. Nope. Down. Down. Hold down. Right. Down. Right there. Yep. When we first tap into it. Stop loss. You know, maybe a stop loss above all the fair value gaps, and then maybe that's your risk reward. Now see how many points it is for the stop loss, and tell me how many contracts you could take.
There's a tiny fair value gap right there.
What's the contract worth again?
$2 per point on MNQ, and then see how many points this is. It's about 81 to. So that's about, how many points is it? 29,081 to 29,940. How many points is that?
That's crazy.
Yeah, but the entry is when we tap into the fair value gap. So the entry would be when we tap in right there.
Yeah.
So we tap in.
Does this fair value gap right here work? This tiny little one right there?
It does, but we never tapped into it here. We formed it, we never tapped it. I mean,
Oh, but there's the other one right there.
yeah, but
Or I
price,
can
we
do it
never
here,
wick
no?
into it. No.
No?
There's no fair value gap here that we ever tap into.
Oh, okay. But okay.
We tap into this fair value gap, so you can take a short
So I
off
can
that.
take a short.
Yeah. How many points is it? It's this number minus this number. The range. It's just the range of that number. Can you do it in your head?
No, this map is kicking my ass. Hold on. How many?
Okay, so this one, where this blue guy
Yep. That's fine. It doesn't need to be exact. It's just ish. Okay, 140 points. So 140 points times how many points, how many dollars per contract is what? What's 140 times 2? 280. So how many contracts could you take on that trade if you could only risk $250? It's not a trick question.
Thanks.
0. Right? Because it's $280 risk if you were to take one micro here. Right? We'll keep going over more examples. So you got it?
So then if it's 20 points, right? It's that one minus that one?
It's the range of the stop loss. Yep.
So this here to there.
Yep.
So it's about 20 points.
654 to 6, yeah, about 20 points, yep.
So I can take 40, I can take 5.
Yep, exactly. Exactly. All right, anyone else need help? I'll keep coming around. I'm gonna go over a lot more examples after this, don't worry. All right, where's your entry?
Right here.
Okay, do we ever tap back into that fair value gap?
No.
No, so how do you be able to get in? I mean, so you're saying you just enter there, you're gonna be your entry.
Yeah.
That's fine, but we never actually tap back into the fair value gap. An example of a tap back into a fair value gap would be like
if like this wicked all the way up here, hit the fair value gap, and then rejected and went down again. And then that would be my entry for what I'm teaching you guys right now. Okay. Now, yeah. So how many points is the stop loss here?
13.
13 points.
13.5.
349 minus 337. Yeah. So about 13 points. So how many contracts could you take if you wanted to risk $250 per trade? How do you find that?
Should be like
Time. Don't forget to multiply by the 2. 27. So one contract would be $27 of risk.
Yeah.
How many could you risk for $250?
I can risk 9.
About 8 or 9. Yep, exactly. How you doing?
Really didn't really get it.
Okay.
I placed the thingy here.
Yeah, but we never tap back into that zone. Go to like, see here, see how we tap back into that? Maybe make that your entry. So when you tap back into that green fair value gap.
Here?
Up. Right there, yep, exactly. Boom, yep. And then that would be your play. Drag it over to find a stop loss for that, where you think a stop loss would make sense.
Here?
Yeah, yep, maybe at that low. So drag up the red. No, yeah, right there, yep, drag that up. Boom, perfect. Now see how many contracts you could risk if you could only risk $250 there for if it was MNQ. You're in Apple right now. So you have to go to MNQ and find an example.
Wait?
You have to go into MNQ. Over right here, type in MNQ. MNQ. Yep. Exactly. Yeah, same thing. How are you doing over here? Turn on the indicator. Do the indicator. Go in MNQ. No, right here. Yep, up. Yeah, that's fine. Type in MNQ. Good. Yep. Now, go to your indicators and type in fair value gap.
I did it for like.
How do you spell?
FAIR. Fair value gap. Yeah, turn that one on. The first one. Yep. No, you just don't click that. You just click it. Go back. Just click it. Yeah, exactly. Now X out. Now, find a position that is tapping into one of these fair value gaps. And like here, see how we tap into it and a bounce? Oh, click X. See how we tap into it and a bounce? That's going to be your entry when you tap into it, and then do the stop loss beneath, TP at one of these old highs above. All right? And then find out how much money you can risk in MNQ if it's $2 per point. All right? So you know where they get the RR tool? It's right there. Yep, exactly. Now place it anywhere. Yep, now make sure the entry, the R tool is at that zone. So move it down. Yep, exactly, down. It's inside the zone. We tap inside that green box.
Not really, because like.
Up. Right there, yeah, exactly. That whole zone. Now figure out how many points this is, the red zone, the red area. What's the range, right?
Oh, so this minus.
Yep, exactly.
It's like 700.
Yeah, that's like 700 points. Okay.
That's my school.
How many, if this is $2 per point, how many dollars would 700 points be?
Like, this is hard. I can
1,400. So if I can only risk $200 per trade, would I be able to take anything?
What?
So if I were only allowed to risk $250 per trade, would I be able to enter that trade if the risk is going to be $1,400 using one micro? No.
Because 1,400 is way higher. You're basically saying, oh, I'm now going to lose 1,400 on a trade instead of 250. That's bad. So what you need to do is you need to go to a smaller time frame. You're on the daily chart right now. If you go to the 1 minute, where the D is, the D, right there, and you go to the 1 minute, right there, right, that would be, you'll be able to find something, okay? So, how you guys doing over here?
He's got it.
All right, yeah, I see you guys not paying attention, so I'm not gonna try to help you, but, right there, okay, the entry would be inside the fair value gap, so right here, okay, see how we formed the fair value gap and then tap back into it?
Yeah.
Oh wait, you're doing a short. You're saying you want a short there?
Yeah.
So you want a short when we hit that high?
Yeah.
Okay, that makes sense. I mean, yeah, I guess. It's not delivering from a fair value gap, but it's still, yeah. So how many contracts could you take based off what you have right now? If you only wanted to risk $250, how many contracts, what's the max amount of contracts you could take? How many points is that red zone? What's the range of that red zone using these numbers but to the right? I'm just gonna draw this over. What's the zone? How many points is this zone?
It's times 2 for the.
No, this is just how much. What's the range from here to here? How many points?
It's like
about
50.
About 50.
Yeah.
So now, how many contracts? If you took one micro here, how much money would you be risking on this trade if it was 50 points? If you took one micro.
100.
Yep, $100 So what's the max amount of contracts you could take if you wanted to risk 250?
No, I gotta take it August.
Less than 1.
What?
Like 1.
1? Yeah. What would 2 contracts be a risk?
200.
Yep.
Oh.
So you could take 2. Now what would 3 contracts be?
300.
Yeah. Could you do that?
No.
No, because I said 250. Right? You good?
Yeah. Could you help me fix my graph?
Yeah. What's wrong with it?
I don't know why it's like up when I put it down. The other ones go down.
It's nothing's wrong with it.
Well, if you scroll to the side, like to the not the other one, look here. See, it goes like down here. Is that normal?
Yeah, it's normal.
Oh, okay.
You just go down like that.
Okay. All right.
Yeah.
So I just move it with my finger, right?
Yeah, exactly. How you guys doing?
Okay. I swear I didn't copy him, but I think we chose the exact
Yeah, you did.
position. I had a few questions about, like, if you have a fair value gap, like from here to here, that's a bullish fair value gap. Would you like short or long there? Like,
You wanna? I'm gonna teach you a long right now. Okay, I'm teaching a long right now. All right.
Okay.
But
Put long on that.
yeah, and you'd get stopped out.
Yeah.
All right. But that's. I mean, this works.
Yeah, I mean,
you're just not delivering out of a. I mean, you're totally delivering out of this fair value gap right here. I'll show you.
Yeah, like I was thinking, because there's a lot of liquidity around here, so you probably want a long.
Yeah, exactly.
I just find it hard to remember, like, if you'd want to long or short.
Yeah. See how we are in that fair value gap right there? Right, it just never breaks, so maybe that's why you shorted. Now, what's the max amount of contracts you could have risked?
I think there's like a gap 268 points, and each point is worth like $2.
That's not
right?
268 points.
260. Okay.
It says it.
Here, 750 or
Nope.
67?
67. You're using this.
Okay, so 67 points, and each point is worth 2. So I think 0 contracts.
By 0.
Or if you're trying.
If you took one micro and 67 points? What would that be?
Micro is worth $2.
Yep. What's 2 times 67?
130.
We can watch
Yep.
our own movie.
What's that times 2?
268.
Yeah, so could you risk 1 or 2 contracts? 1. Yep, because 268 is too much. How you guys doing over here?
Oh, great.
Okay. You got the indicator on? No, you don't. Okay, go to indicators. Type in fair value gap. Right there. Click that. Oh, go back. Yep, exactly. Turn that on so it identifies a fair value gap for you. Yep, exactly. Now find a position where you tap into one of these red zones, and then that's where you take your position.
Are you gonna buy one of the prop accounts?
So yeah, it's got to be over here. Cause see how we're tapping into them here? Yep, exactly. Up. Where's the entry point?
Not with the one you're talking about.
The entry point is between the green and the red. Okay. So the entry would be when we tap into that red zone. So move this line to when we tap into that red zone. Yeah. Delete this. The entry point would be here, and then stop loss above the old high. Maybe take profit right here. So that would be it. All right. See how the entry point is when we tap into the red zone. Now, what's the max amount of contracts for this? How many points? First of all, how many points is the zone?
Here.
Yep. How many points is the red zone?
21.
About 21. If I took 1 micro, how much risk would that be if it was 21 points?
1 micro is $2, right?
Yep.
$42.
$42. How many contracts could I take if I wanted to risk $250? You do about 6. Exactly. Good. You got it. So I could take about 6 micros on this trade. Right? So, yeah. How are you doing? Oh, you together? Good. How you doing?
I'm doing.
You kind of got it. Yeah. So that's a trade you want to take, right? You'd be risking 130.
Yeah.
You could actually, so you couldn't go 2 contracts. Why?
Couldn't go 2 contracts because
How much would that be?
Is this like mini?
Yeah, this is micro. So 1 micro, you're risking about $130 right now. If you went 2, how much would that be?
That would be like 260.
Exactly. And if I said you can only risk $250, is that too high?
Yeah.
Yeah, so you can only go 1, and that'd be $130. Get it?
Yeah.
How are we doing?
Great. I'm trying to make a trade.
Are you just practicing for the rest of the class?
What?
Are you just practicing right now for the rest of the class?
No. It's like half of you guys get it, half of you guys just have no idea. I'm gonna need to explain more.
That one night I did it there, I was like I could see the vision.
Yeah.
Just because it like closed.
I did it.
Yeah.
I'm already winning, so I dropped my stop loss. Is that good?
This one's gonna bounce off.
You dropped? You mean you raised it, or you dropped it to break even?
Yeah.
That's good. That's good.
It's gonna bounce.
But I low-key think I'm not gonna win on this trade.
So you think that we're gonna reverse on this fair value gap?
Yeah.
Because of the change of character and a fair value. All right. So yeah, now draw the RR tool.
So you think the mortgage can go down right here?
Right here, I mean, I don't know. I would need to see more context, but as of now, yeah. Now tell me how many contracts you could risk. Put your stop loss above the fair value gap. Yeah, a little higher, just to remember the wicks can do the damage.
Yeah.
So how many points is that red zone?
120.
120 points?
30 points.
Yeah, about 30. If you're on micros, how many micros is 30 points for, or what's 1 micro 30 points?
1 micro, 30 points.
Yep.
60.
$60 per micro. How many micros could you take if you wanted to risk $250?
I could have taken up to 4 micros, but I only took 2.
Yeah, that's fine.
That's good?
Yeah.
Okay. Wait, how do you put the number of micros you want in?
You're not logged into paper trading, so you can't. But usually there's a buy and sell button in the top left.
Is that 125?
125 micros?
Wait, yeah.
No.
When? the points. I don't know how many points it is.
You said it's 30 points.
Oh, 30 points.
Per micro is what? One micro, 30 points is how many dollars for the stop loss? 60.
So 250 divided by 60.
Exactly, about 4. So you could take max 4 micros there. How's it going over here?
Good.
Hi.
Okay, I did 2. So
Okay.
this one,
Where's your fair value gaps?
here.
Yep, right there.
And-
But see, draw this fair value gap for me.
Oh my god, wait, where did mine go?
Right there, yep, exactly. Draw that out. The entry would be when we tap into that. So your entry is wrong.
Okay, where would I put that then?
The top of the fair value gap. The entry goes to top. Yeah, right there. Boom, right there. And then maybe stop loss below, maybe TP higher. So maybe stop loss a little below. Stop loss is good. Just do your TP higher.
Okay.
Yeah, right there.
Wouldn't this be where there's stop losses?
Yes. However, these are very strong candles. So I would say we're probably gonna go higher than. This doesn't look like a liquidity sweep to me. Does that make sense?
Yeah.
A liquidity sweep is a lot more weak wicky candles.
Okay.
So how many contracts could you take in this trade if you wanted to risk $250?
I could do 2.
Why? Because 60 times 2 is 120 times 2 is 240?
Yeah.
Okay, why is it a 60 point? So you're saying the stop loss are 60 points? It's the size of the red zone.
Oh, okay.
If this hits,
So
There you go. Yeah, about 25.
okay. So 50.
Yep.
So I could take 4.
4. If you want 5, that's 250 on a dot. That could be like a little risky, but 4 is good. Yeah.
Okay.
What do you got?
Wait, for the like points, is it for the red thing or the
Yeah, it's just the red thing.
So could I take 2 or 1 micro then?
860 minus. How many points is this red zone? 860 minus 740. Yeah, so about 1 micro would be how much risk? How much risk would that be? 1 micro at 121 points would be.
Like $2?
Yeah. So 1 micro. Yeah, 242. Exactly. How are you guys doing?
Great.
Okay.
What is the math to it? Because I missed the
It's
first
$2 per point.
$2 per pound. Okay.
So find the area of the red zone.
It's 250.
That's 250 points. There's no way.
No, it's not. I added them together. I minus them and then I multiplied.
777 minus 705. What is that? How many points is that?
I calculated it. It summed up to.
I mean, you can do that in your head. What's 77 minus 7?
7.
Yeah, so this is about a 70-point range, right? 28,777 minus 28,705 is 70 points.
Okay.
All right, so that's 70 points. If I were to take 1 micro at 70 points, what's the stop loss? If we know the conversion is 2.
Times 2. So 70 times 2. 100.
Yeah, so per 1 micro, this is going to be about $140 of risk.
Okay.
Now my question was, if we can only risk $250, how many contracts could you take? If we know 1 is 140,
Yeah.
what's 2? 280. Could you take 2 contracts if I said 250? No. How many do you take? 1, exactly. How are we doing?
Good. Yeah, I'm on right now.
You getting it? Okay, there's your tap into your fair value gap right there. We never tap into this fair value gap here. See how we never tap in? We just form it, then we keep going up. So, but let's just say you got in anyways, okay?
Well, what about the market structure shift?
Yeah, let's say you got in, yeah, that's fine. You got in off the market structure shift, all right?
Wait one second. All right, let's say you get on and off the market structure shift. What would your risk be here?
I did 2R there.
I don't know, that was a good one, kind of.
How many points is this red zone?
Have you ever seen the video of the guy like
78.75?
Yep, so let's say that's about 80 points. If I took one micro and I knew the stop was 80 points, how much money is that?
160.
Exactly. So if I took one micro on this play and my stop loss is here and it hit the stop, how much would I lose? 160. If I want to risk 250 bucks, how many contracts did I take?
One only?
One only, yeah. Because 160, if I took another one, that's 160 times 2. How are we doing over here? All right, so there's your fair value gap. Where's your entry?
I went in up here.
Okay.
And then I
so you went
closed
in
the stop loss.
Okay, and then you made it to break even. Now, what was your initial risk?
My initial risk was
how many points?
I think it was 75.
75.
So I can only do one micro.
So, okay, 75 times 150. Yeah, exactly.
I wasn't sure where to put it.
Maybe above all the fair value gaps. Yeah, that's good. That's good. That's good.
So that's why you wouldn't do 250. We got 2 red
How many? We got 20 minutes, right?
12, 1. No, the market hasn't closed yet, has it?
No.
What's that? We're gonna make some money, baby. I have it like that. I don't like it.
All right. So let's gather background here. All right.
Hold on, I'm about to hit
Dude, you're about to hit TP?
I'm about to TP, bro.
Nice.
I'm about to make 500 bucks.
All right. I guess I'll just wait for everything to quiet down.
Have you ever seen like the horse racing videos?
No. Bro is doom scrolling to the max. All right, so listen up. Half of you kind of got it, half of you didn't, which is fine. Okay.
Is that the half that will and won't make money?
No, some of you guys, it's just hard. Like, this is all new terminology to you. I think the terminology is the hardest part for sure. But yeah. All right, I want you guys to, I think I'm gonna play like a day trading strategy video using fair value gaps and market structure. Every time, dude. Day trading strategy using market structure and FEG. All right, guys, watch. I'm gonna play a video. After this video, we'll talk about it for 5 minutes, then you can go. But watch. This is going to be, definitely take notes on this video. This is going to be a legit strategy with what I'm trying to teach you with fair value gaps and market structure shift. All right? Are you guys ready? Raise your hand if you're ready. All right, raise your hand if you're not paying attention today. I know there's a few of you. All right, they're lying to us, but it's all right. Okay, ready? Watch this. This is a legit strategy. So go on a new page and write example of day trading strategy. You know, buy, sell, stop loss, everything. All right?
This FPG strategy consistently gives me days like this, this, and this, and I'm about to show you exactly how. I've been trading for 9 years, and in that time I've tested hundreds of complicated strategies, and this is one of the only FPG strategies that actually works. And today I'm going to teach you the full strategy, and then we'll do a 1-month back test to prove to you that it works. Let's hop right into the strategy. The goal of this strategy is to make consistent profits in less than 90 minutes per day. And to do this, we're gonna get to our desks right at 9:30 a.m. EST. This strategy works for any market, whether it's futures, stocks, crypto, or Forex.
What are we trading? Futures. Okay. Y'all know what crypto is. You guys know what stocks are. Forex is like another market.
You use the same time for each market. There are two ways that you can use this strategy depending on whether you're scalping or day trading. And knowing when to decide between the two is what separates profitable traders from the unprofitable traders. If you aren't aware already, scalping means catching quick and small moves and taking a lot more trades. And then day trading is catching bigger moves and taking less trades. First, we're gonna
You guys remember that? Day trading versus swing trading versus scalping, right?
go over how to scalp using this strategy. For step one, we're going to identify our key levels. Now, this part is stupid simple, but if you mess it up, everything else will be wrong, so make sure to pay close attention. We're gonna start on our 5-minute chart. Now, to get to this chart, you're gonna go over here on trading.
All right, I'm about to walk out of the room. Please don't stop paying attention. Keep taking notes.
View
All right,
and
I'll
click
be
the
right back.
5-minute button. This means that each candle you see represents 5 minutes of trading time. Next, we're gonna wait for the first candle of the day at that 9:30 time to print, and then we're gonna mark out the high and the low of the first 5-minute candle. To do this, we're gonna go over here to the left-hand side of the screen on TradingView and select the trend line tool, and then we're going to mark out the high and the low of that first 5-minute candle that happens at 9:30 to 9:35 a.m. Eastern Standard Time. But in order to find good trades, we need to know which way the market is going to move, which brings us.
So step one, he marks out the first 5-minute candle, 9:30 to 9:35. Right? That's like part of a legit strategy. All right. Now, this is not the strategy you're gonna end up using, but it's good to know different strategies. All right, I'll be right back.
But in order to find good trades, we need to know which way the market is going to move, which brings us to step two, confirming the market's direction. For step two, we are going to switch to the 1-minute chart by clicking this 1-minute button on TradingView. And once you're on the screen, each candle represents 1 minute worth of trading time. Next, we're going to wait for a break of the level, but we need a fair value gap. Simply crossing through the level.
Wait, look.
Whether it's a
Is that a weak or strong break? Weak. Why? Yeah, it just wicks above. Remember I said the bodies tell the story? If the body closes way above it, that's strong. All right?
wick or a candle closure just won't cut it. As you can see, the market rather quickly. target a fixed 2-to-1 return. Now, I know what you might be thinking. Why less than the scalping strategy? But wait till you see the back test and you'll see exactly why I chose this target. Now, as you can see, the market traded into the fair.
Is targeting just a random 2-hour level good or bad? Yeah, not great. But for this strategy, it depends on the strategy, right? Overall, it's bad. I mean, for this strategy, it might work.
Value gap, which
how would he know it might work? Because he tested it, right? He went back in time at FxReplay and tested it, right? And he has the statistics on it.
Into the trade.
Do you see how he's entering off the retracement into the first? What is this? Oh, yeah, I just said the word. Retracement. Yeah, retracement. Okay, that's one of the ways the market moves. What is this?
A strong candle.
Based off the 4 ways the market moves we talked about yesterday. There's retracement, consolidation, expansion, and then what was the other one? Reversal.
Reversal. This is a reversal, though.
So it's kind of both. It's expansion and a reversal, technically. Okay. But for those who are trying to draw the RR tool, do you see where to draw the RR tool now a little better? Some of you are just drawing it at spots like we weren't even tapping into fair value gaps. You were just drawing it. Okay. I would say about 60% of you did not draw it right. But he's drawing it when you retrace back into the fair value gap after what? After what? After retested, but what is this basically? Or what is this basically? No? When we break this level, what is this? So do you think this is a liquidity sweep or the other one? There's two. Remember, a liquidity sweep is very weak over the high. It's a MSS, market structure shift. A stop hunt would be more like if we just wicked above here and then went down. Make sense? That would be a stop hunt. Okay, and all goes back to the thing I explained about orders.
Have a nice move away from our entry. For this trade, we risked $945 to make $1,900. And the one thing that isn't different about this strategy from the last is that you don't need to micromanage your trades, and you can just sit back and let the market do the heavy lifting for you. Now, I want to be clear that every once in a while, you're going to have the market come down and revisit the fair value gap. That's totally fine. Don't freak out and close your trades. Just trust in the system. Now, this trade took 35 minutes to play out, and remember, it made $1,900. Not bad for 35 minutes if you ask me. Now, I know you're probably thinking, well, Casper, when do I trade the scalping entry versus the day trading entry? And my answer for you is the only way to know for sure is to look at the data. So let's go over to the back test and put this strategy to the test. But before we get into the back test, I need you to take a look at this disclaimer. Now that we've got that out of the way, let's take a look at how the back test turned out for both strategy entries. Let's take a look.
What do you notice about that equity curve? It's settling up, but is it making, what type of trend is it? It's up, it's higher highs and higher what? Lows, yeah.
Look at our...
You can see, like, it goes down. It's going to be red some days, as you can see by the downward movement. But over time, this is something where you trust it.
5-minute first candle scalping entry first. It netted $10,950 in our back test with a win rate of 70%. And now taking a look at our 15-minute first candle day trading entry, it netted $15,400 with a win rate of 81% over 16 trades. So, to answer the big question, how do you pick which strategy to use? Well, here is how you're going to decide. If you have blown accounts before, or if you struggle with emotional trading, then use the day trading approach. It's more forgiving and it has a higher win rate. And yes, as you've seen in the backtest, the scalping works too, but it requires split-second decision making that most struggling traders aren't ready to make. So congratulations, you now have a powerful and proven strategy. But chances are that you've had great strategies before, and yet you're still not profitable. Now, the reason that I know this is because I used to be in the exact same.
All right. Wait.
In this system.
There's where he sells his course. Okay. So, what do I want to say about that video? So yeah, that's just an example of a strategy, I guess. You know, waiting for that market structure shift and then a retracement into what? What's he waiting for the retracement to? Back to the fair value gap. And then what is he doing inside the fair value gap?
Well, when it hits the fair value gap, it's not going to go past the fair value gap.
Yeah, but what's he doing when we retrace into the fair value gap? What's the strategy?
Long position.
You take a long position or you buy. Okay, so that's just an example of one day trading strategy. When we get back, we're gonna I'll go on FxReplay again, and we'll try to find examples like this. Okay, so yeah, you guys are good for now. I'll see you guys in 2 hours. All right, ready? FEG, imbalance, fair value gap, inefficiency, all equals the same thing, all right? Raise your hand when you have this written down. Okay, raise your hand if you need more time. All right. All right, ready? Let's see if we can find the trade here. So we have our down close candle. Are these are considered death candles, right? They're really big. It's very weak. So now what I'm going to do is I'm going to place order. What percent of my account is good to risk? Maybe
0.5.
About 0.5, right? Which here it's going to be $500. So we're going to put a sell limit up there. And if we retrace there, I'll take the entry. Now, let me ask you guys a question. If we don't retrace here and I don't get filled, what do I do?
Wait.
Pretty much wait, yeah. I don't do anything, right? Let's see. Okay, we got filled. See what happens. Sweet. Now, if you were in this trade right now, how might you be feeling? A little nervous, so emotional. Because is this good or bad price action? Bad. It's very bad, it's very choppy. Why is it bad? Because there's no very easy trend to identify. Okay. Might now be a good time to maybe do what?
Bring down your stop.
Bring down my stop. Why would I want to bring down my stop here? It's a downtrend. Theoretically, if I'm right about us going down, should we go back up? Probably not. Okay. What type of candle is this?
Anti-Drake candle.
It's an anti-Drake candle or a death candle. It's a very big candle. If I'm right, we should just keep accelerating or going downwards. Okay. Would I be confident in us going downwards on this candle right here?
No.
Why?
Because it's a hammer.
This is actually not a hammer. We didn't talk about this candle. Does anyone know what this is called based off that one homework?
Doji.
It's a doji candle, yeah. So if you guys did candlesticks, this is a doji. A doji means indecisive. Type in, say doji candle is an indecisive candle. So draw this out. It's basically when we open and close to the same area and we wick above and below on both sides. Okay? So a doji candle looks like this, right here. It's like a T. The body's just very small, all right? So sometimes we literally open and close at the same exact price. Is this a candlestick, yes or no?
Oh, yeah. Yeah, because at least there has to be at least one. Man.
Yeah, it is a candlestick. Because if we open and close at the same price, it's not gonna be green or red. You ever thought about that? So that's what we call a doji candle. Could a doji candle still look like this? Yeah, technically. It's all it is it's a battle between buyers and sellers, and who's winning on this candle? Who? You're saying buyers are winning on this candle? Who's winning on a type of candle like this? No one, exactly. No one's winning. It's just, that's why we say doji candle equals indecisive. So let's see what happens here. So I now have all the risk off the table. I'm currently up $310. My TP's at about $949, okay? Okay.
Oh, we got stopped.
No, not yet. It came super close, but it never hit. And boom, stop the break even. So now we're out of our position for break even. I never actually moved the stop loss, but we're out of our position for break even, okay? And we lost no money. So we just move on to another trade, okay? So yeah, I mean, that was a good play. All right, so we're gonna go to the next day and do the same thing, all right?
You did a sell order on a short, right?
I did a short. All right, what's the first step we do? It's a 9:30 right now. What's the first step for the strategy? We have the first 5-minute candle, it's 9:30. Yeah. Mark the highs and lows, yep. So we're gonna mark the high of this candle and the low of this candle. What time frame do I go to now?
5 minutes.
I'm already on the 5-minute.
1 minute.
Yeah, 1 minute, because we're scalping, right? Now, what am I gonna do with this 1 minute high and 1 minute low? Yeah, we're gonna wait for one side to break and then look for what? A fair value gap, right? It looks like to me that we just have a market structure shift here. Do you guys agree?
Yes.
Right, because it looks like we formed a high, lower low, lower high, lower low, lower high, lower low, oh, and then boom, strong candles to the upside. So I'd almost bet that this little fair value gap might hold. All right. Okay, we broke to the downside. This didn't hold, but that's okay because that's not the strategy, right? We're only doing the strategy. What happens if I say, it looks like this fair value gap is going to hold. I'm going to long out of it.
No.
Is that part of our plan for the strategy? No. The strategy is we mark the high and the low of the first 5-minute candle at 9:30 Eastern, or which is 6:30 Eastern for you guys, which that sucks because you're going to have to wake up early. And we wait for either to break. So do I care about anything in between these two lines? No, we just wait for because that's not the strategy. We have to wait for the trigger. So we're on the downside. Is this a break of structure, or is it more of a liquidity sweep? Yeah, it's more of a liquidity sweep because the body of this candle isn't going way down yet, right? It's kind of weak, all right? So we're just gonna wait. All right, there we go. So we kind of got there. Okay, boom. Look, fair value gap. Is this our strategy? Yeah, so we're gonna take that play, we tap into the fair value gap, maybe stop above this high, and we're gonna target this low right here. Why this low?
Yeah, because
Yeah, that's where all the stop losses are. But why might the stop losses be at, this low, but not this low?
Because
Wait, don't answer. Let's see if someone else can get it. Why would the stop losses be at this low, but not this low? It's more obvious. Are there still technically stop losses here in liquidity? Yes, but yeah, we've already kind of ran them, right? We want to go for the major obvious points, right? So this is a very good point. If I back up all the way over here, that point's going to stand out to me 100%. If it doesn't, you're blind. Go get glasses. All right. Now let's see what happens here. So we took our short there, okay, and we got stopped, okay. Now if we get stopped there, should we be mad? No, because we're just following the strategy that this video told us. And how do we know if this is going to be profitable over a long time? What? Yeah, we tested it, right? The guy said if you take 20 trades using the same strategy, it's profitable, right? So, our equity curve may be on a down slope right now, right here, where we might be negative. Over time, we're going to gradually see it go up. So let's just keep doing some examples and seeing if we can be profitable, all right? Now, if I take that loss, and that's the 5-minute candle strategy that we just talked about, theoretically, should I keep trading for that day? Or should I wait for the 5-minute candle the next day? Why? Why can't I keep trading? If I'm trading the strategy, why can't I keep trading?
Because we're scalpers, not the
Yeah, because this specific strategy, we need to wait for the 5-minute candle. There's no more market open that day, so we just wait for the next day. So I'd end the day down $300 and I'd stop, and that's it, right? And you just have to accept the loss.
Do you do that?
What?
You don't do that.
If I end the day, yeah, if I take a loss, I'm done, dude. If I lose 1,000, 2,000, I just stop. If I lose 10,000, I stop. Yeah.
If you just did this in addition to your other daily life, how much would this be a profitable thing to add to your normal work day? Would it be worth getting up and going through the motions to do this every day in the morning?
Yeah, that's what I do for the last 7 years.
So you do one trade a day?
One trade a day, yeah.
Is that what you've always done?
Mostly, yeah. Max 2, but mostly 1. Today it was 1 and done. I was done after 1 trade. And then I get bored. I don't know what to do. So that's why I teach here, because I don't know. Sometimes I get bored. This is like a side quest for me. Literally just side questing. So we're going to go to the next New York session. Now, first step, we're going to wait for the first 5-minute candle, right? Boom, 5-minute candle. Mark the high. Mark the low. Okay. Now we're going to go to the 1 minute. We're just going to see which way we're going to break. Okay, we broke it to the upside first, but when you say, first of all, is this a swing high? Why not? What's the definition of a swing high?
A swing high is swing high is like this. So it'd be.
I want the definition of a swing high. When we swing high, what is actually?
Highs and lower low. Oh no, higher highs and lower.
It's a formation of 3 candles. What are those 3 candles?
Red.
Red.
The color doesn't matter. We might have to have this for, yeah. What do you say? No.
Is it stop loss?
No.
Wait.
There's a 3 candle formation that makes up a swing high, and if you don't already have this in your notes, you should.
Swing high, so it's a higher.
Yeah. Wait. What do you say?
It's 2 of the same, and then one of the other ones on the bottom.
Yeah. Okay, that's it. But what's actually happening on these 3?
Higher high, lower high.
Exactly. Boom.
Wait, what did he say?
Higher high.
You already said that? It's a high, a higher high, and then a lower high.
Yeah.
Right? So you should have this in your notes, but a definition of a swing high is, remember I drew out the triangle formation right here? This is the swing high at the top because we have a higher high or a high We have a high, higher high, and then what would this be labeled as? LH, lower high. This is a swing high right here. That's the definition. So write that in your notes, equals swing high. What do you think is going to be more important in the market? A swing high or this type of high right here? Yeah, swing high, because the swing high is the mountain what? The mountain top. Yeah, it's like the top of the mountain, which that's always going to be your most important level, right? So is this ever putting in a swing high and breaking it? Yeah.
That's short.
Yeah, but like, is this a swing high? Why or why not? This right here, is this a swing high?
No, because the wick is still higher than what.
Yeah, because it's not the high, higher high, lower high formation. Yeah. Is this a swing high?
Yeah.
You say yeah. Any other? No? Why not?
Doesn't there have to be 3 candles?
Yeah, because there has to be a third candle. We don't know what the next candle is going to do yet. All right? We don't know what that next candle is going to do. Now would it be a swing high? Why not?
It's not a higher level.
What? Why would this not be a swing high?
It is a swing.
It is a swing high. Because we have a high, higher high,
And a lower high.
lower high.
That's all that matters, right?
That's all that matters.
So it doesn't matter how low it is.
No. It could be way down here. Yeah. Now, what would be the better point to probably draw for the breakout now? Probably right here, right? So now if we got a fair value gap above this or this, that would probably be it. Do you see how that's becoming discretionary, and that's not mechanical. That's like me just having common sense. I would rather use a swing high for like a break with a fair value gap than not a swing high, okay? So even though the YouTube video said, oh, use a swing high, this is where you start kind of thinking about the market a little bit more. So let's see, which one do you break first? Are we doing anything right now?
You have an anti-break.
Why not? It's still indecisive. We're still between both levels. Okay, let's see if we get a fair value gap. This more looks like a liquidity sweep to me. Do you guys agree? Yeah. We didn't really go that far below low, so we're just gonna wait. Okay, kind of a better candle. There's still no fair value gap though. So I see how there's no fair value gap here. Yeah, like I'm not gonna take a short. See how these gaps are getting closed down? Right, it just doesn't make a fair value gap, so I'm just not gonna do anything. All right. Okay, now we didn't get a trade down there. Now we broke that previous 5-minute high. Is this a strong or weak type of break? Yeah, pretty strong, because these are pretty big candles. So now, low key, I'd probably look to long here. You guys agree? Right, because we kind of broke out of that first 5-minute range. Am I going to put the entry position here? 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 Yep. Why here? Because that's where the fair value gap starts or begins. All right, so I'm going to put an entry there. And then it looks like, what's the most obvious high here? This one? This one? Yep, this is the highest high in the range. That would be the one I'm probably going to target. So if we pull back into here, I'll get filled. If we just keep going up, I will not get filled. Okay? And I'm going to get, this one's about a 1.16 R. Why do I not just go for a 2R here? Yeah, it's above the high. And does the market actually, does this level when we're trading have any meaning to the market? No, this does though. That's where stop loss are, right? So if we pull back, I'll get filled. If not, I won't. Okay, boom, I got filled. Let's see what happens. Stopped out again, okay? And that's where it gets frustrating, guys. All right, this is where it gets frustrating. Now, if I go to the 5-minute chart here, What do you maybe notice? Choppy, but there's something else here. What did we just form in the 5 minute?
A hammer.
What? A hammer, but there's something here too. There's another fair value gap. Is this fair value gap breaking? No, it's not. It just wicked below. See what just happened? So I got stopped out on the 1 minute time frame, but we still held the 5 minute fair value gap, just as the video said, and we end up going way to the upside. All right, and we hit that TP, which was the high, remember? So any thoughts on that? Any questions? So basically, what I'm trying to show you is the 1 minute time frame had these two fair value gaps here. Okay, so you might put your stop there. But let me ask you a question. Do you think that this fair value gap here and this fair value gap here are more or less obvious than this fair value gap here in the 5 minute? Yeah, that's less obvious. So the 5 minute is more obvious, right? So in this situation, I'm still going to probably enter on the 1 minute fair value gaps, but where should I base my stop loss? Probably based on the most obvious fair value gap, which is going to be this 5 minute, right? And again, it just goes back to the obviousness of how price moves, right? And who's creating this type of candle, an institution or us?
An institution.
Yeah, an institution. So there's a lot of leftover orders in here, right? It's an imbalance. It leaves a gap in price. And I'd probably only get out of this position if we got a death candle or a close below that fair value gap. That's just me though, okay? So that, for me, would have been a winning trade, okay? The one before would have been a break-even trade. So far I'd be 1, 0, and 1, okay, for me. But this is where it starts to get discretionary because all of you are going to see this different, okay? And this is why I have to practice. Now let's go to one more session, okay? The next session here. Okay, ready? 5 minute chart. Okay, mark out the high and low, the 5 minute. First candle right here and right here. All right. Can anyone remind me why am I doing it on this candle and no other candle?
It's the first 5 minutes of the session.
Why am I marking out that first 5 minute candle where I am at 9:30?
Because we're identifying the key levels.
No?
So figure out where the market's going.
Yeah, but what's 9:30?
The time the market opens.
That's literally the time the stock market opens. Okay, what do you think we have the most of right when the market opens every day? Don't answer. Anyone? What do you think we have the most of when the market opens every day?
Like volume or volatility?
Volume, exactly. Or volatility, exactly, same thing. Right, usually when we open that first opening candle, we have the most volume because there's just an influx of orders trying to get filled from putting all their orders overnight. If you didn't know this, but basically before the stock market opens at 9:30 a.m., people can literally place orders, and basically how they place it, they'll all execute right when 9:30 hits, and that's why 9:30 you'll see, jumps in price immediately. Okay, so we're on the 5 minute. We're gonna wait for the 1 minute now, or maybe a swing high. Actually, we'll wait for a swing high to be put in. Okay, no swing high yet. No swing high, no swing high. We're just not going to do anything here. Okay, boom. We finally got a swing high up here. So I'm probably going to use this in the 1 minute. I'm only looking for a scalp. So let's see what happens. Okay, we broke above it. Are we breaking above this with strong or weak momentum? Yeah, pretty strong, right? We're kind of just blasting above it. So I probably look for a retracement to some sort of fair value gap. Okay, maybe right here. You guys agree? You like this? Yeah. So we're going to do entry there, maybe stop here, and then target this high right here. Okay. It kind of looks like we have a trend line here a little bit, right? So we have stop losses here, here, and here. What's this called? Starts with the C. Yeah, it's like a cluster of stop losses, right? So if we now retrace back into that fair value gap right here, I might take that position. Okay, let's see what happens. Okay, there we go. Now I'm gonna kind of see what happens here, but I still want to exit the position here, and I'll tell you why. Okay. Why do you think I didn't exit the position this time like I did before? Even though it technically hit my stop loss in the 1 minute, why do you think I didn't exit yet? What? Yeah, because you're running into a 5 minute. There's a more obvious gap on a higher time frame. Look at this. If I go to like the 3 minute right here, we also have a fair value gap here. What do you notice happened on the 3 minute time frame here? What do you notice? What are the wicks doing?
They're going below the fair.
Yeah, they're going below the fair value gap, but did the body ever close below it?
No, but we're getting stopped out.
Yeah, so that's why I wouldn't actually have my stop loss there. This is where it comes to discretion, like what's happening in the market. And if I know there's a 1 minute gap, but there's also a 3 minute gap here, I'm realistically not going to stop out of this trade unless we kind of get more of a bearish signal or bearish trend change, which I just didn't see, okay? And when we keep holding this gap here, that's a bullish sign. So I'm not going to get out yet, all right? Now, do you think it's a good idea to maybe move my stop up to break even now? Yeah. What do you think? Yeah, raise your hand for yes. Raise your hand for no. Okay, it would probably be a pretty good idea. All right, I'm already in profit. What is this, bad or good price action? Yeah, pretty bad. It looks like we have a trend line that we just broke out of there and a trend line we just broke out of here. If I'm right, should these trend lines be ran pretty quickly? How do we know that though? It's what the market does. But have we already seen that a few times based on examples I showed you? Yes. So now you're building screen time to remember that. All right. So if we're starting to break out here, we should not go back down. All right. And if we do, it's probably going to hit the stop loss anyway. So I'm going to move myself to break even. Okay. I get stopped at break even. Now let's just see what happens. Boom. We would have gone down way further anyways, and it would have hit my stop. So I just saved myself from losing money there. Okay. Now what's funny is this is actually my entry strategy right here. Let's see if this works. Yeah, so that's my entry strategy. That's where I would have entered. All right, and do you see how it instantly goes to the TP? All right, that's why I'm good at what I do. That's why I make so much money, right? Because again, I'll get to my strategy, but that's how I would have entered. Why do you think I would have entered there? There's two reasons.
There's the fair value gap right there.
Where's the, okay, come up, someone come up and point to me, point. Who thinks they know why I would have gotten in there? There's three reasons, there's three confluences here. One is regarding the target, one is regarding what's happening within the trend, and two is and the three is the actual entry model. What's my entry model? So you come up, you seem to know.
There's a trend.
Try to point out to it here actually. So come over here. So what's the first confluence you might see that might tell us price might go up?
We have a fair value gap right here.
Okay.
That way.
A fair value gap where?
Right here. Like we have a Drake candle.
Okay, so a bullish fair value gap right here.
Yeah.
Now can you go on my computer and draw that real quick?
Yeah.
So go draw that fair value gap.
Have somebody else do it.
No, you're doing it. Right. Okay. So you have a fair value gap right there. Yep. So why would I get in if we didn't touch back into the fair value gap?
Because it's like more obvious now, because then the price is just going to go up if we're not Going into the fair value gap?
Yeah, but this has to do with the trade I took this morning. It was very similar to the trade I took this morning. Remember the trade this morning?
Yeah.
Does anyone get to where I'm going to? You see it? You want to come up?
Close above the fair value gap?
I don't know. Come draw it.
Come draw, bro.
Come up here.
You got this one.
It's exactly like this trade I took this morning, all right?
What did you do this morning? This is why we're roommates.
I think I know.
So draw what you think. Draw why you think I got in. With a rectangle.
Well, this one right here, like closed way above the gap.
Okay, draw the gap you think we close above.
Right there. Right?
That is not a gap.
Okay, what?
That is a random ass candle. You're close.
So I don't know.
It's right there.
How do I do it?
Just click off it. Does anyone see it? What happened here? Let me ask you another question. You guys you can sit down. All right. Let me ask you guys another question. If we're uptrending, do you think bearish fair value gaps matter? If we're just going higher and higher and higher, do you think it would be smart to enter short off of a bearish fair value gap? No. Okay, you come up here. Let's see if you know. Oh. Okay.
It bounced off of this for another time.
Which one? Draw it. We never bounce off it though. We never touched into it. It came close. We never tapped into it. You're so close, dude.
Oh, wait. Is it
So close, but so
the tracing?
No.
Wait, she knows it.
Still no. You got it?
Is it because the bullish fair value gap goes above the bearish?
All right, come draw it.
I don't know how to draw that.
You have to. It's easy.
Oh. Is it because there's a bearish fair value gap like right below the bullish?
All right, draw the. What do you said there was a bearish fair value gap?
It's because
Draw the bearish fair value gap.
it closed.
Okay,
This is a bearish fair value gap.
which one? Draw it exactly. Okay. Yep. Now, is this a bearish fair value gap from here to here? Okay, there you go. Is that a bearish fair value gap that she just drew? Yes or no? Yes. So yes, because we closed and you can sit down now. So good job, she got it right. Because we closed above this bearish fair value gap, this to me is all the dumb money with all their millions of dollars getting wrecked. They're getting screwed over here. I'm now entering. But that's only one confluence. That's only one reason why I'm getting the trade. What might be another reason? The trend line, right? I knew we had a bunch of stop losses still sitting here and here, right? See how this never touched this yet?
And there's another stop loss.
And there's even more stop losses over here in form of a trend line, where YouTube teaches people to place their stop loss above all those trend lines, okay?
And we're just taking advantage of it.
Now, what might be one more confluence here?
The Drake.
The Drake candle is strong, yeah. What might be another confluence? That's 3 so far.
Made a new lower low.
Made a new lower low. You're on the right track. If we made a new lower low, wouldn't that be a trend change? Wouldn't that be bear downtrend?
No, because there was liquidity.
Higher low.
Right?
There's liquidity what?
Isn't there like clusters at the bottom?
It's a liquid
It's a liquidity what?
sweep.
Yeah.
It's a liquidity sweep.
It's a liquidity sweep. Look. Do you guys think that this is a more of a market structure shift or more of a liquidity sweep? Why liquidity sweep?
Because it
We're
broke
showing all
and
of those
shot
stop
back up.
losses.
Yeah, we're barely going below this low. The second we get an instant reversal from this low, and I see this and we break that bearish gap, boom, I know we're going to go back up again. All right? Any questions for now? We're going to keep talking about it. You guys are getting a little quicker, which I like, but you're going to get even quicker than this. All right? I'd probably maybe take a picture of that setup. And then I'm going to write the confluences. Take a picture of this. Liquidity, oops, liquidity sweep. Stop losses in the form of a trend line. Okay, like this. And then, oopsies. Stop loss in the form of a trend line here. Okay. So take a picture of this. Now, what's the overall market? What was the overall market doing? Was it an uptrend or downtrend from the lows? Yeah, it was overall in like an uptrend anyways. So even when we do go take out this low, it's not really a full trend change, right? Now, I remember this trade. Okay, I actually took this trade, but I got in right here. This is the trade I took. No, this is back in 2023. I remember this. I took this one right here. Okay. So I remember this trade to this day. I took about a 7R. Okay, I posted it. Can someone tell me why I got in down there?
You broke the bearish zone.
Let's see. Let's name some confluences. What's one confluence? Yeah?
There's a liquidity sweep.
This is a liquidity sweep, which is right here. See it? Do you guys agree this is a liquidity sweep? Yeah. Right? We're going below this low, and instantly it's getting right back, bought back up. So this would not, in my opinion, be a what? It wouldn't be a what? It wouldn't be a trend change, so it wouldn't be a MSS, market structure shift, or a break of structure. It wouldn't, like, it's not. Remember, if you draw out this range and then draw out this range, this box does not even compare to this whole range here.
It's also bearish.
If we broke all the way down there, that would be way better.
Yeah, we break through the bearish fair value gap.
Okay, so we have a liquidity sweep right here. Remember, I had you guys draw in your notes this liquidity sweep?
Yeah.
You guys all have that? Okay. We also broke a bearish fair value gap again. We smashed through it right here. Okay. And then when the candle closes there, that's when I get in. Okay. Now, do you raise your hand if you think it would have been smart to go break even here at that black line? Okay, raise your hand if you don't think it would have been smart. Why do you guys raise your hand? What do you think? You don't know? Okay. What do you think?
I wasn't really sure.
Why do you think it would be smart to go break even? So if I'm under here, do you think it would be smart to go break even here and move my stop to even?
Yeah.
What do you say?
Well, because can't the wick still go into the fair value?
Yeah, the wick could still go down there at that point. Also, I enter here, and this black line is 5 points away. Do you think that's way too close to go break even, or do you think that's too far?
It's too close.
Yeah, way too close. You need to let your trade breathe a little bit, okay? Now, do you think it would have been okay to go break even up there? Why or why not?
Yeah.
Let's, I'm gonna ask you.
Maybe because it's a little less far away.
Up here, you're thinking it's good to go break even?
Yeah.
Because it's more farther away from the entry point? Exactly. But what I said before is, when do you ideally want to go break even on a trade? If you're up, how much R?
2R?
No.
No, 1R.
If you're up like 1R. If you're up 1R, you're up like 30, 40 points, okay? And you're not moving your stop to break even, you're going to lose a lot of money.
Aren't you up 8R right now?
At that point, you're up probably 2R-ish. I mean, probably maybe like 1.7 or 1.8. All right. So we can see we have a liquidity sweep. We broke that bearish fair value gap. There's my entry, and then we go up. Okay. Does anyone have any questions on this before we move on? I'm going to go over this all the next week, and we're going to keep talking about these setups. Take a picture of that one too. Your brain's going to want to remember the signature and price. All right. This will make you millions of dollars. I'm not even kidding. All right. Yeah.
Why didn't you enter at the top of the fair value gap?
Why didn't I enter here when we were traced into it?
No, like
This is the bullish for rally gap. Is that what you're talking about? There's a bullish for rally gap here. And there's a bullish for rally gap here. What bullish for rally gap are you talking about?
No, I got it.
All right. Yeah, the bullish for rally gaps are here and here. Right? So for my strategy, I don't actually wait for us to go back into the bullish for rally gap. Do you guys realize that? Yeah. What type of order am I placing on here? What type of buy order? What? What type of buy order? What type of orders are there? Someone tell me the 3 orders. Market, limit, and stop. What type of order am I getting into right here? What type of order am I getting into? Yep. What type of market am I getting? Or what type of order am I getting into? A market or a limit order? If I'm just taking it right when it closes. Yeah, market. Exactly. So I'm taking it because you got to be quick. You got to be fast. All right? And this is where some of you guys are just going to give up because it's going to be too fast for you, but that's okay. All right? You got to be quick. All right? So that is that for now. We're going to go over the next thing. Liquidity. All right, there's 2 types of liquidity. I haven't said these terms yet, but this is the rest of the class. I'm going to use these terms. All right. There's buy side and sell side liquidity. In your notes, I want you to write buy side liquidity equals, and then under that write sell side liquidity equals. This is some more sauce. Now, where do you think buy side liquidity is? Do you think it might be at the highs, the lows? Where do you think buy side liquidity might be? The highs or the lows?
The high.
Yep, it's at the high. So right, buy side liquidity equals highs. Every single high in the entire market is buy side liquidity. What is the type of highs I tell you guys we're looking for mainly? Double highs, double tops, trend lines, which are what kind of highs? Starts with an O. OB, what? OBV. Obvious. Okay. Technically, every single candlestick on every single one of your screens, every single high is technically a stop loss. Okay. Because if you go down to the 5-second time frame, which we're not doing, then every 1 minute candle would be a swing high. Okay. But we don't do that. That's where you start to understand time is fractal. If we're micro scalping and we trade the 5-second time frame, we might base the 5-second time frame off the 1 minute chart. Because we're just normal scalping, we base the 1 minute off like the 5 or 15 minute chart. If you're more day trading, you might base the 15 minute time frame off of like the hourly, okay, hourly highs. But every single buy side is every single high ever put in the market. So if we make any high, that's buy side liquidity. But we are focusing on what types of highs? The obvious ones. The ones that I can literally just like points. This is a point. Okay, if I say look at the top of the whiteboard and you all look in here, do you think any of you are going to look in the same exact spot? No. But if I said look at the corner of the whiteboard, are all of you going to look at the same 2 spots? Yes. So if I say look at this high on the market, hopefully you should all be looking at the same exact spot because it's going to be the most obvious in a chart. Does that make sense? All right. Now, what do you think sell side liquidity is?
The lows.
Every single low in the market is sell side liquidity. But in parentheses or in stars, right, we are only focusing on the obvious ones. All right, that will go a long way. That will make you thousands of dollars in trading, okay? If you're trying to play the non-obvious ones and you're trying to put money or risk on a position when it's not obvious, you're going to lose and you're going to become depressed, all right? So let me ask you a question. Actually, we'll do that after. So this is the core of ICT. The whole strategy I'm teaching you is ICT. It's the core. All right. So if you go to the next slide here, all right. Liquid. What does it mean when you're liquid, basically, in terms of money? Does anyone know?
When you have money, like right now.
Yeah, when you can get money right now. If I have $200,000 into a house and I have to pay that off, is that liquid? Yeah, that's equity. I can't actually take that $200,000 from a house and instantly go buy a new Lamborghini with it, right?
But you can like take out a loan on.
You can take out a loan on that loan, but that's, yeah, I guess. Yeah. So I guess if you wanted a new Lamborghini, you do that. All right.
I wouldn't.
Yeah, I guess.
2008 people did.
Nice. You think you'd beat me?
In 2008?
Wait, what did you say again?
What? I said in 2008 people would do that.
Oh yeah, because people were idiots. Yeah. But also when the stock market crashed, like a lot of people just did really irrational things. People are more like financially literate now than 2008, I think. So I don't think a crash like that will ever happen again. But
like AI.
No, I doubt it because people are too smart. What happens now is if we ever get a crash, like even 5,000 points lower, everyone's going to buy again. Like it just, because remember, the more people panicking, the more institutions and banks buy. Yeah. So every single high and low you see in a chart is what? Every high and low.
Liquidity.
Yes. Swing points. Can liquidity be non-swing points? Yes.
If it's high enough.
Every higher, no, any high or low, okay? If I have a candle, everyone visualize this with me for a second, right? If I have a candle and we have a high, a higher high, and then a lower high, would this lower high still count as liquidity even though it might not be a swing point? Yeah, because it's still high. Let's say that is a 1 minute time frame that I just drew that on. What time frame could it maybe be a swing high on?
A 5 minute or a 15 minute.
Okay, you're saying 5 minute or 15 minute. Anyone else have any ideas? If I draw a swing high, one high, a higher high, and then a lower high, what could this lower high be a swing point on, even though it might not be a swing high in a 1 minute time frame?
30 seconds.
The 30 second or lower. 30 second, 5 second, 10 second, 5 second, 1 second, 2 second, 3 second, 4 second, 3.467 second. All right. Look, if I go to the market right now, is this right here a swing high? Raise your hand if you think that's a swing high. Raise your hand if you don't think it's swing high. Okay, the other half of class, raise your hand if that's a swing high. Raise your hand if you don't think that's a swing high. All right, the other quarter of class, raise your hand if this is a swing high. Don't raise your hand if you don't think it's swing high.
You think it's a swing high?
Now I'm just gonna try to confuse them. Okay, let's talk about it. Okay, this is not a swing high. Why is this not a swing high? Yeah, because the next one's higher. All right. So this would be the swing high right there. Now, what time frame? If we know in the 1 minute, what time frame could this be a swing high on? Yeah, let's check. Yep. So we're on the 5-second time frame. You can see, is this a swing high right here? Is this point a swing high?
Yeah.
Yep, because we have a high, higher high, lower high. And that's what I mean by times fractal. Is this liquidity right here?
No. Yeah, any point is liquidity.
Is this liquidity right here?
Yeah.
Is this liquidity right here?
Yeah.
Is this liquidity right here? Is this liquidity right here?
Yeah.
Yeah, every single high and low is technically liquidity. But remember, what's the best liquidity we are looking for?
Obviously.
Obvious. Trendline liquidity, equal highs, double highs, singular points that are just standing out. All right? The obvious points. So, keep in mind, from here forward, liquidity always means stop losses resting at old highs and old lows. Okay? Now, so retail traders who watch YouTube, like I showed you, they see support and resistance. All right? Is support and resistance a strategy?
Yeah.
Yes? Any no's? Yes, support and resistance is a strategy. Is the video we watched from Casper SMC, the video I showed you earlier, is that a strategy? Yeah, so it's just two different ways to trade. Now, some people are profitable trading support and resistance. Some people are profitable doing the 5-minute thing. It just depends, okay? Right? It's not just random highs. It's every single high and low you see in the market. That's where people place their stop losses. But the reason, why do you think I'm telling you guys only look for the obvious highs and lows? That's where the most liquidity is. What's the most what are? Same thing as liquidity equals stop losses, right? There's going to be more clusters of people placing their stops at these bigger and more obvious points, okay? So, well, retail sees support and resistance, we see liquidity. Is this liquidity? Is this liquidity? Is this liquidity? Is this liquidity? Yes. There could be a candle here with a high that is liquidity. Is this obvious liquidity?
Yeah.
Is this obvious liquidity? Is this obvious liquidity? Yes. Is this obvious liquidity? Yeah, that's probably the most obvious. Why do you think this is the most obvious? Because it's the highest part of this whole range, right? So naturally, if I'm trying to buy and target a high, it would be that high right there because it's the highest high. All right. So, which liquidity pool does the market target here? All right. Level A, we have 10 stop losses. Level B, 20 stop losses. Or level C, there's 50 stop losses there. What do you think the market's more likely to go to? Raise your hand if you think it's A. Raise your hand if you think it's C. Raise your hands higher. Okay, now raise your hand if you think it's B. Good job. Why do you think C? Yeah, because it's the most stop losses. And if we know how the algorithm moves towards the most stop losses, 50 stops are just more liquidity, more people, all right? Now, is there any tool that actually shows you how many stops are at every high and low? No. But that's why you have to have faith that what I'm telling you is accurate and it's an algorithm and this is just how it works, all right? And I guarantee you one of you in here is gonna go down a rabbit hole on YouTube and you're gonna learn about another strategy and you're gonna be like, oh, I'm full of crap, all right? And you know, that's your opinion, but like I said, I'm going to prove it to you in live time, like the market is drawn towards liquidity, and you'll see. Okay. Bookmap is something called, it's like a whole different strategy. Don't even worry about that. But it gets close, but it's still not accurate. Okay. You must learn to estimate the heaviest liquidity areas using price action, time, and fair value gaps. So using trend line buildups. Where's the most obvious trend line being built up? Okay. Or where's the most equal highs? If there's 8 equal highs in one area and 2 equal highs in another area, what's going to be stronger? 2 or 8 equal highs? Raise your hand if you think it's 2 equal highs. Raise your hands high if you think it's 8 equal highs. Yes, because there's just so many more orders drawn there. Okay. So after a sell side has been run, it's not like support and resistance where it stays in the screen. Do you remember when I talked about this? You'd kind of delete the level after it's been used. Yeah, so if we run a low and we run those stop losses, is there any more stop losses at that particular low? If we put in an overnight high during London session, which is 2 to 5 a.m. Eastern, and we run London high, do you think there's still stop losses there after we run it?
No.
Why not? Because we already took the stop losses. There's no more stops. We wrecked all those sellers. They've just spent. It's done. Yeah, and then you thank them for your liquidity, right? Remember I said you say thanks to the liquidity. So if you take a trade and you win, and then he loses in the trade, you tell him thanks for the liquidity, and then he gets triggered, he gets emotional, and he tries to revenge trade, and then you lose more. So.
Sounds like something I do.
But again, the strongest people at the end of the day with the strongest mindset are the ones who are going to make it. Okay.
Hey, gotta be the best loser before it's there.
Yep, best loser wins. All right, this low has not been hit yet. Before not touch low. Stop loss orders from long still rest below it. This is sell side liquidity, a real target. So raise your hand if you don't understand this. All right, half of y'all are lying to me. Raise your hand if you don't understand that. All right, so everyone understands this? So if I pick on someone to say, explain this to me, you're going to be like, oh, yeah. Okay. What this basically means is, this. It's basically saying that this is sell side liquidity, but not this. Do you see why? Raise your hand if you understand this now.
Well, I understood.
Okay. You in the back, explain this to me. Why? Yeah, you. Why is this sell side liquidity and why is this not sell side liquidity? Because it's already been what? It's already been ran? Yeah. Which one? This one? Yeah. These lows have already been ran. It's not sell side liquidity anymore. Right? These haven't. So is there still a risk of the market running these lows before we go up again? Yeah, right? But yeah, we're managing a risk, right? All right. Dude, I'm about to pick on someone who just hasn't been paying attention just to troll them. All right, who gets wrecked when sell side liquidity is run? When we run the low, who's getting wrecked? Buyers. Who else is getting wrecked? Remember, there's three parties. What else is happening when we run sell side or when we run a low? What? What else is happening when we run a low? Remember the other strategy I talked about? The breakout strategy?
Yes, kind of.
When we run a low, what is happening?
Can you reword the question?
Okay. If we form a low of day, so the market makes a giant, bottom with a V shape, and we form a giant low of day, and we start to fall below the low, not only the buyers are getting wrecked, but who else is getting wrecked when we go below that low of day?
The night.
No.
The night is smart.
The retail traders are, but how are they getting wrecked? What's the other thing retail traders might be doing when we break below low?
Putting their stop losses where we're not doing.
Not quite.
It's like another party.
Yeah, so let me just draw this real quick. Look. So these are the buyers right here. All right, these are buyers. And we go below the buyer's low right here. So the first party is getting wrecked are these buyers. Do we all agree?
Yeah.
Because they're getting stopped out. All right. Who else is also getting wrecked here?
The sellers.
The sellers. Why would people be selling here based off what I told you about?
Right? They're afraid.
Yeah, they're afraid because they're like, oh, we just broke a low. They think this is support. And they're like, oh, now I'm going to sell and short. Or now I'm going to buy sell the breakout and we're going to go down. So that's the other party that gets wrecked in that situation. And it just makes for great liquidity. Okay. So the breakout shorts would be the answer. Notice how I had the answer on the screen and none of you guys knew the answer. All right. So, and also, I don't know what this, wait. Which group is this?
Big money.
Big money or? Yes, but it's called what money? Smart money. Smart money is the people buying those lows, all right? And this is what the books are not going to teach you. You could go to any day trading book online, Amazon, anywhere, and they're not going to teach you what I'm teaching right now, okay? I'm telling you, this is like a $10,000 lesson here, okay? And that is how the market moves. You're welcome. Yeah.
So it would be 10,000 for 2 weeks, or just like in
This is about a $10,000 lesson for 2 weeks, yeah. Basically the content I'm teaching you within the 2 weeks. Because what I'm teaching you, if you're paying attention, you can make millions of dollars off of. Yeah.
If you could charge 10,000, why don't you?
Because this is more of a side quest for like a resume type of thing. And I actually do charge $10,000, just not the 18-year-olds. All right, mostly 30 to 40. I have like my own little mentorship and it's like a 5 to 15K fee. But that's a 3-month program and it's just different. It's built different than this. And I don't cater to young people because you guys still have school and everything. And like some of you guys can't put your full focus into it. And that's just how young kids are. And I can't change that. So, when you guys are having similar conversations in the back, right? I did the same thing when I was like 18 or 19, but I couldn't help myself. It's just how we act and how humans are built to act. So, there's nothing I can do. But all right, double top resistance. Books say that the stop losses are here. Remember, double top? And this is smart money's favorite target to run these stop losses. And ideally, are we trying to get long here? Are we trying to buy here?
No.
Are we trying to buy here?
No.
Maybe. This is honestly where we're trying to get in. Before we run these highs, we're trying to get in on some reversal here.
Yeah.
Right? Makes sense? So yeah, really good picture to draw or understand. All right, so ready? Price just broke below low that had never been touched before, stopping at a cluster of long traders. What should you do with that low in your chart now? Keep it marked as support forever, like a textbook. What does SNR mean? Support and resistance line. Yep. Delete it. It's no longer liquidity since stops have already been triggered. Draw a new resistance line at the same price, or nothing changes. The level still matters. Raise your hand if you think it's C. Raise your hand if you think it's X. Raise your hand if you think it's A. Raise your hand if you think it's A. All right, raise your hand if you think it's A. All right, raise your hand if you think it's B. Yes, the answer is B. All right, you delete it. It's no longer valid. Do I what? Do I know what? Now, we're going to do an exercise. Let's go, exercise. Woo. Okay. The next exercise is this. You're going to go on a 5-minute time frame and start marking out buy side liquidity and sell side liquidity. Obvious points only. Is this correct? What I have on my screen. Is this correct? Is that sell side? Technically, but it's not obvious, right? Remember, every low and high is liquidity, but I want the obvious points only, the points that go like this or like this. So we're going to mark out 3 examples of obvious sell side liquidity and 3 examples of obvious buy side liquidity. If it's not obvious or not a, what is this not? What is this point here that this is not? A lower low, which is called a, what is this point right here? What is this 3 candle formation? A swing low, right? This 3 candle formation swing low. Is this a swing low? No, because it's a low, higher low, higher low. Wait, let me ask you a question real quick. Ready? Watch. Would this be a swing low right here? What's the definition of a swing low? Low, lower low, higher low. Is this a low, lower low, higher low? Yeah, so that's a swing low. All right. So I want you to only find obvious swing highs and swing lows like I have here, right? Where if I back up all the way back here and I'm looking at this, I can instantly see that. Okay. So 3 examples of sell side liquidity and market, please label it. If you don't, you fail. And then if you buy side liquidity, if you spell it wrong, you fail. If you don't label it, you fail. And if you don't draw the line, you fail.
Fail. How do you pass?
You pass by getting it perfect.
Oh no.
All right. There's no imperfections in this class. All right. Let's see it.
The best loser. How do I get a line again? I can't find the line.
If you don't know how to draw a line at this point, you're an idiot.
You failed.
Hey, thanks. Okay, I go here. Watch
right there.
The trend line?
Yeah.
Alright, can you check mine?
I mean, just to say line.
Can you check mine?
Yeah. 3 sell side, 3 buy side.
Buy side, sell side.
Yep.
Buy side, sell side.
Exactly. Wait. Go down.
Okay, it's this
go
one.
Down,
Huh?
go down.
It's this one. Yeah, this is the one that's low-key a problem, huh?
That's more obvious.
Which one?
That wick down there. That's more obvious.
Yeah. Okay. But buy side, sell side.
Yes, perfect.
Okay,
What?
My computer just died.
I'm gonna make it. Hear me out. It takes so much longer.
It died?
Yes, that's what this little rotating thing is.
Oh.
Hear me out. It takes me so much longer to type it out, so I'm gonna just tell you what they are. Is that fine?
Nope. Double click the line and write it. Go to text. Yep.
Oh, is that easy?
Yeah. Now I'm gonna give you guys 2 or 3 minutes. This should be very easy. If it's not, then you're just not understanding. What? You can't what?
I can't see it like
What do you mean? Yeah, you do. Yeah, do that.
That's a sell side, buy side. And you see that red line down there? Like the bar right there? That's a sell side. So find 3 of each one. It's obvious. Now when you would label a sell sign.
Yo, whoever does it the quickest gets my Rolex.
I already did it.
Yo,
I already did it.
Just kidding.
I already did it. What-
no, my computer died. It's not fair, bro. I can't do this.
All right, he loses. His computer died.
I already did it.
I know.
We did it.
You did it?
Yeah.
All right.
No. Give us the one.
Raise your hand if you still need more time.
I don't need to wait because I know it.
Oh, so
All right. You question?
No, I just want to check. We finished for.
Yep.
We beat Oliver.
Nope. It's not exact.
Hey, Oliver, you're not included.
Make sure that's exact. If you guys are on a computer and you hold down central or control, I mean, it's like a magnet.
Okay.
Just control. Yep. Yeah. Wait. Let me see.
Like 5 minutes ago.
Yep. Now, before we carry on, watch this. Is this sell side liquidity right here?
Yeah. No. It has to be the bottom.
Raise your hand if you think this is sell side liquidity. Raise your hand if you don't think it's sell side liquidity. Raise your hand if you don't think this is sell side liquidity. Yes, good job. This is sell side liquidity, not this. Do you see how you have to be very precise when you draw the lower high?
I just said
So when you're drawing these lower highs, if you hold down control or I think command on a Mac, I don't know what it is on a Mac, but command, make sure the point is at the exact bottom of the wick. Be very precise. Okay, just like you're a surgeon. We're a surgeon on the charts. Okay? We are a surgeon on the charts. It has to be exact. And if you hold down control, see how it's sticking? Also, look. This magnet tool to the left, if you turn that on, it'll be more exact too. And then if you hold down shift, it straightens out the line. All right?
What if you're on a phone, bro?
If you're on a phone, you can click, there should be a magnet somewhere.
Is there a magnet?
I'm on phone, I'm cooked.
There should be a magnet
I
somewhere.
can't even find like a straight line.
That's good.
Like I can only find like an arrow.
Go here.
And what?
I'm cooked, bro.
There's no.
I don't think there's like a straight line.
Yeah, there is. Right there. All right, raise your hand if you're really confused. All right, no one's confused, I guess. Oh, I feel like she's confused because she hasn't been paying attention. All right, where's your trading view chart?
There.
Oh, it's right there.
Yeah.
So what's on this? Are you playing games or something? I don't know. I'm kidding. What do you guys understand? Sell side, buy side. Perfect. Nice. Yeah. Good job. You got it? What would this be? Way down there, yep. That'd be sell side. Yeah, so label it. Trend line, yep. Trend line. Hold command. Yep, and hold shift now.
Hold this shit.
Yep. And that would be sell side. And then let go. And then double click that line. And then go to text. And write sell side liquidity. You can write in Mandarin if you want, I don't care. Yeah, if you want to write in Mandarin, it doesn't matter. I don't know what to translate to, but if you, I don't think fair value gap translates to anything. Does that translate? There you go. Now show me an example of buy side. That would be really obvious. Go to the 15-minute time frame. Yep, exactly. That would be buy side. Right? See how it stands out? It's a point. So that would be buy side. What?
How did you get into this?
because I don't want to work a job, and I literally typed on how to make money online, and this is what just came up. So I just made it work. All right, how we doing?
Would this be obvious?
Yep. So obvious, exactly. So hold shift if you want to straighten it up.
What's one that wouldn't?
Which one that wouldn't be?
Yeah.
Like this low here.
Where?
Like this swing low.
Oh, okay.
This would be way more obvious.
Yeah.
Is that a swing high yet?
Yeah.
Why? What's the definition of a swing high?
Higher than the other.
High, higher high, lower high. Is there a lower high there yet?
Is it this one? No.
No, because there's no third candle yet.
Oh, you're
Right?
Yeah.
This would be an example of one right here. Yep, exactly.
So how do I mark it?
That trend line. Yep, trend line at the top. Linea de something.
Like that?
Yep. Start at the point here though. No, start the point at the high. Don't draw it to the more. Yeah, exactly. Start it there. Yep. And then hold shift to make it straight as you drag it over. Hold shift. There you go. Yep. Yep, perfect. You got it?
Yeah.
Good. Dude, what is happening? I thought your computer died.
It's like, it's really
Destroy it. Yeah. Oh, it's Intel Core, that's why.
You have Intel?
Intel Max, the worst.
What do you have? I what?
I don't know.
i7.
I7? I mean, it's not bad.
Let's get it wrong.
I did it best made Intel you could have got.
Can I show you?
Yeah.
I couldn't really type.
That's fine. That's fine.
So my side.
You couldn't type? Not precise.
I would tell.
That's precise.
It has to be precise. Let me type.
Look how easy that was. Yep. Sell side.
Not like in a subtle flex type of way.
Yep. Buy side. Yep. Let me ask you a question. Would this be more obvious or would this be more obvious?
That one would be more obvious.
Yeah. So I'd mark that one. Yeah. Exactly.
No, we need to keep going.
How are we doing? Buy side, sell side. This is not sell side. Remember I said to be precise. The lowest of the low. This is good. That's buy side. Is this the highest of the high? Nope. Higher. Nope. Look, no, that was right. It's just a higher. That high. Yep, exactly. Precision. And you can hold control, or you can hold command. Hold command when you have this pressed. When you have this circle press right here, and then it should magnetize to it. You know, like hold it at the same time and click command at the same time. Hold command, hold it, hold command, and then move the trend line around. You delete it. Place another one. Right there. Oh, that's good. Now hold down this point with command, hold command, and start moving around. See how it's magnetizing? No, yep, there you go. That's precision. That's called precision right there. Beautiful. You're good. Are you good? Yes, 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 yes.
We did the same one. Yeah.
Okay.
Not on purpose.
All right, so
I actually did it.
Good. So, how's everyone's?
It was good.
Did you see me?
Yeah, I did.
Yeah. All right.
Is that how you do it?
Is there anyone I didn't check yet? I didn't check you guys. Let's see if you guys failed out of class or not. Good, good, good job. You got it?
We got it, but we had it first.
I know, I'll check.
So are we gonna get the Rolex? Yeah, the are you gonna give us all three one?
Yeah, here.
Wait.
Yes, I gotta find it. I'll put a buy side.
Yeah, if you can, but.
I'll put a sell side.
Yep, good. Yep, you got it. Good job. Checked you guys.
iPad? Okay, that's actually pretty tough. It's like here.
How we doing?
It's really hard.
Okay.
How do you get the text?
You click this. Go back to trend lines. This. And then you can move that around.
Oh, good girl.
And then to get the text, you double click the line.
One time. Oh, no, I can't.
Okay, so I didn't know the trend line thing, so I just kind of made it.
That's fine. Buy side, sell side. Alright, you got a little glow thing going on. That's cool.
A little what?
It's like glowing almost. That's kind of cool. I like that.
Thanks. And then I had others. I don't know where they were.
Those are all good. Sell side, good. Good job.
Find a fucking lead. God.
What?
Never mind. No, you gotta ask questions. It's good to ask questions.
Press it.
Wait, you asked him about it?
And then press it somewhere else. And then, yeah, now you have it.
Yeah.
And then,
Oh, you're not.
oh wait, that's
Oh, he's
your.
whack only.
When you place it, do this, press it here, and then press it like here, and then it'll appear.
Yeah, but I can only press it. It doesn't work.
Oh, because you have to delete this stuff. Delete. Where's the delete? Right here, trash. Click that, trash. Trash all those. So it doesn't get in the way. Okay, you just press it again. Yeah, there you go. Perfect.
But it's not perfect.
Yeah, but you have to press this and then move this down like that.
Oh, I see.
Yeah. All right, how's it going? Are we doom scrolling?
No, okay,
watching Spider-Man. I didn't go to
All right. That's all right. All right, buy side, sell side. Yep. Yep. Good job.
Okay, instead of a roller.
All right. Hey, Airwan smoothie? Yeah, which one do you want? Maybe I'll bring one for you tomorrow. Maybe I'll do like a challenge like before lunch tomorrow.
Wait, and it's the whole group.
And then whoever wins gets an Airwan smoothie.
No, actually.
What?
Actually?
Yeah.
Wait, bro.
Maybe there'll be like 2 winners or something.
You're making a friend to make like all of us have an Air one.
Yeah, but do I want to take 20 Airwan smoothies in a car?
Oh, no, you're right.
Bro, when you make enough bread, it's convenience that starts to matter, not money.
Those three can't participate because they're gonna so it's like
No,
Yeah.
let us participate. Or just give us the smoothie.
Well, I'll do a challenge. I'll make sure everyone can do it.
Who makes the most amount of money in the game?
All right, everyone, sit back down, please.
Bro, I'm already off the power. Ole, I'm gonna wipe the floor double top. Yeah, I don't Chris probably.
All right, everyone, sit down, shut up, and spit out your gum. I'm just kidding. I'm kidding.
Wait, what is it?
All right. That reminds me, I gotta chew my gum. All right. Where'd I go? All right. Trying to see when you guys can do quiz number 2. It's after. It's not. Probably won't be. It might be today. No, probably not. All right. So the next part of this, all right, is going to be the ICT 2022 entry model. This is the first entry model I ever used in trading when I started learning ICT and liquidity and buy side and sell side and all that stuff. But now I do the opposite of this, which you've kind of already seen a little bit, right? So what do we think this is? Do you think this is a indicator? Do you think it's a strategy? Do you think it's a, what do you think it is? Yeah.
Like strategy where to enter.
Yeah, this is going to be a strategy on where to enter the market again, which we've already kind of watched some videos on, all right?
Are you like ICT number 1?
Am I ICT's what?
Number 1.
No.
I smell the alarm.
He's my mentor.
You don't do this or you do?
What?
Use it?
I used to use this, but now I do the opposite because I like it better. You should note this, and no, I'm gonna get to my strategy eventually. All right. What is not a fair value gap yet? Remember how some examples, remember how the indicator the other day that I showed you guys, it looked like it was about to form a fair value gap, and then last second before the candle closed, it got completely closed? Is anyone confused on that concept?
Wait, what?
Basically, in the market, all right, in the market, right here, do we technically know if this is going to be a fair value gap right here yet?
No, but it has potential.
It has potential. Now, if I play another candle and this is another fair value gap, do we know if this is going to be a fair value gap yet?
Yeah. Because now it is.
What if I said that candle's not closed yet?
It is.
Because what could happen during this candle?
Oh, it could drop.
It could drop all the way down here, close the fair value gap, and all of a sudden it's not a fair value gap anymore. And that's called waiting for confirmation. You can't just assume something's going to be fair value gap without the candle closures.
Yes.
Bodies of candle closures are the most important thing ever. They tell the story, and you need to trust the story. You can't just guess, all right? You have to wait for the candle close. So just because the candle isn't closed yet doesn't mean there's always going to be a fair value gap. So wait for the candle close to confirm it, right? Because price can still travel back and overlap the wick before the close, all right? If the wicks overlap, the gap disappears completely. It never existed, making this a real FEG before close. All right, marking something like what I just marked as a fair value gap before close is a #1 beginner mistake. So like what'll happen is they'll mark this as a fair value gap, but then before the candle close, we'll shoot down right here, and it won't be a fair value gap anymore. But they'll keep it on their screen thinking it is, but it's really not. All right. A fair value gap has got to be something that's confirmed the 3 candles, right? Is this a fair value gap? Yes or no? Yeah, it's a fair value gap. All right. So a candle that's closed and formed the gap or the little signature in price that tells us it's a fair value gap, right? The candle that created the gap is fully closed. The wicks do not overlap. Okay, so that means the balance is there, and the gap is now real. It's valid and it's tradable. Only confirmed fair value gaps belong in your chart. Do not draw fair value gaps that look like they're about to be a fair value gap and they just weren't. Now, how to actually enter fair value gap? The start of the gap, the standard entry. It's the very first touch into the gap. Are we trying to enter a fair value gap at the bottom? No, but why? What? What percent are we going to get filled if we put our entry limit for a fair value gap at the top? What percentage of the time will our order get filled if I put the entry limit at the top of the fair value gap? 100%. Unless we don't, if we tap into the fair value gap, I'm always guaranteed to get in the market. What if I put it at the bottom of the fair value gap? What do you think the percent might be of me getting filled? Like 50%. Because remember how we've seen examples of fair value gaps that have come to the top, then bounce, and then some come all the way down where the wicks go through it, but then we bounce? Do you know which one's going to happen? No. That's why this is still somewhat random, right? Because things like that we don't really know. So why does it matter that we don't know? What are we actually doing? What's the main? We're not traders. We're risk managers. Exactly. We're risk managers, not traders. So we're putting our stop below the whole fair value gap because we technically don't know where it's going to bounce off of. All right. Now, there's the midpoint of the gap. What do you think the midpoint of the gap means? What percentage of the gap is that?
70.
You think 70 is the midpoint?
Oh, 50.
All right. 50% is between 0 and 100. Okay. 50% is the midpoint. Does that make sense? 50% equals midpoint. Pretty crazy. There's something also called consequent encroachment, which is very advanced, but we'll get to that. All right. So the midpoint of a gap, which is also called consequent encroachment, actually, honestly, write that down now. Right, midpoint of a gap equals the 0.5, or right, consequent encroachment. Now, most of you probably don't know how to spell that, which I'll do it. So 0.5 equals midpoint of gap, or consequent encroachment. That's not how you spell it. Encroachment. There you go. Oh, no. Yeah, it's my fingers. So consequent encroachment is basically the midpoint of this gap. Okay. Raise your hand if you need more time. All right, we're moving on. I'm just kidding. All right. Raise your hand if you need more time. All right. So that's a big word. Just have it noted down. You do not need price to retrace through the entire gap before entering. All right, waiting for the full fill often means you can miss the trade. Do you guys understand that? Because look, imagine I'm trying to get in on this fair value gap, right? So there's a fair value gap here, it's bearish. And I'm trying to get in here. Okay, if I place my order here, would technically my risk reward be better?
Yes.
Yeah, but would that guarantee I get into the trade?
No. You wouldn't get into the trade.
Yeah, this wouldn't even fill me, right? Would this right here fill me?
No.
Would this right here fill me? Would this right here fill me?
Yeah.
Yes, but that doesn't happen every time in a fair value gap, all right? So ideally, to guarantee, if we're really that confident in price changing trend and breaking that last lower high and we get a lower high and a lower low, I want to enter there because I'm just as confident. And again, we're not trying to go for 10-hour trades. 10-hour trades are just not high probability every time. So we put our entry at the start of the gap, stop at the high, and then we're looking for some downwards movement there, okay? Raise your hands if you understand that.
If we do or don't.
If you do. When I'm teaching this online, I say type 1 if you understand, and then everyone's like 1, 1, 1, 1, 1, 1, 1. So this is a little different. This is IRL, but. So waiting for the full fill often means you might miss the trade entirely. Now, write these steps down. This is very important. Step 1 of looking for a trade entry. What was one of the steps we kind of talked about before on those trades I showed you I took? What did we have?
Liquidity.
A liquidity sweep. A liquidity sweep is your best friend to enter the trade. So, right, step 1, liquidity sweep, or it's swept. What is a liquidity sweep? If we are sweeping sell side liquidity, what are we doing? Yep, we're running what kind of stops? Sell stops or buy stops? Sell stops, right? Because sell side liquidity. All right. So we want liquidity swept first. We then want a market structure shift, which stands for what? MSS, right? And then we want a retracement into the fair value gap for our entry. Price pulls back into the gap left by the displacement candle that caused a shift. All right. What do you say? This is the strat I used to use. Now I wait for this strat to fail and then I enter, which I'll teach you. Heals for you. So people call this the ICT 2022 model. What is that? If you write this down, what does that mean you could potentially do later if you're curious?
We can run it.
What?
We can run it on a paper train.
Yeah, but you can look it up to learn more. Look up more YouTube videos. Some of you are probably trying to go home and be like, damn, I know how to make money. I can predict the market. And you're going to watch like 10 videos and you're going to get home. Others of you will not care. You're going to go home and probably sleep, all right, which is fine. But the reason I got so successful and to where I was at today is because I would literally go home at night and watch hours of videos because I was just so like motivated, because I was like, damn, like it feels like a video game. And it just felt like so motivating, be able to like backtest and make money clicking buttons out of thin air. And I don't know, I just love doing it. So I just think it's super cool. It's like growing money on trees. You know, you can't do that, but if you know the strategy, you can. Yeah. Okay, who can come up here and draw where they think I took the where I want you to draw what I was or the reasoning I took the short, basically, or draw the liquidity I was targeting and kind of explain. It was right off open. So here's our chart today. Okay, so here's our chart today. I'm just gonna put on the 1 minute time frame. All right. See if you can come up here and draw the line in which I shorted from at the opening of the market. What time is the open of the market? 9:30. Okay, 9:30, good. So see if someone can come up here and draw what I was targeting. I'll give you a hint. You cannot see it on the screen right now, and there's a reason why. Why do you think you might not be able to see it right now? Why do you think you can't see the liquidity cluster, the liquidity pool that I was targeting right now on the screen? Because I'm in the 1 minute. So what do you think you're gonna have to do?
Change to 5.
Yeah, so you're gonna have to go to the higher time frame, 5 minute or 15 minutes. So someone come up here and draw what they think I was targeting. You got it?
Well, I think so.
Okay, come up here and draw it.
Yep.
Okay, so the first step he did is he went to the 15 minute time frame. All right. Now, where do you think I shorted and why?
It's just like low key. Bro.
Right there.
I can't zoom in. Oh, yours is in like that.
That's 9:30. Yep. What do you think I was targeting, or why do you think I shorted?
So the beginning is like right here now.
Yep.
This is it.
Okay. Do you think he's right? You think he's right? All right. Do you think he's right? So what are you drawing right now?
I'm drawing like the daily high and the daily low.
Oh, you're drawing the 5 minute, the strategy that we talked about.
Yeah. Oh, but it's in 5 minutes.
Okay, I'll give you, I don't trade that strategy we talked about on YouTube. That was just an example. I trade, so you're good. Stay there for a second. I trade targeting a lot of liquidity, or targeting a lot of what? What's another word for liquidity?
Clusters.
Clusters or stop losses. Where do you see a built up thing of stop losses right now according to this chart? Zoom out a little bit. Go right here.
Where?
On the y-axis, and then drag it up a little bit. Yeah, okay. Where do you see a cluster of liquidity?
Right here.
Down there? Why down there?
Because that's where everybody's stop loss.
So you think everyone...
No, it's like the low right there.
You come up here and draw it.
No, you can.
I think this guy might get it.
I hope so.
I hope so too.
I'm the master bro.
Like,
Let's see. Yeah, exactly. Now, what is that?
It's everybody's.
It's everyone's stop losses, but it's one of the two liquidity pools I talked about. Remember, we have equal highs, equal lows, trend line liquidity, and all those. What is this one, for example? You think they're equal lows? Kind of. I mean, they're relative equal. They're not perfect, but what else is it? Anyone see it? It's a trend line. Do you guys see the trend line? Look. How many touches did this trend line have before it broke? Yeah, about 3 touches. The first low was made. Do we know that there's about to be a trend line here when in live time at this low? No, because we don't right? This will be live time. Okay, now we touched it a second time right here. Is this a really good trend line or a really bad trend line or just like whatever? It's whatever at this point, right? It's only 2 touches. Remember I said the more touches, the better? If we keep playing. I'm asleep in bed right now. It's currently 2:45 a.m., right? So I'm sleeping here. I'm dreaming about day trading, all right? Now, yeah, what's up?
What time did you wake up, like, in LA?
Yep.
Or
I wake up and trade here.
did you wake up today?
5:30 a.m. I have to. That's the thing that sucks about LA is the time zone.
Because I thought you, like, flew back to, like, New York.
What? Okay, no. Now we have 3 touches. Is this trend line getting actually pretty good now?
Yes.
Right? And remember what I said. This is not random. All right? This is a $10,000 lesson right here. This is not random. This is trading at 28,000 points or $28,000. We don't say dollars. We just say points. Or there's honestly no unit. Do you really think a trend line with 3 exact touches at the same point is random on a 28,000 point future? No. Okay. This is not random. So what do we know is resting below all these orders now? Yeah, a lot of stop losses, because remember the one YouTube video where the guy's like, oh, support's here, support's here, support's there, you buy there, you buy there, buy there. Where are they placing their stops?
Right there.
Yeah, right below all these lows where the trend line's being built up, right? And next time, for little Timmy who just got in the day trading, do you think that he's looking for a buy off this trend line the next time we tap into it because we've already bounced off it 3 times? Yeah, 100%. If I'm a new day trader and I just watched a trend line video, I'm gonna be like, oh, we bounced off this same line 1, 2, 3 times. I'm gonna try to buy here. And that's where I short. Okay. Now, what else did we see here? I want someone to come up here and draw the lower lows and higher lows and the trend with a highlighter. I want you to come up here and I'll begin. Ready? So we put in a low, a higher high. Now someone come finish this for me. You come up. So just draw like the trend where the higher highs, higher lows are being put in, and just highlight the bottom and tops of each one. So, yep. What's that?
Lower low.
You mean higher low?
Higher low.
Higher low, yep. What's that? Higher high.
Higher high.
Okay, where's the lower low? Lower low, yep, exactly. A higher high. Okay, a higher low. Now what's that?
Lower high.
A lower high. What does that likely maybe might happen?
Trend change?
A trend change or a, what's it called? An MSS, market structure shift, change of character. I say MSS, but that's just me. Now draw the line on where the actual trend change occurred. The MSS occurred. Exactly. Everyone agree? Raise your hand if you agree. Yep, so you're good. Good job. So you have a low, a higher high, a higher low, higher high, higher low, higher high, higher low, lower high. Do we know if the trend's going to change yet?
No.
No, we might be able to tell. What types of candles go through this last higher low? Very strong candles, or death candles I like to call them, okay, to the short side. So would you be pretty confident us going down here if we look at the trend change and the liquidity? How many confluences is that for us to go down? That's 2. That's 2 reasons, or confluences equals reasons for us to go down, okay? So I ended up, now what else do you see here that we tapped into?
The stop losses?
No. What's the most important thing I said for the rest of the lessons that you need to know? A fair value gap. Can someone come up and draw the fair value gap we tapped and rejected into? We tapped into a fair value gap at the same time as a trend change. Who can come draw it? You could go in your own chart and maybe the fair value gap indicator hasn't marked, but see. You see it? Let me see it. Yeah, well, no. That is a fair value gap, but that's not the fair value gap we technically tapped into. Yeah. It's this one right here.
Yeah.
Right? All right, who can come up and draw this? You can come up. We came in and we tapped into a fair value gap. And remember, this isn't the strategy I trade. I trade a little differently, but you could have taken this entry. Yep, right there. Rectangle. Yep, so that's a fair value gap, but that's not the one we tapped into. There you go. Now drag it to the right a little bit so we can see. Yep, exactly. Now draw where you could have taken this short position. Okay, where do you put your stop loss? Okay, yeah. Now, do you raise your hand if you think he's right on where to enter the short? Don't raise your hand if you think he's wrong. Okay, now raise your hand if you think he's wrong in the entry. Okay, come fix it. Where would the entry be? This is complete hindsight. If you get that entry, you're a literal wizard. Nope. Does someone see what he's doing wrong? Is that entry in the fair value gap?
That is not an entry in the fair value.
The entry's in the fair value gap. Okay. All right, now raise your hand if you think he's right. Raise your hand if you think he's wrong. Okay, you come up and draw what you think it is. All right, raise your hand if you think he's right. Raise your hand if you think he's wrong. Raise your hand if you think he's right. What do you think? You never raised your hand. I'm looking at you. Yeah. You think he's right? Okay. Yes, he is right. Now, do you think in this scenario the stop loss might be a little too tight? Yeah, a little too tight. Why? Could we have theoretically retraced into this fair value gap and rejected too? Yeah, we could have went in the higher one. And, for this example, if I'm doing my TP at this low, at the trend line low, I'm probably going to do my stop loss above both of these fair value gaps, all right? So, yeah, that was the trade execution I took this morning, all right? And yeah, my executions were... Now, I'm going to show you something I did as well, okay? I actually took a loss before the win. So we're going to do some math here. So here are my trade executions, all right? I shorted here and bought down here, all right? Do you think this is statistically high probability to go for about 5R here? No, but when you've been doing it for a long time and you're a wizard like me, you can catch these trades. But that is years down the road, okay? That is not easy. Now, what do you notice happened here?
You entered and then immediately exited.
I entered a short and I exited for what? A loss or a win? Yep, so how much R did I lose there? I lost about 1 R. Every single loss, I'm losing 1 hour. Now, I re-entered here after what happened? We swept the liquidity. What's happening at this high? What are banks and institutions doing? They're selling. They're absorbing everyone's orders. Remember, breakout traders think, oh, this is a very obvious high. If we break above that, I'm going to long. They long. They get stopped out. Okay. And then, who also is getting stopped out there? Who's getting stopped out when we go above this high?
Retail traders.
The retail traders, what position are they in though?
They're in a long.
You're saying we hit the highs and they got stopped out of the longs?
Oh, no. They were shorting.
Yeah, they were shorting, right? In order for price to go down here, what must you do? Short or long? Short. So all the buy stop orders are above the high. We basically stall there. That tells me that's what on a scale of 1 to 10. How bearish of a reaction is that? Yeah, like a very strong reaction. It's like a 10. What might be a characteristic that might tell us that's a very strong reversal signature in price? Based on the candlesticks and based on what I tell you about candlesticks. The wick what?
The wick. Only the wick.
Yeah, only the wick goes above. And remember, what's the big saying about wicks and bodies? Wicks do the damage, bodies tell the story. Now, do you think if the body of this candle closed way up there, do you think we would have reversed as easily? Probably not. So the reason I took this short was because I saw us reverse. Now, do you guys see the bullish for rally gap that broke? I took it when the bullish for rally gap broke, right? Remember, this is millions of dollars of dumb money being reversed here, so I want to be on this side. Now, this short, funny enough, was actually based out the 15-minute time frame, and it never actually stopped me out, so it never hit my stop loss. The reason I exited was because I wanted to reposition myself at a little higher entry price, which is why I got in here, knowing that I'd still had full confidence in the market going down to that trendline liquidity. Because where does the market always like to go to? To the stop losses. So when we had that built up trendline liquidity from this morning, I figured, okay, we're probably going to go down and run all that, all right? And what was I targeting? A weekly low. So that means, how do we form a weekly low? What's the time period for a weekly low to form? Oh, what? 7 days. It's the low we put in the last how many days? 7. Right? So I'm targeting a weekly low. So I entered in the 1 minute and I'm using the weekly to target a low. Now look at this. Look at this, ready? Do you think that this weekly low was extremely obvious at the time? Let me show you. Or actually, I'll just show you in the daily. Look. Do you think what is this technically? This low and this low together. Is it non-engineered liquidity or engineered liquidity? And why engineered? Yeah, because it's obvious point, but this low is above this low. So was this a liquidity sweep yet? So what do we figure might happen here? Yeah, it's not going to stop until we sweep these lows. So I was on the 1 minute, but here's the weekly time frame or daily time frame, and I was targeting this daily low because do you see how the candles were trending towards it? And we had a bunch of weak candles. If we have a bunch of weak candles like this, we're likely going to that obvious low. And can all of you see this if you were to back away really far from your screen? So that means this low is what? Obvious, right? It's super obvious. So that's why I targeted there. Now, why do you think I exited there and didn't hold all down here? Let's have you answer. Why do you think I exited at this low and didn't keep trying to hold? Any ideas? Okay, what about you? Do you know? No? Do you know?
Maybe because it hasn't like reached that point yet, so we're not sure if it's totally gonna like reach below that point.
Exactly. We don't know how far below we're going to go below this point. Remember what I said about where I target? What do I target? Stop losses. Is there any level over here, any low that I could have targeted? No, the only low on the screen is right here. So why in the world would I target way down there? Raise your hand if that makes sense. Right? So I call it train stations. This is a train station, and I don't get out of the train station until it hits. There's no other train stations to go here. This is the end of the train station, right? I don't care what this does. If we keep going down, who cares? What matters the most? I follow my plan. Yeah, I follow my plan. My plan was to get out this weekly low, right? Write down in your notes FOMO. What do you guys think FOMO means? Fear of missing out, okay? So we're going to introduce this term FOMO. This is where people get FOMO. Now, why do you think someone would get FOMO if they get out of their position here and then they see this wick? Why might they have fear of missing out? What might give them FOMO? Yeah, because they think, oh, I could have made more money. Imagine you were in a short position right here. You got out here for $1,000, and then 15 minutes later it goes down here, and you could have been up 2,000. Raise your hand if you'd be pretty mad. Yeah, that would suck, okay? Because you could have just made $2,000. What do you think FOMO leads to? Revenge trading. So right, FOMO equals fear of missing out. FOMO leads to revenge trading. And then say, you must be able to overcome this. And this is where you're going to learn a lot about yourself, okay? Whether you'll be able to overcome that or not, I don't know. Half of you will not be able to ever overcome that. It sucks, okay? I've literally been in a trade before where I was up like 5K, and then all of a sudden Trump tweeted about Iran, and then we dropped another like 1,000 points, and I could have made like 100K, but I got out for 5K. Imagine how devastating that is. But it doesn't matter. What matters? Sticking to the plan, right? I follow my plan. So it sucks, but that's just what that's why day trading is so hard, because there's so much, psychology involved and outside emotion, right? Now let's go over the homework real quick. Yeah, you guys all drew out the homework, hopefully. The homework was to look for a liquidity sweep, a fair value gap tap into an entry, and then a market structure shift, right? Yeah. And then what was the fourth one? Oh, the entry and stop loss. Okay. So I'm going to start coming around. You guys can talk amongst yourselves so I check. And if anyone needs some serious help, I'll try to help them. All right. So pull out your homework real quick. All right, everyone draw this on your notebook right now. This is going to be the best drawing ever. I drew it on some of yours, but here's what you want to draw. All right? So I want you to draw a downtrend. Okay, ready? This is going to be the last thing I talk about trends. What is a downtrend? Who can remind me? Downtrend equals lower lows and lower highs. So we're going to draw a downtrend. Would this be a downtrend? No. Why? Because we have a higher high. We need to put a lower high, lower low, lower high, lower low. Now, what would cause a trend reversal?
Higher highs and higher lows.
Higher highs and higher lows. So a trend change or a market structure shift or any like that is a higher high and higher low. So would this be right here a higher high and higher low? Would this be?
Yeah.
Yes. Would this be a better one? Probably because it's stronger. That would be a trend change, or this high being broken because it's the last lower high is our market structure shift. So label this as a market structure shift. Do it a dotted line. Dotted line is going to be better here, or dash line like that. Okay. Now, because this leg, don't circle this, but because this is the leg that had the market structure shift, would this be the liquidity sweep right there? Would this be the liquidity sweep? Would this be the liquidity sweep? Why? Because this is the leg that gets the market structure shift after we swept this low. So that would be liquidity sweep. I'll probably draw it like this, okay? And we're gonna draw a little money tool, okay? So the money tool represents a liquidity sweep. Remember I said you think if you win a trade and your friend doesn't, you thank your friend for the liquidity, right? So we draw the money tool there, meaning what? There's a lot of stop losses here, right? So the money tool just represents stop losses or orders. Okay, so we have our liquidity sweep. I want you guys to label this. Liquidity sweep. Okay. Or this is the liquidity sweep technically. We have our market structure shift. Okay. Market structure shift. And we have our old highs that we target for, what is this called? What type of liquidity? Because stops and lows, or highs and lows when used right, are the most protected areas for a stop loss. Because a trend change always starts with a giant low at the bottom, right? We go up after giant lows or giant highs are being created. So where do people hold their stops? Below those old highs and old lows. So when we come back down to the low with a trend change back to the downside, it's just a naturally good area to target from before. All right? That's why we don't target anywhere random. Now, what type of liquidity is this? Sell side? Raise your hand if you agree. Sell side liquidity. Okay, raise your hand if you disagree. What do you think it is? It's buy side. Buy side liquidity is at the top, always. So make sure you're writing this. Sell side is always at the bottom, buy side is at the top. Okay. So this is the trend change. Circle that, right? Trend change here. Trend change, MSS, change of character, structure break. It doesn't matter how much it doesn't matter what you say, I say MSS, okay? Now, rate this type of liquidity, this singular point, on a scale of 1 to 10 for being a target. Hold up your hands. Rate it on a scale of being 1 to 10. How strong or how much of a magnet might that high be? Put up your hands. What are you saying, 9? Okay, you're saying 8. You got 8, 7, okay. Now, put up your hands and tell me how strong of a magnet something like that would be. 10, 10, 10, 10, yep. Exactly. So, while this is still buy side liquidity either way, this would just be a little stronger. And I like looking more for these, not the singular points, but that's just me. So, you should have this written in your notes. Take a picture of it, okay? And I also want you to write this. Definition of a bullish trend. Let me make this smaller. Equals higher highs, higher lows. definition of bearish trend equals lower highs, lower lows. Definition of trend change, let's say to the upside, equals what? What is the definition of a trend change? We have to break something. If we're going into an uptrend for a trend change, we have to break the last what? So if we're going up, we have to break the last high or low? Yeah, we have to break the last lower high. Right? See, this is the last lower high. Right? We have a high, lower low, lower high, lower low, lower high. That last lower high breaks, that is the definition of a trend change. So break last lower high. All right, that's going to be just for a bullish trend. Is this the definition of a trend change to the downside? Yes or no? No. What would the definition of a trend change to the downside be?
Break the last high or low.
Break the last high or low. All right? So this is going to be your best friend. This is ideally what we're looking for in the market. Usually we want to see what here? What do you want to see form here on the market short shift? An FVG. Okay. So this is your final drawing right here. Draw this, please. Everything I ask will be based off of this. And yeah. All right. Does anyone need more time? Yo, don't say the J word in here.
Oh, my bad, bro. My bad. This is like 4K again and again and again and again.
All right.
But
hey.
I'm gonna do this too. I'm gonna do this.
Yes. What do you need to make? What do you need to technically make money to be able to trade?
To make money.
Yeah.
You need a
job.
bro?
A job. We're gonna say job, not job. All right. Job.
I'm gonna start risk taking and road running. Bro.
No.
Not saying.
24. Now, this screenshot right here will make you thousands of dollars. But I'm going to give you an even better one. But this is going to be the first one that you need to understand. All right?
You said you waited for this one to fail. Wait, why do you want to see?
Yeah. You'll see. I'll keep explaining. If you don't understand this, you will not understand what we will do moving on. Raise your hand if you need more time. Okay. Now, for the competition for who gets an Erewhon smoothie. Wait, what time is it? Okay. We still have 30 minutes. What should I do?
Capistrel, the most secure drink.
It's an hour.
Give it an hour.
What? What time is it?
It's 11:34. 10:34. But we get out at 10:30.
Okay. No.
Please, you don't want to ice cream too.
All right. I'll probably do the competition in a little bit. I need to think of something. It might be another drawing, but we'll see.
What about person making the most money in an hour?
No. Okay, so we're gonna be talking about long setup, short setup. Is a long setup that I show you to the upside, can that be the same to the downside? Yes or no?
What?
Can a long setup to the upside, can I find the same thing to the downside? Yeah, every long setup could be a short setup. It's just mirrored. It's like if you put up a mirror to the chart, if you're long or shorting, it can be the same. Right, so if I draw a trend on your chart, on your notebook, and you flip your notebook upside down, So if, let's say I draw a bullish trend in your notebook and then you flip it upside down, what would it be? A bearish trend, right? It's just mirrored. So a long setup, we ideally want liquidity swept. What's good liquidity? Stop losses. What are the type of liquidity pools I've been talking about though that's always good? No. Equal highs and equal what? Lows. What else? There's one other big one we talked about. Trend line, right? So write down in your notes, say, good liquidity pools, and then write equal highs, equal lows, trend lines. Just write those for now, okay? I'll write it for you guys. So, good liquidity pools equals equal highs, equal lows, trend lines. Now, remember what I said. Do you think a trend line with 10 touches is going to be better or 2 touches is going to be better? 6? 10 or 2? 10, because there's so many more stop losses at the place with 10, right? There's so many more orders. So when I ask you this question from now on, please remember this. Please have it written down, and then you can go back in your notes and look. Okay? So a long setup, we want to see sell side swept, or the lows, below price. And then we want to see what's another name for this? You in the blue. What's another name for a structure shift? Yep.
Oh, what?
A structure shift. What's another name for shifting structure? It's a 3-letter acronym. Close. The other one.
Market structure shift?
Market structure shift. Yep. So structure shift, you finally got a right answer. Let's go. All right. Structure shift, market structure shift, right? We broke the last lower high, which, remember, the definition of a trend changing is breaking the last lower high. If we break the last lower high with like a weak candle, do you think a fair value gap is likely to form? If we break it with like a really slow momentum and just a weak candle, do you think a fair value gap is likely to form? Okay. If we break it with a strong green candle, do you think a fair value gap is likely to form? Yeah. So ideally, we want the entry of the fair value gap formed by a lot of displacement. Do me a favor in your notes, write displacement equals, and then draw a giant green candle. Okay. And then write,
Drake candle?
Yeah, Drake candle. That's what we call it. There's some other names too, but it's not appropriate for class. So now, I want you to write displacement or good displacement equals, and then draw a big giant green candle. And then I want you to write bad displacement equals and draw a doji candle. Do you guys remember what a doji candle is? It's a candle that opens and closes at the same spot. Right, good displacement equals, and then draw out a giant Drake candle or green candle, okay? And then draw, for bad displacement, just draw a doji candle where we open and close and we have a lot of wicks. Is anyone confused? Does anyone need me to come over? A doji is when we open and close at the same exact or very close level. So the candle body opens at like 300 and maybe closes at 301, but during the candle we go to 305 and 295. Get what I'm saying? So once we get these three, this confirms that price will go to buy side liquidity or the highs. Once we get these three. By the end of these 2 weeks, I want you to form a checklist and be like, okay, do we have a liquidity sweep? Do we have a market structure shift? Is there a trend change? Is there a fair value gap? By the end of the 2 weeks, you should have a checklist, and if those boxes all check, then that means it's a good entry. If they don't check, then that's not a good entry. Okay. Same thing with the short setup. We sweep a high, which could be an example of what? What types of highs could we sweep maybe for a down to go down again? Double what? Double highs, double top, equal highs. What else? Don't answer. We could sweep a. You guys just wrote it down in your notes. Yeah?
Trend line?
Yeah, we could sweep a trend line and then reverse after the trend line is broken. Okay? So liquidity sweep to the upside would be we sweep buy side, then we have a structure shift. What's another name for structure shift? You in the white. We have a structure shift. What's that? Structure shift to the downside. What would I label that at? MSS, exactly. Market structure shift. And then ideally, if we have a death candle, is a fair value gap likely to form if we have a death candle? Yes. If we have a doji candle, is a fair value gap likely to form? No, we want a strong death candle, all right? And that confirms that the market will probably go where? Down. Down to an overnight low, down to low of day, down to, a weekly low, right? Daily low. Probably not. I mean, maybe yearly low at some point, but depending on the day, yeah. All right, quick check. If price forms a textbook bullish market structure shift, what's a bullish market structure shift mean? Someone remind me. Yep. What do you say?
Up to the moon.
Yeah, but what's the definition of a market structure shift going to the upside?
Higher low, breaking the higher low. Also breaking the
Nope.
What's the question?
What's the definition of a market structure shift to the upside? Yeah. That's half it. That's half the answer. A higher high. I thought the definition of an uptrend was higher highs and higher lows.
Hold on. Higher than the last higher low. Right?
Yeah, you're getting it, but this is a better way to say it.
New higher lows and lower. Breaking.
We break the last lower high and make new higher highs and higher lows. So we're really breaking the last lower high to the upside. That's the simplest way to put it. That's if you're going down. Or that's higher low, yeah. That's like more of a continuation or break a structure, right? So price forms a textbook bullish market structure shift plus a fair value gap setup. But the equal lows just below it have not been swept yet. So we just get remember the picture I drew yesterday where I said what would be a trap? Remember I said the trap versus the non-trap? So let's say we form a textbook bullish fair value gap to the upside. It's a Drake candle. There's a fair value gap. It looks really good to buy when we tap inside that fair value gap. But there's equal lows below. Should we take the long anyways because the pattern is what matters the most? Should we skip it because without the liquidity sweep there isn't enough fuel behind the move yet? Or should we take the long, just use a smaller position size? Or should we wait for an indicator to confirm the entry instead? Raise your hand if it's A. What?
The answer is always B.
The answer is always what?
B.
And not always, but some. What's the answer?